of you who are joining us on TV and online. I'd also like to thank the SEBI chief, Mr. Tuhin Kantapande, for agreeing to open the Global Leadership Summit. We couldn't have asked for a more powerful start, so thank you very much to the SEBI chief for joining us here this morning. Ladies and gentlemen, this summit is significant for many reasons. It marks CNBC-TV18's 26th anniversary of being India's most trusted, most influential, and most loved business news brand. For 26 years, we have been the undisputed leader in business news, and we continue our outperformance. Today, we've extended our dominance beyond television. CNBC-TV18 is now India's largest business news brand online, with almost 5 million subscribers on YouTube, another 2.5 million on Twitter, 2.2 million on Facebook, and almost 1 million on Instagram. Ladies and gentlemen, we honor our legacy by building on the future. 2025 is also a big year for us as we've launched a brand new offering, CNBC-TV18 Access, a members-only platform that gives you access to the best content and experiences, from masterclasses to webinars to an opportunity to be at events like this one. So a big welcome to the CNBC-TV18 Access members. Thank you very much for joining us here and for being part of the CNBC-TV18 community. We also relaunched CNBC-TV18 Prime, our channel that gives you the advantage of CNBC's global network. From Wall Street to Asia, from Europe to the Middle East, we cover the global markets like no one else. And these offerings are an affirmation of our continued effort to stay true to our purpose of providing you, our viewers, the most credible, actionable insights to make smart life choices. Only those who will risk going too far can possibly find out how far one can go. T.S. Eliot's words were never meant to describe GDP growth or market capitalization, but yet today they capture perfectly the spirit of India in 2025. A nation poised at the edge of ambition, ready to push beyond the comfort zone and discover how far it can truly go. The backdrop for the second edition of the Global Leadership Summit couldn't be clearer. In a volatile world, India's economy is stable, with a GDP growth of 7.8% in the first quarter of FY26, marking a 5-quarter high, fueled by resilient services, a manufacturing rebound, and sustained government investment. India is poised to become the world's third-largest economy by 2030, with a $7.3 trillion GDP. Now, these numbers only begin to illustrate the scale and depth of the opportunity that lies ahead. This summit is designed to hold the entire canvas to capture India's pulse in real time, from space and defense innovation to sport, digital economies, from infrastructure to sustainability. So if you miss any part of the day today, you miss a key piece of India's narrative unfolding on the global stage. Before we dive into the summit, I want to take a moment to thank HSBC India, our presenting partner, Embassy, our co-presenting partner, powered by partner Google and associate partners ITC, WeWork India, Embassy REIT and Reliance Industries. We couldn't have made this happen without your support. Thank you so much to each and every one of you for bringing this platform to life. I'd also like to thank our speakers and panelists from markets and policy to technology, space and defense, and the creative sectors. Thank you for making time for us today and being part of the Global Leadership Summit. We look forward to your insights and shared vision. And to everyone joining us here in Mumbai and across CNBC-TV18 and our digital platforms, thank you for your trust. In an era of constant information, trust is our most valuable currency. As the seminal victory of the women's cricket team has shown us, to win matters, but to win with passion, courage, grace, dignity, and resilience makes the victory truly historic. So we have an opportunity to lead with the clarity of purpose, a commitment to shared prosperity, and an unshakable resolve to create a more equitable future. In a world fraught with uncertainty, Peter Drucker's words ring true. The best way to predict the future is to invent it. So here's to invention, innovation, and enterprise. Here's to building the future that we want. Welcome once again, ladies and gentlemen, to the CNBC-TV18 Global Leadership Summit 2025. Together, let's explore how far the India advantage can truly go. Thank you very much, and I hope you have a wonderful morning. Thank you very much.
Thank you, Shireen, for setting the stage. We now move to our first session, and it's fitting that we begin with a conversation about India's capital markets because they are central to the growth story we'll be exploring over the course of the day.
These markets have been transforming rapidly. Record investor participation, significant regulatory reforms, and growing global interest. But with that growth comes important questions about resilience, governance, and sustaining this momentum while protecting investors.
And to share his perspective on opportunities and challenges in India's capital markets, we're joined by the person who leads India's market regulator, Tuhin Kanta Pandey, chairperson of the Securities and Exchange Board of India. Ladies and gentlemen, please welcome him with a huge round of applause.
Distinguished guests, leaders from industry, esteemed partners from global markets, entrepreneurs, ladies and gentlemen, a very good morning to you all. It's a pleasure to join you today to reflect on the evolving role of India's capital market. The theme of the India advantage is timely in this period of an uneven global environment. In an era marked by heightened trade uncertainty, geopolitical fault lines, and sudden policy shifts, the Indian economy continues to demonstrate remarkable economic growth, resilience, and stability. Our capital market is not just a barometer of the economy. It's a key pillar of our economic growth and central to our aspirations of a Viksit Bharat. Today, I want to outline some key opportunities and challenges in different segments of India's capital market. The health of our primary market remains robust. In FY25, 4.6 trillion rupees was raised through the equity market. In current financial year, the equity market has already raised 2 trillion rupees. Unique investors have crossed 135 million, up from just 38 million in FY19, indicating their confidence in our markets. However, our investor survey shows that while 63% households are aware of security products, only 9.5% have invested yet. Moreover, 80% households remain risk-averse, reflecting the fear of loss. Therein lies our opportunity and our challenge. There is a deep well of domestic capital waiting to be deployed, and I urge the industry to take advantage of this opportunity. Raise capital, create value for all stakeholders, and help define our economic future. On our part, we have and will continue to streamline the capital raising process. The IPO listing and rights issue timelines have been shortened. The recent proposals for scale-based approach in minimum public offer size and calibrated MPS timelines, consistent with market absorption capacity and liquidity, will enable and encourage more listings. The governance framework for MIIs has been strengthened, ensuring that public interest is given first priority. Derivatives play a vital role in price discovery and risk management. We have taken several measures in a phased manner to address some of the challenges posed by this segment. Going forward, our approach will continue to be data-oriented, calibrated, and consultative. The block deal window has been reviewed comprehensively, with changes made to price bands and to the minimum order size. We are also committed to introduce closing auction framework soon, aligned with other global jurisdictions, but suitably designed for our requirements. We are focused on deepening our cash equities market to spur capital formation. An active securities lending and borrowing scheme is critical for improving price discovery and facilitating interlinkage between the cash and derivative segments. From a borrower's perspective, it facilitates the settlement of securities sold short, while lenders can earn a fee on their idle securities. The framework for short selling was introduced in 2007 and has remained unchanged since then. Further, the securities lending and borrowing mechanism was introduced in 2008 and modified a few times subsequently. However, this segment remains significantly underdeveloped as compared to other jurisdictions. We will soon form a working group to comprehensively review short selling and the SLBM frameworks. The mutual fund industry AUM now exceeds 75 trillion rupees. Monthly SIP flows of over 250 billion rupees show that awareness about disciplined savings and long-term investing is taking deeper roots among Indian households. Yet, SEBI's investor survey underlines that despite high awareness of mutual fund products, which is about 53% households, their penetration remains low at 6.7%. The AUM of mutual funds is still less than 25% of our GDP, where they are over 80% of GDP in many advanced economies. Huge opportunity lies in deepening this penetration. Moreover, financial inclusion will remain incomplete unless women are equally represented. Towards this end, we have revised the incentive structure for distributors to onboard first-time women investors and new investors from beyond the top 30 cities. The challenge lies in ensuring that there is no mis-selling. Mutual funds must be products that retail investors can trust. We have worked with AMFI to strengthen the monitoring mechanism for mis-selling and misconduct by distributors. Corporate bonds outstandings have increased with a CAGR of over 12% from 17.5 trillion rupees at the end of FY 2015 to about 54 trillion rupees as of September 2025. During the current financial year, around 5 trillion rupees worth of bond issuances have already taken place. Several initiatives have been made to develop corporate bond market further, such as mandatory electronic book provider platform for debt issuance of 20 crore or more, reduction of minimum face value to enable access to retail through online bond platform providers, and liquidity window to provide option to exit before maturity. However, much needs to be done to deepen the market and improve secondary trading and liquidity, especially in the area of retail investor awareness about the debt market, which is much less than what is there in the equity market. Municipal bond market as well as market for green, blue, yellow, social, sustainability linked bonds have been enabled through regulations. They are still at a nascent stage though, but have a potential to take off. This brings me to one of the most important challenges, the challenge of investor protection. Investor protection begins with investor education. We face onslaught of fake apps, cloned websites, unrealistic performance claims, and unregistered entities misleading investors. Unregulated influencers pose a direct risk to investors, with nearly 62% investors making investment decisions based on their recommendations, as SEBI's survey points out. Our response has been on multiple fronts. We have launched a dedicated awareness campaign, SEBI versus Scam. We are actively monitoring social media for misleading content, with more than 1 lakh such items being escalated for taking down. Stock exchanges have been mandated to publish a regularly updated list of whitelisted broker apps on their websites. We have also recently launched the utilities of valid UPI and SEBI Check, where investors can easily verify the authenticity of bank accounts or QR codes of SEBI intermediaries. This is one of our major initiatives to combat cyber frauds. Let me highlight some more data from our investor survey. 22% of aware non-investors intend to invest within the next year. 36% of investors possess high or moderate knowledge of the securities market. Urban participation at 15% is significantly higher than rural, which is at 6%. 37% of those surveyed are not aware of securities market products. 27% of non-investors don't know how to start investing. Our challenge is twofold. First, to bridge the gap between awareness and action. Potential investors are being held back by risk aversion, perceived complexity, and a lack of trust. Second, there is an opportunity to bring new investors into the fold of responsible investing. SEBI's investor campaigns going ahead will cover multiple formats: digital, multimedia, physical interaction, and multiple languages to build a new generation of informed, responsible investors. Our regulatory stance of optimum regulation is aligned towards making our markets future ready. We believe in smarter and forward-looking regulations. In the past few months, several reforms have been taken for ease of doing business with due regard to risk management. We are already simplifying and updating various regulations. The comprehensive reviews of stockbroker and mutual fund regulations are underway. We are soon going to take up a similar comprehensive review exercise for LODR 2015 and settlement regulations. Ladies and gentlemen, SEBI's regulatory stance is clear. We are first and foremost the guardian of trust in our markets, but we are also a facilitator of capital formation, enabling both investors and enterprises to participate with confidence and with ease of doing business. Thank you. Jai Hind.
Thank you, sir, for setting the tone with such inspiring words. I would now request you to stay back on the stage for a special conversation with Lata Venkatesh from CNBC TV18.
Thank you very much, Mr. Pandey. That was an extremely perceptive speech, because some of the questions I prepared have already gotten answered. That clearly indicates a regulator who is ahead of the curve, who is able to answer questions of the market even before they are put to you. But, well, one subject you obviously didn't touch because the consultation paper is just out, and that is on the brokerage cap that has come along with the total expense ratio rules for the mutual funds. It is still in discussion stage, so we thought we would get some initial thoughts from you. There is some angst over the brokerage fee cap coming down from 12 to 2 basis points. You pointed out that 35% of the people surveyed are interested in markets. We think that the brokerages and their analyst community do a lot of work in educating. I mean, okay, GST cut has been announced. How does it impact FMCG companies? How does it impact car companies? Where should you invest? So, you know, if you cut it down, the fear is that the analyst community may shrink. So, are there any further thoughts? Is it open to discussion, or, you'll do away with the cap itself?
I think when we put out something on consultations, it's not with a view to just inform. Consultations mean actually sincere consultations where we put out certain facts and elicit responses from a variety of participants, market participants. We are actually basically reconciling. There's investors on one side, there is industry on the other. Jointly, they have to work together to develop the industry, which has already gone, your mutual funds have gone 3 times for the last 5 years. So therefore, what we really need is, we have to really expand this 130 million unique investors, doubling up in the next 5 years. Now, if you have that sort of thing, you know, obviously you need to look at the investor's point of view, as much as we will also like to reconcile it with the industry point of view. There is a scale benefit, and how much of that scale benefit can come to investors. And so therefore, when we put out a consultation paper with certain facts, I think different participants do come back to us with their views and with rationale, and then we are able to look at it. This is not a decision, but this is certainly food for thought for everyone to comment on this. And this, to my mind, is a very good process. That means we don't really decide something sitting in our rooms just like that. We need to put it to wider public consultation, have wider views, and therefore the decisions that we take are not only there is a more buy-in, but also there is a better decisions that we are able to arrive.
No, fair point, sir. Actually, every word you say, resounds, even with a person like me. CNBC-TV18 has huge many rules if I have to invest in stocks. So I stick to mutual funds, and therefore if you're bringing down the cost for me, it is to my advantage. I'm not denying that. But the other side, which we are, getting to learn from industry, is that if mutual funds are allowed to pay only 2 basis points, but there is no cap on an FPI or a private equity or a corporate, then when a mutual fund goes to the brokerage, he is lowest in the pecking order. The brokerage first does everybody else's, and it's possible that they actually get a raw deal. So you're of course coming to serve the investor, but it may not work like that, is one worry of both the broking community and the investor community. Would you want to add anything to that?
I've always said, the consultation paper is out, the people will be actually commenting and giving their different rationale on what we need to do, and we are very good listeners. Okay.
So can we reasonably assume that it will not be 2 basis, but something higher, something in between 2 and 12? Can we go with that hope?
I think let us not speculate. Okay. Let the things come out.
Okay. Then just a speculative doubt, if you please, or just an intellectual doubt. Why have a cap at all? If that's also a cost, like mutual fund pays a rent, it pays salaries, it's paying a brokerage. Why not include it in the management fee at all? Why give a cap? Very powerful, big mutual funds will probably get it even for 1 basis point. Somebody else gets it for 10, for 12, for 8. Is that even a consideration?
The cap is a cap. The ceiling is a ceiling.
Okay.
So it's not something that, people have to really pay for that.
Okay.
The only thing is right now we are discussing the cap, whether the cap is very too low or a ceiling is too low. And there are 2 points of view. And let's see the cost structure. Let's see the sell side research if there is a problem, which will happen there. And we would take cognizance of different rationales to do that. I think the point is that in the overall situation, this is something which is, this particular point is, I think, probably creating a angst, as you said. But there are other points also, like giving far more transparency to investors, how the costs are split, and also bringing the taxes out of this, because otherwise, you would not know exactly how the tax structure is playing. So there are many important elements, and I think this cap is what you are referring to
Yes.
as a pain point from a section
Do you
of
need a
industry.
cap at all was the point that I was raising, because many countries don't have a cap. It's a cost which is included.
I would say that, there are many jurisdictions that we see, but it's very important that in the very development of our mutual industry has been done, has been made possible through a well-regulated structure. So what is the right kind of regulation depends upon the country and jurisdiction, its circumstances, its people, the way you are. So something which is happening in US is not simply replicable in
Yes,
India.
fair
In many respects, it won't work. And we have shown, like in case of DPI, for example, digital public infrastructure, how is it that India has really got to the top of the global
Fair point, sir.
ladder? Because we thought sui generis, and we developed that capacity, and we didn't just waited to copy.
Oh, no doubt about that. No doubt about that at all. We've got a very elite audience over here, and Nigel, my colleague, is waiting by. Nigel, Rhythm Desai has already told us, or at least we leaked, that he will have to question the SEBI chairman, so he has a question.
All right, Rhythm, over to you.
Thank you, sir, for your comments. Is there something that in particular worries you about the Indian capital markets? Something that may give you sleepless nights?
So maybe you ought to come in the center.
I think there is no meaning in worry. What means is an action. So there is no need of sleeplessness, because that will spoil your next day.
Okay. Well, actually, on that point, Nigel, there was a worry from foreign investors, sir. This worry always comes when foreign investment or FPI flow lessens into India. You go around asking, and one of the big cribs they have is, you guys charge capital gains. I mean, that's uniformly coming from everybody who comes on the channel. They don't always say it on the channel, but they do tell us. Is there a thought that this could be impeding? I mean, now it is, the last 3 of the last 4 years we have seen outflows. So is that a thought?
First, that question is addressed to the government, not to me,
Certainly.
because it's a revenue issue. The second, we also cannot have a correlation like the way you are drawing, because this has been there for quite some time.
And decades.
There was a time, when we had very heavy flows despite a so-called capital gains tax. The third, the way the FPI works is quite differently. It is basically a relative space. It is not an absolute space. You have your funds, you have a mobility, and you can really maximize your returns. You can in and out, and different jurisdiction. India is not the only one. We are not our world. The world is much bigger, and there are different jurisdictions, and people keep looking at different opportunities, the actions of the Fed Reserve. They also look at their profit opportunities. They look at PE ratios, relative PE ratios, and so on and so forth. All I can say is I have had massive amount of interaction with FPIs and foreign players, banks.
They told you the same thing?
FPIs, and not only in India, and every time, I get an opportunity, I talk to them and meet with them. And I have gone out and gone to US, I've gone to Paris, gone to UK, gone to Singapore, Hong Kong, and talked to each one, like every segment. So the sense I get it, there is a very strong faith the FPIs have on India's story. So therefore, overall, we have to look at it. When this tide will turn, whether it will so much has come in the primary market. Even now, when you are talking FPI outflows, you are only giving the net flows. But sometimes inside, you will see there is a lot of movement into a primary market. And these things will keep happening in a market like this. The question is, are we so vulnerable today with these flows in and flows out? And my sense is we are not. In fact, we are now much stronger in terms of our domestic flows as a counterfeit. 18% of individuals in India today own the 18% of NSE listed companies is owned by individuals today. And then you have domestic institutional investors. So the FPIs, in fact, are now a little bit of subordinate to the domestic
highly subordinate now, sir.
domestic institutional investors. But they are very much there. See, you are only taking a flow.
Yeah.
But if you really look at it, it's still a $900 billion market cap that the FPIs hold in India.
It's true.
Right,
Nigel, I
right.
believe, okay.
Right. So Nigel, I was just listening to your opening comments as well, and it's heartening to see media and all the big names over here as well. We're developing an equity cult, and many years down the line, this will be the foundation. That being said, last evening we got comments coming in from the finance minister, and she said that the F&O market will not shut. Now, the street was reading it in various ways, but I wanted clarification on that front. Does it mean that weekly expiry continues for now?
Well, I think on this I've said, because I don't have to actually give a statement every second day. I just
So it's
spoke
just that removing weekly, is it off the table?
I just spoke the other day. We are looking into a consultative database. We are, normally you would speak that you build the market, and if you have problems and imperfections, if you have distortions, we try and fix it. I mean, this is a normal thing, you have something happens in your body and all that. I mean, you don't really just at the first instance go and remove it surgically. I mean, this is something which you have to see, how do you take it, and therefore our approach will have to be necessarily calibrated, data-based, and see how the problems, distortions in the market can be taken care of. There are multiple solutions to a problem. There is no one solution to a problem.
Okay. Nigel, I believe Sridhar Shivram also had a question. We are running out of time so quickly.
Yeah.
Sridhar.
So my question is on buybacks. For some reason, SEBI has barred secondary market buyback. If you see in the US, almost $1 trillion of buybacks happen every year, and it's a great tool to stabilize the market during difficult times. I would urge SEBI to relook at open market, secondary market buybacks, given that the tender offer has become very complicated now because of the taxation rules. In the entire last year, we've had only one buyback. So I would urge SEBI to relook at the entire buyback ban. Thank you.
Can we have hopes that open market buyback will come?
I think we are open to all suggestions. We will examine.
Nigel? Okay, I believe we are running out of time, sir. So just very quickly, should we assume that the ban on weekly expiry is off the table?
Please don't try to put words in my mouth, I think. I have said, enough on this subject. And I think let it rest, because I think this is also not right for the media to, because we also need a certain stability of thought and stability of action. I know you have your own requirements, that you have to be newsy, you have to discover something which is very exceptional.
We are only looking for certainty, not news.
Yeah, but if you are looking for certainty, the certainty currently is that it's on and it is working. And next time, if we have to take any further steps, we will come out with a consultation paper, which you will get to see. I mean, Lata will be the first one to see that consultation paper. I'll ensure that.
So we'll get it on the website. Thank you for that. So just final question. Are there, what is the next step in Jane Street? And are you all still investigating? Are there likely to be more such high-frequency traders whom you will pick?
See, as a matter of our policy, we don't discuss individual cases in media. So my apologies.
Okay. Thank you, sir. Thank you very much for patiently taking all our questions and that of our guests. We're really grateful that you inaugurated our second Global Leadership Summit. Thank you, sir. So I'll take the mic.
Thank you, sir. Thank you, Lata. Thank you, Nigel. Shireen, I see you with a robot right here. Oh, he's come here to welcome Mr. Pandey. Ladies and gentlemen, a huge round of applause for our robot here, who's welcoming Mr. Pandey.
Now it's shaking hands. and giving you a high five and waving out to you. So we, in the era of artificial intelligence, it's
Program it for Namaste.
Good suggestion. We will program it for Namaste. But thank you very much to Mr. Tuhin Kanta Pandey for joining us. Ladies and gentlemen, a big round of applause to the SEBI chief for joining us here this morning. Want a picture?
Now, before we move ahead, I'd like to let you know that we have an exciting session coming up in some time with Oliver J., Managing Director, International Strategy, OpenAI. So stay tuned for that one. Now, everyone's talking about the India decade, but here's the real question. Where should investors actually put their money? The opportunity is clear, but so are the challenges. Valuations are stretched, global conditions are uncertain, and the risks are real.
So how do we navigate that? Our next session explores this in depth, and leading this conversation is Prashant Nair from CNBC-TV18. And joining him are the distinguished voices who live and breathe the markets every day. Please put your hands together for Rhythm Desai, Managing Director and Chief Equity Strategist for India at Morgan Stanley, Sankaran Narain, Executive Director and Chief Investment Officer at ICICI Prudential AMC, Neelkant Mishra, Chief Economist at Axis Bank and Head of Global Research at Axis Capital, and Ashish Chauhan, CEO of the National Stock Exchange.
Prashant, it's over to you.
That was a really enlightening conversation with the SEBI chairman. And I'll come to some of the points he made towards the back end of the conversation here with all of you. And like to, on the mutual fund distribution side, he said, well, we're good listeners. So it's cryptic, right? I don't know what, Naren, you make of it. I'll ask you that in just a bit. But good morning, all of you. Thanks very much for being with us here at the Global Leadership Summit. It's not every day that you get four of the sharpest minds in India's market ecosystem on the same stage at a time when the noise is loud. The flows are AI, Atmanirbhar India, and the opportunity set feels both extraordinary but also quite complex, I guess all of you would agree. Now, the India equity story has had many headlines, and I'm just talking about the last 1 year. In recent times, returns have been more subdued than usual. The Nifty and the broader NSE 500 has been flat for about 14 months now. Foreign investors have been big sellers, with domestic investors on the other side of that trade. Very large equity supply via exits, IPOs, and of course, India getting little love from President Trump in the US. Hopefully that will change. Looking ahead, many are waiting to see if government policies like tax and GST cuts, and of course, RBI's rate cuts will provide a durable bump to growth in markets. The question is, how will all of this resolve itself going forward? And that is what these four gentlemen will do, for you here on this very, very interesting panel. Gentlemen, once again, thanks very much, all of you. And we were just joking outside that Naren, I think, said that I'm here to balance things a little bit. If Rhythm, who's a who's the big bull on the equity analysis side, gets too excited. I think Naren is here to temper some of that enthusiasm. So Ashish bhai, great to see you as well. Ashish bhai, of course, heads the NSC. It's one of the largest companies now, and hopefully we'll see an IPO soon as well. But let me just stick with markets first up. Rhythm, where are we in terms of this cycle? Let's just place ourselves where we are.
See, first I have to acknowledge that Naren has been dead right and I've been dead wrong. So we should get that right of the way. I think he was warning, if I remember correctly, first time last year in September, that things are getting tricky. And well, they did. So India has, and I think the SEBI chair made a very useful point about foreign investors who, unlike domestic investors, see things on a relative basis. China announced its first round of stimulus September last year, and that eventually proved to be India's peak relative to emerging markets. And we've had the worst year for India relative to EM in 30. So it's not been just another year. It's not visible in absolute share prices because the world is in a raging bull market. Markets like Korea up multiples of 10 percentage points in the last 12 months. So that's the extent to which India has underperformed. The proximate reasons are known to everyone. Growth slowed down. The starting point of relative valuations especially were very high. And we've seen both of these, I think, correct or inflect. The RBI started working on the growth cycle in February, and we have arrived at a situation where it seems to be in reflation mode with a view to increase CPI. So that should help nominal growth going forward. India's relative valuations have corrected a long way, and we're now actually at levels which we don't see very often. So India does look far more appealing as a market to foreign investors. And the final point is that in recent months, the focus of global tourist capital, the one that looks at short-term returns, has been on AI. And India does not really offer an AI trade. So ultimate trigger point for the return of the FPI will be if the AI trade starts fading. I think India will suddenly start looking very attractive. And the final thing is on the trade deal. While I don't think the trade deal with the US is that critical for India's macro, in the minds of short-term capital movers, it does seem to be an important thing. And hopefully later this month, that trade deal happens, and that will again be another negative out of the way. So as I see the landscape, I think things look like they are about to turn for India on a relative basis. The risk, of course, remains that the world could wobble, and that could make it another tricky year for absolute returns, but I'm hoping that that risk doesn't pan out.
Well put. You know, and that AI point that you made, Rhythm, right? ChatGPT, I think, came out in November of 2022. I think the opportunity size crystallized maybe in 2023, and it took off after that. Before that, 2021, 22, and maybe parts of 23, we used to say Nifty and the NASDAQ are so closely synced and they were the best performing markets in the world. And that broke, as you said, because maybe there's no AI trade. And but that's very, very stark in that sense. Naren, come in here. What is your sense? Rhythm's view is gets better from here on a relative basis. Not a raging bull market or anything, but gets better relatively.
Look, clearly on a relative basis, it gets much, much better from here because India has underperformed so much every other market in the world that it gets relatively better. The problem is on an absolute basis across the world because today every market in the world is very costly today. So how does the absolute markets behave from here is possibly we don't know. If you had asked me 1 year back, would US also correct? We maybe would have said US would correct, but that call went completely wrong. So I think the risk is something going wrong in US AI stocks because if US is 60% of the global index, how do you expect India to go up when US is going down? So I think the challenge is US market. In India, what the Indian entrepreneurs, the Indian private equity firms, all they've done is they have ensured enough supply. So even if we get good SIP inflows, they have ensured that there's so much supply that the market just cannot go up easily. I mean, there is so much supply and there doesn't seem to be any end to the supply. So, I mean, although we have a very, very big investment team, all the time we are trying to see how to handle every day there's some block or the other. So most of our time is spent in analyzing whether we should buy this block or this, participate in this IPO or this QIP. That there doesn't seem to be any way the market can go up till this supply ends. And we're not able to see when the supply ends. If I can say, okay, it'll end, maybe it will not be there in December, so December markets can go up because supply doesn't happen in December seasonally. But otherwise, again, Jan to March, there'll be supply. So that's where the challenge is at this point of time. So we are in a situation where it's tough to argue that you can make big money. You can't make big money, but at least on a relative basis, the problems doesn't seem to exist at this point of time. But on an absolute basis, we don't know. But at any point of time, markets can correct. And I think, you know, we look at a global guru like Warren Buffett. He has created the highest row of cash at this point of time ever. And, you know, he's the only person who doesn't care what happens in the near term. He doesn't have any performance risk. He doesn't have any risk that anything can go wrong just because he's underperforming. So I think what he's doing suggests that there is enough risk of US markets correcting.
And that's the big risk to your mind, right?
Yeah, that is the biggest risk.
We have, by the way, as we were just saying, OpenAI on stage, I guess after this panel, maybe after a panel after.
I think, no, the risk is not AI doing badly. The risk is AI stocks doing badly. Yeah. It's like internet. Internet didn't do badly from 99 to 2010, but still internet stocks crashed between 99 and 2002.
There has been enough mainstream sell-side research which is now comparing and asking the question with a question mark at end, whether this is the 99 moment. And most of the answer to that in those reports is no, this is not. And this is why it's different. Point 1, 2, 3, 4.
They'll say this time is different.
But do you think, I mean, just to that point, this is something similar to, you've lived through that.
I don't think we can say with certainty. We are not part of it. All I'm saying is the sentiment, if you look at the kind of vendor financing which is happening, X supplies to Y, then say Y goes up, then X doesn't have money, X gets money from A then gets money from B. If you look at what is happening, it is very worrying. But do we know with certainty? I don't think we know.
But if AI has not helped India, why should it hurt India?
No, that is where, no, 99 to 2001, did Indian markets go down? Yes, it did go down. So now maybe it will go down as everyone says it will outperform. Doesn't mean it doesn't need to go down because the world's biggest market is US. I don't think if US goes down 20%, any market in the world is going to go up.
And across ICICI funds, are you kind of sort of building some hedges?
Yeah, I think, you know, there it is very simple. We recommend asset allocation and tell people to invest in not only in equity.
Correct.
We have succeeded much more than most people, but that's a risk that the investor is taking. Investor is too fond of equity. After 13 years of 12 years of continuous equity return, they like only equity.
Nilkant, come in here. And it's just the other part of the thing which Rhythm also mentioned is the US-India. Rhythm said, well, it's not that crucial. I remember speaking with you immediately after that, those tariffs, etc., were imposed. And I remember what you said. You said, well, the longer they last, I mean, it'll start to show up more and more. I mean, a quick resolution is, of course, is the best thing, but that's obviously not happening. It doesn't look like it's in the immediate horizon. How do you think about that? And weigh in on markets as well.
Yeah, so that, I agree with Rhythm that it is not important for India's macro. It is important for FII sentiment on India. Remember that the whole world is obsessed with tariffs right now. So it does affect sentiment. And if you're sitting in London or New York and you're reading some of these Western business press and you see that India has 50% tariffs and, you know, it is struggling, I think the sentiment around India sours. The view on India among foreign investors that I see is not just neutral, that there is no AI, it's actually negative, that India is an AI loser, that Taiwan and Korea are AI winners because they have Samsung and SK Hynix and TSMC and they are beneficiaries of this boom in AI. And India is not just no player, but actually Indian IT and all of the GCCs, etc., will suffer. which I think is very, very myopic. I think it's absolutely disagree with that. And therefore, whenever this AI bubble turns, while I'm completely in agreement with Naren that as the US market from 200% market cap to GDP starts to normalize, that no equity market will be left untouched. But I do think that the roll forward gains in earnings are now starting. So for almost 3 quarters, we had all the roll forward gains, which is 3 to 3.5% a quarter, being offset by earnings cuts. So now I think that GDP upgrades have started. I expect that by the end of this fiscal year, the real GDP number will be upwards of 7. The reason why there is still a lot of negative sentiment is that nominal GDP growth has been coming down. And again, people have been extrapolating too far. So from 18% in FY22 to 8% this year, people think that this is the new trend line. I don't think so. We have been tightening fiscally and monetarily too much. Therefore, core inflation has come down. Food inflation has been falling for the longest period, as RBI has documented. So both of these will reverse. And so we are going to be back to 11, 12% nominal GDP growth in 6 to 9 months. And then the earnings cuts start to slow down. And they've started to slow down. I think maybe some earnings upgrades can happen. And the roll forward gains will start coming through. So I do expect that in the next 12 months, we should see much better support for India. In fact, foreign investors have been using, hedge funds have been using India as a funding shot. That it's not going to do anything.
Which means they're selling here and then using that.
Yeah, so because they know that this market is not going anywhere. And therefore, you just sell it, you get free funds. And then you invest, punt on that in the AI themes globally. On whether the AI bubble is bursting right now, I'm not so sure. Because as much as it does seem really excessive, even on things like code generation, you talk to or you listen to people who have worked in AI, who've done coding, you know, people think that vibe coding is going to replace software engineers. I don't want to make it too nerdy, but you know, there was a time when you actually had to write code in assembly language. And then compilers came. AI, the way it works today in coding is maybe as big an impact in terms of time and effort as compilers. So it is not really going to transform and replace all coders. So I think even that is becoming excessive. So far, a large part of the capital going in is surplus capital that Google and Microsoft and all was accumulating. Bubble formation and the risk of a collapse happens when you have a lot of credit funded, you have a lot of, you know, so then there is a deadline. So if Microsoft does not make enough money, the ROC falls by 2%. But if you've taken private credit and you fail, so that kind of share of capital is still low. So I think there's another maybe couple of years of bubble formation, and then it all falls.
So not there yet is your point of view. Ashish bhai, you sit, you could be stoic through this market conversation because you sit on top of the market ecosystem where we all operate, analysts, fund managers, economists, everybody. But I mean, just your thoughts on the first point which we made, which is the domestic investor. And I mean, the numbers are just mind-boggling. Naren put it well, right? I mean, I don't think domestic investors need any equity encouragement. I mean, they're there, they've seen the returns, and they're here to stay in that sense. So while we can complain about all the supply, but it's like chicken and egg, what came first? The supply is there because there is demand in that sense, right? Just wanted your thoughts, Ashish bhai. How do you see things?
I think a time comes in the history of a nation when it starts investing in itself. And I mean, if you look at the numbers, in 2014, because that's when Mr. Modi took over, so I have some idea of what the numbers were. Total number of investors in India, unique investors, because we count accounts and also unique investors because we have PAN numbers. So we dedupe and figure out. When Mr. Modi took over, on that day, we had 1.6 crore unique investors. Today, after 11 years, we have 12 crore unique investors. Today, and many of, literally almost half of them have come in last 5 years, largely due to the COVID-induced framework where we were having a KYC framework where you had to go to physical houses of people, check their incomes and all. And then in COVID, because we could not go, SEBI allowed the KYC to be done by video. And that allowed many of my brokers to reach out to the nooks and corners. Today, India has around 19,400 zip codes, give and take few. I have PIN codes in every part of India, every zip code except 28. And my understanding is out of 28, probably 25 are, the PIN code themselves are airports, where you can't do KYC, right? So broadly, I have people in Ladakh, literally 6,000 meters, 7,000 meters on top, and I have people in Andaman. It is amazing how India started shifting from real estate and gold and everything else into equities. And it's a miracle, I would say. Today, with 12 crore investors, 9 crore males, 3 crore women, 25% women. And if you take number of households, it is now literally 9 crore households, give and take few, which is 1/4 of India's households. You don't see that type of numbers even in Germany. I mean, it's always said that a poor country, we are still $3,000 per capita. I don't believe we are $3,000 per capita, but numbers say that, so I would believe, right? So poor per capita income countries cannot have a good functioning capital market because poor people cannot save. And if they save, they don't trust their brothers also. How come somebody sitting in Arunachal Pradesh is putting money in a small little company, SME company coming out of Salem in Coimbatore? That person is never going to visit, check out what is happening, but she has a tremendous trust. Her 1,000 rupees is important to her. Don't think you talk billions and trillions. Her 1,000 rupees is important, but what I call a virtuous cycle has been created by all the past companies which have given results. And broadly, today, I mean, although people don't talk, Indian equities market with $5.3 trillion is probably 160% or more of Indian entire banking system. It is amazing what has happened that people are investing in risk assets. And also it tells you that over last 11 years, India has become more middle class. Whatever data tell you that India's poverty has not reduced this, that, because 25% of households are now rich enough to invest in stock markets. It is unbelievable progress.
No, absolutely. And I think that point, that the suite of access to, because of UPI, Aadhaar, mobile penetration, I mean, access to financial products at that $3,000 capita, I think it's unmatched anywhere in the world. And I think that's really a miracle. Just a last round of questions. We're eye on the clock as well. Rhythm, on that supply point, right? I think Naren earlier at one point had said that, I think you gave the Naren 95 example, that supply essentially is what overwhelmed the market back then. Just your thoughts on that. How do you think about the supply issue?
So see, Prashant, we are, so the previous peak in supply was about 3% of GDP. Today we are circa 1%. So we have a long way to go. When we get to about 3% at current GDP, it will be about $10 billion per month for 12 months on the trot. So I don't think we have reached a level where supply is going to be the reason why the markets wobble. So I'm not so perturbed about it. It's a good sign. It's a good thing that people are raising capital. It does help the economy. And eventually this will flow into capex and help earnings.
On that AI question, Rhythm, what's your, we got Naren who thinks, no way to tell, but it looks a little scary. Neelkan says it's still a couple of years away before it, to use the word, pops, but your thoughts?
So with the caveat that I don't know, like Naren said, I remember that in the internet cycle, Warren Buffett became cautious in 1996. A lot of smart investors became cautious in 1998. If you became cautious in December 1999, it was still too early because a lot of stocks doubled in the next 3 months. So this is really about your mandate, what you want to achieve with your portfolio. Warren is as Naren rightly puts it, he doesn't have to report to anyone, including himself. So he's fine being early. Not everybody in this room can afford to be early. Yeah, so when this is always going to test everyone, but we don't know.
Yeah. Wrap up with your how are you approaching markets in terms of where wealth will be made from here? It's going to be relatively better, but relatively better where, Rhythm?
I think banks look very attractive. Valuations are, in fact, it's the only place where valuations are below history, where earnings are below history, where I think margins are stabilizing, likely expanding, where top line growth looks like it's accelerating. So I think lenders are probably the place to be. The other places in the market, I think, get a little bit more tricky because you have to have some faith in their ability to deliver into the future. IT services, I think, offer an interesting opportunity because the consensus seems too bearish. I agree with the point Neelkant made. It's not so simple that AI is going to, take over coding. In fact, from whatever I know, a lot of the AI work, the monetization of the investments that have happened is taking place here in this country. So it's unlikely that AI is going to... What is hurting IT services actually is the GCCs. It's not AI. Because we, for example, Morgan Stanley used to farm out a lot of work to IT services companies, say 5, 7, 8 years ago. Now a lot of that work happens in-house. So the amount of headcount that we have at our vendors has not grown, whereas our internal headcount has grown 3x,
Captive centers
5x.
has grown.
So that's really the proximate reason why IT services may be hurting, not AI.
So financials and IT services is a non-consensus kind
IT
of...
services, you have to have a 2 to 3 year view. I think financials will do well even on a 12-month basis.
Naren?
What we think is it's a mature bull market. So, there have been such good stock pickers in India that anything which has to be discovered got discovered. But a lot of people get
That is like
frustrated.
the efficient market theory.
A lot of people got frustrated. They buy in 2023, the share hasn't worked for 2-3 years. They get irritated, they start selling. So we found that in many sectors, people get frustrated holding a stock for 2-3 years, they don't get return, they come and sell. So we've been trying to buy wherever we find that the seller has got frustrated with holding stocks. Not like 2018 to 20 was very easy. You buy PSU, buy metal, buy telecom. All those stocks are very cheap. Today, all those sectors are not very cheap, but across, whether it is quality, whether it is many other sectors, suddenly you'll find someone coming and selling because they waited for 2-3 years, no return, they'll come and sell. So we buy across sectors. And we find, like recently we bought oil and gas, and we found that it suddenly performed. Now, today, if you ask me, is oil and gas the best sector? I would say, I would think, because oil and gas has done very well. So we look across sectors at this point of time. But do we expect mega returns from here? For that, we need supply to come down. The day supply comes down for 3 months, this flow comes, our SIP flow keeps coming, then I think we have a good rally ahead. But for that, we can't afford to have this kind of supply coming in the markets. And the difference, what Rhythm said is maybe 3% of GDP. But at that point of time, FII money used to be double local money. Today, we're having very low FII money. For that, Rhythm has to get FIIs to invest as much as domestics invest. Then we can have 3% of GDP. Today, the entire burden of matching what all the PEs and promoters sell, only domestics are investing. FIIs have a very small role to play. So for 3% of GDP to be absorbed, Rhythm has to do more work.
There's a good chance that FPIs turn net buyers in the next 12 months.
In the next 12 months.
Yeah,
okay.
because India will
Then it can be 3% of GDP. But otherwise, domestically, we can't absorb 3% of GDP.
Now Rhythm is promising he'll do work.
In 12 months.
Now Rhythm is promising he'll do work.
Neelkant, just 30 seconds. Where do you see returns being made from here?
I think financials, construction proxies. I think that hardware tech is, I think the current listed stocks, the universe is very bullish, but I think in the private space, you will see a lot more investment opportunities.
I had a lot more questions, but as always, we're always limited by time, and it's a packed day through the course of the day, and this is the top market panel that we put together for you. Rhythm, Naren, Neelkant, and Ashish Bhai, thank you all for joining us here on this session. Thank you very much.
Thank you so much for your valuable insights, Mr. Desai, Mr. Naren, Mr. Mishra, and Mr. Chauhan, and of course, Prashant. Ladies and gentlemen, a huge round of applause once more for our panelists here. We've been talking about markets and money, but underneath all of that sits something else, the technology that's quietly changing how businesses actually run. AI isn't waiting in the wings anymore. It's already in your supply chain, your customer service, your back office, and that raises a whole set of new questions.
Like what? Well, if intelligence can be embedded everywhere, who wins? What happens to jobs? What happens to India's ability to compete when every country is racing toward the same tools? Our next conversation gets into this, and it matters because we're not debating whether this happens, we're finding out how to make it work for us.
Requesting Shireen to kindly join us back on stage for this conversation with Oliver J., Managing Director for International Strategy at OpenAI, who works with organizations deploying these systems across industries. Ladies and gentlemen, please join me in welcoming them both with a huge round of applause.
Ladies and gentlemen, the conversations continue here at the second CNBC-TV18 Global Leadership Summit. You know, we were talking about some pretty awe-inspiring numbers there for the capital markets, but all of that dwarfs in comparison to the kind of investments that are being made in the AI ecosystem. Let me just throw some numbers for you. Sam Altman tweeting this morning saying we expect to end this year above $20 billion in annualized revenue run rate and grow to hundreds of billion by 2030. We're looking at commitments of about $1.4 trillion over the next 8 years. That's just OpenAI, and that gives you a sense of what is happening in the AI ecosystem today. Oliver, it's wonderful to have you join us here at the Global Leadership Summit. Thank you so much for making time for us here in India and joining us here this morning.
Thank you so much for having me.
You know, you've spent a few days in Bengaluru. You're here in Mumbai. Oliver, before I talk to you about India, I want to understand from your vantage point as an insider how you see 2025. From the outside, many of us believe that 2025 has in fact been an inflection year as far as AI adoption is concerned. How do you as an insider see 2025 from the OpenAI perspective?
I think 2025 indeed was quite an inflection year for us and for the industry. 2025, I'd say, in many ways, is the year we will remember as the year AI went from the chatbot era into the intelligence era. It's hard to believe that ChatGPT launched less than 3 years ago.
It's your third anniversary this month, I believe.
Exactly, exactly. It's not even 3 years, but soon. All right, we'll blow out the birthday candles, the 3 birthday candles soon.
But happy birthday in advance.
Thank you so much. Thank you so much. But when we first launched, most people experienced AI from the perspective of chat, as a chatbot. And it was already this marvelous experience that people have. And incredibly, when you look at what has happened in just such a short period of time, now with AI, AI is not about giving you just responses, helping you with search results. AI is actually doing tasks for you. It's actually completing tasks, is really thinking about what reasoning, right, through like what you really need. And then when you think about ChatGPT, what we're very excited about, our company and products, is actually moving up the layer now, and really ChatGPT becoming more of a platform. And so you'll see more of that
I want to push you a little bit more on this transition from being a chatbot to now becoming perhaps a platform, virtually an operating system, an AI operating system. What will this transition entail, and what can we expect now as far as the future is concerned?
Yeah, well, one thing for sure is I think you can see continued rapid adoption. Right? For us, we now have over 800 million weekly active users. Right? You see, we recently crossed 1 million businesses that are adopting our technologies. And so this is just the start. Right? I think when you see our products becoming more of a platform that just introduces many, many opportunities. Let me give you a couple of examples. We recently launched an apps SDK. So this is an ability for developers to publish applications in ChatGPT. What that means is a startup like a Zomato, right, can actually build an application and enhance their customer experience by building that experience into ChatGPT and take all their actions within ChatGPT. So what that does for companies, it gives them much more access to distribution, right, and leverage the fact that we are growing our user base, right? And a lot of that is India. A lot of that growth is powered in India.
You know, let's talk about India, because you look at international markets for OpenAI. India, did it surprise you, the kind of adoption rate that you've seen in India? It continues to be your second largest market outside of the US today, right?
Yes, absolutely. The momentum we see in India is incredible. It is indeed and still will be. I don't know, maybe not forever.
Maybe surpass the US?
Not sure when, right? Not sure if, but I can tell you one thing for sure. We're seeing tremendous growth. The growth in India we've seen it has tripled. It has tripled year over year. And so we're seeing a lot of that growth. And what's interesting about India, you know, I have the opportunity to fly around the world and meet with governments and businesses and developers around the world. You're seeing AI being adopted in all facets of society here. Right? I was in Bangalore. We held a developer day there. We had incredible. There's this energy, right, that you really don't get in any other places, where there's a hunger to adopt frontier AI. Right? We highlighted companies like NVIDIA and Eternal and Emergent, and these are developers that are building products that, in their categories, I would say, are in the frontier of their peers around the world. And so you're seeing massive adoption developers. In the last couple of days, I've been in Mumbai, and we're having conversations with enterprises and businesses, and they too are starting to go on this journey.
So if I were to read between the lines of what you're saying, you're almost suggesting that India is inspiring OpenAI and the work that's being done at OpenAI. Would that be a fair statement to make?
That is absolutely the case. Absolutely the case. I think a couple things that's really interesting for us when we think about India. We fundamentally believe that you build for India, you can build for the world. Right? India is really leading the adoption of sort of next generation. When you think about the population mix between 18 and 24 years old, right, that is a booming sector in India. And we have a very, very keen eye on how is that population using AI, using ChatGPT.
How different is the Indian consumer versus some of the other international markets, or versus the US in this 18 to 24 demographic? We were chatting before we came up on stage, and I said, my generation still uses ChatGPT more like a replacement for Google. We're still searching on ChatGPT. We're not looking for companionship. We're certainly not having conversations. What about you, Oliver? Are you having conversations? Are you looking for companionship?
You know, I think you're right. That the younger generation, right, they're using AI as really a true assistant, and in a couple areas. In India, for example, education, right, that use case is very, very popular, and we see students using ChatGPT to learn better and drive better learning outcomes. So when we thought about building the product for students, so we have something called study mode, right? What people might not know is we sent our user researchers to India to actually learn, right, from sitting down with students and see how are they using ChatGPT to learn. And that's why we built study mode, and that was the inspiration. It was actually from India.
And what was the big insight from that research that you did here in India that helped you develop and design study mode better?
The insight there is students are not necessarily looking for the answers. They want to understand how to get to the answers and really think about what is the chain of thought. How do you actually go through the steps, right? And critically think about how to solve a problem. And so study mode is a very interesting and popular. It's the most popular in India, not surprisingly, is because it is built where you ask it a question and it won't answer for you. It will prompt you like a real teacher would. Right? So you ask it like be really, really simple, right? What's 5 times 5? It won't tell you 25. It'll say, okay, here's a pattern, 5, 10, 15, what might be next? So that is, that user insight that came from India.
You know, speaking of India, you've decided to go free in India. You launched ChatGPT Go, but you've decided now to make it free and accessible to people who want to use it. Why? Did you want to consolidate your market presence in India, continue to build on the first mover advantage, or do you believe that there isn't the capacity to pay at this point in time for the large user base that you want to collect?
I'm really glad you brought up ChatGPT Go. That's another example where India was inspirational for us. So when we listened to our users in India, what we learned was a lot of users wanted access to the frontier versions, right, of AI, but they needed it to be more affordable, more accessible. And so we've made a lot of investments to make sure that our products can be accessible and affordable in India. In fact, just the other day, we announced a benchmark called QA, and this is a first of its kind benchmark that improves the ability for models, not just in terms of the Indic languages, but also understanding culture. Right? We worked with like over I don't know how many hundreds of experts in India, right, to actually help to teach the models, right, to understand deep context, cultural context. That's usually not just black and white answers. ChatGPT Go is another example where we wanted to make it more affordable, and given that our mission is bringing AI, right, the benefits of AGI to humanity, to everyone, that aligns very well with the India AI mission. And in light of the Global AI Impact Summit being held in India
next year,
right, we wanted to make sure that our frontier models can be accessible to as many people as possible, whether you're a housewife, a student, a farmer in rural India, right? That was the inspiration.
You know, you talked about ChatGPT Go, but you also gave us another number there, 1 million as far as enterprise customers are concerned, and of course that's a global number. What's the enterprise adoption in India? How do you see the enterprise side of the business growing for you here?
Unsurprisingly, there's a tremendous amount of interest. Right? I think that part of that might come from the engineering strength that we have in India. But I can tell you that the energy and the interest is very, very palpable. And I've had a very, very busy couple of days. And a lot of it is because I'm meeting with a lot of enterprises that are leaning in, they're asking the right questions, how to deploy AI responsibly and in a way that really transforms how enterprises operate.
You know, Oliver, globally, what OpenAI has done in this year is sign up billions in deals with various companies, whether it's NVIDIA, AWS, Oracle, and of course, you've seen the Microsoft restructuring go through as well. You know, how much of the AI infrastructure ecosystem are you willing to build out and bet on in India? What would be the route to being able to do that? Are you in conversations with the government? Are you in conversations with private players at this point in time? You know, explain to me what aspirations you have from an AI infrastructure point of view for India.
Yeah, trust me, if it's hard to keep up with headlines, it's hard for us internally to keep up with the headlines as well, and it's easy to get caught up in it all.
Do you have an agent just tracking all the OpenAI headlines for you?
That is a fantastic idea. I'm going to do that. Good thing is with our technology, I could build that within 2 minutes.
I would imagine.
And I can share that with you. I think the important thing here is understanding our philosophy and our perspective. So based on the trends that we see, based on what we see coming and emerging in our labs, based on, you asked earlier on enterprise demand. Enterprises, there's an abundance of workloads and use cases that AI can transform. So based on all that, we see tremendous demand, tremendous opportunity, and we think the risk of not having enough compute is far greater, right, far greater than having too much. And so this is really the reason why we're very, very excited that we have, it's not just us, right, that we've been able to build a ecosystem and a coalition of like-minded partners who also see what we see, which is we have to be ready for the future, and we think that that the next couple of years will be incredibly exciting on that front.
You know, while we're talking about what this could mean in the long term, and I think there is consensus that this is going to be pretty transformative in the long term, I think the more relevant question that's being asked today is what happens in the near term to the medium term, and that was being discussed in the previous panel as well. Valuations, are we in bubble territory? Are we close to bubble territory? You know, from the inside, what do you make of the debate on valuations as far as AI is concerned today?
From the inside, we're just laser focused on deploying the AI to companies, right? What I can tell you is the demand is across every sector, every geography, and I can also tell you that these companies are starting to get real value from their investments in AI. And you're seeing this, you'll see this in their top line. You can
is
see
the
this
return on investment
line.
starting to show?
Absolutely, you can see this. We can see it in the projects, right? And I think this is why AI is so powerful, is because it's really the first time with software where the time to value is so short, right? You can think about companies that we work with many companies on on customer support, for example, is a very mature use case now. If you have a B2C company, right, and you swap out the previous deterministic type of models with a frontier AI model, your NPS could jump. You know, one of the biggest airlines in the world, their NPS jumped from 40 to 75 overnight, right? And so that's immediate value. Increases customer retention, satisfaction, experience. And so that is really why you're seeing this adoption, is because it's not just a tool, right? It really is driving real ROI. And I always tell companies, if you're engaging on an AI project and there's no real ROI, you're engaging in the wrong project. But I can guarantee you, every company, you can find at least 2 to 3 use cases that you should be able to materially improve either top line or bottom line.
You know, you call that customer service as one of the use cases where we have seen a degree of maturity emerge. Which are some of the other use cases that you believe are on the inflection point of being able to deliver the kind of value that customer service, for instance, has done?
You know, back to my comment around learning from India, coming out of this trip, I am more confident than ever before that commerce can be an incredible vertical and it can be transformed by AI. I think
you're experimenting with that already.
We are, and I would say I'm not sure if it's an experiment anymore. Like this is I think the future of how people will experience commerce. So a lot of people already come to ChatGPT to learn more about products and ask, understand, do their product research. Gifting is not a strength of mine. It's not one of my love languages. And so every time it comes to my wife's birthday, Christmas, anniversary,
you outsourced it to an agent.
I'm very bad at this, right? Suddenly I've been not bad. And it's because ChatGPT is such a great commerce partner. It's like a shopping assistant, right? And so it makes a lot of sense that I think you'll see more and more of that use case moved into more AI native experiences, both in our apps as well as in the actual, in actual partners' applications. So I think commerce is something that we're very, very excited about, and I'm particularly very excited about commerce in India.
You know, I'm going to give the audience an opportunity to chat GPT your questions to us as well. So if anybody has a question for Oliver, do raise your hands. I'll try and get the microphone across to you. But you know, Oliver, since you look at international markets, and while we are talking about the need for harmonized regulation, for uniformity as far as rules are concerned, every jurisdiction is dealing with regulation in its own way. India has just put out its own AI governance framework, and while you will have to comply with whatever whichever government decides to do. Does that, how does that impact the fact that you're dealing with different regulations across different geographies? How does that impact your planning as well as your execution?
For us, it makes sense, right? We think we've always taken a stance of engagement. The first person we hired on the ground here, right, when ChatGPT was only like 1 year old, is someone to focus on engaging with government and with policymakers.
And is that why your office is in Delhi and not in Bangalore?
Look, we are hiring everywhere. We are hiring everywhere. And yeah, but for us, it's really about engagement. This is a new area, and we think that it makes sense. And so we look forward. We look forward to working with different governments on multiple areas, right? Policy being one of them, to make sure that AI can be used and benefit society and can be used in a responsible way. And we're doing that everywhere. Yes, so back to your question, how does it impact? It means that I am collecting more and more airline miles because it just means I have to fly to more places. But these conversations are great because they're very productive and everybody wants the same, which is getting the benefits of AI.
Prashant, I could see you. I could see you gently raise your hand. So maybe we could get a microphone across to you, and we'll take that as the last question before we close. If we can get a mic across to Prashant. Prashant, you can run up on stage, and that might make it faster if we with that there. Go ahead.
Oliver, thanks very much. Fascinating chat there. In the last panel, there's a lot of hand-wringing in India about the fact that we don't have real frontier foundational AI models. It'll be uses of frontier models like ChatGPT, but do you see a roadmap where with India, with its engineering talent, is able to build a foundational deep tech frontier kind of model? Not exactly another ChatGPT, but something on those lines. What's your sense? You've been here meeting people across enterprises, as you said. How do you see it?
Undoubtedly, I think that my takeaway from being in India the last couple of days is just the talent. Right? The engineering talent is unparalleled, and so much talent, right? And so I don't know the answer to that, but I would not be surprised. I think that India certainly has tremendous talent, and we're a very, very excited partner with the ecosystem.
So Oliver, let's close by asking you, what could the headline potentially be for OpenAI in India in 2026? ChatGPT?
Yeah, I think it would be, my hope is that the headline is not about ChatGPT. My hope is that the headline should be around how ChatGPT, AI, and our services has actually impacted an incredible swath of the part of the population. And I think that would be the headline we're going to go for. It's not about us. It's about really making sure that India benefits from all the research and the progress we've made in AI.
And we look forward to seeing a lot more of you here in India. Oliver J, many, many thanks. Ladies and gentlemen, a big round of applause for Oliver J, the MD at OpenAI, looking at international markets, very, very confident about their growth here in India. Appreciate your time. Thank you very much for joining us.
Thank you for having me.
Thank you, Mr. Jay and Shireen. That was illuminating, especially, on how quickly this is moving from theory to practice. From intelligence here on Earth, we now turn our gaze to the cosmos, where India's ambitions are soaring higher than ever.
In just 2 years, ISRO has redefined the boundaries of space exploration from Chandrayaan-3's historic South Pole landing and Aditya L1 solar orbit to new navigation satellites and the NASA-ISRO NISAR mission that took flight this July. It has been a remarkable trajectory of science, scale, and ambition.
And to take this conversation forward, may I invite Parikshit Luthra from CNBC-TV18. And joining him is the man steering India's next great leap in space exploration. Under his leadership, ISRO continues to push the frontiers of innovation, discovery, and global collaboration. Please welcome, ladies and gentlemen, Dr. V. Narayanan, Chairman of the Indian Space Research Organization.
Thank you so much, Mr. Narayanan, for joining us at our Global Leadership Summit. I just want to begin with a bit of introduction. ISRO has been a very, very close part of India's growth story and will continue to play a very important role in the Viksit Bharat vision by 2047. What is the size of the global space economy? Ladies and gentlemen, according to the McKinsey report, the global space economy was about 630 billion US dollars in 2022. This is set to grow to 1.8 trillion US dollars by 2035. What is India's size of it? Currently about 2 to 3%, 8.2 billion US dollars. This is set to increase to 44 billion by 2033. The Indian government, along with ISRO, has been rolling out several reforms. We've launched InSpace so that ISRO and InSpace together can mentor startups. There is a FDI policy for the space sector. We've significantly liberalized FDI almost up to 100% to encourage investments in private companies. You also have a venture capital fund for startups, which is almost to the tune of 1,000 to 1,500 crore rupees. So what more is ISRO's ambition? What does Mr. Narayanan see that ISRO and the private sector can do together? Ladies and gentlemen, let me begin by speaking about the Bahubali. Yes, just a few days ago, India launched its heaviest communication satellite. It was a 4,400 kg LMV-3M5 that was launched. Mr. Narayanan, a proud moment for you, isn't it? Could you tell us, what does the Bahubali satellite say about India and ISRO's abilities?
Thank you. As you introduced, on 2nd November, we have successfully placed, using our Bahubali rocket LVM-3, the CMS-03 communication satellite, which is the heaviest satellite ever launched by Indian launcher in the geotransfer orbit. And this is going to bring a lot of benefit in the communication area. In fact, when I look at the launch vehicle, this is the launch vehicle, this is the 8th successful mission of this LVM-3 rocket, built totally by India. And today, we can say one of the launcher, what we are having, has performed 100% reliability, all the launches going through successful. Again, when we started this countdown for this mission, we had to face tough weather situation. Then we were thinking whether we had to postpone the launch. Then after thorough analysis, with the entire team, we decided to go ahead with the launch. And today, it is a successful story. And India has placed the heaviest communication satellite in the geotransfer orbit using our own launcher. In fact, a similar rocket, similar communication satellite, 12 years back, we had to go abroad and launch. And we have built the capability today, and we have launched. It is a proud moment for all the Indians, not only ISRO team, the entire Indians, not only in India, across the globe, and we have accomplished this mission.
Right. Ladies and gentlemen, a big round of applause for the ISRO team for the launch of the big Bahubali satellite. Mr. Narayanan, when it comes to collaboration with the private sector, today India has approximately 350 space startups. You've been mentoring them. Could you give us a sense of what do you really want private sector companies in the space domain to do? Also, if you could give our audience a sense, this is a very serious audience who are looking at opportunities in the space sector, in the defense sector, very, very closely. I'd like you to give us some vision in terms of our import dependence right now and where the private sector can come in to complement ISRO and our space ambitions.
Well, let me address this question in two parts. Number one, our program started almost 63 years back, and we have built almost 6 generations of launchers and 134 satellites. And currently, there are 56 satellites in the orbit, serving the common man of the country. And these numbers have to be taken to at least 3 times based on the vision of Honorable Prime Minister in another 2 to 3 years. That is what we are talking. And whenever we talk about a launching taking place, or a satellite being placed in the orbit. You know, out of the entire money, almost 80 to 85% is pumped in the private sector for the hardware realization. For example, this Mark III vehicle, what we have launched a few days back, almost 80 to 85% of the fund for realizing that vehicle has gone to both the private and Government of India undertaken companies for realizing the hardware. That is one aspect. Second thing, it was 2020, our Honorable Prime Minister Narendra Modi ji and the Government of India rolled out the space sector reform. In fact, when the space program was started, our idea was to bring the benefit of space technology to the common man of the country. We were not looking at it, to be frank, the business model, and that area we were not concentrating. Today, as you rightly told, the total space economy, global economy is something around $630 billion. And when we really reviewed, our share is hardly only 2%. And this number has to be increased. And this the space economy is going to be almost $1.8 trillion by 2035. And we are putting a target, ambitious target of 8% of that amount. And we are working towards that. Thanks to Honorable Prime Minister Narendra Modi ji for the great visionary leadership, great thinking. He and the Government of India rolled out the space sector reform. When the space sector reform was rolled out, hardly few startup companies were only working. Even though 450 industries are contributing for our program, they were like a vendor type of work only was done. But today, something around 330 startup companies are working in launcher build-up, in satellite building, in utilizing the satellite data. You know, huge satellite data is available. Utilizing the data for the benefit of the common man on real time, and people are working in that area. And Department of Space, as Secretary Department of Space, it is my responsibility to handhold them and ensure the space ecosystem in the country is growing in a different level based on the direction from Honorable Prime Minister. Towards that, lot of things are put in place. There is a in-space system for promotion and authorization. We have brought a new system, and which started almost 3 years back. And the government is really supporting in a big way the financial incentives in terms of technology adoption fund, venture capital fund, and common technical facilities. Because when somebody is starting a space activity, if he has to invest huge money, it is not possible. So common facilities we have established, and we are totally hand-holding them. It is not that private companies or startup companies are doing the work on their own. We, the ISRO team, the Department of Space is hand-holding them for enabling a vibrant space ecosystem in the country. Thereby, we can contribute for the Viksit Bharat 2047.
All right. Sir, I would also like to ask you, and this is something that startups and the space sector would like to know. Are there more reforms in the offing? Are there certain measures that you are considering as head of the Department of Space, as the ISRO chairman, to maybe make it easier for space companies to operate, maybe attract more investments from global players into India?
Yes, answer is yes. In a single statement, I can tell the answer is yes. Because when you look at the demand, say there was a time 50 years back, our first space application was rolled out only 1st August 1975. Until then, there was space, but there was no space application in our country. And today, when I look back, there are 50 space applications which are there. And today, I cannot think about a country, a common citizen, without this space program and space application. 50 years back, that was not the case. The application goes every area. Let it be ensuring food security, water security, disaster warning and management, and connecting trains real time, monitoring the borders, ensuring safety and security of common man of the country. Everywhere it goes. And also there is a lot of opportunity for the economic growth based on this. When you talk about a space ecosystem growth, it brings lot of economics. The growth of the country is going to happen. It brings lot of potential job opportunities, and lot of things are happening. And we are open for international cooperation. We are allowing even foreign companies to invest in our own area. And when you look at, the demand, I would like to tell a couple of examples, then probably you can understand. 1979, we built the first launcher and we placed in the orbit successfully in 1980. The capability of that vehicle, it was done by project director was none other than APJ Abdul Kalam ji. The capability of the launcher was just 35 kg at that point of time. And today, our operational vehicle, the Bahubali rocket capability is 10,000 kg to low Earth orbit. Now, we are conceiving and building launches for placing 40,000 kg, 80,000 kg type of satellites in the low Earth orbit. And the demand in terms of satellite requirement for the country is huge in numbers. Whatever we are having is very, very small. Something around 56, 57 satellites in the orbit is very, very small for a country with 140 crore citizens. It is very, very small numbers. And we have to enhance these satellites so much. Second thing is, yes, we are having lot of satellites and so much data is there. And this data should be made available for the common man. One example I will tell you. There was a time, if any natural calamities happen and if the people, the farmers have to claim the insurance, what is the type of time involved? They have to go approach the insurance company, they have to come, assess, and it is a 2 to 3 months process. But today, using the satellite data real time, in 5 minutes, you can demonstrate what was the situation before the calamity and what is the situation, and people get the insurance just released. And like that, this is one application I have told. And there are so much application which is possible. Thereby, we are encouraging not only Indian companies, other companies also to contribute for our space ecosystem growth. And Honorable Prime Minister is rolling out all the measures, whatever is required for the space ecosystem growth of our country.
Mr. Narayanan, so I'll pick on one thing that you said, that you are looking to launch in future 40,000 kg, 80,000 kg satellites. Now that is big. Bahubali was 4,400 kg as a communication satellite. So when can we see the launch of a 40,000 kg or an 80,000 kg satellite?
Let me clarify one point. Our Bahubali rocket, right now you have placed 4,400 kg in the geotransfer orbit. I am translating everything to LEO orbit. If I translate this payload to LEO orbit, this is equivalent to 10,000 kg. Let me clarify that point. Now, with respect to 10,000 kg, we are talking about 40,000 kg, 80,000 kg, this type of capability we are talking. Now, we are already, the NGLV project is approved, and maybe in another 6 to 7 years, we will have the capability of placing 40,000 kg to low Earth orbit. 40,000 kg is 4 times of this present Bahubali rocket capability. Then, Honorable Prime Minister has given a guideline for us to work on crewed mission to moon, taking Indians using our own launcher to moon, land them safely and bring them back safely. For that, we have to build launchers capable of taking 80,000 kg, 75,000 to 80,000 kg to low Earth orbit. These are all targeted by 2035 time frame.
So by 2035, we'll be able to put an Indian on the moon, sir. Is that what you're saying?
2040, we are targeting place on the moon. 2040, we are targeting to place an Indian on the moon and bring them back safely. To enable that, by 2035, the rocket should be ready.
Okay, 2040 is when...
once rocket is ready, we have to accomplish a couple of uncrewed missions, then only crewed missions.
Right, so 2040 is when we're looking to put an Indian on the moon.
40,000 kg capability will be built by 2032, that type of time frame.
All right, thank you, sir. I'd also like to ask you about the Bharat Antriksh Station. Very recently at the Space Day, the Prime Minister announced plans to have a Bharat Antriksh Station. Now, experts also say that this will require a lot of investment initially and also to maintain, maybe around $3 to $4 billion annually. Why is a Bharat Antriksh Station or an India space station very important for us, and what's the role for the private sector?
Let me answer like this. Say, 50 years back, if somebody would have thought that we are going to develop a rocket, satellite, lot of people are questioning. And when we are talking about our own moon mission, Chandrayaan type of mission, people are asking question, why this is required? There are so many people who have gone and come back. What for it is required? But dear brothers, I want to tell you one thing. Even though so many people have gone and landed and lot of things have happened, it was Indian mission, Chandrayaan-1, of course, along with USA support, we only found water molecules for the first time on the moon surface. Please understand, man has landed on moon in 1969, but it was recently, 2008, it was Indian mission which found water molecule on the moon. And today, when you talk about a space station, it is a need of the hour for India to have its own space station. That is the program what Honorable Prime Minister has announced, the Bharatiya Antariksha Station. It is a 52-ton mass space station with 5 modules, because nobody will lift as a single module. We are planning to lift as 5 modules, and the government of India has given approval for the first module. Now, if you ask about the benefits, number one, there are a lot of technological developments. Second thing, lot of microgravity experiments can be carried out in biomedicine, biomedical area, in manufacturing area, in materials area, in so many areas. So much experimentation can be carried out. And again, when you want to go for deep space missions, interplanetary missions, one is, yes, you always take off from Earth and move. And this can be a via media, a space station in between. For example, if you have to go to moon and land and come back, it can be an intermediate station which can be useful for that type of purpose. Another thing is, say, today we are talking about, a lot of satellites in the orbit. And we are also talking about how to reduce the debris content in the orbit. And there are ways and means of reducing the debris content. One is refuel the rockets, refuel the satellites. Another one is if satellite something gets into some trouble, you catch hold of them and do some repair work and reuse. So a lot of things are possible. So the space station is going to be highly useful. And this is the time. Suppose when we got independence, the country's stature was a particular stature. Today, we are the 4th, economic status-wise, we are 4th in the world, and we are aiming towards becoming the 3rd level. And it is the time, Honorable Prime Minister, it's the right decision, he has rolled out this program, and it is going to be highly beneficial in long term for the humanity and for the Indians.
Right. Mr. Narayanan, what would be the possible cost of building this space station?
It will be in today's amount, approximately 12,000 to 15,000 crore is the type of amount what is required.
Right. And this will all be brought in by the government, or you're looking at a public-private partnership?
Say the first module, the entire approval is given by the government, and remaining, we have to take a call on this. But I want to tell you one thing. When we talk about this type of things, the hardware realization, which consumes almost 70% to 80% budget, this is going to the industries. And you can understand. Otherwise, the funding part today I cannot comment. And for the first module, Government of India has totally funded.
All right. I'd like to ask you about investments in the space sector. We saw a slowdown in space investments globally in 2024. It was a 55% fall compared to 2023. Why do you think the investments in the space sector, including in the Indian space sector, have been falling? And what would be your advice to the private sector in terms of the kind of solutions they should be looking out for? What is the kind of value addition for the future that could change lives, that could be useful for people like you and me, and that could actually attract investment? So what would be your advice to the private sector?
My advice to the private sector is, if you do a small study, we have started the space program something around 63 years back, and till today we have built only 134 satellites, and we have accomplished only 103 launch vehicle missions. But as a country, when you look at, for example, take Sintur operation. For Sintur operation, the satellite has to be utilized, and the entire activities happened in one portion of the country. Now, if the entire country has to be monitored and the safety and security of the citizens has to be ensured, the number of spacecrafts required are huge, and it is government alone cannot do. And the launch vehicle required are so much. Another thing I want to share one point. Say we had recently, based on the guideline from Honorable Prime Minister, 63 government departments are using the space data, satellite data, like Agriculture Department, Water Resource Department, Railways, and then, of course, Airport Authority, and the IMD. So many departments are using. And all state governments, for one way or other, they are using the data. And we had a user meet with all the people, all the user department, all the state government. You know, almost 90 reports, each running into 200 pages as the requirement document has come out for next 15 years. We have summarized everything. Now we are taking forward. I can only tell to the private sector, the space demand for our country is huge. The satellite demand for our country is huge. When we talk about a developed nation by 2047, that stature, there are a lot of things has to be done. And space is going to contribute in a very, very big way. The internet connectivity, disaster warning and mitigation area, connecting trains on real time, and connecting automobiles on real time, and reaching out to all the citizens, and so much, and ensuring food security, water security, telemedicine, so much application. In fact, if you allow me to talk on application, I will talk 5 hours on application alone. That is the type of demand. And you know, for example, you take lightning as one of the disaster. There are people today we are losing, and we are working on that area, how to have a advanced forecast. And earthquake, we are working on that type of area. So thereby, I can tell the space is going to be a very attractive area, and government alone cannot do. It is the private sector, the startup companies who have to really come forward. And we, as the Secretary Department of Space, as part of the government, we are there to handhold. And I can assure those who have worked in the space.
Mr. Narayan, you know, one question.
Worked in the space,
Yes,
never, ever, only one point. Those who have worked for us in the space program, never, ever, they have got a loss in the game. Always they have grown along with us. That much I can tell in a single statement. So we are welcoming all the industrial partners and auto companies to work with the space
Mr. Narayan, if India has to become a developed nation by 2047, how many launches do we need to have per year?
In my opinion, I think Honorable Prime Minister has recently clearly rolled out, first to your question, at least 50 to 60 launches, 50 launches minimum per year has to happen. This is what current thinking. And when I joined in this organization 41 years back, one launch once in 3 years. That was the story. And from that, almost a launch per month we have come. That means 12 launches per year. Now this number has to go at least 4 times. This is the direction. This is the guidance given by Honorable Prime Minister. And we are working towards that. And we will achieve this in another 4 to 5 years time frame.
Right. My final question, sir. It's been excellent having you here at our Global Leadership Summit. My final question, one personal vision of Mr. Narayanan, our ISRO chief, something that he wants achieved during his tenure. If there's one project close to your heart, which you hope that India achieves in probably during your tenure or in the next 10 to 20 years, what would be that dream project for you?
I will give you 2 projects. First one, the Gaganyaan program, the Indian human spaceflight program, and sending our own Gaganyaan 3 to space and bring them back safely. We are working for quite some time. And right now, it is not ISRO program alone. It is the Indian program. It is a country program. And I want to accomplish that program. Right now, we are working on the uncrewed mission. And we have to have crewed mission. And of course, then after completing 3 uncrewed missions, we have to go for the crewed mission. So that is one of the activity. Another thing is, our country, when we started our space program, we used to move our rocket pods using old bicycles. I think you all may be knowing. From that, today, 10 places we are number 1 in the world. 10 places. And at least few more places we want to become number 1 with the contribution of ISRO during my tenure. This is second target what I am having in the mind.
All right. Big round of applause, ladies and gentlemen, for the ISRO chairman. Thank you so much, sir, for taking out time to showcase your vision for India's space sector, the opportunity for the private sector to step up as well, and the kind of value addition, the kind of products we should be looking at, and also giving a challenge to the private sector to at least look at 50 to 60 launches per year. Thank you once again for being with us here at our Global Leadership Summit.
Thank you, Dr. Narayanan, and thank you for... Thank you, Dr. Narayanan, and thank you so much, Parikshit. Let's zoom out for a moment, because across boardrooms worldwide, 2025 has been a year of serious recalibration. What started as managing inflation and supply chains has turned into something bigger.
It absolutely has. Companies are now dealing with geopolitical tensions, tech disruption happening at breakneck speed, and consumers who want very different things than they did just a few years ago.
Absolutely. Strategy is being rewritten. Please welcome back Shireen on the stage to lead the conversation and to give us that global perspective. We have Christoph de Vusser, CEO and worldwide managing partner of Bain & Company. Please welcome him, ladies and gentlemen, with a big round of applause.
Well, ladies and gentlemen, you just got a glimpse from the ISRO chief on what India's space program is going to look like and what the ambition and the aspiration there is. It's time now to bring things back to earth. And Christoph, thank you so much for joining us here this morning. It's a pleasure to have you at the Global Leadership Summit. We last spoke in Davos at the start of 2025, and you were very bullish on India. In fact, you said that if you don't have a seat at the table as far as India is concerned, then you're missing out on something. I'm paraphrasing, of course. But as you look at how the year has panned out, more importantly, what has happened as far as the global economy is concerned, what's the read now on India as we look into 2026?
Yeah, I think first of all, it's a pleasure to be here and great to be together again. The read on India, in my view, is very similar to the read that we had on India a few months ago. Despite everything that happened over the last months on a global stage, India continues to be pretty much the only country in the world, the only scale country in the world that, if you take a longer-term view behind the short-term vibrations, can focus on what we call a double engine, a dual engine. You have incredible population growth, and that is what a lot of countries in the world would be dying for nowadays. You know, if you look into China, Europe, even the US with some of the latest policies, you will have a reduction in labor forces in big parts of the world. That engine is a fabulous engine for India. And then the whole recalibration towards a post-global world and the role that India can play to it is a second engine that India can play out. And so doing that at scale in a country with 1.5 billion population in the future is kind of an exceptional position to be in. So we continue to be incredibly bullish on India in terms of what can be done within the country, and for India, what it can do at a global scale. That dual engine for India is exceptional in today's world.
You know, let's talk about that dual engine that you talk about from an Indian point of view. And while the services side of the story has, of course, been firing on all cylinders for a while now, the hope is that the manufacturing side of the India story will also fire for India in a similar way. What's the sense that you get specifically on manufacturing in the context of this global reshaping of supply chains, diversification of risk, and people are sort of looking at investments? Do you believe that this is going to be the opportunity, this is going to be the breakout moment, so to speak? Or given the fact that we're on the receiving end of the US tariffs, that there's going to be a little bit of a pause on that?
Yeah, I think we need to look for India always behind short-term changes on tariffs, on policy from the United States. So yes, there's exceptional tariffs at the moment on India driven by the oil purchases that you do from Russia. But I think in the longer term, all of that will normalize, and it will normalize on a global basis on the fact that tariffs for everybody around the world will be a fact as a core policy in the United States, independent in our view if it's a Trump administration or another administration. That will be a feature of future trade relationships with the United States because they need it from a fiscal point of view. And so that opportunity for India on the manufacturing side continues to be there for the longer term. And the opportunity, I think, for India is to take the manufacturing side, not just like, for instance, China has taken it in the past, but immediately take a future-back view on how you can take manufacturing. If we see the big global trends from a manufacturing point of view, it will go robotic. You know, the humanoids will be coming our way. And I think India has a unique opportunity to build out its manufacturing vision on future policies around electronics, data centers, etc., and around a way of manufacturing that will be the future way of manufacturing. Doing it in a robotic way fully, and then build the high-quality jobs around it that will serve India beyond the pure manufacturing jobs.
That's interesting that you talk about moving towards robotics and humanoids, and of course automation has been part of the Indian manufacturing story, just as it's been part of the global manufacturing story for many years now. But I would imagine that the challenge that policymakers and CEOs are faced with today is, what do you do with jobs? What do you do in the transitory period? Because the pain is often mostly felt during the transition. So how are global boardrooms at this point in time envisaging this future where you're going to have more robotics, humanoids? How are they prioritizing the needs of the people versus the needs of the organization?
Yeah, so it's going to be an interesting future, both on the physical labor and on the brain, let's say. Both will transform. You know, the one will go through increased robotics and humanoids, the other one will go through increased agentic. I think as global companies, you always have to lean into the future. So you cannot say, I'm afraid what's going to happen with my workforce, so I'm not going to lean in, because that is a de facto loss of long-term competitive position, so you have to lean in. And then what we see with all those transformations, they're required for competitive advantage. They're business transformations enabled by technology. You have to reimagine every single of the workflows that you operate as a company. And then comes the trick. As you reimagine the workflows of your company, you have to reimagine how you adjust the workforce of the company, and doing that hand in hand in order to reap the benefits of the AI revolution, and at the same time to develop, upskill, and transform the workforce that you will be sitting on. And like we've seen in prior technology revolutions, 90% of the jobs that existed in 1900 didn't exist a few years later. And we will see a similar evolution. The current jobs might be replaced by other jobs. It will not be that current jobs will all disappear. Because nowadays you see already with agentic, you can't just trust agentic. You still need to have a human in the loop. We're just going to see a different workforce, different skill sets of the workforce that will be required. And that dual migration of workflows and workforce is the invitation that we give to all the CEOs in all of the boardrooms, not just to focus on the AI use case, but workflows and workforce in parallel.
Yeah, work on both those in parallel. But, you know, we're here, Christoph, to talk to you about what global CEOs are thinking at this point in time. And you said that fear should not hold you back. In fact, if anything, this is a time for companies and for CEOs to lean in. What are you hearing within boardrooms? Where are CEOs choosing to lean in? What are they choosing to lean in on?
Yeah, the obvious one is, of course, AI. Everybody's leaning.
How could it not be?
How could it not be? And they're leaning in on different ways. I think increasingly people see that it's not just leaning in, as I said, on the use case. It's leaning in on the business transformation for competitive reasons. It's leaning in as CEOs, not to outsource, let's say, your transformation to a chief digital officer or a chief data or technical officer, but as CEO, you have to lead the business transformation yourself.
So the CEO is now the CTO and the data officer all in one?
No, the CEO orchestrates the business transformation enabled by AI and takes it as a business transformation. And that is a big shift also because everybody, of course, spends significantly more on technology now, and you need to see the returns of the investments that you do.
And you can only do that if you take it as a transformation, not as a use case that tries to scale. The other question that's in all of the boardrooms and that you hinted at is, how do I navigate the post-global world?
Yeah.
What's funny, we often hear companies say, we don't necessarily have our geopolitical strategy sorted out. And we say every company has its geopolitical strategy, because where your people and your assets sit at the moment, that is your geopolitical strategy. And then you can say, where am I long, where am I short in my strategy, and do I like what I'm sitting on, and how do I navigate and change that? So first AI, second the geopolitical side. And the third one is, do I have enough energy? Do I have affordable energy for the future? And the fourth one is, capital is going to be structurally more expensive in the future, is our view. You know, again, making abstraction of short-term changes in interest rates. But all of the dynamics drive higher cost of capital, and we can expand if you want. And so the choice of where am I going to spend my money? How do I drive my capital allocation between technology, geopolitical strategy, and all the investments, M&A that I need to do, is the fourth one of the core trends that we see in boardroom. And that is, it's exciting to be a CEO in today's world. It's exciting to be in the boardroom.
Is it? I'm asking you, is it exciting?
It is exciting because it's one of those unique moments in history where we're living through a general purpose technology revolution in a geopolitical, reset in a certain way. And these are unique moments to lead as CEOs, to drive strategy as CEOs, change your organization. So I think it's very exciting.
Let's double down on those 4 pillars that you spoke of. And let me start by talking to you about AI. And as you rightly said, every company today is positioning itself to be an AI company. We're seeing trillions of dollars being spent. We just had OpenAI, and they're spending or intend to spend $1.4 trillion over the next 8 years on AI. What kind of capital are we talking about within the boardroom for organizations that are not necessarily tech companies or AI companies? How are they choosing to invest, and what are they looking at in terms of timelines on return on their investments for their AI adoption?
Yeah, it of course differs very much where you sit. If you're a services company, if you're a manufacturing company, etc. I think we differentiate between a few very different classes, which is everybody that's investing in the infrastructure at the moment puts massive amounts of capital because they don't want to lose the race in the world of capital deployment. I had one of the CEOs of the big 4 hyperscalers tell me at a dinner that we had to say, I'd rather spend 50 billion now, too much, because if I spend 50 billion too little and I lose the competitive race, that is an issue. Now, will all that capital drive returns? It's a big question, right? Because we think there needs to be a 2 trillion additional revenue being created in order for having the payback on all the capital investments that are being done now, and that remains to be proven. Now, everybody that's on the application side of the AI obviously spends in a different way. And if you're on the application side, I think you need to count on increased technology spend in order to have the compute power, in order to have the robotics, in order to have everything that we discussed, and spend more focus on how is that investment in the AI side going to pay back, and do I actually understand the drivers of my capital allocation, the drivers of my, of the services that I buy, and how it will return, and is that investment directly linked to the areas that will drive competitive advantage in the future? So what that means is, does it drive better products that I put into the market? Does it drive better customer service? And does it build my long-term competitive cost advantage? And what we see CEOs do more and more is to make the direct link between competitive advantage on those dimensions and the investments that they do. And that is a very different philosophy that we see in boardrooms now versus, as I said, let's try use case and see if we can prove that the technology works. Link it more to competitive advantage and the direct returns on the on the investments that you do.
So let me link competitiveness as well as the investment philosophy or the investment thesis driving CEOs and boardrooms today. And I'll ask you this in the context of a debate that's raging here in India for the IT services sector, for instance. Have we done too much in terms of capital allocation on buybacks and too little on innovation? So, what are you seeing in terms of the choices that people are willing to make? Is it also going to drive more M&A? Is it also going to drive more acquisitions as people look at enhancing and beefing up capabilities? Could we now see the next wave of that, Ansu?
Yeah, I think it's going to be the two parts. So the first wave, and I build on the IT services part, IT services, global capability centers, that core part of the Indian economy will have to transform itself. It has to lean into the AI, it has to understand how it changes the pricing model, value-based versus people-based. So there's a big transformation that needs to happen there for every single of the company that sits on a lot of physical labor, to see how they innovate with AI and they change their business models. IT services pricing, as I said, that's a big one. The other piece that is interesting to see from an Indian point of view is M&A is always a core part of leaning into the future. Even if you look at how the big hyperscalers in the US build a core part of their capabilities, they Google and they've built a significant amount of that through M&A. Within India, we see that you sit on 2 to 3% of the GDP that goes into M&A. And that is lower than what we see, for instance, in the United States or other parts of the world where it goes up to 5%. And I think there's an opportunity for the leading firms in India to lean even more within the new capabilities through investments, through M&A, and get it up to the level that has actually allowed some of the leading firms around the world to build their capability set through increased M&A. And I think the regulatory environment will also allow for that.
So lean in on M&A is the message to corporate India, Christoph. But let's address the geopolitical reset that you spoke of. And I think every leader here in this room and those watching us on TV and online are grappling with this. What can organizations do? What are organizations doing at this point in time to deal with this global reset? How are they trying to mitigate risk? Diversification of supply chains, etc., is the obvious choice. But how else are they trying to deal with this geopolitical reset?
Yeah, we talked about everybody has the geopolitical strategy, and we recommend companies to think like a hedge fund.
Okay.
Hedge funds have positions where they're long, and hedge funds have positions where they're short. And then you have to reflect, do I like where I'm long, where I'm short? If you're sitting with likely tariffs and 2/3 of your revenue is exposed to the US, do I actually like that exposure, or do I want to diversify that a little bit away? So that is one of the first things that we recommend all our clients: think like a hedge fund on your geopolitical exposures. The other piece that we recommend is the long-term trends are clear. AI, post-global world, higher cost of capital, and all the energy shift. Now, the short-term vibrations are not clear. And so if you're not 100% sure on the type of prediction that you can take, you need to do two things. The first one is increase your short-term adaptability. For instance, if tomorrow a certain president in the world decides that on certain goods they're going to temporarily increase the tariffs, can I absorb that? And how can I adapt my cost structure, my flows, my manufacturing, my supply chains, that I feel good about it? The second piece is if you cannot be sure that you can adapt, am I sitting on the right resiliency in my P&L shape and in my balance sheet to absorb the temporary shocks that might appear if my prediction wasn't right? And so the recommendation that we do to our clients in that sense is long-short hedge fund approach. And if your predictions are wrong, where can I adapt, or where can I build resiliency in my strategies?
And number 3, bring Bain on board.
But that is always a good recommendation. I will not disagree with you on that one.
Get a consultant. But, on a more serious note,
are CEOs feeling comfortable with the two things that you spoke about, being able to either absorb the hit in the short term, or do they actually have the inbuilt muscle to move with the kind of agility? I mean, it's an unpredictable situation. We don't know which way the tariffs are going to go. We don't know whether the Supreme Court will actually strike down the tariffs and there will in fact be a refund. So, what kind of organizational agility can deal with something like this?
Yeah, I think increasingly companies are adapting to that reality. It's one of the elements that I think for boardrooms and for CEOs are good to run through. And it's not necessarily just old school scenarios like what happens if it's 5% more or 5% less. That is not the scenario planning that you need to do now, but you have to run through a few of external shocks that might happen, short-term shocks, short-term changes, and upfront run your response to those shocks to say, how would we adapt? And are we happy with how we can adapt in the short term? And if not, what additional things do we do? And then on the resiliency we talked about, Jamie Dimon talks in the acquired postcards really nicely about the fortress balance sheet and how he built JP Morgan. Yeah. But those adaptability, it's where we see a lot of the CEOs around the world change actually their in-year planning, their in-year muscles on budgeting planning to be able to adjust and absorb those shocks, whether it's +1 manufacturing strategies, whether it's how do I play with inventory, how do I play with changes in my balance sheet that will be able to adjust that.
So let's go back to your point on thinking like a hedge fund manager at this point in time. What's the consensus? What's the consensus call that you have on the back of the conversations that you're having with CEOs? What are they long on? What are they short on?
Well, it depends very clearly for every type of company, I think nowadays, in today's world, there's nothing wrong with being long on shorter supply chains, being long on local demand. Because a lot of the trends that we see on tariffs are fundamental. What people underestimate sometimes is that the reason of what's happening in the US and why it's happening in the US is because the globalization has risen hundreds of millions of people around the world out of poverty, which has been great for the world, but it hasn't been great for the American middle class. And ultimately, it's a very narrow part of the United States society that has been benefited from the globalization. The wealthy people and the tech-oriented people have benefited, but the middle class in the US hasn't benefited from that. And so what the Trump administration tries to do is to increase the income of the average American, have higher quality jobs, work on national security, and make the public finances of the US more healthy. That is structural, and that is for the longer term. And so that is not going to go away, those fundamental trends. And within that, post-globalization, therefore, being long on local demand, short supply chains, and technology is always a good thing to do. And so that's what we see. And that's also where the opportunity for India lies, because you sit on the local demand, and you can set up a manufacturing base that in our sense is going to be smaller scale, shorter supply chains, and more automation and more humanoids and robotics, where India can lean into the future and drive exactly that.
I think this is an important message that you're sending out, Christoph, and I don't know how many people have actually
Companies, the challenge is clear. Stay resilient, but also reinvent. Find growth not despite the headwinds, but by navigating them smartly. To guide us through this discussion, please welcome back Lata Venkatesh. And to discuss what that map looks like and where the light may lie beyond the tunnel, we're joined by leaders who know the view from both India Inc. and the global stage. Ladies and gentlemen, please put your hands for Dr. Anish Shah, Group CEO and MD, Mahindra Group, Anant Maheshwari, President and CEO, Honeywell Global Regions, and Dr. V. Anantha Nageswaran, Chief Economic Advisor to the Government of India.
Ladies and gentlemen, please join me in welcoming them with a big round of applause.
Thank you very much, Dr. Nageshwaran, Anant, and Mr. Shah for joining us. This is a much looked forward to conversation. When we started off, probably somewhere in August, planning this, we called it Growth Map, Light at the End of the Tunnel. There is a printing error. There is no tunnel here. So, I mean, growth is really ticking well. So we will discuss, of course, a few clouds. But at the moment, it doesn't look like there is a growth tunnel at all. In fact, let me start at that point, Dr. Anand Nageshwaran. In the last conversation I had with economists, Indian economists, after we saw the auto sales numbers and we saw the PMI number, we saw the other tax data for September, at least 2 or 3 economists have moved the FY26 GDP to above the 7% mark. Most people were, 6.6, 6.7. There wasn't even a 6.8. And now at least a handful have moved above 7. Have you moved above 7%, sir, for FY26?
But you're right, Lata. Good to be back here. And I think last week somewhere I mentioned that I'm now more comfortable looking at a number north of 6.8%. My original range was 6.3 to 6.8. And back in August, we were all concerned that whether we would even go towards the lower end of the 6 to 7 range. But now I think there is a lot of comfort in saying it will be definitely to the north of 6.5. And I'm more comfortable saying even north of 6.8. But whether I will put a 7 handle in front of it, I'll wait for the second quarter numbers to come out before I move even a notch higher.
But would you say there is an upward bias to your 6.8 to 7?
As of now, I would say so. And in fact, if by some chance, as we are still hoping, there is a resolution on the trade front, then the upward bias will become a mainstream forecast.
Okay, then let me follow up with that question. I was going to come to that point when we talk about trade as a tunnel. The handful of other economists who are waiting to push up their forecast above 7 are waiting for announcement on the US-India tariff deal that's under negotiation. Can you give us any clarity, any hope?
Yeah.
That is it November, is it December?
I mean, hope is all of us have, that it will be hopefully done soon.
So when North Bloc tells us we trust it more.
But no, we are not even North Bloc anymore, right?
Okay,
we are in Kartavya Bhavan now.
Kartavya Bhavan,
But
okay.
anyway, jokes apart, I think this is something that we probably should be asking Vanijya Bhavan and not Kartavya Bhavan.
Okay. Yeah, Vanijya Bhavan is giving us a lot of hope. But at the moment, we don't even have to wait for the tariff settlement. We are really enthused by the consumption in India during the festive season. Mr. Anisha, your numbers were mind-boggling. When I saw your second quarter numbers itself, I think it's 19% total volume. Tractors were, of course, much better. Overall, auto volume is 19%. And we're not even talking festive season. We're talking September 30th. And revenue 21%. If I look at your volumes for the festive season itself, personal cars since Diwali is 23% for the industry, that is. Two-wheelers are 22%. So very good volumes for the festive season. What would you guide for the full year? And you are not just an automaker. I understood when I was walking with you inside. He tells me that he's only 28% an automaker. What is the rest of your universe telling you?
So Lata, first, it's a pleasure being here with you. And you're right. If you look at our profits over the last 5 years, auto is only 28%. And the part of auto that everyone loves talking about is less than half of that, which is SUVs. So as we look at results for this quarter, we actually play in 70% of India's GDP. And for us, this quarter, the farm business profit after tax was up 54%, Mahindra Finance 45%, Tech Mahindra 35%, our growth gems 22%, and auto up 14% because we've had some transition which we caught up in October, and therefore for the quarter itself was a little lower. But you can just see from that that the Indian economy is firing on all cylinders, which allows us to fire on all cylinders. And therefore, I am very bullish about growth. You started with asking the right person for growth forecasts. I'm the wrong person to ask for this, but my forecast would be greater than 8%, 8 to 10% for the next 20 years is what we see from a business standpoint.
That calls for a round of applause. Aapke muh mein ghee shakkar. But for the full year itself, what would you guide for the auto sector and for tractors? Are you confident of double digit?
Tractors we do see growing in low double digits now. Our initial estimate was mid-single digit or so.
Yeah.
And auto also was much lower. From an industry standpoint, we see it possibly still in single digits, but our guidance for SUVs has been mid to high teens, which we did last year as well, contrary to the industry, and we expect that to continue this year.
Okay. Consumption, of course, is the theme that's been clicking. I'm going to come back with the more difficult question of capex, where we want to see more. But I'll start with you, Anant, over there. We in India have been slightly disappointed by the way the FPIs have kind of shunned India. There have been outflows for 3 of the last 4 years. FDI is coming, but it is also going because of the very good IPO market. Since you are, as Honeywell, looking at the interface between foreign investors, what are foreign investors thinking about in terms of investing in India?
So maybe I'll use the analogy that you used of the tunnel. And I was reading that title, Flying into India, yesterday in the evening. And I said, I don't see any tunnels in India. And they're definitely not dark. If I take the automotive industry example that since Anish is sitting here, and if you were flying into Germany or into Japan and you thought about the automotive industry, yes, there are some tunnels and you've got to think through them in terms of where the brightness is. But I would say in general, even the numbers that we were talking about, 6.8 or above, the growth numbers that you just spoke about, Mahindra, they are in an order of magnitude different from everything else in the world. So there may be short-term moves around the FPIs or the FDI, but in general, if you ask any CEO globally, India is a bright spot. Middle East is a bright spot that they would want to have a general lower risk sort of investment cycle into these two markets. India primarily with its consumption-led economy, a local economy, is more, I would say, risk insulated from the global moves that exist.
Well, the tunnel part for me becomes relevant when I look at the global, picture, global ecosystem, because a lot of CEOs, or at least economists we speak to, tell us that the CEOs are riddled with uncertainty. I mean, you don't know whether to invest in this country or that because you don't know how much you will be tariffed, where this product may be tariffed more here. You move your... we asked Indian textile guys, will you shift a little bit to Vietnam because the tariff is lower? They say, who is to say that that will not change 2 years from now? So they're not moving. The point is they're not investing because they don't know. Is that, a likely cloud for us, a likely tunnel?
So maybe it is a very sectoral response. If you are today in the business of supporting the data infrastructure, data centers, the networking, the communications, you are supply constrained on the planet. If you are in this business of supplying any form of energy in any part of the planet, you're supply constrained.
Honeywell would know that.
If you are in the business of supporting high-tech manufacturing, you're supply constrained. So there are many sectors on the planet which are seeing a very uniform aviation, a very, very uniform investment cycle. So I don't see those sectors as being affected. It is more, I would say, short-term sectors where there may be a little bit of a concern, but in the larger picture, I still see a lot of capex. And I can speak from the conversations in Abu Dhabi and on Monday in Future Investment Initiative in Riyadh the week before that. There is a lot of capex cycle that is being announced and actuated.
Okay. Well, that's good to hear. But Mr. Anish Shah, are you enthused by the consumption, that the brilliant numbers that you just reported, to believe that the consumption cycle has picked up enough to enthuse you and other entrepreneurs like you to do more capex? The private capex cycle is not where we would like it to be. The government has done its bit. And now it has to plateau at some point. We have to reduce our fiscal deficit as well. So is private sector picking up the baton well enough? Do you see it picking it up?
Let me start with what we've done. Over the last 4 years, we've quadrupled capacity for our auto business. And we are still putting in more capacity. We've added 60% capacity to our tractor business. Yeah. And we are running out of capacity and therefore adding more there as well.
Good to hear that.
So we have been at the forefront of investing. To your question of are we enthused? Yes, a lot more. We believe that the fundamentals are in place for the Indian economy. The demographics, the reforms that we've seen and that we are seeing, the commitment to reforms, the physical and digital infrastructure, all of these are very strong foundation elements. The recent GST cut was a huge one in changing the sentiment. And that change in sentiment is what we are seeing in translating to some of the numbers that you read out as well. And that will result in greater investments across the private sector. And we do feel that a number of industries and companies are getting above the 80% capacity utilization mark, and that will be a trigger for greater investments.
Okay. Well, that's good to hear. We would like to see it in the numbers as well. When we get capex numbers, we see more of government capex. Private capex is still running behind, though of course it's the larger giant. Dr. Anand Nageshwaran, we understand that we are, pre-budget consultations are starting sometime soon. Market participants who came here said they've already got invitations from the government, from Kartavya Bhavan, for ideas, for feedback. We've got some very good success stories in PLI. We've got good success stories in the way we've boosted electronics, semi-knockdown and complete knockdown into India, assembling. What are the lessons that we have learned, and how can we ramp up to a faster pace of growth?
No, obviously, with the right set of, more than the specific plans, it's the right set of framework, the legal and regulatory framework that enables successes in some of the sectors. For example, removing the inverted duty structures, exempting primary and intermediate raw materials from customs duties, so that making the cost of production cheaper and competitive. Those are all the important success stories which we have learned from the electronic sector and so on. And therefore, making sure that in the process of boosting domestic production, there has to be a complementary goal of plugging ourselves into the global value chain. That's equally important, because I don't think we will succeed only by onshoring everything, but by plugging ourselves more intelligently into the global value system. For example, different countries have been able to have different kinds of leverage with the US administration's tariffs, and those were directly influenced by the amount of leverage they had. So we have to basically, the success of PLI has to encourage us to move from domestic indigenization to strategic resilience, and from then on to becoming strategically indispensable. And that is the lesson we need to draw from the PLI successes and move on to the next stage.
No, your point is well taken, sir. What is our rare earth is what we ask ourselves. Exactly. I mean, if someone challenges us, if someone bullies us, this ability to bully back, a wrong word to use, but what is our rare earth is what we have to develop. I take your point on that. And policies are being framed.
I mean, you look at what we did with respect to the consumption boost. I mean, we talk about consumption boost, but they're actually supply side boost. Because supply side will not come without the demand side being visible. And that's the most important indicator, not interest rates. It is the demand visibility. So what was done in the direct taxes in February and indirect taxes in September, they are not about demand boost. They're also very much about supply boost. And you asked the question about private capex. Honestly, I think there is 1 year's data, 23-24, has influenced us all to think that private capex has been somewhat disappointing. It's not so. There was a post-COVID rebound in 21-22. 2023 was a moderate year. There was a disappointment in 23-24, but whatever data we have until now from listed and unlisted companies in the private sector, 24-25 was a very good year for private capex, and which is corroborated by what Dr. Anish said just now. So I think even 25-26, notwithstanding global uncertainties, so far the numbers look good. On net FDI, which was an important pain point and a point for discussion. This year so far, touchwood, with 5 months of data in RBI's data, we're seeing net FDI is meaningfully higher than what it was in the last 2 years.
Okay. Which dovetails to the point that Anant is making. The other tunnel which I was worried about is AI. There is this big fear that, it'll impact jobs. So let me start with Ms. Anisha on that. You have your Tech Mahindra vertical, and there is this big fear that IT companies will not go to campuses in the same gusto. Where will our graduates and postgraduates look for jobs? Because IT is a big employer. And if IT employs, then finance will also go to the colleges. They look to you. They look to the IT companies. So what is your worry about AI? And what is your positive? Is it a worry in the first place? Will you go to the campuses, by the way?
I think we're going to go to campuses more and continue to grow more. If you look back over time, I started my career when computers were just coming in. The World Wide Web was a novelty. And
you were post-91 generation. At that time, people were flocking to the
But we've gone through so many challenges, if you were to call them. I call them opportunities, because you've gone through Y2K. IT companies were expected to roll over and die after Y2K. That didn't quite happen. We've had multiple technologies over the last 25 years, and each technology has brought a lot of productivity with it and has changed a lot of jobs. There are a number of jobs that just don't exist today. If you just look at the phone, at one point we were debating it's worth doing a competition for how many people can list the number of devices that this phone has replaced. And think of how many jobs that has replaced. Who makes cameras anymore? Right? Who makes literally 100+ devices that are embedded in here? All those jobs are gone. But we have new jobs that have come up. AI could potentially be an accelerator in some form, and that's where learning becomes more important. So yes, AI will result in jobs changing, but that's going to create new opportunities. And that's what we're looking at right now to see how can we leverage AI, how can we accelerate learning for our associates and be able to grow in new areas to leverage their skill sets.
No, I take your point. I was in Economic Times at that time, and we were worried that if Excel comes, we didn't worry. We were all very happy because Excel will take away so much of the drudgery. I used to write LME prices in a register, and suddenly Excel meant that, all that drudgery was not there. But I ended up covering more commodities. Our corporate reporter ended up, we barely would cover 50, 70 companies. We started doing 300. So that question to you, Anant, how do you see AI playing out? Are people moving back on investments for fear of redundancies? You invest today and it's redundant tomorrow? Or are people worried about hiring at all? Because you hire and maybe you don't need that hire. Are any of these worries stopping invention, or how according to stopping investment, or how is AI playing out with global CEOs?
So I think I'll answer that question first to distinguish where the narrative on AI exists today and where it is beginning to happen. Even as you asked the question to Dr. Anish, you spoke about Tech Mahindra, the IT arm of the Mahindra Group, not the operations that the Mahindra Group has extensively. There is a very big difference between the IT world and the operations technology, the OT world, when you think about AI. And the CEOs also think very, very differently in the IT world and the OT world. What do the CEOs want in the OT world? In general, if you look at any report, any Wall Street or the National Stock Exchange, Bombay Stock Exchange report of any company, the CEOs want the same thing that they wanted 5 years back. They want effective assets, higher ROI. They want efficient operations and therefore lower cost of production. And they want more enabled people in terms of skills and capabilities. So effective, efficient, enable, same things. That doesn't change. What's changed is the tool that you use to deliver that. Now, the IT world assumes that you're always connected to the internet, that you always have data available. You can get it in your email, you can get it in your documents, you can get it on YouTube, you can get it on any kind of OpenAI capability that was being discussed a little while back. And therefore, probabilistic models make sense in the IT world. In the OT world, you can't get data easily. You can't get data from every car very quickly.
But you can get it with ChatGPT. You
cannot. Actually, to extract the data, you need very specialized capability to extract data in a refining capacity, in an airport, in any facility. You need domain. That data is very, very domain specific. And then you need deterministic models. I actually will distinguish with what the OpenAI speaker said earlier, where you can apply probabilistic models to drive NPS in a consumer situation, absolutely right. But when you are running a refinery, you want 99.999 certainty. That's a deterministic model. So where are CEOs investing today? They are investing in operations. They are making their operations more effective, more enabled, and more efficient with the leverage of AI. And that's where the investments are happening in a very big way. So that investment
AI
cycle
is
is on.
opening doors for investment, you're saying. It's not
Absolutely.
dampening investment.
Absolutely.
That's good to hear. That's good to hear. Actually, to your point on operations, we had a conversation with a gentleman in NASSCOM, and he said, where do you think AI will be applicable? Many of us in the audience guessed finance, because there's so much of data available. He said, no, manufacturing. And he gave some example of Apollo Tires, which has put its entire manual into AI. And when there is a problem, the agentic is able to resolve it in hours, what used to take days, to call the guy, he comes and he checks. So actually they said manufacturing is the one that's using AI best. Is that your experience?
That is, we are using AI very extensively in manufacturing, and it helps on a number of areas, including improving quality. So if you look at the welding process, in the past, to test that the weld is done appropriately, it was effectively a destructive test, and it had to be done on samples, obviously. Now AI can do that same thing without destructing it and actually give us a much better quality as well. That's one example, but there are literally about 100 projects we have going on in manufacturing to be able to use AI.
And it's not affecting your hiring, which is the other big fear of AI.
In fact, Lata, if I may just add to that, think of an operator who detects a vibration in a machine. And now, if you're in a critical facility, the operator would call an expert to tell what's happening in this vibration. The general design would be shut the machine down till we figure out why the vibration is happening. Today, with the benefit of AI, you can have the operator enabled with a quick scan tool to say, it's just a bad bearing. Continue running the machine, we'll do it in the next shutdown.
Fair enough.
So that actually increases the productivity in manufacturing.
Just a word on hiring.
We are not decreasing hiring. We are creating better products. We are creating better customer experiences. And with that, as we grow, we need more people.
Like my old Excel example, we did more. We did not fire.
I think on the same topic, Lata, so I think we can come up with, as a macro policy maker, as opposed to the more granular view that you sought from the other two panelists of mine, there will be both positive and negative anecdotes, and anecdotes will obviously carry much more powerful impact than numbers. The important thing is, yes, new jobs will be created, and some of them will be higher paying, and they will also happen over a period. So the real nub is in these details. How many new jobs will be created, in what levels of skill and salary levels, in comparison to how many jobs will be not required or laid off, and in what salary levels they will be, and in what time frame. Usually what happens is, when a new phenomena arises, the level of people's preparedness to be able to integrate it in their lives, that will take a longer time. Whereas the immediate impact will be more on the negative side. So the time lag between these two. So the final conclusion in many of these matters still is yet to be played out. The previous industrial revolutions eventually turned out to be net positive for the world, but the key word is eventually. And there was a period when a lot of vocations and professions disappeared, and there was a lot of pain. And the more important thing is, what is it that the state and the private sector do, given India's size and numbers, in order to create AI augmenting jobs AI supplementing jobs and non-AI disrupted jobs, and what kind of skilling we give in those areas. So all these things will determine the eventual net benefit to the Indian economy, because our case is one of demographics and huge numbers. So, and the time lags can be very sensitive in a democratic setup as well. So these are all the other considerations that from a macro perspective, we are still sort of grappling with, and it is still early days for these kind of answers to emerge for these macro questions.
No, I agree with you. If AI plays out like electricity or like internet, then we are going to have better, more comfortable lives and more jobs, actually, more other kinds of jobs. But, sir, once again, I want to remind you that our audience, many of our market experts told us that we are on the threshold of the budget. And a couple of budgets ago, we got this big boost in terms of PLI and India becoming a hub of at least telephones, cell phones, but a lot of other things as well. I mean, laptops and other things are following. What hope should we have from the budget or 2026 in general in terms of the policy thrust to take us one step closer to that Viksit Bharat dream?
I think it's premature for me to comment about this, and whatever you mentioned about PLI, smartphones, semiconductors, etc., they all came from non-finance related departments. So these policy proposals will have to come from the operational ministries, and finance ministry in these areas actually only acts as a compiler, apart from what we do on the fiscal side, which we have done this year.
Finance ministry, Kartavya Bhavan is able to inject the animal spirits with its actions.
Which is what we have done this year with the direct taxes and indirect taxes, apart from the income tax simplification bill. So those are ongoing areas, and the FM mentioned about customs department and then about the public sector banking. So she has given you some inkling of what the finance ministry is thinking. But for the rest of the sectors, the initiatives will come from the other ministries.
Okay. Thank you very much, sir. You'll leave us with the hope that you are, positively inclined to give an upside risk to your growth forecast. And Anant is here telling us that FDI is willing to rush in. And India is seen as one of the interesting places, one of the important places. And Anisha has really exhilarated us by saying that he is looking at a 8 to 10% GDP growth. Who is talking about the upside of 7? He's at 8 to 10. Thank you very much, gentlemen, for telling us there is no tunnel and the growth map is bright. Thank you.
Thank you, Dr. Shah, Dr. Nageswaran, and Mr. Maheshwari. And thank you, Lata, for steering us through that insightful conversation. India's digital story is entering a defining phase, from building world-class digital infrastructure to shaping global policy on data, AI, and cybersecurity. The question now is how leadership keeps pace with this transformation and sets the rules for the next decade of innovation.
And to lead this conversation, please welcome back Shireen Bhan, and joining her is S. Krishnan, Secretary at the Ministry of Electronics and Information Technology, who's steering India's digital vision from the front lines of policy and execution. Shireen, over to you.
But thank you very much, Arundhati and Shruti, and thank you very much to the MeitY Secretary, Mr. Krishnan, for joining us all the way from Delhi. I know you were trying to be here with us, sir, but the PMO called, and so you couldn't, but appreciate you joining us virtually. Mr. Krishnan, you've just released the AI governance frameworks. What are the key priority areas for the government as you look at rolling out this framework and possibly regulating AI?
Hi, Shireen. So good to be with you, at least virtually, on this particular event. I'm sorry I'm not able to make it in person, but at least in this form, I'm able to interact with you. Coming to your question, I think I would put the innovation first. I think we made it fairly clear that government's objective and MeitY's objective is primarily to focus on innovation and give room for innovation. And regulation comes after that. What we have made very clear is that we believe we have a very positive outlook on AI and the impact that it could have for India and for the globe. And therefore, we need to give as much space as possible for innovation to play out in this space and for the true benefits of AI as a horizontal technology to be realized by the Indian economy, by India's people. At the same time, and as with all technologies, there will be elements which are problematic and which could potentially be issues. And wherever those issues arise, wherever there are potential harms, we will use both existing legal frameworks and also other laws that that already are there in the law books to actually figure out how to address these concerns. And if at all there is a requirement, we will tweak the existing laws and rules. And beyond that, if there is a need at an appropriate stage, we'll legislate. But today, the emphasis is fundamentally on innovation. The emphasis is on making sure that innovation is given adequate play in the AI space so that we can harness the benefit of this technology and at the same time guard against whatever harms can come up.
You know, Mr. Krishnan, you said innovation several times there, and you also said that we have existing laws to deal with problems that may arise on account of the AI adoption and AI rollout. So would it be fair then, sir, to say that at this point in time, the government doesn't feel that there is a need for a dedicated AI regulation?
I would say that we don't need a dedicated legislation today, now. But I will not say that no legislation is required for all times. We will have to see how it plays out, and we will, at an appropriate stage, if there is a need, we will come up with a suitable legislation.
Okay, so no legislation just yet. But sir, you know, the focus of the AI framework is essentially on self-regulation. While industry will welcome that, it often also leads to problems because there's a lack of clarity on obligations, and ambiguity and regulatory uncertainty often crop up. Is that something that you're worried about? Is that a concern?
I think we will discuss with industry. We will, nothing of this sort will go without adequate discussion with industry in terms of what needs to happen. And if there is any room for ambiguity, if there is any room for doubt, we will make sure that all such ambiguities are set at rest.
Okay, that's good to hear. But I want to shift focus now to talk a little bit about the AI mission. A lot of the conversations here at the Global Leadership Summit have focused on that, Mr. Krishnan. You know, the Indian government has expanded the scope of the AI mission from 10,000 crores now to about 20,000 crores. But that pales in comparison to what we're seeing countries like the US, etc., spend in excess of $400 billion, $500 billion. Is this going to be enough, Mr. Krishnan?
See, I think you need to understand one thing very clearly. The capex or the expenditure that we are talking about under the India AI mission is expenditure that the government is incurring. This is intended to be a catalytic investment. It's not intended to be the only investment. And it's not. And investments even in the government sector on AI could come from other sources as well, from other parts of the budget, other efforts that we are taking up. So that is one part of the story. The other part of the story is the numbers that you are quoting for the US and other geographies really are about private sector investment, corporate investment, etc. And not all of the US investment that you are mentioning, the $400 billion, is necessarily taking place in the United States. It's of global companies, technology companies based in the US and the investments that they are likely to make. And some of those investments are taking place in other geographies, including India. And you've seen there have been some big announcements of data centers and other investments related to AI by US technology giants in India. So I think you have to figure out that it would not be very correct to compare what we are spending on the India AI mission, which is entirely government's effort, with the other broader investment numbers which are being announced by companies, which represent their global spend and which also represent not the government effort in that case.
No, fair point that you make that there is a significant private sector investment, but you alluded to one big headline number and one big headline investment. Google recently announced a $15 billion investment in its cloud businesses here in India. In light of that, are you also seeing more interest from other tech companies? Have there been conversations? What do you expect on that front? Could we expect more investment announcements?
There have been other announcements, other global technology companies have also been speaking about investments in India, and they are making investments.
Okay, we will look forward to hearing those announcements. Mr. Krishnan, we were just talking about the possibility of jobs being replaced, jobs being displaced, and that's become part of the increasing conversation around AI. Now, we've seen companies like TCS reorganize, restructure. It has led to job losses. Globally, companies like Amazon, Salesforce have let go of people, are letting go of people. How concerned is the government with the idea of job replacement and displacement?
You see, this is something that we are watching closely. Our understanding, which we have from the companies we speak to and other industry players, is that the nature of the jobs are changing. They are pivoting on the types of jobs that they are looking at. And they are looking at more jobs in those who create applications of AI and those who do that kind of work, and those who will eventually deploy AI applications. More traditional ITES roles are going out, and therefore they are retraining their own employees, redeploying them in those areas, and they are recruiting newer people with those skills. So I would say net-net, the impact on employment isn't likely to be as grave, or that is not yet such a cause for serious alarm. I think there are other opportunities which need to be taken up when we are looking at opportunities for our youth. But what is most important is skilling and making sure that we nurture the right kind of talent, and that we also ensure that the newer cohorts which are coming out are equipped for what the market needs today. That is one part. And the second part, those who are already in these kind of jobs are also upskilled and reskilled to meet the changing requirements. I think these are two very crucial things that we'll have to do to make sure that they readjust to the new scenario.
Well, speaking of future opportunities, Mr. Krishnan, PLI, of course, that's gotten a lot of headlines already. But the electronic component scheme, what has the response been like? If you could share that with us for the ECS scheme, sir, and in terms of the approvals for the projects as well?
No, we have, as you know, 249 applications in all. We have taken up an evaluation of those applications as we speak, and which is why we were able to immediately come out with our findings on the 7 applications. The remaining as well, we are working on, and we will be making fresh announcements soon. And this is an ongoing exercise because there's a sense of urgency here. We want the scheme to get grounded quickly. And as you know, the scheme guidelines also state that those who are able to build out first and, they can claim the incentives first. Those who commence production first get the incentive first. And therefore, it's important that we give them their approvals as quickly as possible. So whoever is ready in every sense, the approvals will come.
Well, let's talk about the PLI scheme then. So that's been the big success story for the electronic sector. We've seen record numbers coming in specifically as far as the iPhone export is concerned. But the mobile PLI scheme is now all set to see the sunset on the incentives. Is the government considering an extension? Are you actively looking at that?
We are examining requests from industry for a continuance of the PLI. So we will have internal discussions in government and finalize what our view would be.
Okay, so no clear answer there, but consultations underway. The budget is not very far either, Mr. Krishnan. What is the top priorities that you would like to focus on? What would you be recommending as well in your consultations to the Finance Ministry? AI mission or phase 2 of the semiconductor mission? Which one would you like prioritized?
As you know, I think the ISM 2.0 has been firmly put on the agenda by the Prime Minister himself during the Semicon, and so we are working hard towards it. We also have what we believe are a few other good proposals, and we are also speaking to the Finance Ministry as to what we can take up and give them as our inputs for what needs to come into the budget, which and much of what we would have to suggest would be employment oriented, would also build greater capacities within the country. And I think all of those are important objectives of the government as a whole. And therefore, I hope, like the budget has been in the past years, it will be kind to us this year as well.
Well, we certainly hope it's kind to you, and it's kind to all of us as well, Mr. Krishnan. But, you know, at Semicon, which was not very far away, you had assured that there would be an outlay for phase 2 of the Indian semiconductor mission. Has there been a number that's been finalized, Mr. Krishnan, for phase 2?
It's not for me to reveal that number or state that number yet, nor has it been finally put down saying that this is the number it shall be. But yes, I mean, as I said already, I think my stance would still be the same.
Which will be more than the 10 billion for phase 1, I would imagine. But I know you have another meeting to run to, Mr. Krishnan. So before we let you go, you know, we've got a room full of CEOs. We've also got a lot of young people here, professionals, students, entrepreneurs, startups. What is your message, Mr. Krishnan, to India Inc.?
I think as far as adoption of technology is concerned and making sure that technology informs most of what is done across various enterprises in the country, it's a very important role. It's an almost all hands on board situation we are in right now. We are all committed to this objective of India becoming a developed nation by 2047. Viksit Bharat 2047 is a commitment that we all have. And if we have to grow at that kind of a pace, then all of us have to work together. And it needs to be everybody who participates in this effort to truly take India to that goal. The only route which is available really is through greater adoption of technology across a range of spheres, across various sectors, and in all enterprises. I think that should be the push that we work towards.
Well, Mr. Krishnan, it's been an absolute pleasure. Thank you so much for joining us. We were hoping that you'd be here with us at the GLS, but I know the duty calls. But, you know, we would have liked to see you chat with the winning squad members of the women's cricket team. They're going to be here with us later this evening, as will several other dignitaries, including the actor Deepika Padukone and many others. So thank you very much, Mr. Krishnan, for joining us. Ladies and gentlemen, a big round of applause for the Secretary MeitY. Thank you very much for joining us from New Delhi for this.
Thank you, Mr. Krishnan, for those insights. And thank you, Shireen, for taking us through that conversation. This day so far has been all about what's happening right now. Markets, technology, policy. But here's what we haven't asked yet. Have we been here before?
Well, not exactly like this, but close enough to matter. Societies have collapsed before. Empires have had to choose between adapting and declining. Financial systems have imploded and been rebuilt. The patterns exist, and the understanding those patterns is what separates leaders who navigate disruption from those who get swept away by it.
Our next conversation will be led by Parikshit Luthra from CNBC-TV18 with a renowned historian, author, and senior fellow at the Hoover Institution, Professor Neil Ferguson, who has spent his career exploring how societies navigate moments of upheaval and transformation. Please put your hands together for Professor Ferguson, who is joining us live from Stanford.
Ladies and gentlemen, a very important theme today. The world clearly is in an upheaval, isn't it? We're looking at trade wars, which are not showing any signs of ending. India continues to negotiate with the United States, and we want to have a deal on our terms. We're also seeing great power competition between US and China. This is in future technologies, especially AI. The world is seeing two wars, one which is seeing a bit of a pause right now. Hopefully, this will lead to peace in the Middle East. The Russia-Ukraine war continues to rage on. What will happen to Europe? What will happen to multilateralism? Those are big questions for the future, and who better to ask than Professor Neil Ferguson. Professor Ferguson, thank you so much for being with us here.
Great pleasure to be with you.
Let me straight away begin this discussion. You're someone who studied centuries of financial crashes, wars, and pandemics. Today, we're clearly in a crisis related to weaponization of trade and natural resources. How do you think we will emerge out of this?
Well, I'm reminded of a British Prime Minister in the 1970s, James Callahan, who generated the memorable headline, "Crisis? What crisis?" After all, if one looks at the growth in the global economy, it's not exactly bad. India is powering ahead with growth forecast above 6%. The US economy is reaching new highs. The Indian stock market is not too far behind the US stock market. If this is a crisis, it's really not too bad, certainly by comparison with some of the crises we've seen in the past. But I think your question has to do with a crisis of international order. That, I think, one could certainly say exists, partly because of the re-election of President Donald Trump and his resumption of a trade war, not only against China, but against almost all US trade partners. But I think also because China has pursued a pretty aggressive industrial policy over the last decade or so, and that has created a great deal of stress and strain for other economies. So I think the crisis that we see today isn't an economic crisis. It isn't a financial crisis. Of course, it's not a public health crisis like the one we saw 5 years ago. It's a crisis of international order. And I would say that by comparison with the crises of the international system of the 20th century, it's still a manageable one because it's a crisis that's focused on tariffs and export controls, not a crisis that takes the form of large-scale military action, with the obvious exceptions of the conflicts we've seen in Ukraine and in the Middle East in the past few years.
Professor Ferguson, you've spoken about how presidents around the world, especially Donald Trump, has tried to vastly enhance his presidential power. To what extent will he be successful? And number two, how do you think Donald Trump's policies are likely to permanently impact how American governments, American presidents approach the world?
Well, I'm speaking to you today from Europe, and Europeans worry a great deal about President Trump. They have done ever since he burst onto the political scene 10 years ago. And their worry is that he wants to be an emperor or a dictator. And you hear similar fears expressed on university campuses in the United States, at Harvard or at Stanford, where I'm normally based. I think many of these fears are exaggerated because I don't see President Trump being able to overthrow the Constitution or even constitutionally get himself a third term, which would have to be through a constitutional amendment. He is quite constrained, as previous presidents have been constrained, by the separation of powers, which limits the power of the executive branch, as well as by the realities of economics and politics. His approval rating is in the red relative to where it was when he was sworn in. I don't expect Republicans to do well in the elections we're seeing this week, and I don't expect that they'll do particularly well a year from now in the midterms. So I think those people who think that the Republic, the American Republic, is on the brink of collapse are being realistic. I think they're underestimating the checks and balances designed not only by the founders, but also developed over nearly a quarter of a millennium, 250 years of the American Republic.
When it comes to the competition between India and China, how do you think that's going to play out for the future? The reason why I ask, we've seen a trade war between US and China, and after every 3 months, there is an extension of the truce. When it comes to the competition between India and China, you've previously written and said, it's like a race between the tortoise, which is India, and China, the hare. China's running too fast, and one day, the tortoise will catch up. What do you think India needs to do in order to be a global leader and catch up with China?
It's certainly very striking how well the Indian economy has performed since I said that. And I think it's as long ago as 2008 that I predicted that, as in the fable of the tortoise and the hare, that ultimately India would catch up with China. The reason I believe that is not only the demographic difference, where you can see China's population aging and shrinking very much in contrast with India's. And it's not just because of the very clearly different economic strategies they're pursuing. It's also because India is a free society. It has a free press, it has the rule of law, it has elections, and it's in that sense in a much stronger position than a one-party state in which there is an unaccountable party above the rule of law, and in which you can never really feel secure in your property rights. So I take the view that India has a fundamental institutional advantage. And since I made that prediction back in 2008, you can see India's growth rate has gone up and China's has come down. There's really now quite a significant difference, especially if you're skeptical about China's growth data, which I increasingly am. So my sense is that with India growing above 6%, and Chinese growth probably heading down towards the low single digits, there's going to be a sustained catch up. Now, India has a long way to go, and that's very obvious when you look at the manufacturing data. China is a manufacturing superpower. It's number one in manufacturing, far ahead, not just of India, but also of the United States. In fact, it's close to having twice the manufacturing value added of the United States. So there's a long way to go for India to catch up in those terms. But in other terms, if one looks at the economy more broadly, I think there's a lot of potential for India still to catch up. The obvious way in which India can strengthen its growth is not just to continue improving its infrastructure. It's been doing that for some time, but also to keep working at education, because one of the obvious differences between India and China is that while elite education is very good in India, primary education is not. And in that basic way, India's human capital lags behind China's. And if there was one thing that I would recommend that Indian policymakers focus on, it's just improving the quality of education at the lower social levels so that the average Indian is just better educated than is currently the case.
You're very right, Professor Ferguson. But I would also like to ask you about the long-term vision that a leader should have. I'm speaking about Prime Minister Narendra Modi. He has a vision of India becoming a Viksit Bharat, a developed nation by 2047. Is there an example that he could follow? What do you think the Prime Minister of India should have as its vision?
Well, I think it's important to give Prime Minister Modi his due. He has succeeded where previous prime ministers failed in getting India's economy to overcome what seemed previously to be insuperable barriers. When I first went to India and traveled widely there, now more than 20 years ago, there was a general view that you would never really overcome the bureaucratic and political barriers that stood in India's way, that the infrastructure would somehow never get upgraded, and therefore there would never really be sustained high-level growth in India. That has been radically changed in Narendra Modi's premiership. But as I said already, there's a long way to go. And targets like 2047 are somewhat arbitrary. The key question in my mind is how far the government can work to improve those foundations of prosperity that are so indispensable. I mentioned education already. The other one is public health. Rural poverty remains a reality in significant parts of India. There are, in a sense, two Indias, the India of Bangalore or of Mumbai, which when one visits today feels like first world India, but then another India which remains rooted in a past of rural deprivation. It's a hugely difficult thing to tackle, but we know from the experience of other Asian economies that it can be done. And so I think the big challenge for India is not to reinvent the wheel, but actually just to learn best practice from other successful Asian economies. And I don't think China is necessarily the role model, because I don't think it's appropriate to copy China. Far too much power is in the hands of the Chinese Communist Party and state-owned enterprises. Better, I think, to look at some other Asian economies that have modernized as democracies. South Korea, for example, is a pretty impressive role model and a place that I think increasingly has set a standard for how an Asian economy can economically modernize and politically thrive as a democracy. So my sense is that India still has some straightforward, low-hanging fruit to grasp. It's just a matter of a sustained effort to improve education, public health, and reduce the poverty of rural areas.
Professor Ferguson, I'd like to ask you about the trends that we see today. There is a AI-related disruption. There are trade wars going on. We're seeing inflation cycles. What permanent shifts do you expect in the world order?
Well, I would think of the world as being in a second Cold War. I think that's been true since 2018, if not earlier. And that's because China has essentially taken on the role that the Soviet Union played in the first Cold War. That is to say, it's the communist-led authoritarian regime which is challenging the United States and its allies technologically, ideologically, and geopolitically. And the situation of so-called middle powers, such as India, or for that matter, the European Union, is how do you adjust to a new Cold War? We had a very pleasant interwar period from 1991 when the Soviet Union collapsed until around 2012 when Xi Jinping came to power in Beijing. We think of that as an era of globalization. It's clear that we're living through a period in which globalization is in retreat, partly because of tariffs, but also because I think there's been a general backlash against globalization. If you think about the world in that framework, then it's clear that India has a different strategy from its strategy in the first Cold War. In the first Cold War, the Indian position was, we're not aligned. We don't really want to be caught up in this superpower conflict. We'd like to be, in a sense, aligned with neither superpower. In more recent times, in this second Cold War, India has tried to be, in some ways, aligned with both. I've called it the polyamorous strategy. And I can remember Minister Jaishankar boasting a couple of years ago at the Munich Security Conference about India's ability to have it both ways, to have a relationship with China and the BRICS, and also to have a relationship with the United States. I think that's over. I think that ended this year. And it's now very clear that India has to make sure that it is on good terms with the United States, because it clearly has too many points of conflict with China to be in a truly comfortable relationship with Beijing. So this is a very different kind of Cold War for India. And India is, of course, a more economically significant country than it was back in the first Cold War.
You know, you've made a very important point about India being non-aligned. Do you think believing in multilateralism, being committed to multilateralism is going to work with India in the future? The reason why I ask is because we have an adversary in Pakistan. We have an adversary in China, a relationship which we are trying to manage. US was a time-tested ally, but because of President Trump's policies over the last few months, some of the foundations of that relationship are now being questioned. It seems that when it comes to crunch time, when it comes to a crisis, you are always fighting alone. Which relationship should India really bet on?
It's pretty hard to have it both ways in the world that we're discussing. And I think the Indian attempt to repeat the non-alignment strategy, or what I call the polyamorous strategy, has basically failed. Rather in the same way that Brazil found itself on the wrong side of President Trump's tariff policy, so did India. And I didn't find that terribly surprising. After all, if you think about reciprocal tariffs, they're supposed to be a response to the high tariffs of other countries. Well, India actually had some of the highest tariffs in the world. If you look back to the beginning of this year, it would have been kind of amazing if President Trump had announced reciprocal tariffs and not hit India quite hard. But I think it came as a shock to the Indian government, which assumed that it had a kind of pretty good relationship with President Trump. President Trump is somebody who can combine good personal relations with world leaders with pretty adversarial policies. And I think this is the thing that makes him quite hard to read. From India's point of view, for the reasons you've given, the problem of Pakistan, the problem of China, which historically has been close to Pakistan, it's very hard for India not to align itself more with the United States than with China. Remember, China now has relationships with Russia, with Iran, and with North Korea, the axis of authoritarians, that in their various ways pose problems for India. Now, India can free ride in some measure, for example, by getting oil from sanctioned Russia, but that's not something that sits well with policymakers in Washington. My view is that it was a mistake for India to boast about having it both ways. And now India finds itself confronted with a stark choice. Are you with the United States? Are you with the West, as we used to call it? Or do you want to be hanging out with the BRICS? And I really don't think the BRICS is the place to be.
Thank you so much, Professor Ferguson, for joining us here for a very enlightening session at the Global Leadership Summit. Ladies and gentlemen, a big round of applause for Professor Neil Ferguson. Clearly, the world is becoming very, very inward looking. India has no choice but to continue betting on multilateralism. Thank you very much.
Thank you, Professor Ferguson, for joining us this evening. You really made us think differently about what we're facing, and thank you, Parikshit.
Well, our next conversation is about how policy is being reimagined in real time, how data and technology are changing the way decisions are made, and how cooperation between the center and states is shaping India's next growth chapter.
Leading this conversation once again is Shireen Bhan, and to inspire us with his insights, we're joined by BVR Subramaniam, CEO, NITI Aayog. Please join us in welcoming him.
Ladies and gentlemen, a big round of applause for the CEO of the NITI Aayog, Mr. BVR Subramaniam, who's had quite a harrowing morning trying to get from Delhi to Mumbai today because we've had technical glitches at the Delhi airport, which has led to significant delays. So thank you for braving all of that, Mr. Subramaniam, and still being here with us at the Global Leadership Summit. You know, I want to pick up where Neil Ferguson left off, and he said that we're living in a world where India, in his words, quote unquote, cannot be polyamorous anymore. You will have to pick a side, you will have to make a choice. Is it the US or is it the BRICS? I want to understand from you, do you see this as a choice that India will be forced to make as well, given what President Trump and the Trump administration has decided to do?
So I think that's a very a very one-sided view, which I heard just now. I think the situation is a bit more complex. Let me take a minute or two just to explain. Just look, there were a lot of certainties since the Second World War. You had a Washington consensus, you had a consensus on free trade, you had the WTO, you had a general belief in multilateralism. All the certainties seem to be going. So the world is in flux. What does that mean? It means you just look at it economically. You see a world where trade is flat, FDI is flat or declining. The world doesn't know how to handle this. And what we are actually heading for is a world where low growth is a norm. We were growing at about 3.5%, 3.7% trend globally before COVID. But in the last few years, the trend seems to be sub 3%, and that's what it's going to be. And in all this, India is a standout case. I mean, it's the brightest spot in the global economy, and that's what makes it important in the context of what you asked. It's bright because it's got size, it's got a market, and it's got innovation talent. Given that, I think India will be a pole which will attract everybody else. So rather than us being forced to make choices, others will be compelled to actually reach out to India. And I think that's the sweet spot India is in. So it's not necessary for India to take sides. People will cut their own cloth to adjust to India. I think that is what it is. I think, and I think that's the way the government is actually moving. That we have And there's another thing. We are doing good. And we are doing very good because there are strong inherent strengths. And I think if you have to live in the slightly more turbulent times, be it war, be it economy, be it tariffs, build up your internal strengths. The more you build up your internal strengths, the more the world will actually look at you far more favorably. You will be compelled to make far fewer tough choices.
Well, you know, one tough choice, of course, at this point in time that we know that we're grappling with is, of course, how do you engage and how do you deal with the US? The US has put forward what it wants India to do, especially as far as Russian crude, etc. is concerned, and we've made our position known, and we've hopefully made our position understood as well. But given the almost sort of, you know, it's an unyielding piece at this point in time, how do you see this playing itself out in the long term?
So I think things have been a bit difficult with the United States. And I think a reset is being tried. The trade negotiations are on. I wouldn't like to preempt anybody. Hopefully, end of the month, we may hear some news on that front. Having said that, what the US government is saying and what the US corporates are saying are totally different. You are still continuing to have the steady stream of foreign investors coming to India. You've got American companies opening global capability centers in India. You don't see anybody lessening their importance being given to India. So that basically means the fundamental attraction of India will trump everything else.
Will trump everything else. That certainly is a hope, and that does deserve a round of applause as well here for Mr. Subramaniam. But, you know, Mr. Subramaniam, irrespective of what finally happens as far as the India-US bilateral trade agreement is concerned, you've always been a very firm believer in the fact that India must actually cut its tariffs, that it's in India's interest to bring down its tariffs.
There are a couple of things. Let me elaborate a bit. You know, we want to be a Vikasit Bharat, which means we want to be a developed nation. If we want to be a developed nation, we must have a long-term goal, which has been set. The Honorable Prime Minister had made it very clear. We should be a $30 trillion economy, $18,000 by 47. There are some principles which we should not forego, irrespective of what happens. Number one, don't forego openness. You need to be a world-class country, irrespective of how anybody else behaves. I mean, just because there are tariffs in one part of the world, the rest of the world hasn't changed its behavior. I mean, you still have a COP going on next week, irrespective of somebody not joining it. So I think the importance of that is something we need to realize, openness. Second, we need to be a leader in green transition and addressing, you know, the clean energy transition. Extremely important. They're a core principle. And the third one, focus on our people, focus on our strengths. That means invest in people. As long as you invest in people, I think you're pretty good.
You know, and to the point that you made that India must remain open for the benefit of the people who are watching, last night the finance minister in a conversation also mentioned that India's Atmanirbharta policy should not be seen as an isolationist policy, and that's the point that's being made here by you as well, Mr. Subramaniam. But, you know, Niall Ferguson was also talking about the low-hanging fruits that India must address in order for us to be able to do the 8 to 10% growth ambition aspiration that we have to fulfill. Now, from NITI Aayog's perspective, given where we find ourselves today, domestically as well as globally, what would you prioritize?
Okay, so look, this is a country whose fundamentals are very good. You know, fiscal prudence is there, inflation is under control, demography is in our favor, and I think that's okay. So what do we need to do? We need to do a couple of important transitions, and I think that's priority. First, we need to make a transition from agriculture to industry. I think that's long pending. A lot of emphasis has been given in the recent past, PLIs, this, that. But I think the transition to manufacturing of two types, high-tech advanced manufacturing on one end and labor-intensive manufacturing. One takes you to the cutting edge of the world economy, the other creates jobs. That's absolutely important. And I think that was the biggest announcement in the last budget, which is the National Manufacturing Mission. And I'm hopeful that by the end of November, the mission will be up and running. The NMM is going to transform India's manufacturing landscape. It's going to be a very different approach, quite different, not throwing money alone, but actually focusing on building capabilities. So that's one. And the second thing is, we think of services as just restricted to the IT sector. Services in India have become synonymous with IT. Services are more than 150 sectors, you know. You're in the service sector. Yes. And this is also an area because services have one advantage. Services are people driven. It's a great employment generator. If you look at it globally, only 30% of Indians work in the service sector. It's 60% of our economy. So this is where we need to grow, which means what? Education, healthcare, professional services, entertainment, transportation, all this tourism. This is huge. And I think we have barely scratched the potential. And that's the other area of focus, which means what? Services means people. Invest in their training, improve their talent, make them high-tech, and that's when you become global. So manufacturing and services and the transition from agriculture, I think, are the big bets for India to become Viksit Bharat.
Let me pick up on the headline that you gave us, that the National Manufacturing Mission is going to be rolled out at the end of the month. And that's a big one because that's something that we've all been waiting for. You also said that it's not just an issue of throwing capital at the problem, that we will have to reimagine the way that we look at the manufacturing sector. Leave us, I don't know how much you can share with us by way of details ahead of the launch itself, but what is going to change for Indian manufacturing? I ask you this in the context of the fact that for over 10 years, more than that, we've been talking about going from 15% to 25% manufacturing share to GDP. Will that finally happen?
So actually, let me tell you, manufacturing has had some remarkable successes in the last few years, and we have learned in the process. I mean, mobile phones is a success. There are a couple of areas where there have been successes. We have also learned from where we haven't succeeded as much as we wish to. The first thing which we have learned in, say, mobile phones is you can't bet on a product. You need to bet on the entire ecosystem. So that's one thing. So you need to have an electronics ecosystem. You need to have a pharma ecosystem. You need to have an ecosystem for semiconductors. So there's a whole range of ecosystem stuff, number one. Number two, don't spread yourself too thin. Focus on specific areas, which means focus on clusters. Pick up 15 sectors, pick up 5 clusters for each, 75 locations which are going to be global in size, capability, and actually employment. I think that's the buzzword. You know, when China began, it began with one cluster. And once that succeeded, they just replicated it. We're just going to do something like that. Pick up clusters, pick up areas which you want to focus on, where you have inherent strengths, which are demonstrated or can have strength, and then put everything you have in it, like not just money, skilling. You need people around. If somebody asks, why do you make a siting decision for a factory? They don't do it just because there's a market. They look, where do I have talent? I mean, day before yesterday, I was in Bangalore at a skills summit, and what were they talking about? Bangalore is a destination not because it has the best incentives. Everybody else gives best incentives. What they say is, Bangalore has the talent. And I think that's the primary thing in today's work when you want advanced manufacturing. So this cluster-based approach is going to be the key to manufacturing, but cluster-based across the ecosystem. And I think that's the big thing, and I'm very hopeful. There's another thing that's happening. We must understand that the manufacturing space is being vacated by many countries. China is vacating a lot of manufacturing space. There are other countries who are filling it in. So I think there's a huge potential. And what is the potential arising out of? It's arising out of our demography. We have a 1 billion strong workforce. That is the biggest workforce in the world. I mean, 2/3 of Indians are in the workforce, 65%. That's huge. So you just need to create an ecosystem which can absorb this workforce. You create jobs, you create economic growth.
You know, I'm going to push you a little bit on that. So you talked about clusters, and what we have seen successfully as perhaps one of India's post-liberalization success stories is what we've seen with the auto ancillary sector and with the auto sector. What are the 5 champion sectors, if I may ask you, you believe we should bet on from this cluster approach that you speak of?
Okay, so that I would categorize these into 3 groups. There would be one where we are already global players. There are another group of sectors where we have some strengths, but we are not yet there. And there are some where we need to be because they're important. We're probably going to pick up equal number of sectors from each, 4 to 5 in each of them. So if you look at areas where we have inherent strengths and we are already globally strong, automobile certainly is one of them. Pharma is going to be the other. On the labor-intensive side, textiles and garments is the other, and also leather, footwear, etc. 2 are labor-intensive, 2 are going to be capital-intensive. If you're looking at areas where we have some skills, but we are not yet there, we're not global or world-class, capital goods is one. I mean, that's something where we need to be there. You can go through and you will see there are many, many areas where we are just about there, but not, champions. And there are some futuristic sectors, be it, semiconductors, be it EVs, be it other stuff, be it transportation, robotics, we need to be there. So there'll be a pretty decent selection of areas. And I'm sure this NMM is going to be the transformative lever. It's going to be our big bet.
It's going to be our big bet, the new national manufacturing mission, as is being articulated here by Mr. Subramaniam. But, I want to go back to the first point that you made, that we're living in a world where trade is flat, where FDI is flat. Now, India has been trying to draw in foreign direct investment across different sectors, from semiconductors to AI and so on and so forth. Given the fact that there is this global uncertainty and nervousness which seems to be impacting FDI, what worries you about our potential to grow at the rates at which we aspire without the requisite amount of FDI?
So I think this is going to be a topmost priority. Firstly, we need sustained growth of 8 to 9% for about 25 years. That itself is a big challenge.
Are we on the cusp of that?
We are on the verge. We're doing the right things. I think from next year onwards, we should be touching those kind of numbers. I think that's the goal. And I think the policy levers are being tweaked, number one. If you're going to have 8 to 9% growth, even if you have a capital output ratio of 4, you need 35, 36% of investment every year. We are not yet there. We're around 30, 31%, and it's been a bit flat at that. That additional 4 to 5% investment has two parts to the problem. One is, I think the government has been doing a lot. A lot of capex has been going. Households have been doing a lot. People have been buying houses, building stuff, etc. I think the private sector capex cycle needs to kick off. And one good thing is, thanks to the cut in GST, the GST festival that has happened, the reduction in income tax rates, the exemption limits being raised, I think more money is being put in pockets. You're going to see a boost in that. So that's the second. So the investment cycle needs to kick off. But on the other side, domestic capital is not going to be enough. So out of that 35, 36% that we need, 3 to 4% has to come from outside. We have touched 3 to 4% long ago. But that was a much smaller economy. Yeah. So 3% of a $4 trillion economy is quite different from 3% of a $300 billion.
So would you consider this one of your biggest worries today?
This is one of the biggest areas of focus, where we need to be actually kicking up our FDI dramatically, and that's it. And the good thing is, you got all the major multinationals in the world looking at India, thanks to the uncertainties. There are companies which are just wanting to shift operations from one country to the other. What does this mean from us? They're interested in India for two reasons. Domestic market, and we are one of the best low-cost destinations for manufacture. Having said that, we need to cut our paperwork. We need to cut our bureaucracy. The Prime Minister keeps talking about, minimum government, maximum governance, ease of doing business. Get out of the way of business. Make life easy. We don't want people to fly in with interest and fly back disappointed.
How much are we still in the way, though?
So this is the other area on which a lot of work is happening. If you actually tick the boxes on reforms, Government of India has probably done 90-95% of it. Take the Income Tax Act. It's about two-thirds the size of what it was earlier. 90% of the work now is left in the states. So we have a task force under the Cabinet Secretary. He is pushing day to day, without publicity, reforms at the state level. Every day I'm seeing some news item. For example, you want to convert agricultural land to industrial land, you need 1,000 permission. Andhra has just gone ahead and removed that permission. So it's a major transformation. Why can't I be allowed to use the land the way I want it to be used? So a lot is happening on that. So I think the PM has been very clear, reforms. Cabinet Secretary working with states. We have two committees in NITI Aayog. One of them, by the former Cabinet Secretary, is called the High-Level Committee on Non-Financial Sector Reforms. They are focusing only on cutting down paperwork and waste. The first report covered 3 areas: environment, MSMEs, and the whole area about restrictions in manufacturing, etc. They're not public documents, but I'm seeing coverage in some papers. But even if half of them get done, that's going to be transformative. They're going to add 1% or 2% to India's growth.
But why haven't we seen them being done, and when do you hope that they will be done?
No, I think we shouldn't, I don't think there's any need to be sorry, because the reports have just gone out in October. So we're just about 4 weeks away from it. I think there's very high level attention. The highest level attention is being paid to that. So I foresee in a month or two, much before the budget, some of these things happening. I think the systems are working full time. You go to Delhi, nobody is asleep. They're working 24/7.
Well, that's the other big headline that's coming in there from the NITI Aayog CEO, that the reports, high-level committee reports on the ease of doing business across different sectors will be made public and will, of course, be part of the execution roadmap, even ahead of the budget. But, sir, you talked about FDI, and you said that drawing in FDI should be the biggest focus area. For this audience here, FPI flows is another big focus area, and the Indian markets have not seen the kind of FPI flows that we would have liked to have seen. And one of the aspects being talked about is the capital gains tax. Do you believe that there is a need, or this is the right time to review that?
I will put it that way. Global capital flows on the portfolio side happen for a lot of reasons. It's not just your performance, it's all relative. China suddenly became less attractive, a lot of capital came back to India. The China story changes, you will see capital moving out again. So I think there are larger things that are happening there. But I think the intrinsic worth of India as a destination for portfolio capital, I think continues to exist. There are two things, however. You're having a huge boom and spurt in domestic capital flowing into the markets. I mean, so one of the reasons that in spite of FPI not happening in the same extent, markets have taken it quite well, is domestic capital is replacing foreign capital. Having said that, I think one area where there is huge scope for foreign capital come to India is, patient capital, what I call pension funds, insurance funds. They need to come into India on a much larger scale. I mean, take InvITs, for example, infrastructure investment trusts. I mean, the NHAI has one InvIT, which is a public sector InvIT. They should be pushing for more private sector InvITs, and I think that's going to happen in the next year or two. There's going to be a lot of asset monetization from the government. That should be moved into the private space. These are the kind of assets which are not greenfield, they're brownfield. They're the ones which will attract patient capital. So I think the Canadians are in India in a big way. They've put a lot of money in the Indian market. But in large areas, London, New York, their funds are not yet in India on that scale. And I think there is a need to, create enough products where they can put money, number one. Number two, it's not the rate of tax per se, but there are a lot of nitty-gritty things on the tax side which need to be resolved. I mean, NITI Aayog has a consultative group on tax policy. They have submitted 2 reports to the government, one on permanent establishment, the other one was on criminalization. Hopefully they are going to be seen. It's got representatives from the finance ministry in that. We're going to come out with a dozen more reports in the next 2 months. So the whole idea is, it's not about tax rates. It's about tax administration. If you improve that, I think there will be a lot of... It's not the rate which is bothering. It's the uncertainty of interpretation which is bothering people. If you have certainty on interpretation, I think much more capital will flow.
Mr. Subramaniam, you've given us a long list of things that are work in progress and hopefully will get done. What's, if I may ask you, you believe the single biggest priority that you believe NITI needs to focus on, and through NITI or via NITI, the government needs to get done?
I've already spoken about manufacturing. Let me say one thing. When everybody looks at India, they're looking at the market. What do you mean by market? Market is people. So the strength of India is its demography. And if India has to become Vikasit Bharat, these people have to be skilled, educated, and they should have productive livelihoods. I think that's priority number one. If I was asked to put money, and at just 1 rupee, I'll put it on skilling and education. On average, an Indian student goes to school for 67 years. South Koreans go for 13 to 14 years. That's the level of gap that we need to bridge. 4% of our industrial workforce is skilled. You want them to make high-tech stuff. You want them to be doing robotics. With 4% having skills, it's not adequate. Invest money in skilling. So NITI is actually working very hard. How do I improve the skilling ecosystem? How do I integrate it with the education system? Don't make it an extracurricular activity. Skilling is, education is skilling. It's just a different path. And make them all interoperable and carry it all the way to graduation. We'll probably roll it out in 2 states, Andhra and Orissa to begin with. Hopefully it works, roll out in the rest of the country. I think that's the key to the future. If you have 1 billion people who are highly skilled, the foreign direct investment, portfolio investment, all of that will come.
Well, that's the other headline. Skilling is education, and that is what NITI is trying to push forward. Let me end by asking you, sir, we started by talking about the so-called polyamorous relationship. Let's bring China into the conversation as well. Re-engagement has started. Flights have restarted. Visas are being issued at this point in time. How do you see this relationship progressing, given the backdrop of what has happened in the past, but more importantly, looking into the future?
Look, the large economies in the world are important. So we will end up having some economic relation with them. If that country is 20% of the world economy, you can't shut off 20% of the world economy. That's reality. Whether we like it or not, maybe it's not a choice. They still end up being the largest, import source for us. That's because of the capabilities they have built up. So I think we will be engaging with them, but we need to keep 2-3 things in mind. A, when the Prime Minister talks about Swadeshi and Ardhanirbharta, he's not talking of protectionism. What he is talking about is, secure yourself from surprises. See that not you're self-sufficient, but you're self-reliant when necessary. I think if we keep that at the back of the mind, we can engage with anybody, be it a friend, somebody who's not so friendly, we will be able to do that. I think we need to de-risk our engagements. We can't allow our dependency on another country beyond a point. And that's a lesson we have learned in the recent past, particularly. Don't be over-dependent. And since you said it's the last question, I go back to just one point which I think is very important for India as a nation. A, if we have to become a great nation, it will be on our skills, our talent, our workforce, our manufacturing, our services. We need to grow them. And we need to grow them fast. We don't have much time. We have just 20 years, 25 years to do it. The world is going to change. And the problem is going to be, in 25 years, we are also going to be older. Our median age today is 29. In 25 years, we'll be 39. So the big thing is grow rich before you grow old. And I think that is the vision driving Vikasit Bharat. Vikasit Bharat is not a choice. It is essential because only then will India grow rich. And we need to grow rich before we grow old because simultaneously India is also aging. We have crossed the total fertility rate of 2.1. Indian population is going to peak in another 10 years. So it's important that we focus on becoming a rich nation pretty fast. There are others who have not managed it. They are in trouble. Thank you.
Become a rich nation before we become an old nation. BVR Subramaniam, always a pleasure. Thank you so much for joining us here at the CNBC-TV18 Global Leadership Summit and really laying out the roadmap across a whole host of sectors, a whole host of areas that India must prioritize. Thank you very much, sir, for your time. Thank you, sir.
Thank you, Mr. Subramaniam, and thank you, Shireen, for that insightful conversation. Ladies and gentlemen, one huge round of applause once again, please. And with that, we wrap up our morning sessions. Join us after lunch for more power-packed conversations. A quick heads up, Moneycontrol is hosting a live markets quiz at their booth and it starts in 10 minutes. Winners stand a chance to win Moneycontrol Super Pro and Pro memberships. See you at the Moneycontrol booth. Thank you.
The future is being built right here, and India is shaping the global economy.
After a landmark debut, CNBC-TV18's Global Leadership Summit returns.
The stage where leaders converge and conversations spark change. And all eyes are now on the India advantage.
Digital strength, demographic power, innovation, resilience.
The future begins here. Book your spot at CNBC-TV18's Global Leadership Summit, the second edition.
One of the most important challenges, the challenge of investor protection. Investor protection begins with investor education. We face onslaught of fake apps, cloned websites, unrealistic performance claims, and unregistered entities misleading investors. Unregulated influencers pose a direct risk to investors, with nearly 62% investors making investment decisions based on their recommendations, as SEBI's survey points out. And there was a time, when we had very heavy flows despite a so-called capital gains tax. So the sense I get there is a very strong faith the FPIs have on India's story. So therefore, overall, we have to look at it. When this tide will turn, whether it will so much has come in the primary market. Even now, when you are talking FPI outflows, you are only giving the net flows. But sometimes inside, you will see there is a lot of movement into a primary market. And these things will keep happening in a market like this. The question is, are we so vulnerable today with these flows in and flows out? And my sense is we are not.
Being built right here, and India is shaping the global economy.
After a landmark debut, CNBC-TV18's Global Leadership Summit returns.
The stage where leaders converge and conversations spark change. And all eyes are now on the India advantage.
Digital strength, demographic power, innovation, resilience.
The future begins here. Book your spot at CNBC-TV18's Global Leadership Summit, the second edition.
One of the most important challenges, the challenge of investor protection. Investor protection begins with investor education. We face onslaught of fake apps, cloned websites, unrealistic performance claims, and unregistered entities misleading investors. Unregulated influencers pose a direct risk to investors, with nearly 62% investors making investment decisions based on their recommendations, as SEBI's survey points out. And there was a time, when we had very heavy flows despite a so-called capital gains tax. So the sense I get there is a very strong faith the FPIs have on India's story. So therefore, overall, we have to look at it. When this tide will turn, whether it will so much as come in the primary market. Even now, when you are talking FPI outflows, you are only giving the net flows. But sometimes inside, you will see there is a lot of movement into a primary market. And these things will keep happening in a market like this. The question is, are we so vulnerable today with these flows in and flows out? And my sense is, we are not.
The future is being built right here, and India is shaping the global economy.
After a landmark debut, CNBC-TV18's Global Leadership Summit returns.
The stage where leaders converge and conversations spark change. And all eyes are now on the India advantage.
Digital strength, demographic power, innovation, resilience.
The future begins here. Book your spot at CNBC-TV18's Global Leadership Summit, the second edition.
One of the most important challenges, the challenge of investor protection. Investor protection begins with investor education. We face onslaught of fake apps, cloned websites, unrealistic performance claims, and unregistered entities misleading investors. Unregulated influencers pose a direct risk to investors, with nearly 62% investors making investment decisions based on their recommendations, as SEBI's survey points out. And there was a time, when we had very heavy flows despite a so-called capital gains tax. So the sense I get there is a very strong faith the FPIs have on India's story. So therefore, overall, we have to look at it. When this tide will turn, whether it will so much as come in the primary market. Even now, when you are talking FPI outflows, you are only giving the net flows. But sometimes inside, you will see there is a lot of movement into a primary market. And these things will keep happening in a market like this. The question is, are we so vulnerable today with these flows in and flows out? And my sense is we are not.
Future is being built right here, and India is shaping the global economy.
After a landmark debut, CNBC-TV18's Global Leadership Summit returns.
The stage where leaders converge and conversations spark change. And all eyes are now on the India advantage.
Digital strength, demographic power, innovation, resilience.
The future begins here. Book your spot at CNBC-TV18's Global Leadership Summit, the second edition.
One of the most important challenges, the challenge of investor protection. Investor protection begins with investor education. We face onslaught of fake apps, cloned websites, unrealistic performance claims, and unregistered entities misleading investors. Unregulated influencers pose a direct risk to investors, with nearly 62% investors making investment decisions based on their recommendations, as SEBI's survey points out. And there was a time, when we had very heavy flows despite a so-called capital gains tax. So the sense I get there is a very strong faith the FPIs have on India's story. So therefore, overall, we have to look at it. When this tide will turn, whether it will so much as come in the primary market. Even now, when you are talking FPI outflows, you are only giving the net flows. But sometimes inside, you will see there is a lot of movement into a primary market. And these things will keep happening in a market like this. The question is, are we so vulnerable today with these flows in and flows out? And my sense is we are not.
The future is being built right here, and India is shaping the global economy.
After a landmark debut, CNBC-TV18's Global Leadership Summit returns.
The stage where leaders converge and conversations spark change. And all eyes are now on the India advantage.
Digital strength, demographic power, innovation, resilience.
The future begins here. Book your spot at CNBC-TV18's Global Leadership Summit, the second edition.
One of the most important challenges, the challenge of investor protection. Investor protection begins with investor education. We face onslaught of fake apps, cloned websites, unrealistic performance claims, and unregistered entities misleading investors. Unregulated influencers pose a direct risk to investors, with nearly 62% investors making investment decisions based on their recommendations, as SEBI's survey points out. And there was a time, when we had very heavy flows despite a so-called capital gains tax. So the sense I get there is a very strong faith the FPIs have on India's story. So therefore, overall, we have to look at it. When this tide will turn, whether it will so much as come in the primary market. Even now, when you are talking FPI outflows, you are only giving the net flows. But sometimes inside, you will see there is a lot of movement into a primary market. And these things will keep happening in a market like this. The question is, are we so vulnerable today with these flows in and flows out? And my sense is, we are not.
The future is being built right here, and India is shaping the global economy.
After a landmark debut, CNBC-TV18's Global Leadership Summit returns.
The stage where leaders converge and conversations spark change. And all eyes are now on the India advantage.
Digital strength, demographic power, innovation, resilience.
The future begins here. Book your spot at CNBC-TV18's Global Leadership Summit, the second edition.
One of the most important challenges, the challenge of investor protection. Investor protection begins with investor education. We face onslaught of fake apps, cloned websites, unrealistic performance claims, and unregistered entities misleading investors. Unregulated influencers pose a direct risk to investors, with nearly 62% investors making investment decisions based on their recommendations, as SEBI's survey points out. And there was a time, when we had very heavy flows despite a so-called capital gains tax. So the sense I get there is a very strong faith the FPIs have on India's story. So therefore, overall, we have to look at it, when this tide will turn, whether it will so much as come in the primary market. Even now, when you are talking FPI outflows, you are only giving the net flows, but sometimes inside you will see there is a lot of movement into a primary market, and these things will keep happening in a market like this. The question is, are we so vulnerable today with these flows in and flows out? And my sense is, we are not.
Future is being built right here, and India is shaping the global economy.
After a landmark debut, CNBC-TV18's Global Leadership Summit returns.
The stage where leaders converge and conversations spark change. And all eyes are now on the India advantage.
Digital strength, demographic power, innovation, resilience.
The future begins here. Book your spot at CNBC-TV18's Global Leadership Summit, the second edition.
One of the most important challenges, the challenge of investor protection. Investor protection begins with investor education. We face onslaught of fake apps, cloned websites, unrealistic performance claims, and unregistered entities misleading investors. Unregulated influencers pose a direct risk to investors, with nearly 62% investors making investment decisions based on their recommendations, as SEBI's survey points out. And there was a time, when we had very heavy flows despite a so-called capital gains tax. So the sense I get there is a very strong faith the FPIs have on India's story. So therefore, overall, we have to look at it, when this tide will turn, whether it will so much as come in the primary market. Even now, when you are talking FPI outflows, you are only giving the net flows, but sometimes inside you will see there is a lot of movement into a primary market, and these things will keep happening in a market like this. The question is, are we so vulnerable today with these flows in and flows out? And my sense is we are not.
The future is being built right here, and India is shaping the global economy.
After a landmark debut, CNBC-TV18's Global Leadership Summit returns.
The stage where leaders converge and conversations spark change. And all eyes are now on the India advantage.
Digital strength, demographic power, innovation, resilience.
The future begins here. Book your spot at CNBC-TV18's Global Leadership Summit, the second edition.
One of the most important challenges, the challenge of investor protection. Investor protection begins with investor education. We face onslaught of fake apps, cloned websites, unrealistic performance claims, and unregistered entities misleading investors. Unregulated influencers pose a direct risk to investors, with nearly 62% investors making investment decisions based on their recommendations, as SEBI's survey points out. And there was a time, when we had very heavy flows despite a so-called capital gains tax. So the sense I get there is a very strong faith the FPIs have on India's story. So therefore, overall, we have to look at it. When this tide will turn, whether it will so much as come in the primary market. Even now, when you are talking FPI outflows, you are only giving the net flows. But sometimes inside, you will see there is a lot of movement into a primary market. And these things will keep happening in a market like this. The question is, are we so vulnerable today with these flows in and flows out? And my sense is, we are not.
future is being built right here, and India is shaping the global economy.
After a landmark debut, CNBC-TV18's Global Leadership Summit returns.
The stage where leaders converge and conversations spark change. And all eyes are now on the India advantage.
Digital strength, demographic power, innovation, resilience.
The future begins here. Book your spot at CNBC-TV18's Global Leadership Summit, the second edition.
One of the most important challenges, the challenge of investor protection. Investor protection begins with investor education. We face onslaught of fake apps, cloned websites, unrealistic performance claims, and unregistered entities misleading investors. Unregulated influencers pose a direct risk to investors, with nearly 62% investors making investment decisions based on their recommendations, as SEBI's survey points out. And there was a time, when we had very heavy flows despite a so-called capital gains tax. So the sense I get there is a very strong faith the FPIs have on India's story. So therefore, overall, we have to look at it. When this tide will turn, whether it will so much as come in the primary market. Even now, when you are talking FPI outflows, you are only giving the net flows. But sometimes inside, you will see there is a lot of movement into a primary market. And these things will keep happening in a market like this. The question is, are we so vulnerable today with these flows in and flows out? And my sense is, we are not.
Being built right here, and India is shaping the global economy.
After a landmark debut, CNBC-TV18's Global Leadership Summit returns.
The stage where leaders converge and conversations spark change. And all eyes are now on the India advantage.
Digital strength, demographic power, innovation, resilience.
The future.
Power-packed conversations lined up for you.
Absolutely, Arundhati. It's time to talk about what India is building right now. The ambitions are clear: a manufacturing hub, a services powerhouse, a key player in global trade. But can our financial architecture keep pace?
That's not rhetorical. We need deep capital markets, competitive financing, financial inclusion at scale, and trade corridors that actually function. Some of this is happening, other parts are lagging, and the gap between aspiration and infrastructure matters.
To lead this conversation, please welcome back Shireen Bhan, and joining her is one of India's most respected banking voices. Please join us in welcoming KV Kamath, Chairman of Geo Financial Services. Ladies and gentlemen, a huge round of applause for KV Kamath.
Well, good afternoon, ladies and gentlemen. It's wonderful to be back here on the GLS stage for our evening plenary sessions. And as I said, we couldn't have asked for a better start than to start with Mr. KV Kamath, somebody who knows India, somebody who's been deeply associated with India's financial services sector, and somebody who is and always will be a perma bull on India. Mr. Kamath, thank you very, very much for joining us here at the Global Leadership Summit, sir.
Thank you, Shireen.
Well, you know, let me get started, sir, with the sector that you've, of course, been most involved with India's banking sector. And today, as is very, very evident and very clear, over the last few years, we've seen India's banking sector revive, clean up its balance sheet, emerge much stronger. In fact, State Bank of India crossed 2 milestones yesterday, crossed the $100 billion mark in market capitalization, but also crossed the 100 trillion rupee mark in business. And I was asking C.S. Sethi, the chairman of State Bank of India, what's the aspiration from here? And he said to be amongst the top 10 banks globally in the next 5 years. Mr. Kamath, that is an audacious aspiration and an audacious ambition. Do you think that India's banking sector is poised to break into the top 10?
Yeah. Firstly, my compliments to State Bank in achieving these 2 milestones. My answer is certainly yes, for a simple reason. This would not have been possible if we are not growing at the pace we are growing. And it would not have been possible if the banking sector was systemically not as strong as it is today. So given these 2 things, we will reach the aspirations set by State Bank of India and indeed other bankers. Again, sometimes I look back to see what I can see ahead. And when I look back at, say, China, circa 2000, 2005, that period, is when the banks started bulking up. And that's where you could see the pace of, I would say, growth go into double digits. So I think our steady growth of 7% or that range should take us to that sort of bulking in the next few years.
You know, and yes, SBI has also upped its credit growth guidance to between 12 and 14% for the year. But, you know, in terms of the next stage of reforms for the banking sector, and to talk specifically about public sector banks, Mr. Kamath, the expectation is that we're now going to see the next wave of consolidation as far as public sector banks is concerned, because the government wants not just world-class banks, but also world-sized banks, so bigger banks. Do you believe that consolidation is the answer?
I entirely agree with the government's path for a very simple reason. Historically, consolidations have happened, at least in the Indian context, when things were not good. I think this is the first time when things are good and you're consolidating. And what does consolidation get you? It gets you scale and gets you bulk and gets you, I would say, efficiency of operation. And all these are critically important today, and even more so when you're talking of, I would say, a technological revolution that you're all going through. So this is absolutely the correct move at this point in time.
Correct move at this point in time. Another possible move is the consideration to enhance the FII limit for public sector banks, which is capped at 20% currently, to 49%. The PSB view is that this gives private sector banks an unfair advantage when we talk about FII participation. It doesn't actually dilute equity at all. Why not do it?
I entirely agree. The playing field has to be level. Why should there be a playing field which is different for private banks and different from public sector banks? Over the last whatever number of years you want to count, the public sector banks have played a major role in the banking system, and I don't see that changing. So you need to have a level playing field going forward.
You know, while we level this playing field, so to speak, Mr. Kamath, what gives you the most confidence about what we're seeing in the banking sector and in the larger financial services sector? When we last spoke, you said banks don't need to worry about other banks. They need to be worried about what's happening on the fintech side. They need to be worried about tech companies who are also doing banking. As you look at the landscape and how much it's changed today, where do you find confidence and where are your concerns?
Yeah, my biggest confidence is the fact that, what gives me the biggest confidence is the fact that the bank balance sheet is clean. If we were having this conversation in a situation where bank balance sheets are not clean, profitability is not at healthy levels, then we would have probably gone in a different direction. So banks are strong and banks can today compete. So they have capital, they have people, they have understood how to use technology. So they have all the elements. What is required is to understand how the new player, what I call the new co, any fintech or any player which is not a bank but is agile in using technology, how are they acting? And make sure that you keep pace with them. That is a challenge. So that challenge exists, but I think it's a challenge you can overcome. And that's where I think in another session that I was having with one of your colleagues, I said that banks are spending money, but they need to spend it where, in a competitive sense, it is most productive.
Which means to actually acquire capabilities, to acquire some of these new cores that you spoke of?
No, not necessarily. What I mean is to put in the right technology that is appropriate for today, rather than do more of the same thing that we were all doing over the last few years.
Yes, so to disrupt yourselves using technology. Yeah. But, few years, fueled by domestic participation and domestic capital. Has that surprised you? And given the unlock that we've now seen happen, what is the kind of headroom for growth that you foresee?
No, I think the India story is driven by two or three things. I think firstly it is the long runway that we have. So that gives you headroom. If you did not have a 25-year growth runway, and why do we have that? Because I would think most of India is still to be built. That act of building itself provides the momentum. Again, you look at how growth has happened in other domains in the last 30, 40 years or 50 years. Japan first, Southeast Asia, tiger economy, Southeast Asia, China. You see the transformation journey starts with building what you don't have. And that itself propels you to a status where the next leap becomes easier. I think we are well on that journey. So that headroom we have. Then comes the question that is often asked, where's the capital?
Yes.
I think now we have clearly shown that that question has been asked for now at least 30 years that I have been in banking. Not the 50 years I was in development banking, but the 30 years that I have been in banking, that question has been asked, but where is the capital? I think the India story is what I would call a very measured growth. The government has always been careful to make sure that we grow at a pace which we have the ability to support. But today, I think we can grow at a faster pace because the access
What is a faster pace, sir?
I would say that we should actually aspire for a 10% growth rate. And then we will achieve 8%. So that's what we need to do. And Also, and I'm very happy that the index is being reset of, say, industrial production or various indices, because we will then have a better picture of at what pace are we really growing. I would think that we're probably growing a little faster than what we all assume.
Than what the numbers reflect at this point in time. Yes, and that review is, of course, underway at this point in time for metrics that measure inflation as well as growth. But, you know, Mr. Kamath, you talked about this aspiration of getting to 10%, and you said if we aspire for 10, we'll probably get 8. If you were to look at the landscape today and the measures that have already been taken, this year, the effort seems to be to boost consumption. We saw the income tax cuts, and we've just seen the indirect tax cuts by way of the GST. What next would you prioritize to really get to that 8 to 10% number?
See, I think we have to get on to what I call a virtuous cycle. Consumption is one part of that virtuous cycle. Investment is the other side. And the question could be, where do you invest? As I said, that's where the long horizon comes in. So you've got enough to invest. And as GDP goes in, aspirations change. That's the third part of it. So this keeps the momentum going. Now, again, historically, we would, that rhetorical question that I said, but where is the money to fund this? And that question has now been answered. Now, a classic case that I would use to say how this got addressed is NHAI. NHAI, we used to I'm talking of NHAI, say 10 years back or so. How will NHAI fund all the highway needs of this country? Just didn't seem possible, because it would otherwise take a larger and larger portion of the budget. But today, that issue is a non-issue, because what they have already put in place is now getting tolled properly. And that tolled road is now you create an INVIT out of it, and you have a funding which is not thought of or could not even have been conceived of 5-10 years back. So basically, we are creating new avenues to fund ourselves, and all this without necessarily looking at foreign capital. If I look at last 5 years, most of our growth has come through domestic capital, unlike most other domains. So we have got a lot of levers to push. We are on that virtuous cycle, and I think we will keep pumping at a good pace.
You talked about where is the capital and new avenues to actually find that capital. I was just speaking with the NITI Aayog CEO the last session at the Global Leadership Summit, and he talked about INVITs, for instance, as a means for us to be able to raise capital. REITs is another example. What next in terms of instruments that you believe could be relevant as we look at capital and growth?
See, INVITs and REITs. INVITs is what I meant when I talked of NHAI. And REITs is now becoming the default structure for real estate. These are areas which you never thought of that had a solution, but we have found a solution. I would think that there is, both INVITs and REITs, we are just at the start of it, at the start of the process. And that could become a huge source of funding for institutions. Now, the capital market is itself a large source of funding. So you mentioned about equity, the cult of equity and people putting money into equity. People also have other savings products which require debt-type instruments to, at the back, other end of it. So whether it is insurance, whether it is pension, a large part of, that will have to be invested through debt instruments. Those debt instruments are accessed through the capital market by people who grow India. So there's another virtuous cycle that is getting built there. So to me, you got banks, you got the capital market, and you got this structure under which you create an INVIT. It gets funded through the capital market. So you, from just maybe a unitary source of financing 10 years back, today you've got multiple sources. So that's why I said that funding is not going to be a problem. It is going to be, who does it best and how do you do it best? Because the other question that you asked, banks, growth of banks. We have not yet explored what will be demand for bank credit from the retail sector as India goes from 5 trillion to 10 trillion. Nobody has estimated it. I have not seen a single number.
What is your number, sir?
My number is just look around elsewhere as to what is it as a percent of GDP. And then you will get an answer. I don't want to give an answer. Some homework is required. Look at what is the retail debt to GDP in 3 or 4 domains where we are. It's at least twice of where we are. At least twice of where we are. So that itself gives you demand for a long time. At the same time, corporate demand from banks may not be what it is. So these shifts will happen because the capital market is providing those monies. Companies are better leveraged, so they don't need to borrow as much. They don't need to borrow short term. Long term, they'll borrow from the capital market. So the banks will have a place in terms of providing working capital and shorter tenor, which is appropriate to their funding profile, and retail credit. Whereas the capital market will provide the rest of it. So we have what I call a system which is in harmony, which will provide for this next journey from 5 to 10. Of course, there's another journey, 10 to 20. And it's not going to be that far behind. 5 to 10 is going to take us 6 to 7 years. The 10 to 20 journey is on us very, very quickly thereafter.
Very quickly thereafter, since we're talking about the capital markets, two questions. Something that we've seen through 2025, the emergence of India, what is now being called as the IPO factory of the world. You talked about some of these new cos in the fintech space. We've seen one or two of them list, and we've got listings lined up in the fintech space as well. What do you make of this move of these startups, these new age companies to the Indian equity markets, and what that signals and what it could potentially mean in the medium to long term?
I would look at it in a very positive construct, and that is that the governance of all these companies that are coming to the market is now going to improve. Not that they were not well governed, but they will now be subject to market discipline. And that itself will strengthen the core of what is happening in India. So these companies will now be an integral part of the growth engine of the country in a way that you expect it to be. And that's for the good. So I welcome all the new issues that are coming on. As long as, before the issue was made, it has been properly vetted and properly brought to the table, as it were.
The valuation debate is on as well, sir. I mean, not just as far as IPOs are concerned and IPO pricing, but also on valuations as far as Indian stocks are concerned. Are we too expensive? Is that why we're not actually seeing FPIs come in? Or is it more the capital gains issue along with the global environment? What do you make of the reluctance of FPIs to enter the Indian market at this point?
Actually, at this point in time, if you're trading at around 22, do you have space for these foreign investors? You'd have created a market which is too hot to handle. I think if you're finding the market, just now priced a little higher than where people might have been comfortable, I'm comfortable with this price because
you are comfortable.
Yeah, for a growing economy, this is the right price. There could be individual issues which are not at the right place, and that's exuberance. But overall, the market is not at a price which is too high and dangerous. So I'm comfortable with this price.
Are you also comfortable with AI valuations and what we're seeing happen globally? Of course, that's not part of the India story, at least at this point in time. But what do you make of the AI boom? And do you believe that this will perhaps be the one area where we need to move much faster, given what's happening?
Shirin, if you look back at, same sort of dialogue was going on during the dot-com boom. Most of the people here would have been too young to know about that. I've lived through that, the sort of hype that happened. And there are companies which actually listed on NASDAQ saying that I have no business plan, I don't know whether I'll be in business, and I don't know when that would be if I get into business.
But I'm a dot-com company.
And the dot-com company, listed. So those are the sort of tales that you heard. So things are not that bad today, and you can clearly see some of the benefits. But to me, at this point in time, a bit of the hype has to die down. And then you will really understand what exactly do these companies do and how do they bring value to the table. So I will let it ride. And in a way, our not being in the midst of it in India is a good thing. That is, these companies, we should adapt to the extent that we need to adapt. I'm saying we are not late to the party for a very simple reason. You take it, any technology that has come in the last 25 years, being late to the party has been always good. Because you could get in and use that technology when the cost of the technology had probably come down to probably 20-25% at what it was at the beginning. So I think we lose nothing by waiting out 6 months, a year and a half, 2 years, and joining the bandwagon when costs have come to what I call reasonable levels. So, and we have seen that happen in every single area.
So don't suffer from FOMO.
I'm not worried at all about FOMO. Better be out of it at this point in time.
Better be out of it at this point in time. You know, one of the concerns, though, that was again shared by the NITI Aayog CEO was that India needs to move faster in order for it to get richer before it gets older. Because for so long, we've been talking about our demographic advantage and our demographic dividend, but perhaps the time now is to focus on the fact that we're also fast becoming an aging population.
He's right. He's right. Within that construct, we'll have to see what is it that we can grow at. And as I said, 7 to 8%, aspirational 10% is, I think, a right number. Given all the governance structures we have in place, maybe in another economy where there were different governance structures, they could have grown at double digits and the low teens and the mid-teens. We can't. Given our checks and balances, we need to grow at this pace to be stable. So I think the journey of Viksit Bharat 2047 to be developed is a very well articulated journey. And we can look at two stages in it, go from where we are to maybe 17 to 20 trillion, and then from there to the next step by 2047.
You know, I also want to ask you, Mr. Kamath, about what you're seeing happen globally. There is, of course, a retreat from globalization, but there's also a retreat from multilateralism and from multilateral institutions. You were part of a multilateral institution. What do you believe that that could potentially mean for the world and the rules of the game as we have come to understand them over the last many decades?
You know, multilateralism is not going away as such, because the next wave of handholding will be required across Africa. The multilateral institutions have been holding hands where the growth journey and the developmental journey could not be done by a nation on its own. 50 years back, we were in the same thing. Again, most of you probably were not born then.
We're not that young, sir.
How was I, when ICICI was born in 1955, most people would not have been here, would not have been there. How was ICICI funded initially? Through loans from the World Bank. Later on, it was loans from the German institution KfW. And later on, it was the Asian Development Bank, and then some government support to raise bonds. So this construct whereby the global north, as it were, supports the global south, I think will continue to be needed in several domains. Would it be needed in India in a big way? No, because I think we will graduate, but other countries will need. So in terms of the financial structure, financial architecture, certainly multilateral institutions will have a role to play. Will other multilateral institutions have a role? I think that's a question that will be asked as we go along.
You know, I want to end, Mr. Kamath, by asking you about something that I know you were deeply involved with, and you actually had numbers on your side, and that is the participation of women in the workforce, and you very successfully did that at ICICI Bank. As an economy, India cannot afford to not have women participate in the formal economy. We've seen a slight improvement in the metrics, but the journey is long. What is it that worries you on that front, but more importantly, what is it that you believe we need to focus on as a nation?
See, as a nation, if we keep to the target of growing at the pace we have been talking of, 7 to 8%, I think everybody will be mainstreamed, because that growth will not happen if there is only a lopsided employment that happens. The second was access to and the mindset to do what I'd call the sort of subjects that are relevant to today's India. That probably was absent a few years back. But today, I see women taking up STEM. There are more women graduating with the STEM courses than others. So with the evolution that is now taking place, the new technologies and so on, I'm equally sure that there will be more women, if not more equal number of women, who will take these courses as men. So I would think that we will grow in what I like to call a gender-neutral way.
Well, that does deserve a round of applause. I hope we do grow in a more gender-neutral way. Mr. Kamath, if you were given the task of a headline that captures the spirit, the mood of India in 2025, as we look into 2026, what would it be?
I would simply say 10 trillion, here we come.
10 trillion is here we come.
Yes, here
10
we come,
trillion,
yes.
here we come.
Yes.
KV Kamath, always a pleasure. Ladies and gentlemen, a big round of applause for the veteran banker and the Perma Bull on India. Thank you very much for your time, sir.
Thank you, Mr. Kamath and Shireen, for that conversation. That was a comprehensive look at India's financial infrastructure and global positioning. And now let's drill down on one specific shift that's happening right away. Indians have been savers for generations, bank deposits, gold, real estate. But something's changing. More households are looking at equities, mutual funds, and alternative investments. The financialization of India is underway.
So what does that mean for the economy, for financial institutions, for how risk gets distributed across millions of households? To lead the discussion, please welcome Prashant Nair from CNBC-TV18. Joining him are Mark Pilgrim, Managing Director and Chief Executive Officer of Geo BlackRock, Vikram Sahu, India Country Executive at Bank of America, and R.G. Manilak, Senior Vice President and Head of APAC FinTech at NASDAQ. Ladies and gentlemen, please join us in welcoming them all.
Thank you very much for that. And I think the session with Mr. Kamath has really provided a really foundational, fantastic perspective. I mean, he said, well, 5 to 10, and then 10 here we come, and then 10 to 20 even faster, right? So I hope that's the case. Now, when we talk about financialization of India, it's really one of the most fascinating shifts underway anywhere in the world. And, you know, we all know the numbers, the number of demat accounts, unique individual investors, etc. But a country with barely $3,000 of income per capita per person, yet the kind of access that we've built to financial products because of Aadhaar, UPI, and of course, I mean, 80% mobile penetration, digital broking. I mean, it's almost unmatched globally. But as we move from a nation of savers to a nation of investors, a few big questions emerge. Does this trend still have mileage, or have we already hit kind of cruising speed? What are the next frontiers in access, innovation, technology? AI is, of course, continues to be a big buzzword. I mean, will that be, incremental, or will we see some revolution because of that? And finally, what are the pitfalls, the risks that come from speed, inclusion, and I don't want to use the word over-financialization. I don't know if Mr. Kamath is still here. To help us decode that, we've got three people who sit right at the intersection of finance, technology, and of course, investment access as well. Gentlemen, great to have all of you here. Thanks very much for being part of this event at the Global Leadership Summit. I want to just throw it open with, and get your perspective. Am I correct in saying, financial access to financial products at this level of GDP per capita? Vikram, why don't you start? Have you seen this anywhere in the world? I mean, you have a bird's eye perspective.
So, I know there's this question about where we are on this journey, but I think it's still worth reminding us just how far we've come. So if you look at the Indian markets, 25 years ago, this is when you had Gladiator in the box office. India had a collective market cap of $160 billion. Today it's 5.2 trillion. It's gone up 33-fold over that period. And it's been the best performing market in the world in dollar terms over that period. And actually, by the way, over the last 5 and 10 years, it's been in the top 3 performing markets in the world in dollar terms. So we've come a long way. It's like that old cigarette ad. However, when you think about where we have to go, from my perspective, and it'll be interesting to see what Mark and RG have to say as well. I think if you would think of this in terms of an old 5-day test match, we're probably at lunchtime on the first day, right? And the reasons for this are pretty straightforward. It's some of the things you talked about. There's 3 factors. One factor is the addressable population. And like you said, there's about 1.2 crores of individual IDs with the demat accounts. But when you look at what that translates into as a proportion of the...
Sorry, that was 12 crore. 12 crore unique investors and 20 crore demat accounts.
Correct. But when you look at the addressable population, let's take consumer discretionary as an example. Typically, depending on what you're talking about, it's something between 20 and 30% of the population. So you've got a long way to go when you think of our population at 1.5 billion. The second factor is per capita income is still growing, 9% a year, somewhere in that ballpark. And then last but not least, when you look at a share of equities as a proportion of household savings, Before COVID, we were sitting at 4%. Now, what is it? It's about somewhere in the ballpark of 7%. If you look at markets you can benchmark yourself against, it's anywhere from 25 to 45%. So you take all those three factors, all of which are growing, put them together, and you can see why I'm saying we're at lunchtime on the first day of a match. So.
Lunchtime. Have you finished lunch or are we still having lunch? Before lunch, after lunch? Lunchtime on the first day of a 5-day test match.
Yep.
That's how you'd put it.
Yep.
I mean, that's, I think, a useful way to think about this in terms of where we are. Arjun, you want to come in? What's your perspective?
No, absolutely. And I would tend to agree in terms of Vikram, in terms of really believing India is truly at its infancy in terms of financial development and overall potential. I think NASDAQ, coming from where I sit, we sit in a very unique spot in the ecosystem because I think most people here probably know NASDAQ as the big market in the US, one of the bigger exchanges globally, always technologically innovative. But what many people don't realize is we get to supply technology to over 100 markets around the world as well. And really many parts of that ecosystem, whether it be exchanges, banks, broker-dealers, asset owners, you name it, we're sort of involved. And so we get a good perspective on these things, and I can say with confidence, based on many of the markets that I deal with in Asia and Asia-Pacific, that the potential here is unmatched, in my opinion, both from a demographic perspective, but to what Vikram was saying, while those numbers are large, as you mentioned earlier, it's still a small percentage of what's possible. And so when you think about that opportunity and what Mr. Kamath was just mentioning earlier, if you make the right investments now, the world is your oyster, I think, here in terms of that.
I mean, there is, of course, household assets shifting to financial assets, that is one. But of course, the other one is the country getting richer, which is what Mr. Kamath was referring to as well earlier. Mark, your own thoughts on this question. Where are we? You guys are here and you have big plans, and we'll talk about that in a bit from now. But just the first basic sense of where we are.
So first, I'm going to have to apologize. I talk in billions, and I can't make cricket references because I'm French. I would say that coming from global markets to India, the state of development that you have in the industry is incredible. I mean, you've got 1.4 billion people with Aadhaar. Operations, UPI operations per month, which means people can pay extremely efficiently. And then you've got the accounts aggregator frameworks, which enable to track everything. From a wealth manager perspective, this is all great. It helps you to build a better business. I would say that the innovation now needs to come in how you link it all together and how you create the platform and the systems to make sure that the customer journeys that you offer to your customers are happy journeys. I think there's a lot of work that needs to happen there, and this is where a lot of the innovation will happen.
It's just a question to any of you who, I don't know who wants to take it, but is at this level of per capita, usually, I've read research, etc., which says that, all of this starts at about $5,000 plus. At this level, is there a risk of over-financialization in that sense, or no? Not at all? No one wants to take it?
I personally think it's all relative, right? In terms of, where you stand. I think there's always potential. I think that the key is that the trend is towards more consumer savings and ability to, and discretionary spending, right? And what you do with that amount. And I think if you introduce the right guardrails and the right structure, as Mark was mentioning, you can take advantage of that. I don't think there's really a risk of overly doing it at this point. I don't know if you agree, Mark.
I think that I would look at it differently. I think you need to take a look at it from the perspective of financial inclusion and wealth inclusion. India has achieved, with the numbers I mentioned, financial inclusion. Wealth inclusion is still not there. And that is where a lot of things still need to happen.
Let's talk about what each of you see as the next frontier of, what needs to happen here. We have the rails on which financial inclusion has happened. For wealth inclusion to happen, Mark, why don't you go first? What needs to happen from here?
Yeah, so I can draw a parallel with some of the markets I've had the privilege to work in, and how you move people from being savers to investors, and it's a multi-pronged approach you need to have. So, to simplify it, I would say you need to have the technology. Part of the technology is here, but you need more technology. You need to have the products, And when I say products, there's a complexity because it's not only the investment products, it's also the digital product, which is the whole customer experience. People don't relate to a financial product, they relate to an experience. And then you have the education, which is extremely important. I would say, if you take a look at today, the state of literacy, financial literacy, there's progress that needs to happen globally, but I think India, is part of that story.
Just to press on that point, Mark, when we talk about, we speak with wealth managers, etc., all the time, and you get the sense, well, it's the client out there already has, every client has a, so, and yet there is so much excitement and people are, and it's a booming industry. Just your, I know you have strong thoughts on this, but go on.
Yeah, so wealth management, I think, needs to be defined properly first. There's so many versions of wealth management, and you can't talk about wealth management without looking at the individual segments. Wealth management, so first of all, the word wealth can be a little bit controversial sometimes. Wealth management should be for everyone, okay? The democratization of wealth management is something that should happen. Very often, and I think when you take a look at the state of the wealth management industry in India, it's a little bit of an elite. So there's I would say, a few thousand families that have access to a wealth managers. Wealth management can include elements of advisory, so investment advisor. There's elements of succession planning. There's all sorts of different things. And depending on the segment you look at, the needs and requirements will be very different. At the basis, I would say wealth management should be advisory, fiduciary advisory for everyone, whatever your level of assets. And this is where I think a lot of innovation still needs to happen here, because there is these few thousand families that have access to a wealth manager, someone that will talk to them and guide them. And then there's the next 100, 200, 300 million potential clients that actually are in a little bit of a void. They don't know what to do. They need that guidance.
But is there a way to make, is it a profitable segment as well? Maybe, or you think technology enables that, Mark?
I want to make sure that we all have a chance to speak here, but yes, there is a way. We've seen it happen over and over, across the world. It takes time. It's not something that happens immediately because of all of what needs to be built. The technology is fundamental. So if you think of a traditional wealth management model, it's a pretty high-touch model. That model is very, very difficult to implement if you have clients which have a lower base of assets. That's just a fact. This is mathematics. But you can, through technology, replicate that. You can develop the systems that will enable you to manage a portfolio, to check on the suitability on a continuous basis, to basically do everything that the person can be doing, but at scale. This is the big developments that need to happen. We've brought our platform, Aladdin, here in India, which can do just that.
And let's just take that technology point forward. And you work with financial institutions and banks and all kinds of companies here in India and provide technology, right?
Yep.
Even regulators, as we were discussing earlier.
Yeah, so to your point on what we think is next for a market like this, NASDAQ, when I mentioned earlier, we support over 100 markets globally. We look at those capital markets really similarly across in terms of our overall strategy, right? We think there's three core pillars to what facilitates good capital markets. First is liquidity, right? Which you all said, I think there's opportunity here. Just simply the numbers you presented earlier, the liquidity will come. But secondly, you've got to maintain trust and integrity in the marketplace. And how do you do that? Building trust, building safety, building those guardrails in place, putting technology in place to ensure that every part of the ecosystem is comfortable that their money is going to be safe, it's going to be investable, the regulators on board as well, and really all parts of the ecosystem feel that way, are super important at this stage of India's development to succeed. And then lastly, once those pieces are in place in terms of liquidity and integrity, is maintaining transparency across the platform, right? So whether that's through good risk management, through good surveillance, all those things that the regulator will ask for, or the wealth managers will ask for, or the investors themselves will ask for. We look at all capital markets in that lens, and that's sort of both in the markets we operate, as well as the technology we provide to the capital markets we support as well. And I think that just builds off of what Mark was saying earlier. If you put that right technology in place, everything else sort of will be facilitated
that's
from there.
my point, right? I mean, liquidity is there. I mean, there's enough, global companies want to come and list here. I mean, just to use that as an example of the liquidity and the deep markets that India
Absolutely.
has.
Yeah, the opportunities are going to be there.
Yeah,
by
it's
default
there.
here in India.
So on technology, I mean, where are we? Since that's what, I mean, NASDAQ markets.
Yeah, I think India's at an inflection point in a lot of ways, and I think some of the other panelists earlier sort of alluded to it, whether it was Mr. Chauhan at the NSC or Mr. Kamath just here before. There's so much potential here right now, and obviously India has always been a center of excellence in terms of technology and innovation as well, in terms of the talent here, and so I think right now the risk is, I think you need to make sure you learn from other markets as well. Look at other markets that have been successful globally in terms of similar capital market structure that you want to achieve, and follow that. Don't necessarily try to just build it from internal within India. That goes a long ways.
Yeah.
But as far as looking elsewhere to sort of see best practice, I think will help take it to the next level.
And the other third thing that you mentioned, of course, is safety, right? I mean, all the investors who are accessing financial products, you want them to stay once they are here. I mean, you don't want them to go back because of some, some safety issue or some.
Yeah,
but we've not had those for a while here in India in that sense, right? At least.
Yeah, no, absolutely. I think the risk in many of these emerging markets and growing markets is that you have so much excitement and potential that you're eager to get these new products out, you're eager to get new opportunities for retail customers and investors out there. But you do that, and the one time you have a major scandal or a major scam or a major fraud, you go back to zero, right? One step forward, two steps back. So that's the sort of thing you want to learn from other markets that have gone through that, and try to avoid it as much as possible. Not always going to be possible to avoid everything. But again, just putting those little guardrails in place, the framework in place so that everyone's comfortable that, okay, great, we can check the box, we're ready to move forward in a very fast manner.
Vikram, your thoughts?
I'd actually double down on that. I'd say the bedrock is trust and confidence in financial markets. And over here, the regulators have an absolutely critical role to play with that. And then the second is look, there's going to be lots of hard work in terms of building the plumbing. So you have intrinsically untapped appetite. You have confidence in the markets. Now it's a question about taking that and transforming that into inclusion and wealth creation. Now, and as part of that, again, coming back on the issue of pockets with products, I think your previous guest, Mr. Kamath, had it right when he was talking about things like REITs and InvITs. So the collective market cap, it's an early stage in the journey, about 8 years now, I think. Collective market cap of $23 billion. Little Singapore has got a collective market cap of $63 billion for REITs. The US is 1.4 trillion. So the resting place is somewhere in between, but a long, long way to go.
We have, I think, 4 listed REITs. And maybe there are a bunch more coming. So it's like a space which is exploding. In terms of products themselves, Vikram, I mean, you have which of the products really, REITs and InvITs is of course one. There'll be financial innovation in a big way as well. Maybe you don't want too much of that. That on the other end is also an extreme. But do you think we have enough of that already here?
There's areas that I think we can deepen. Like the corporate bond market is shallow. There's been a regulatory debate about thinking about that. We talked about REITs and InvITs, fractionalization of shares, tokenization. These are all things that will come with time. So.
On financial sort of innovation, any thoughts?
Yeah, look, I mean, very similar, right? I think NASDAQ tends to try to lead the globe, if we can, in terms of innovation on markets, right? And so tokenization has been announced by NASDAQ, and that's coming in terms of tokenizing all equities, for example, making it easier to settle and clear potentially down the road. Extending trading hours, for example, 24/5 trading. Again, for investors in India that are sort of coming into the market, being able to trade global markets seems like a simple idea, but it's not that possible right now, right? And so things like that, digital, carbon credits, all these types of topics are very, very appropriate right now, and all things that NASDAQ is focused on at the moment in terms of just being able to facilitate not only in our markets, but making sure that other markets are able to offer them when they'd like to.
Mark?
So again, I'm going to go back to what I was saying before about the dual level of product. You've got the digital product, and you've got the investment product. The digital product is all about the client experience. And the client experience today is the app. And so I think that a lot of the innovation is how you take what we said at the beginning, all of these different components of the financial industry here, the digital financial industry, and combine them to make the shortest, most efficient potential journey for your clients, for them to have a good experience. That's how you actually get them to adopt your digital product. You need to provide them with all the tools, you need to have the systems behind that, and that's all part of what is in the package. When it comes to the financial product, I would turn to, again, like the German market, which went through the same transformation, or the Italian market, which went through the same transformation, where the success of the investment product was all about low cost, ease of understanding. If you translate that into financial terms, I would say it's the portfolio at the center and index at the core. And so the way to look at this is to say, look, we are moving from a world where people, and this is still the case here, if you take a look at the asset management industry, if you take a look at the way the products are distributed, there still is a little bit of a product push. And you realize that, again, your clients, your potential clients, can't relate to these products in most cases, which is why you have 1.4 billion people in India and 55 or 60 million mutual fund investors. So what you need is you need to move away from that, and you need to think, how do I communicate with my clients? How do I educate them around what their needs and requirements, how they should think about goals? How do I map those goals to a financial product without talking to them about a financial product, which is then, again, all part of the experience. And I think a lot of the innovation comes in terms of how you message these incredibly complex financial concepts, which everyone here understands, but most people on the street don't. That's a lot of work, a lot of hard work, a lot of education that needs to happen.
Do you think costs are too high, Mark? I mean, cost of financial products, cost of access to financial products. I mean, what you're paying for is fees, basically, across a range of instruments.
I think that a lot of markets have responded to that question with the concept of value for money. Cost is I don't think it's the right concept. I mean, what is it you're getting for your money is a much more interesting one. I have, again, I have the privilege of working with a very large Swiss bank where you have that segmentation between mass affluent, and then HNI. And the way they deliver the products and the products they delivered was, of course, extremely different. And you realize that even for the HNI segment, the value for money concept applied, because a lot of the portfolio in the core asset allocation actually moved to very efficient, model-driven, index-driven asset allocation. And that is, again, the concept of value for money. You can achieve exactly the same outcome as you can achieve the same alpha through an asset allocation. So the fundamental active equity products that they were buying through an advisor at pretty high cost, you realize that you can get the same value for less money. That's how I would respond to that question.
Sorry, Ajay, you want to say something? We're out of time. Vikram, you've been here, what, 4 months, 5 months?
That's about right, yeah.
I mean, you want to just, as we close out, what is Bank of America, I mean, goals you're setting for Bank of America here in India, from here out?
So I think the first thing to emphasize is that while I might have been here for 5 months, the firm has been here for over 60 years and has got very, very deep roots in the Indian markets. And we operate across our entire spectrum of businesses, and we grow rapidly and profitably. So then if you take a step back, the reason I voted with my feet and came back home is because this is a strategic priority for the firm. We intend to grow substantially going forward. And the team and I want to make India a really important part of the growth narrative for Bank of America. And I'm just excited to be here and happy to be here.
We're excited to have you here. And I hope this is the first of many. Vikram, thanks very much for being here. Arjun, great to have you with us here. Mark, thanks very much for being here on this as well. Appreciate it. Thank you. Thank you, gentlemen.
Thank you to our panelists as well as Prashant. But stay tuned as we decode who owns the future of money in just a while with Forum Mehta, VP and Head of International Cyber Risk, PayPal, Harshal Mathur, CEO and co-founder Razorpay, Dilip Asbe, MD and CEO of National Payments Corporation of India, and Amitabh Malhotra, Vice Chairman, Capital Markets and Advisory, HSBC India. That in just a bit.
And here's what's interesting. While retail investors are discovering equities and mutual funds, a different kind of money has been quietly reshaping India's landscape. Institutional capital is flooding into hard assets, grade A office space, industrial parks, data centers that didn't exist 5 years ago. But can developers actually deliver what they promise? Can they navigate approvals that take years? Can they hit the yields that justified these commitments?
Our next panel examines what's actually working and what isn't. The conversation will be led by Surbhi Upadhyay from CNBC-TV18. Joining her for the discussion are the leaders building and financing these projects. Aditya Veervani, Managing Director, Embassy Group. Arpit Agarwal, Managing Partner and Head, India and Middle East Infrastructure at Brookfield. And Sriram Khattar, Vice Chairman and Managing Director, DLF Cybersecurity. Please join us in welcoming them all to the stage.
Over to you, Surbhi.
Good afternoon, ladies and gentlemen. What a pleasure to be here with people who are talking about the real deal, right? Hard assets. Just when you thought they're out of fashion, well, think again. So I want to start by throwing some broad numbers to set the context for our audience over here. And these have been taken from various estimates, various industry bodies, CII, could be Knight Frank, could be JLL. So just bear with me on the numbers because they really define what we're talking about over here. Now, the total size of the Indian real estate market at present is under $1 trillion, to be more precise, $0.3 trillion. Now, CII expects that this sector can scale up to $5 to $10 trillion while we get to Amrit Kal, that's 2047. Not just that, in terms of GDP, right now the Indian real estate sector is roughly between 6 to 8% of GDP. And again, by 2047, the potential is that it starts contributing anywhere between 15 to 20% of GDP. That's a huge leap. Now, that's on one side. What's also interesting is the institutionalization and the formalization of the infrastructure and real estate landscape in this country. So REITs and InvITs, young products, barely a decade old, but the numbers are growing fast. So I'll just leave these numbers with you as well. The combined AUM of REITs and InvITs has grown to just under 100 billion in FY25 versus just about 42 billion in the COVID year 2020. Just imagine the leaps and bounds real assets in this country are really seeing. So that's what we want to debate and discuss. How much is real? Is there an element of hype? Can the prices sustain and can the demand sustain? So let's start with some opening thoughts from our panelists. Mr. Khattar, we all know, we spent the last, I think, 15 months or so, reading about those high-ticket luxury apartments, which were selling off in, less than like 5 hours, or was it 24 hours, right? So it's been a red-hot last 24 months for real estate activity. Tell us more.
So I think the Indian residence owner is getting far more discerning. He can afford much more. But the level of aspiration is rising very fast. So once you give a product, it's not only walls and rooms that you're giving him a complete experience and a feel of luxury in that experience. And I think that's what's doing well.
Okay. Why don't you, fill us on this, Aditya, your own experience in terms of what has changed, the pace of growth, and where exactly are we in the cycle? The cycle started just after COVID, right? And the usual wisdom is it's a 10-year cycle. Tell us if you agree or disagree and where we are.
Well, the housing cycle started right after COVID, but I think the commercial cycle has been going on for a long time. And I think you really have to look at it two ways. In one way, the market seems so hot. All the developers are releasing record numbers, but we still sell only 6 lakh homes in a country of 1.4 billion people. And if you think about China and where China was, you know, each developer there does 50 billion of sales. You know, our overall 6 lakh homes, 1 crore home on average is 70 billion. So our whole industry is almost what China is doing today with one developer. So I think the scale of it is immense, you know. So in one breath, it seems like, you know, we're at the very early days of a large cycle, but at the same time, we're also at the peak of a very big cycle. So it's quite interesting what it is. I think, you know, you'll see ups and downs. There'll be some setbacks in there, but I think it's still really early days. As we move from this low income to mid income, there's a lot of potential left.
Arpit, I'll come to infrastructure in just a bit, but let me go back to Mr. Khattar. Where are we in the cycle? Mid, early?
Well, we are at the, say, the 30-40% level of the cycle. It's not early, it's not mid, but at the moment, the tailwinds, both for India as an economy as a whole and for the real estate sector, are strong. And it's after about 15 years that I'm seeing that the tailwinds for the various segments of the real estate sector are strong. And I see them continuing for the foreseeable future.
We'll come back to individual segments, office and residential in just a bit. But Arpit, you tell us, I mean, infrastructure also, things are from telecom towers, and you folks own some of the largest telecom tower assets in the country. I mean, how do you describe the momentum and the immediate future?
Yeah, thanks, Urbi. So infrastructure is a little bit different, right? These are hard assets that facilitate the movement of people, goods, electrons, data. We're at the start of an infrastructure supercycle in India. Every dollar spent on infrastructure contributes $2 to GDP. And we are at the start of a $2 trillion investment cycle. So think about it when we're talking about contribution to GDP. 2 trillion contributes 4 trillion to infrastructure. So it's investment in infrastructure is essential, it's not optional. Now, if you get into sort of sub-segments of it, you talked about telecom towers. We still think there's quite a bit of growth left. Because remember, your mobile devices are the primary devices by which you're consuming data. And as you consume AI going forward, your mobile devices will be that primary device still. So there is a lot of build out in telecom towers. We expect another 300 to 400,000 towers over the next 5 years. You talk about data centers. You know, we're at about 1,200 megawatts. That's expected to triple by any conservative estimate in the next 5 years. Or you talk about transmission lines, renewable assets. I can go on and on, but the reality is this is a secular trend and there's no real cycle. We're just at the start of it.
So let me try and sort of map this with some numbers. I think if you talk about total assets, which are managed by InvITs in India, we're at about, I think, just under $75 billion, right, of total assets. REITs are, of course, a lot smaller at about 20 billion. Now, since you talk about this explosive growth, this number of 75 billion of assets under InvITs, where do you expect it to go, and which sort of assets will lead this?
Yeah, absolutely. And I think there are estimates out there, but essentially over the next 5 years, we're expecting the AUM under InvITs to triple. And remember, InvITs are just one of the financing tools for infrastructure. So there's going to be other pools of capital that will invest in infrastructure. Now, just stepping back, you know, the number you mentioned 5-6 years ago, I remember when the InvITs were first starting to sort of come up. Brookfield at one point, Brookfield sponsored InvITs at one point, were more than 50% of the market, which was staggering. Today, that number has come down to about 20%, which is just, you know, the proliferation of InvITs in the market. And that's just a testament to the attractiveness of that. There are, you know, if you go through the regulatory landscape, if you look at the investment returns of InvITs, and just to give you those stats, you know, since inception, InvITs have delivered about 16% returns. And interestingly, of that 16, 7% is through cash yields. So think about it. You're not actually taking a lot of, you know, there is capital appreciation, but you're taking lower risk on the market movements. And if you compare that to the Nifty 50, that number over the last 5 years is 1% yield for a similar return. So it's a very interesting sort of lower risk asset class.
I think the equity market performance by itself has made sure that REITs and InvITs are absolutely, you know, shining under the arc lights, bright, especially in the last 1 year, right? We'll come back to this and we'll talk about InvITs in more detail in just a bit. But gentlemen, now let's talk real estate and let's kind of break down what's been happening in, in the office market, the commercial real estate market. Grade A office space is, I think, flying. And I saw some numbers. I think out of the roughly 80 million, if I remember correctly, square feet of absorption that's expected for this year, more than 90% is grade A offices. We know the demand that GCCs, for instance, are bringing about in cities like Hyderabad and Bengaluru. But the question is this. We're living in times which are dedicated by Mr. Trump. And isn't that the biggest risk in the room now? I mean, will this GCC demand continue to be as robust?
May I?
Absolutely, sir.
So I think the Indian commercial real estate market landscape has changed completely. Today, India offers a high quality, technically qualified young workforce at a fraction of the cost of what it would be in the developed countries. At the same time, India is now offering global quality real estate at a fraction of the cost. Now, if you take the combination of these two competitive advantages, it's a very compelling reason for international companies to come and set up business in India. Now, this is further supported by a very strong digital backbone that India has. And therefore, once you're in a virtual world, whether you're sitting in Seoul or Hong Kong or Delhi or Bangalore or somewhere in the US, it does not make a difference. And I think this market will grow very well. If I may please add a few more things to it, these global companies that are coming to India are now no longer looking just at real estate. They are looking at other aspects which go with just creating the concrete. They look at sustainability. They look at ESG scores, they look at safety, they look at being the ability to expand, they look at amenities and social infrastructure that's created for the employees who are going to work there. And they invest in their fit-outs more than developers spend in constructing the commercial assets. And therefore, they are so invested that they are looking for the bigger picture.
But no, absolutely, no taking away from all the points you made. But the question is, if these companies suddenly start getting disincentivized, especially in, let's say taxes is an instrument widely debated right now. If there are disincentives to send work overseas, and I don't call it offshoring necessarily because GCCs are doing some very high-end work, now, especially now. Isn't that a real threat and a real challenge? Maybe Aditya, you want to pitch in?
Yeah, so maybe, they have no other choice. Yeah. It's all about the talent, besides the fraction of a cost where 1/3 of real estate, 1/3 of people cost, but it's just the availability of talent. And I think more than the Trump risk, I think what India commercial faces is the genuine AI risk, which no one knows today what's going to happen. So when you look at this 80 million and, even for the 6 months year to date, we're record high, we're going to beat 80 million square feet. These are deals that happened 3 years ago that are now coming under completion. So when the OC really comes in and the lease is signed is when these numbers come in. So I think the really interesting thing is going to be now is, will 3 years from today, the leasing numbers be the same? I am an ever optimist, and I think that, yes, it will. I think India will come out strong from this whole AI generation revolution that's happening. The work will change. This whole GCC concept is just another glorified word for the back office work that was happening 10, 15 years ago. So I think this terminology of GCC will change. We'll be doing AI-related work. I think India will come out strong. I think the service sector will grow this country
So
immensely.
as of now, and I mean, you have huge presence in Bengaluru, right? As of now, when you talk about demand from the traditional IT sector, I mean, are there signs that that's plateauing? Because they're all grappling with the whole AI transition. And that's the biggest question in the room, whether that'll just mean a reduction in the workforce and therefore less requirement of space.
Yeah, so I think it's again the definition of IT. IT is all...
It'll just mean a reduction in the workforce and therefore less requirement of space.
Yeah, so I think it's again the definition of IT. IT has been taking a back step for many years, even before AI. But the GCCs are doing technology. So I think we confuse IT and technology quite a lot. These GCCs are very deep tech companies. The innovation is happening in India. So I just think people blur the lines between IT and GCCs quite often.
Now I have a question specifically for residential housing. And it's a really interesting line I picked out from a Knight Frank report. I'm going to quote it verbatim because it's them saying it. I'm not saying it, okay? And I quote, inventory levels in the higher ticket sizes, particularly those in the 20 to 50 million and in the 200 to 500 million categories have grown by 47 and 19% year on year respectively and warrant a closer look in terms of an assessment on whether the residential market, premium luxury residential market is overheating. So,
yes?
Is overheating?
I don't think so. What's really happening is that, and this phenomena probably started post-COVID when the economy started doing very well, and it had a little overspill of the COVID days also. I have seen that the younger generations now don't want to stay with their parents. They don't want to stay in a joint family where you have a bungalow and you stay on each floor. And they really want to be on their own. And when they want to be on their own, then luxury condominium housing is the next option that they have. And the option provides them with a lifestyle which they could never get staying in a farmhouse or in a colony. And it's here to stay. It will continue to grow. Except it depends how you define luxury. Do you define luxury when you buy an apartment for 6 to 8 crores or for 20 crores or for 40 crores?
So, I mean, if you just look at sales numbers, residential this year across pan-India, January to September, that's the latest data that I found, sales have plateaued. I mean, they're stable, but they've sort of plateaued, I think, minus 1%. The question is on pricing. I mean, do you see scope for pricing to appreciate from where we are when it comes to premium real estate?
Yes, the pricing will continue to improve, but I would request you to look at real estate from a long-term time horizon and not from 3 months, 6 months, 9 months. This is not an industry which works around those cycles. It's not like the production of a white good which is produced, sold, and then next year, 2 years later, you want to change. You should look at this industry more from a 7, 10, 12-year horizon and then look at the pricing and then see what the growth rates are. The studies that we do, we believe that, and these are historic studies, so we see that the residential markets tend to grow, the value tends to grow slightly below equity, but much higher than debt. And that's what I think one should look at and not look at the immediate past or the immediate future in terms of the price.
Fair enough. Now let's look at future growth and how the growth is going to be funded. We discussed, pools of capital, REITs and InvITs, among them. Let's come back and talk infrastructure assets, Arpit. Purely from a, capital standpoint, what are we looking at? What kind of capital? What will be the color of capital, foreign, local, domestic, that will keep funding this infrastructure growth? And then what's the best way for an investor to play this rise?
Yeah, absolutely. I think it, to your question, I would probably split infrastructure into various phases of development. If you're talking about developing infrastructure ground up, that will primarily, in our view, be led by the government and Indian developers. But once those assets are operational, they can be switched over to institutional investors such as ourselves, who've built real operating teams on the ground to be able to manage these assets. Additionally, we will also tap into InvITs to be able to fund these operating assets. And to your point around, specifically on InvITs, if you think about before InvITs, investors such as ourselves didn't really have the ability to invest in these assets. You had these holdco structures and you had the SPVs with the operating assets below, and sometimes the developers had a mixture of the EPC business and assets together in some of these listed companies, and there's nothing inherently wrong with it. It's just a different risk profile. Now with InvITs, cash flows coming out of these assets. So I think that will continue to be an attractive sort of destination.
Okay. So if I were to ask you, Aditya, I want to invest in hard assets here in India. What should be the best vehicle of choice? And is it fair to assume that I'll keep getting an IRR of 16, 17% because the last 24 months have been absolutely fantastic? Is that a realistic assessment to have, expectation to have for the future?
So I would always advise on the REITs. I think it's a great product for a retail investor. You want to invest from, 300 rupees all the way up to 10, 20 crores. It's been a game changer. Before, when someone was chasing yield, you would invest in these kind of B-grade office, strata sold, multiple different owners. You have problems with asset management, common areas, not collecting your rents on time, dealing with the tenant, a lot of headache that goes into it. So I think the REIT has really been a game changer. It is, I keep saying this, it's a low risk, medium return product. It will give you 12, 14%. It's not going to overperform unless it's coming off a low basis. But it is such a well diversified and stable product. I think it's one of the best things that's happened in this country. Still early days, 20 billion market cap, listed real estate's 100 billion, 20% of the market is REITs. When you compare that to the US, is 95 plus. 95% of listed real estate is in REITs. Now, I don't think we'll get there because those are residential, healthcare, storage REITs. We're not that mature yet, but definitely you want to invest in grade A assets. The liquid REITs are the best way to do it. People need to move away from the strata mindset if you're chasing yield. If you want to buy an office for yourself, fair, but I think that education has to continue to happen to our retail investors for them to be able to genuinely make a yield.
15% plus should be a realistic expectation.
I would say 12 to 14 is where the REIT should be performing.
That's not bad. The equity guys say 12 to 15% CAGR returns. REITs are saying 12 to 14. I'll take it. Mr. Khattar, final words with you. And also on regulation, what's also obviously a huge boost for REITs, I'm guessing, is the mutual fund regulations are changing, and now REITs are part of the equity classification. Anything else that's required in terms of either government intervention or regulation to give a boost to the sector and to ensure, might I add, to ensure that some of the mistakes of the past cycle are not repeated?
Yeah, I think the present government, very stable and very sound and looking to Viksit Bharat at 2047, is taking long-term steps. And I think this real estate regulation was a very, very major step which institutionalized the industry to some extent and continues to do so. But if I have to pick up two things which I think are important from the further growth and institutionalization of the industry, one is simplification of the approvals process. I think as a developer here, I think the pain that one goes through to get the various levels of approvals from various regulatory, state and central government bodies needs to be sort of simplified a lot. And the other is land record digitization and putting it together. I think if these two things are done, then India, from a real estate perspective, is on a very good run.
Okay, on that optimistic note, thank you very much for all the insights. Very, very useful for us. Thank you.
Thank you.
Thank you, panelists, and thank you, Surbhi, for that insightful conversation. Ladies and gentlemen, one more time, a huge round of applause. $15 billion UPI transactions last month. Every single one free, instant, seamless. The payment system winning in India is public infrastructure, but that's creating tensions nobody discusses openly.
Because here's the reality. NPCI built the rails, fintechs built businesses on top, global platforms want in, the infrastructure is open, but who captures value, who controls the data, and who owns the future of money? These questions matter. To explore this, please welcome on stage Ritu Singh from CNBC-TV18 to guide the discussion. And joining her are Dilip Asbe, MD and CEO of NPCI, Harshal Mathur, CEO and co-founder of Razorpay, Forum Mehta, VP and Head International Cyber Risk at PayPal, and Amitabh Malhotra, Vice Chairman Capital Markets and Advisory, HSBC India. Please put your hands together for all of them.
Thanks, Shruti and Arundhati. Okay, can we get some water here? Well, as they were talking about 15, actually it's now 20 billion
I wanted
transactions.
to correct that.
Yes, I'll correct it for
Why
you.
reduce ourselves?
20 billion transactions, that's almost 8,000 or more per second. That is the kind of digital transactions that are taking place on the UPI network. And it is now powering, half of the world's real-time payments at the moment and increasing. People like Herschel, fintechs like Razorpay, they're moving hundreds of billions of dollars every year. And then you have global platforms like PayPal integrating with the UPI rails, redefining how money is moving across borders. And at the same time, Amitabh, not to forget, capital markets are on fire, record number of IPOs, surging retail participation. That's just changing the nature of the game. And now AI is also learning how we invest, how we save, how we spend. So all this really brings us to the question about who really owns the future of money? And Dilip, the first question is to you. I mean, is it the banks that were typically seen as the custodians of trust? Is it, people like Herschel, Razorpay, that are redefining the experience? Or is it the code that is writing it or the platform that controls all of it?
See, and Herschel may not like this answer, so apologies. So I think
that's a giveaway, it's not him.
So
it's NPC, I think.
So I think the customer will continue to own the money, and the banks will continue to remain custodian of customers' money. However, what will change is the how part dramatically. And I'm saying it's not going to change just by incremental percentage. And I think in next 5 to 10 years' time, the way consumer is using his own money or using the credit money is dramatically going to change. So consumer and the bank continue to have the relationship, but that nature of that relationship will change.
All right, you're not writing off the fintech side. So Harshal, let me ask you, you've just announced this agentic partnership with OpenAI and of course NPCI, where AI is pretty much making the decision on how you're going to pay. How close are we to a world where, how UPI is as easy as second nature to us when it comes to payments, but we leave these decisions to AI? And if we do, I mean, who's really controlling the flow of money?
No, let me correct that. The decision is always going to be with the customer, right? Like when you want to pay, it has to be your decision that you want to pay. Everything else that we do, right, whether, as Dilip spoke about, like the platforms that we build, the consent layers that we build, the idea is how do we make it easier for the decision to translate. So earlier when you had to really make a payment to somebody, you had to either go to a bank or withdraw cash, and then you had to do all of those things. Today it is, I want to pay somebody money, I can open my UPI app and pay somebody money, right? And like enter a PIN, now NPC has announced biometrics, so I can show my face and complete the transaction. Agentic will make that one step ahead, that at the time I'm discovering what I want to spend on. So I'm chatting with the chat GPT and saying, hey, I think I want to make this today. And it says, you need these three ingredients to make this at home. And you say, can you buy this for me? And it figures that out.
Well, the money, of course, is owned by the consumer. My question was, who controls the flow of money?
It says all with the consumer. That's what I'm saying. So at the end of the day, it's like asking me that when I'm having cash in my pocket, is the money belongs to my jeans or my wallet or my leather company? Like, it belongs to me. It is my money. Yeah. Everyone here is to assist me in spending that money. So the platform, the bank, whatever interfaces you build are there to assist the customer to spend the money. With more and more regulations coming in, like for example, the data protection law and all of those things will make it more and more, will put the customer more and more in control of his data, along with that money and the financial world that lives with it.
Well, I thought Herschel will add that India is the second country to launch the agentic payments in the world at the GFF.
Yeah,
however, it's a pilot, but we are the second country in the world to launch the agentic payments.
Yeah, and just 20 days after US piloted agentic payments, India piloted agentic payments right here in this room. Yeah. And we're the second country in the world to make that happen. I think it's one of the things that you don't talk about as much.
Yes, very much. That was at the Global FinTech Festival. We heard those announcements. And congratulations to the NPCI team and you FinTechs for making that happen. But Forum, in this interconnected world, I mean, you're controlling the flow of money across borders. Who really controls the trust? I mean, the money in my jeans, in my wallet, in my pocket, it's all mine, sure. But who's the custodian of trust?
So, I mean, that's, from a PayPal perspective, as a 25-year-old platform that's built on connecting two completely untrusted entities around the world, there is a clear paradigm shift in terms of how trust moves, especially with agentic AI transforming how commerce takes place. And as PayPal's mission moves from just payments to enabling commerce and democratizing, connecting MSMEs with parts of the world that they've never, ever been able to do initially, especially from out of India and Southeast Asia, there is a fundamental difference in how trust moves across borders. We have strong governance framework in the partnership that we announced with NIPL. We require those, right? The traditional security mechanisms don't go away. However, we need to look at how the threats are evolving, the power that AI brings to the enablers of technology, the same power the attackers have as well. We see deep fakes, misinformation, disinformation, non-human identities, authentication authorizations becoming much, much more advanced, much, much more scaled, and at a speed that we haven't seen before. And that's why PayPal's partnering with OpenAI, with Google, with Perplexity, in trying to come up with protocols. We may have heard of A2A as the overall agentic to agentic commerce protocol. And now they have on top of it AP2, which is agent payment protocol, where security is built in. We want to make sure that authorization, accountability, auditability of all of those, the transparency that the customers need, like Arshil was saying, the power, the control, is still with the customer. However, when an agent performs that money-making task, the commerce task for you, it is done in a way that anybody at any point can come back and make sure that the intent, that the non-repudiation of any particular transaction can be tested.
That's a whole lot of risks that you're talking about, and I'm sure everyone in this panel and in the community is very, very wary of cybersecurity risks when we talk about digital payments. But what, to your mind, is the most underestimated one by the industry, by the stakeholders?
So I do think that people believe that one is the power of AI in its self-healing capabilities, in its ability to learn very quickly. They don't have to worry too much about the traditional security risks. And I feel that the governance, for example, I think yesterday, the AI governance framework that METI released, again insists on strong principles, strong risk-based mechanisms. If you again think of PayPal, like the primary way in which commerce had happened online, there was always a trade-off between security and convenience. When we started creation of what was called as FIDO initially, now there's passkeys, we've shown that security and convenience can coexist. Trying to come up with innovative ways in which you can have the convenience, the speed, and without compromising on security is a way one can show how you don't have to have that trade-off or the compromise on either the experience or the protections that a customer expects.
Well, we've covered a fair bit of payments, and there's been a whole lot of innovation there that the world, it's there for the world to see. But Amitabh, I mean, talk about the retail markets, and we at CNBC here focus on that very closely. Spate of IPOs, a whole lot of retail investors coming to the market, new investors coming to the market. Is capital markets going to be the next frontier of financial innovation? And what does that mean for the future of players like you, traditional players?
Look, there is a significant shift and change already happening due to the surge of capital markets in the financial intermediation that it kind of happens from a conventional basis as to what's happening right now. If you were to pick a few thematics, there's already a shift from a bank-dominated system to what is market-based intermediation. For example, corporates are no longer dependent so much on bank loan as providing them the credit appetite, but are relying on the bond markets and more so from there. Similarly, if you look at mutual funds or an NBFC, they are channeling the household savings and putting it into new productive sectors that one is seeing. Democratization of investment. You've seen these low-cost apps, UPIs, all of that is enabling, and you're seeing a surge in the capital markets that you were talking about right now.
Well, Dilip, let me toss that to you because, I mean, there's a whole lot of conversation. A lot has been said and done about UPI, frankly. But, I want to ask you, while UPI has changed the nature of how we pay, how we borrow still feels very old and still feels like it has a lot of friction. There's talks of unified lending interface. It's touted to be a game changer. We haven't seen the results yet. But what, to your mind, is going to be the most transformative change that could be already in the works? that will change how credit is distributed in India?
So when you look at, and of course, something like ULI kind of creates an interface to get a one-stop shop kind of a model to get all the information relating to make that decision to lend or not. But I believe that, you know, while the UPI is in the process of serving the purpose on the consumer spending its own money, right? I think the UPI is also getting kind of shaped to use it for the credit purpose. So whether it's a credit card, you attach your credit card on UPI, or you get the credit line, which has been approved by RBI. And I think fundamentally, while it's a very initial stage as I see, but I think fundamentally it will change the game, and simply because of the reason of it has the ability to become super fast in that sense. It has the ability to become a short, and it has the ability to become really connected. And when the consumer is real-time connected with you, the decision making on step up, right, becomes very, very easy. And actually it's a very different game altogether, right? Because the ability to score the customer, ability to collect the money from the customer in the near zero cost is the kind of a new model what we are thinking is going to happen. It might take some more time basis some of the changes in the regulations and otherwise. But I think this credit revolution is going to come in, and we believe a fairly short, large volume credit for the large amount of population, and in a fairly contextual manner, because we have a lot of data on UPI, and I think that many financial institutes will get benefit to use that data to really expand the credit reach in India.
Well, Harshal, what about credit on UPI? Or rather, is there some other technology you're more excited about? And let me also ask you, credit has very much been the domain of banks, just like payments has been taken away by fintechs. You think, thanks to these new technologies, you can make a bigger dent there, of course, apart from partnering with the traditional players?
Yeah, no, definitely so. I think, see, every transformation has this particular journey. So you start with transaction processing or payments, and it's not just India, everywhere else in the world. It starts with payments. Once your payments are digitized, then you can do credit much better, because now you have enough data to write credit on top of it. I think over the last 10 years, we have solved the payments problem quite well, and we are, to every extent, there's still a lot more to be done, but to most extent, consumer payments has been sorted, and where most consumers are spending on top of UPI, which generates enough data, enough insight that you can do credit on top of it. I think the opportunity we have explored an opportunity with credit on UPI, which has picked up really well. It has been almost a year, 2 years since it has really taken off, and it's taken off in a significant way. Today, credit card transactions on top of UPI is almost 25% of all transactions, and it's scaling really well. I'm talking about Razorpay platform.
Yeah, I was just
on
going to
Razorpay platform, 25% of all transactions are credit on UPI,
Oh, wow.
UPI transactions, and scaling quite well, simply because customers are now feeling that, okay, if I can get access to the same rails that UPI has, but I can use credit instead of my bank debit, then it's significantly better for me, because I don't have to spend money out of my pocket. I think the next step is solving for scoring. I think that's this one area where AI is going to play a really important role. I think the hard part of distributing credit at scale has been underwriting. How do you do underwriting of individuals at scale at a very localized level, but at the same time doing it at a country level scale? I think with AI, we'll really be able to reach the threshold where every single individual can be underwritten using the data that he generates, using the transactional pattern that he follows, and being able to distribute credit at scale using that and bring the cost of credit down significantly. I think that while a lot of that work has happened in the last few years, personal lending and personal credit has scaled a lot. But I think credit at the point of transaction or embedded finance, as we've been talking about it for the last 5-7 years, I think AI is probably the missing step there, which can allow us to do real embedded finance, where I want to buy something on this website right now. Somebody comes and gives me credit for that particular purchase at that point of time. I think we'll see it happen far more with AI coming in.
Well, Dilip, just to close the loop on credit on UPI, since, Harshal is saying 25% of Razorpay's transactions, on credit for UPI are going through that. Why aren't you opening it up for other players outside of RuPay? I mean, when will you expand the ecosystem, bring in more players for meaningful scale?
See, look, that's not NPCI's call. That's a regulator's call. But let me
But you're very much involved in the decision making.
But let me put it very differently, right? Today, every organization has a right to use the innovations that are created by that particular organization, and it could include a variety of them. And similarly, the other institutions also has leverage from their innovations. So I think, Ritu, it's a little unfair to say that every organization should start sharing their IP with the other institutions. And I don't know how does it work in media companies, but anyway. But being said that, I just want to pick up one point from what Harshil said.
Yeah.
Right. I think and you spoke about the AI and what is the future it lies about, and I think it's going to be a little bit of a question mark in everybody's mind that how these platforms are going to behave like. Right. I'm just saying because see today the consumer, people speak about in 5 years UI is going to be, the apps are not going to be there. It's going to be the Gen Z likes to talk and nobody's going to use the apps. I'm saying these might be a little bit of extreme views, but I think the platforms are going to create a very, very important game. And I believe that somewhere the India must play its game to the true potential, so that while we have a great sovereign platforms for the payments which are predominantly driven by API, and I think there would be a need to create the platforms that are powered by AI, right? Yeah. So that we control the data, we control our destiny, and we are not fully only reliant on like social media on the Western world.
Well, Forum, let me quickly bring you in on this because, Dilip brought in sovereignty of AI. At one point we used to talk about currency wars. Now we're talking about AI sovereignty or algorithm wars. Are we going to see a future, you think, and for someone who's building these rails to interconnect the world, are we going to see a future where there'll be digital borders for the movement of money, and what will that mean for the future of global commerce?
Yeah, I think, we announced PayPal World a few months ago, and the partnership with UPI, with Tencent, with Mercado Pago. We just added a couple of more players in UAE and Qatar. We believe interoperability is key, right? To connect the countries, to connect various networks, to connect various currencies, you have to have a platform that can speak every single language, that can allow every single individual to participate in the commerce and the transformation through the AI that is happening. Having said that, there is obviously a need for appropriate protections, appropriate guardrails that allow for the sovereignty discussion, for protections in a way that is compliant, that is allowing the individual to have the trust in the ecosystem. So it cannot happen without trust as a core mechanism, and that's why being present in 200 markets, allowing us to collect the data. Again, Dilip mentioned, how do you use the data to introduce some step-up mechanisms? Sure. We do that with 350 data points to decide when do you want to authenticate somebody. So to have a compliance, I don't think these are mutually exclusive. You can be compliant, you can respect any sovereignty requirements that are needed, while allowing individuals to be operating in an interoperable global network.
All right. Amitabh, very quickly, since we're talking about AI, and AI is making all kinds of investment decisions today, at some point, do you think AI will go from being an enabler, an advisor, to a competitor for players like you?
No, I think adopting and embracing technology is a given. It's a must. So I don't think it's a competitor. You're right about being an enabler, because what it does to us is allows us to automate our system, allows us to provide services which are superior in terms of our customer, their acceptance as well. So it's an enabler. It's not a competitor.
Yes.
See, I think the AI, today's AI, right, it's still very expensive, right? And again, we should be very careful when we say that AI is going to eat the world, right? And I think the question should be the what use cases, right? Because today, and very simple example, what you can do with API, you don't need an AI for that, right? So I'm just saying that the simpler transactions, the high volume, low value transactions will continue to be dominated by the API based systems, but definitely the level 3, level 4 use cases, right, which are fairly complex to solve only by API, will come in with AI. But again, the cost is going to be biggest hindrance on really, at least for the country like India, to really take AI to the every Indian in that sense.
Sure. Yeah, just in 30 seconds, Dilip, is there one thing AI should never be allowed to do with our money? AI should never be allowed to do with our money. Is there one thing?
AI to do?
Is there one thing that AI should never be allowed to do with our money?
With our money. So of course, as Harshil said, the final word should be the customers.
All right, Harshil, final word for you. If you had to define the future of money, the next decade of fintech, as a Bollywood movie title, what would it be?
Invisible.
Invisible. All right, on that note, gentlemen, thank you so much. Dilip, Amitabh, Forum, Harshil, it's been a pleasure speaking with all of you. Thanks so much.
Thank you.
Thank you all.
Thank you, panelists, and thank you, Ritu, for that engaging and insightful conversation. Ladies and gentlemen, once more, a huge round of applause. Well, moving on, while billions are flowing into office parks and warehouses, none of that matters if the systems running inside them go down, or worse, get breached. Every business in India runs on cloud today. Millions of transactions are moving through these systems every minute, and each one is a potential vulnerability. Ransomware attacks are costing companies billions.
Absolutely. In our next session, we examine what's at stake and what actually works. Steering this conversation is Reema Tendulkar from CNBC-TV18, and we're bringing together three perspectives. Sachin Kakkar, Director of Engineering and Site Lead for Privacy, Safety and Security at Google, Sandeep Patel, Managing Director of IBM India and South Asia, and Jay Kotak, Co-Head at Kotak 811. Let's welcome them with a round of applause.
Thank you, Ritu and Arundhati, and a very good afternoon, evening to all the ladies and gentlemen here. Let's first begin by saying and asking, why is cybersecurity an important conversation to have on a day like today? I think we'll all recollect the JLR cyber attack incident that crippled production and the UK government had to step in. Something that's reserved only for systemic crisis. Or last year, Taylor Swift's deep fake porn which flooded the internet. The world we live in is increasingly so digital that the repercussions of any cyber attack hit deeply at the government level, enterprise level, and at the personal level. Which is why this conversation is so important to have, and we've got the perfect guest joining in today. Sachin, let me begin with you. It's not just about data. It's about control. It's about power. How big is the problem right now when it comes to cyber attack and security?
Thanks, Reema. Great question. How big is the problem? Right now, the cost of cybercrime in 2025 is around $10 trillion, and it's going to become $14 trillion in 3 years. Let this number sink in. Only 2 countries have GDP more than $10 trillion. The entire health industry is $10 trillion. So globally, we are talking about this scale. And these are not teenagers sitting in basement and attacking us. These are highly sophisticated professionals, big enterprises, sometimes nation-state actors. They might be having a conference like this, sharing best practices in their enterprises. Everything from schools to hospitals to energy grids, it is on their radar. And now talking about India, just seeking some cues from past panel, I think we are witnessing a nation which is leapfrogging into digital world. We are the #1 payments market globally. Somebody said 20 billion transactions. We are also the largest YouTube audience. We are also the second largest Android market. 65% of population below 35 years of age. So clearly, there's a huge set of vulnerable youth which is shaping and also getting shaped by the digital world.
Interesting. Jay, hi. You've built and led Kotak 811. And I believe Kotak 811 was named after 8th November 2016, the demonetization date, the day that changed India's and turbocharged India's digital banking system. So now tomorrow you complete 9 years, 9-year anniversary. Congratulations.
That's correct. We're still only 9 years young.
9 years young. But so much has changed in the last 9 years. How do you feel about cybersecurity today versus what you did when you started off?
As a business leader, I feel the same way as I did 9 years ago in the context that banks are custodians of customers' money and custodians of trust. And so we have to do whatever it takes to prevent that from getting eroded. How that manifests itself changes year after year. For example, in 2021, we had a video KYC regulation that allowed us to do KYC on video. Today, AI deepfakes present the kind of problem that could substantially undermine or change that entire framework. So we are constantly evolving and constantly fighting to ensure that the trust and integrity that our customers have with us remains.
Sandeep, you've been in the industry for decades. While AI brings a lot of promise and opportunity, it also brings new threat actors. And every time they're getting smarter and smarter. How different are cyber attacks in an AI-enabled world versus what they used to be now?
So a couple of things for context, right? I think we heard earlier that these aren't people who are sitting in a basement or kids sitting in a basement.
It's like almost organized crime now.
They are very sophisticated techies who are actually doing all of this. And I think with the availability of AI tools that are available, it gives them a lot more ways to, as they say now, it's smart logging in versus hacking. That's being used. And now once they enter through the AI portals and others, it gives them access to individually identifiable information. A lot of the company's assets that are their priced assets. I'll give you a couple of data points. We do a cost of data breach report every year, and I think you heard some of the numbers earlier in terms of what data breaches cost us. But if you look at, when you do a study and ask people how well they are prepared, there's only 37% of companies that sort of cited that they've got controls built around their AI implementations that have effective protection and security protocols and so on. Only about 60% said that they've actually got some form of AI governance that they've built that monitors how models are used, how AI applications are built, how they are deployed, and so on. So I think this whole notion of, we claim that we are very worried about data protection and so on, but with AI and the usage of AI tools that's becoming rampant, there's a lot of it which is out there and vulnerable and exposed to cyber attacks.
Especially now, Sachin, when we get into agentic AI, right? Here, it's an AI which is able to attack without human intervention. It's not AI assisting anymore. It's AI acting autonomously. You almost feel like it's an AI versus AI cyber battle taking place.
Yeah, that's right. Would like to step back and discuss, share about defender's dilemma. Many audience may not know. So if I'm an attacker and I want to steal a wallet, all I have to do is find one wallet in the crowd and steal it. But as a defender, I need to protect all the wallets all the time. So when you talk about agentic AI, I think defenders deal with a lot of drudgery, a lot of grunt work, and 80% of our work can be offloaded to an agentic AI, while the workforce can be reoriented to focus on more intuitive and strategic things. So I think we believe that this is the time that AI will reverse the defender's dilemma, and it will tilt the balance in favor of defenders, because defenders can now use agentic AI to defend against the AI. And somebody talked about keyword as invisible. I think we are looking forward to creating an invisible shield, like a human immune system powered by AI, which is constantly identifying new threat actors, constantly evolving, and making sure we are constantly protected.
Jay, you said banks are the custodian of data, of trust. Now, whenever there is competition, competition maybe can beat you in terms of pricing, maybe in terms of customer experience. But do you think your moat as a bank is your trust? Is that the long-term advantage, competitive advantage you have, trust?
I think trust is an output metric that comes from years and decades of doing the right thing, doing right by your customer, and the word bank, the regulatory environment also helps. So in the short term, banks can take advantage of the fact that we are trusted. But in the long term, if we don't keep doing what is right for customers and innovating and adapting to the times, trust is not to be taken for granted.
But do you think a digital bank is more secure than a traditional bank?
Kotak 811 is not a digital bank. Kotak 811 is a platform within Kotak Mahindra Bank. So I think that should tell you how I feel about that.
But as a broader, from an industry point of view, if we do see an increase in the number of digital banks, how would it compare?
I think you have to be careful with how far you go down this road. But broadly, the world is digitizing really fast, and so you will have to build trust and security guardrails around end-to-end digital. And there will come a point where digital itself wins decisively and physical may be less relevant, though I don't think that point is in the very near future.
Yeah, but I think, look, I'll just add to this. I think Jay made some very important points. That at the end of the day, I think trust sort of builds over a period of time in terms of how you continue to deliver services and so on. I'm a fundamental believer that technology or AI or any form of technology or digital assets that people will use are those that people will trust. And you need to sort of get that built in. So there's a lot of things today that I think people are doing, such as, zero-based architectures, you don't trust. It's zero trust architecture. You don't trust anything. You make sure that you do have protocols where there's only a need to know basis. That's the way access controls and others get built in. But those, I think, will have to evolve and strengthen over a period of time, just as the bad actors get worse. I think that's where we're going as a business and an industry.
Sachin, I also want to bring in the personal angle over here. So far, we've been discussing at an enterprise level. But say a company like Google. It's not just a tech company. It's where our digital profile resides. You know my emails via Gmail. You know what I watch via YouTube. You know what I search via Google search. And you know where I travel via Google Maps. So in that context, how do you all, because you are again custodians of so much personal data, how do you all see security and what are you doing to protect individual data?
Got it. I'll start with mission of my team is to keep everyone safe at scale. And when we say everyone, we mean it. It's not just Google, Alphabet. It's not just the billions of users that Google apps have, but everyone safe at scale. So starting with, we make sure we have an invisible shield behind every product so that we secure them. So when you get up in the morning, open the Gmail, 99.9% of all spams are taken care. When you go to a website, we scan billions of web pages and issue millions of warnings saying, this is not a safe site, can you go back? We also have privacy and security by design. So while we are custodians of data, we make sure we provide transparency and all the tools to everyone to decide where their data will go and live. And finally, we have seen there are novel attacks in India, and we have a Google Safety Engineering Center. This is Asia's first. We launched in India this year. This is where we connect with local academia, we connect with our ecosystem, fact checkers, publishers, government, and industry to make sure we keep the entire ecosystem safe. And that's one of the initiatives that we have.
Sandeep, AI is making everything smarter. But quantum computing can break the smartest of encryption. Does that mean that there is a possibility that everything we know about cybersecurity will not hold true in a quantum era because quantum can break the toughest cyber defense?
So I'll make a overarching statement. I think as quantum computing becomes more mainstream, it is real today, by the way. Quantum is very real.
Even at scale?
Yeah, I mean, people are using it. We've just announced two banks who are starting to use it for portfolio management and getting brilliant results out of it, right? So quantum's here. I think what we'll see is if you talk to a pessimist, they'll say it's probably 4 years out. You talk to an optimist, they'll say it's 2 years out. So quantum's here. Once quantum is operating at scale, it will equip bad actors to become worse and bad actors to sort of hack things a lot faster, right? And even today, I think there is a notion amongst bad actors where they're saying, let's harvest now and we'll decrypt it later. But quantum technology will allow you much faster decryption of what we know today as security protocols. So we actually have to start worrying about it right now. When I have conversations in Delhi with our, IT ministries and science and technology ministries, even telecoms, right? They are all starting to think about quantum cryptography protocols that are going to be important. US has been a little bit further ahead on this. NIST has published 3 cybersecurity quantum cryptography protocols, 2 of which we've actually helped author. And these are now going to start to, I think everyone around the world has to start to look at it, because this is a technology that is going to equip bad actors getting worse. So the notion of building in quantum safe capability within your systems is important. So even, for example, data security software and others, we've started to build quantum safe capability into those applications, those software capabilities, because I think that's sort of where we are going to have to be ready with.
Can I quickly add
Yeah,
something?
sure.
I think this danger is real, that with quantum coming, the current encryption can be broken, and Google is making strides into quantum computing. We recently launched an algorithm and one step closer to the real world application. But Google is also investing in post-quantum cryptography, and we believe once launched, we will protect the passwords for decades.
Jay, in the event of a cyber attack, where does accountability lie? Who owns the cyber risk, to your mind?
That depends on where the weakness was. If it's a weakness on the bank side or the customer provider side, the accountability lies there. Otherwise, you have to give me more context for that.
Would any of you, gentlemen, come in on accountability?
I'd say it's a joint responsibility across the board. I do believe now that cybersecurity needs to be a boardroom issue for every enterprise. It is becoming now. I think it's something that I know for a fact. It's always a board agenda for us every quarter, and it is something that everyone needs to look at. I think even when we talk to the government, I think the government's very, very quick to say that, listen, cybersecurity shouldn't only be the responsibility of the government and watchdogs. It's something that every enterprise has to think about, and it's something that I think every consumer should think about in terms of applications that they use and digital assets that they are using.
So So Sachin, if there is one thing every individual out here should change in their digital behavior, starting from tonight, to protect themselves digitally, what should it be? One thing.
One thing. I think one of the biggest threat we are all facing is deep fakes and misinformation. It's possible that one of your relative calls you with the deep faked image and asks you to deposit money in the hospital. So what you can do is three things. One is talk to your family and come up with a code, a common code that you only understand. For example, in my family, we have a book name. So ask the question, like, what is the book name? If the person cannot answer, most likely deepfake. Second, ask them to move hand in front of their face. Deepfake does not allow that to happen. So for now, things might change. And finally, ask them, I'm going to cancel the call and call you back. Because spoofing can happen one way, but not the other way. So if you can have these three things there, you might protect yourself from deepfake.
These are very interesting, hacks that we should all remember. Thank you very much, gentlemen, Jay, Sandeep, and Sachin for joining in and sharing your insights. Great, insightful conversation.
Thank you, panelists, for that engaging discussion. Reema, request you to kindly stay back on stage to, of course, take the next conversation forward. Very soon, we'll navigate the frontiers of building a resilient India, that of building a resilient India with Hitendra Dave, the CEO of HSBC India. So stay tuned for that session.
We often talk about who's winning the AI race. What comes to mind? Silicon Valley and China. But real big breakthroughs are happening where problems force AI to work. India, Nigeria, Indonesia, Brazil, hundreds of languages, fragile healthcare, farmers needing weather predictions. Here, AI isn't a demo, it's a tool that has to function.
Absolutely, Arundhati. And our next session explores that very idea. Joining us this evening is Preeti Lobna, Vice President and Country Manager at Google India, to discuss why the Global South isn't behind, it's ahead. Ladies and gentlemen, please welcome her with a huge round of applause. Reema, over to you.
Hello. Thank you.
So today's conversation, when it comes to AI, is often dominated by headlines emanating out of US or China. But we cannot adopt AI which was built elsewhere. Our realities are very different. Most of Indians are using a phone which is priced at 6,000 rupees. We are multilingual, different accents, and most of Indians are first-time digital users, not digital natives. Our realities are different. And AI for India needs to be inclusive rather than exclusive. So which is why this conversation with Preeti I'm very excited about. And at the heart of tech transformation, AI, that's taking place in India, we have Google. And Preeti, this is a topic which is very close to your heart, inclusive growth and how we can use AI as a blueprint for inclusive growth. So sitting where you are, take us through the opportunity.
I think the real opportunity for India and Global South is really to use AI not just to catch up, but to leapfrog ahead. Because we've been given this unique technology to be able to solve some of our biggest systemic issues at scale. But for that, we need to build new models of development that reflect our languages, our culture, our people, indeed our constraints and our priorities. Now, AI can, should, and will be the foundation of inclusive growth. It can accelerate productivity, and it can close access gaps when we talk about healthcare, agriculture, and education, and help us solve problems at population scale. So the way we think about it is, there's a lot of hype, right? People say, is it gonna be real? And we talk about adding, say, 400 billion, through AI to our economy by 2030. But we deeply believe this in Google. Think about AI and measuring AI in how it will transform lives and not just balance sheets and P&L. And the way we need AI to be inclusive is based on three things. One, understanding our language and cultural context. We need to make sure that AI that is deployed understands the key languages in India or other countries in Global South. And for that, making sure that we are training AI through local data sets is absolutely key. And that is what we have been doing with our open source models like Gemma or project called Vani, where we provided data sets of local dialects in India to be made available to train models, because only then can it be deployed to be of value to every Indian. And then we are talking about building local capability. So it's about building compute and infrastructure locally, developing that pipeline of talent, because it's very important that we are not just implementing something that is developed elsewhere, we are also innovating. And last but not the least, it is if we innovate in a responsible manner and deploy it in the right manner, we can absolutely scale it, like I said, to close access gaps and leapfrog ahead.
So AI not just for economic value, but for real impact at scale.
Transforming the lives of every single citizen.
Every single. So AI has a lot of promise. But what about real progress? As you said that, at Google, you're solving for the constraints. You are training your data sets on different languages, understanding the culture. But there are constraints like there is no internet. Many families have one phone between them. Even then, there is intermittent connectivity. I mean, there are so many challenges to achieve this inclusive growth and have that impact, the desired impact.
So think about this. We've been India in deep partnership with India over 2 decades, right? And some of these constraints that you talk about, it's not just about a low-end smartphone or internet connectivity issues. It is about, just people having different cultural context or different levels of digital literacy. So I would like to say that we've been working on this. And by the way, we have been an AI company for several years, building AI into our search, maps, and all other products for years. So when we think about, how our products, so think about search or maps or even YouTube, we have carefully built our products. And if I may use that term, we make sure that if you're in a zone with low connectivity, the performance will degrade a little bit. The video quality or the audio quality may go down, but it'll come back up to that great quality once your network improves. So we've learned over the years as Google in India on how to make our products work for some of these constraints, how to have the lighter versions of our products on lower-end phones also. The second thing when you talk about these constraints is building in inclusive accessibility for all our products. We have invested hugely in smoothing out the UX interface, right? So think about Google Pay. From a street vendor who's not very digitally literate, they can use Google Pay to make payments and make a living, and to the most sophisticated users. So we have learned over time to make sure we have built that UX which makes our products inclusive, regardless of the quality of phone that you have and the internet accessibility that you have. And that thinking and that experience is what is continuing in how we are developing and deploying AI into specific apps and use cases. And we're also working with local partners, Rima, by the way. A very important part of our Google work here is to bring the best of our full stack approach. We have the infrastructure and compute, we have the cutting edge frontier models, and we are building apps. But we do it in partnership with local, ecosystem developers, academia, research teams, so that everyone is thinking local and India first.
Preeti, you just heard the discussion that we were having on cybersecurity and what it means in an AI-enabled world. There are deep fakes, there's misinformation. What does security mean to you? Wanted you to get your views in. And how does Google work with the entire ecosystem to bring in that alignment?
So I want to say it is a very important and critical priority for us, but it's very important equally to understand it's a shared collective responsibility of the ecosystem between the regulators, players, the tech companies and telecom providers, what you call the safety experts. So I always like to think of this as safety is infrastructure. It is foundational. It's a horizontal. Before we think of anything else, you got to build it in. So 4 or 5 principles. Security by design. It's not an afterthought. Build it as you think about designing your product or your infrastructure. So it's not an afterthought. Then you think about governance. It's very important to bring the strongest sort of safeguards in the highest risk areas, but being smart about where we leave room for innovation. So when to go hard, when to pull back. Then, in this age of synthetic content and deep fakes, having tools in place which can, we talk about watermarking all synthetic content in a visible or a non-transparent way. And then ways of detecting that so that people know that this is fake content. And then we're talking about real-time threat intelligence, which the previous panel was also talking about. We can only stay ahead in the game at a country level, at a global level, if there is a very good and fast way of sharing, how scammers are getting ahead, what's the latest game in town. But as Sachin was also saying in the previous panel, AI is actually enabling us as defenders to be just catching up with the perpetrators. And last but not the least, we believe in user resilience. So making sure we are investing in educating users in a very simple manner so they know I'm getting phished or I'm getting scammed or so it's a multi 360-degree layer approach, but working with the ecosystem.
A lot of businesses, companies, founders must come to you asking you, how should I use AI? Everyone believes that AI can transform their business. How much of that is hype? How much of that is reality? What is the advice that you would give founders who can use AI to make a real impact?
So 2, 3 things. We will say to founders, values over vibes or feelings. Make sure you're developing something that you can measure, whether it's revenue, cost saving, some measurable impact, better returns. 2 is think about things in a very systemic way. Think about transforming process, not just a bolt-on or an add-on cool feature. And then, like I said earlier, just build trust in as a product. So you're always thinking of that and not that as a cool thing. I think we work a lot with the founders and that ecosystem. We have a startup accelerator, and we are working with a lot of AI startups to share, our expertise. We share cloud credits and all of that. And we look at them and we say, are you solving the hard problems of India? When you talk about preventive healthcare, when you talk about diagnostics for tier 2, tier 3 rural Indians, who don't have that access, when you're talking about personalized learning or an AI tutor for anyone, whether it's an affluent kid or a kid, who does not have access to the best that we have access to. Efficient logistics. So think of the use case and hard problems, not the cool thing. And then look at India's unique strengths. Look at DPI. So build on those guardrails. Make sure it's localized. And if you ask yourself, are you solving the hard problems of India? If it works on a low-cost device with poor connectivity and in local languages, we tell the founders it will scale not just in India, but anywhere in the world.
How wonderful. Preeti, thank you very, very much for sharing your insights. Thank you.
Thank you for having me.
Thank you, Preeti, and thank you, Rima, for taking us through that conversation. Resilience, it's what every CEO, every investor, every policymaker claims they're building for. But when you strip away the rhetoric, what does resilience actually look like in India today?
Well, because the tests are real and they're happening now. Supply chains are being redrawn by geopolitics. Monsoon problems are shifting, affecting agriculture that still employs nearly half the workforce. The financial system needs to channel credit to 60 million MSMEs while managing risk. Infrastructure is being built at breakneck speed, but can it handle the load when it arrives? These aren't, planning exercises. These are life challenges, determining whether India's growth story sustains or stumbles.
To lead this conversation, we have back on stage with us Shireen Bhan, and joining her is Hitendra Dave, CEO of HSBC India, as they discuss what's truly working on the ground to build a resilient India and what only looks good on paper. Please join me in welcoming them both with a big round of applause.
Hitendra, it's wonderful to have you back at the Global Leadership Summit. Thank you very much for joining us. Ladies and gentlemen, I do want to make a special mention because HSBC has been partnering with us, not just for the Global Leadership Summit, but for something else that is very, very close to my heart personally. It's our campaign called Future Female Forward, where we talk about the need for gender neutrality, gender parity in the workforce. So thank you again for partnering with us for both this as well as for Future Female Forward, Hitendra.
Only thing, you should have said it's close to our heart.
Yes,
not just yours.
I admit, that was a mistake. It is close to our heart, absolutely. But through the course of the day, we've had the global economy being described as tenuous, as volatile, as uncertain. But there is unanimity and consensus as far as the Indian economy is concerned. Stable is perhaps the most sort of underrated adjective that I've heard so far this morning about the Indian economy. So let's put that in balance. What's happening globally with respect to what's happening in India? Hitendra, how do you see the picture today?
Yeah, so I think you said it yourself. I think if you look at the monetary policy statements or any policy statement of any central bank, ECB, Bank of England, Federal Reserve, Reserve Bank of India, I think the word that's been most commonly used is uncertainty, right? Because we are living through unprecedented times in terms of policy actions. And I don't think any of us, any policy maker, any sovereign has a playbook. What happens if your tariffs go to X levels? What happens if certain products you just are not allowed to export or allowed to import, etc. So far, I think we have to say that the wise people about a year back or at the start of the year were indicating that there would be deep recession by now. There will be highly inflationary economies by now. Now, whatever is happening, that's not the case. We are not at the cusp of a recession, and we are certainly not looking at runaway inflation of the types that were feared 8-10 months back or so. So in India, right? I mean, you look at India, political stability, whichever way, 10-11 years of extreme political stability. We get upset when we grow at 5.5%, right? Which is higher than the average rate of growth of the world. Inflation has been low and stable now for the last 7-8 years, more than it's ever been. We've got financial sector stability, market stability. So if you look at India in the context of a world which seems highly uncertain, clearly we shine out. We shine out in pockets. I think in the previous panel we were talking about how much infrastructure is getting built, etc. So yes, I think by all accounts, the moment is ours to seize as a country. Because if there is a shining beacon out there in the world which shows stability, promise, growth, certainty, then that's India. So now, as citizens, as part of the financial system, as part of the communication or the media system, or policy makers who've been here since morning, I think all of us are seized of the opportunity. Let's see what we do with it.
It is our moment to seize, as you put it, Hitendra Dave. But the HSBC Global Leadership was here in India a few weeks ago. We've got many global leaders who've been in and out of India at this point in time. One of the issues or the dissonance that's being discussed is that while there's a lot of interest, a lot of enthusiasm about the India story, the domestic market, as well as the opportunity to export from India, at this point in time, there seems to be some hesitation, some pullback, or a pause perhaps on FDI flows coming in. What's the sense that you get from the conversations that you're having? Is this a tactical pause at this point in time, given the uncertain waters we're in?
Yeah, so I think it's a very fair observation that on the one hand, we have this wonderful narrative of India, which we spoke in the earlier part just now. And then you look at the data, and it seems to suggest that the flows are not commensurate with the narrative that we have or with the visits by various boards, ours included, etc. But again, boards are responsible to shareholders, and they are all living in the same uncertain world, right? You set up a factory here, commit a very large amount of FDI running into hundreds of millions of dollars, if not billions of dollars. And then you suddenly find that product which you were producing in a country to export to another country, or the inputs for which were coming in from another country, either the supply chains are no longer as easy as they were, or the cost of import or the cost of export has changed, or the price of export has changed. So I think it's fully understandable, and we have to also understand this is all a 2025 phenomenon. We are not talking 5 years, 10 years of that period where
so
you
you're
say,
saying it's more of a here and now issue.
Yes, it's a here and now issue, and I think any board member would want to be a little cautious. But I also caution against over-reading into this, the fact that FDI has not come in. I think if you visit the city of Hyderabad, that is FDI. The whole city is FDI there for you. It's just not in the conventional sense of factories and goods and on the trains. The whole
GCC story,
the whole real estate there, the hundreds of thousands, if not millions of people who are working there, they are receiving FDI every month, which is their salary. It doesn't come as one bulky $500 million, but it comes as 200,000 per person every month into whatever number of millions. So there are sectors where FDI is coming in, and at the numbers level, and I'm sure you're aware, but for the benefit of the audience here, our gross FDI number actually hasn't come down as much.
Yes.
But what has reduced is the net, and that is simply because of the very buoyant stock markets we had. We had the SEBI chairperson here in the morning. If you have opportunity to take some chips off the table, monetize some of your companies, and we've seen, then, it's X coming in, Y going out. It's X minus Y, which has shrunk because there was no Y earlier.
Yes.
It was only X. So that's where I would.
I'm glad that you brought up the capital market story, because why we have seen a lot of MNCs make use of the attractive valuations that the Indian market is offering and do sales here and take back that money. The other interesting aspect is also MNCs listing in India. We've had Hyundai list in India, LG list in India. Do you believe that this could be the start of a significant marked shift as far as the MNC in India story is concerned?
Well, I can only share what we are observing and what we are talking to our franchise globally. I think wherever me and my colleagues are traveling, especially in the Western world, but even increasingly now in the Asian countries itself, or when we are being visited by senior CEOs and CFOs and board members, the one topic that regularly comes up is, what do you think we should be doing with our Indian business? Okay, and to that extent, if there are 100 such conversations, that means 20 of them will become serious and 10 of them will actually convert into a decision to go and list the Indian. And again, I'm sure the audience knows, but you took the example of LG, right? I mean, or Hyundai. I think when we were part of the Hyundai deal, Hyundai globally was trading at a PE multiple of 5. By the time we listed the Indian company, that PE multiple had gone from 5 to 9, and the Indian company listed at a multiple of 23.
Yes.
And this is after they had taken out substantial dividend in the preceding few months. LG India is today valued at more than LG globally.
Yes, more than the parent.
So again, if you are a board member and you are seeing such amazing opportunities, it is only natural that some people will say, let's do the listing in India. And from an India perspective, I think we should welcome this change, because...
Do you believe that we're likely to see this continue?
Yes.
More of these listings?
Yes, I think as long as our stock markets remain, especially the primary markets remain as buoyant as they have, and as long as the mutual fund Sahi Hai campaign continues to provide monies to domestic mutual funds and the retail individual investors, I think also we must understand some of these companies are also providing alternatives to the conventional Indian companies, right? They give you a global footprint, they give you global technology, global governance, things of that nature. So I think it's a welcome change, and it's a welcome development rather, I should say, and I suspect it will continue.
We're talking about MNCs and their presence and their relevance in India. Let's talk about the global ambition and the global aspiration of Indian companies. We're also looking at a world at this point in time where global corporations are restructuring, global corporations are either divesting certain assets or are looking at joint ventures and so on and so forth. What opportunities do you see for Indian companies who are looking outside?
Yeah, again, I think for the benefit of the audience, I think one of the most active conversations we are having with corporate world right now is exactly this. There are companies available with very high quality manufacturing capabilities in Europe in particular, right? At valuations, just as we spoke about the valuations on the listed side, even in the unlisted side, at valuations which are very compelling, technology which is very, very good. And on top of that, you have the Indian entrepreneur's ability to identify further efficiencies and further saves from an already efficient unit out there and then discover newer markets. So I think we have been part of dozens of such transactions just in the last 24 months.
Yeah, exactly. That's why I asked you the question.
Yeah. And just today we have closed 2 transactions of that nature. One is a hospital buying another hospital chain in UK. One is buying something in Europe. So, but it is not grabbing the kind of headlines that Chorus did or Jaguar did, because the ticket sizes are more in the $200 to $500 million as compared to much larger. I think on the much larger ticket sizes, it does appear that the very large Indian companies have decided that this is my Karam Bhumi. I will produce wherever in the world, but I will sell to Indian consumers. And if you have to sell to Indian consumers at the price points at which Indian consumers are willing to buy, you essentially have to have your manufacturing capabilities also here. So the medium-sized and the small-sized entrepreneurs and businesses appear to be buying outside India. Maybe they'll bring the technology back, or maybe they'll use it to sell it globally. But the large ones appear to be domestically focused.
You know, that's interesting that you talk about these $200, $500 million deals, and that's the kind of ticket size that you're seeing. And the aspiration of going global is more in the smaller enterprise level. Any sectors in specific where you believe we're going to see more of this kind of M&A, outbound M&A?
I think definitely in engineering goods, definitely in Germany, because, you know, just as we have a trend in India of the second or third generation not wanting to join the business, and that's a prominent corporate problem today.
Is that a problem that you're helping solve also? the next gen of Indian family businesses who don't want to do business anymore?
Yeah, many of us in HSBC are hoping to be adopted by some of those people actually. So
while you're at it, can you put in our applications as well?
so I think there is opportunity out there to do the business out there. And again, to the earlier part, how will India achieve its ambition, Viksit Bharat, $10,000 per capita? I think it'll have to be a bit of everything that will have to come together, apart from, you know, female labor participation rates and things like that. So yes, I think there is wonderful opportunity and wonderful work to be done there.
I can't let you go without talking to you about what HSBC is doing to double down on your commitment in India. You talked about the various opportunities, but what does that mean as far as the bank itself is concerned in terms of hiring, in terms of what you intend to do here in India?
Yeah, so I think, I hope most of the people are a little familiar with HSBC, but we are a 160-year-old organization in India. We have full service from salary accounts, mortgages, credit cards, all the way to M&A, equity listings, debt capital markets, trade, payments, etc., etc. We are the only international bank which, in going back almost 10, 15 years, has asked for and been given approval by the Reserve Bank of India to open additional branches, 20 new branches. The first one of which opens in about 20 days, 28th of this month, so 20 days time or so. And so therefore, I think if there is a signal through actions, hopefully we are signaling that we are doubling down in this market. We think there is open-ended opportunity here to provide value add to our customers. And we think this economy needs a bank like us, and a bank like us needs an economy like this. So hopefully it will be a good narrative in the coming few years.
It's a win-win.
Yes, I think that's the right way to put it.
So 20 branches, new branches by when? The first, of course, you said by the end of this month. 20 new branches by when?
Yeah, I think the license conditions give us specific periods in which we have to open each cluster of branches. But just for context, right now we are there in 14 cities. By the time we end up opening these 20 branches, we'll be in 34 cities. So if you look at the map of India, we should be all over India. And therefore, any of you traveling through the country, if you see the logo which is up there, that's our branch. Please do visit. It's very expensive to open new branches. We could do with more customers.
It's hard to miss the HSBC logo if you're traveling through any airports in this country. And now, of course, as you say, the logo is going to be across 34 cities in India. Hitendra Dave, always a pleasure. Thank you so much for giving us a perspective on what's happening with flows, what's happening with India, and how global boardrooms are looking at India. Always a pleasure. Many thanks for your time today.
Always
Ladies and gentlemen, a big round of applause for Hitendra Dave. Thank you, as always.
Thank you, Mr. Dave, for that assessment of where the system bends and where it might break. And thank you, Shireen, for that engaging conversation. We're going to be joined by Shri Devendra Fadnavis in a while. Stay tuned as he unveils how Maharashtra is powering the future of India.
Every nation that aims to lead must first secure its place in a changing world. India's rise isn't happening in isolation. It's unfolding amid shifting alliances, tested supply chains, and new power equations. And that's where India's next chapter begins, not just as a fast-growing market, but as a nation shaping the rules of engagement. Defense strength and diplomatic reach both define the India advantage.
And to lead our next conversation, once again, please welcome on stage Parikshit Luthra, and joining him are General Narawane, former Chief of Army Staff, and Ambassador Vikas Swarup, former High Commissioner to Canada. Ladies and gentlemen, a huge round of applause for them.
Good evening, ladies and gentlemen. I think this 1 year has shown that self-reliance is no longer an option. This is something we need to double down on. And in this context, I'd just like to begin by referring to a Latin phrase, si vis pacem para bellum. If you want peace, you must prepare for war. And that's not just true in terms of guarding our borders. It is true in terms of our economic security, energy security, and resilience of our supply chains, as we've seen with semiconductors over the last few years, and as we're now seeing with rare earth minerals. As far as our defense spending is concerned, it is 1.9% of our GDP. And defense experts time and again have said that this should at least increase to 2.5%. The industry says it should increase to 3%. Let me begin by asking about Operation Sindoor. And General Naravane, you're possibly the best person to throw some light on it. India emerged successful in that conflict with Pakistan, a short duration conflict that we saw. But what were some of the gaps that you feel it is very necessary for us to plug for the future? And what's the opportunity for the industry there?
Good evening, everyone, and Jai Hind. And thank you, CNBC-TV18, for this opportunity to speak to all of y'all. And I must tell you, Parikshit, that you have taken one quote away from me, that if you want peace, prepare for war. That's one of my favorite quotes, which was said in the 5th century AD.
So I'm sure you have many, many more stories which are much
Roman
better.
Scholar. But getting back to what you just asked about Op Sindoor, Op Sindoor has been a very big inflection point as far as our nation's policy is concerned. It has demonstrated to the world that not only do we have the political will, but also the military capability to carry out whatever actions or operations are required for us. And I think that is one of the most significant outcomes of Operation Sindoor. That apart, we have, through Operation Sindoor, also made a very clear statement that we will not differentiate between terrorists and those who sponsor terrorism. For us, both are in the same plane, and all such actors will be targeted, whether state or non-state. So these are some very important takeaways out of Operation Sindoor. Of course, with every operation, and I will not say that it is only particular to the military, but to all businesses, you always learn lessons as you go along. And we too would have learnt our lessons from Operation Sindoor. What are the gaps, especially in the field of intelligence acquisition and drone warfare? What we need to do to counter this new threat of unmanned systems, whether at land, sea, or air. So these are ongoing processes, lessons learned, and how to mitigate them. And I'm sure that these are being looked into with all the seriousness that they deserve and will be acted upon. I do not want to intentionally, I am not committing to any particular weakness or lesson learned, because I don't want to give away what those could be and which could be taken advantage of our adversaries in the future.
But it's quite given, sir, that we have to prepare for new age warfare in the future.
That's true, because every conflict is fought in a new dimension. And armies are often accused of fighting the last war. But that is because that is the only experience we have. We don't know how the future of warfare is going to evolve. We can only crystal gaze and prepare for likely scenarios. But what actually happens is quite different from what we have prepared for.
Right. And you know, General Naravne, as we were talking earlier, when soldiers fight a war, ladies and gentlemen, it's when everything has broken down, when diplomacy is not working, politics have failed, and economic security is also at threat. So when soldiers fight, it's finally the last resort. Ambassador Swaroop, if I can bring you in at this stage, how has Operation Sindoor really changed our relationship with the United States? It ended with Donald Trump saying he's the one who brought the war to a halt. And since then, we've had it very difficult in terms of securing a trade deal. The tariffs on India are at 50%. We've not been able to strike a deal. How have things changed between India and the United States?
Thank you, Parikshit and CNBC-TV18 for inviting me to this global summit. It's a pleasure to share some thoughts with you and to share the stage with General Naravne. So Operation Sindoor, as General Naravne said, marked truly an inflection point in our strategic doctrine, because it showed that henceforth, cross-border terrorism from Pakistan will not be responded to with dossiers or notes of diplomatic protest, but with visible and proportionate force. And that obviously, has had its own dynamic. As you know, they called our DGMO and said, we want to call a stop, we want to stop hostilities. We said, we were already clear from day one that if you don't respond, we will not respond. Our job was to take out the terror sanctuaries, and we did that. And beyond that, we had no business to escalate this. Now, Donald Trump injected himself into this. He said it was thanks to his efforts that India and Pakistan stepped back from a nuclear confrontation, and this war was brought to a halt. We, of course, completely rejected that, because, our stated position right through has always been, we will not accept any external mediation as far as India-Pakistan relations are concerned. So this has obviously miffed President Trump. So that's the first thing, because contrast our approach with that of Pakistan. We said Donald Trump had nothing to do with the ceasefire, which was directly negotiated between the two DGMOs. Pakistan not only acknowledged Donald Trump's role, but even nominated him for a Nobel Peace Prize. So that's the first point because of which Donald Trump is miffed. The second reason for Donald Trump being unhappy with India is our membership of blocs like SCO and BRICS. BRICS in particular, I think he has a bee in his bonnet about BRICS. Somebody has whispered to him that this is an anti-Western alliance which wants to create an alternative currency to the dollar. So that's the second point. But thirdly, and I think most importantly, Parikshit, Donald Trump is miffed because the ultimate deal maker could not get India to sign on the dotted line on a one-sided trade deal. He wanted us to open up completely our agriculture and dairy, give up our data localization rules. We said, just for the sake of a photo op trade deal, we are not going to do that. And that's why today, India is one of the only countries which still does not have a trade deal.
Right. You know, Ambassador Swaroop, I know it's been some time since you retired as a diplomat, but within the diplomatic fraternity, what's the sense? Why is this deal taking time? Will it happen this year? Because we've already reached the fall deadline.
So you see, first of all, we have to analyze a deeper strategic reason. And the fact of the matter is, India no longer has the same strategic salience in Washington that was there pre-Trump. Because every US president, starting from George W. Bush, has seen India as essential to maintaining a global balance of power favorable to American interests. They saw India as the only democratic counterweight to a rising and increasingly assertive China. And that's why they were invested in the rise of India. Now, Trump does not look at India from that lens. As you know, he wants a G2. He wants to do a deal with China. He's already done at least a one-year deal with China, that they will continue to get rare earths and America will not impose sanctions. So because Trump does not look at India from a strategic point of view, but simply as a market for American agriculture, as a market for American energy, for American technology, for American defense sales. And that's why, he's putting maximum pressure on us. The 50% tariff, including 25% on buying Russian oil, is all intended to pressurize us into accepting a one-sided trade deal, which we have clearly said we will not accept.
Right. And ladies and gentlemen, some trivia. Ambassador Swaroop had addressed the press conference with the then DGMO post India's Uri operation.
That's right.
So that was a very iconic press conference that had been called, where Ambassador Swaroop and the DGMO had announced what had happened. And General Naravne, ladies and gentlemen, was at the helm of affairs. He was the army chief during COVID-19 when the Galwan incident took place. And so that brings me to China. We lost 20 of our soldiers during Galwan. Chinese lost 5, according to what they admitted. Real numbers possibly could be much higher. Fast forward to this year. During Operation Sindoor, China was helping Pakistan real time with intelligence inputs, and there were Chinese planes, cargo planes, landing in Pakistan. In such circumstances, can there really be a reset with China?
Well, the fact that Pakistan and China have had very good relations is not anything new. And this is something that we have always factored into our calculations, both at the political, diplomatic, and military level. And this partnership between them is likely to continue in the foreseeable future. But we should not always see everything as a zero-sum game. In fact, the US and China have also signed a deal recently. Just 2 days after India and US signed a 10-year defense partnership. So people are partnering with whoever they feel they should in their national interest. And therefore, we should not totally shut the door on anyone and keep looking at opportunities in various fields. And relations between countries cover a vast gamut of activities. It's not only defense. It is defense, trade, people-to-people contacts. So we must explore where we can do what's best for ourselves in our national interest and not go by instructions being given by somebody that you do this or you don't do that. And that is what I think is the bottom line as far as India is concerned. And to that extent, I think even China has now realized that a military option to achieve their aims is no longer possible. We have crossed that stage. We are a military power to be reckoned with, at least in the South Asian region. So they too are cognizant of that fact and would like to move beyond this just a military lens to our relations and exploit the other opportunities that they have in India, especially in the trade and commerce, again, for their interests. So it's all a mutually beneficial kind of activity, which will always happen.
Right. General Naravne, now, when we speak about long-term challenges with China, problems with Pakistan, clearly, when it comes to a crunch time or a wartime situation, you're left on your own. How do we need to prepare for this now in the future? To deal with the two-front war?
Well, there's no doubt that we have a two-front threat that is with Pakistan and China to our west and north. And we are preparing for this kind of a scenario. But going forward, I think what we need to pay more attention to is to try and get and maintain a technological edge over our adversaries. Wars in the future are not going to be the traditional wars with armies massed on either side of the border. And therefore, we have to concentrate on quantum technologies, artificial intelligence, machine learning, drone warfare, that is the whole gamut of unmanned systems, and so on and so forth. And that is where we as a country, including the industry, needs to focus on. Hypersonics, I missed out on that one. Manned, unmanned teaming, that is another field that we have to look at. This is where we need to focus in the futuristic technologies which will give us that edge in a future battlefield, and not on what is already available in the market today. We need to leapfrog one generation to be ahead of the curve.
Absolutely. Ambassador Swarup, when I would ask you about the India-Russia partnership, we've seen our relationship with Iran almost coming to an end in terms of energy. Is that same thing going to happen with Russia because of sanctions?
Well, when you look at the situation unfolding now with Rosneft and Lukoil having already been sanctioned, you do get a sense of deja vu. Because let's not forget, at one point in time, Iran supplied 12% of our crude. But then Iran oil was completely sanctioned, and then we had to completely give up on Iranian oil. So from 12%, we went down to 0. Now, the same thing, I think, might happen with Russia. Because if Rosneft and Lukoil, which are the two major Russian oil producers, which account for 50% of Russian oil output, are going to be sanctioned, I think we have already seen a statement from Reliance Industries that they are going to taper off buying oil from any sanctioned entity by November 21. In fact, it may come down to 0. So if that happens, I think it will be a tragedy, because we have to also factor in Russia is the world's second largest crude producer, and they account for 10% of global oil output. 2 million barrels per day is what India is purchasing. If you take 2 million barrels per day out of the equation, what is going to be the impact on oil prices at the pump? So I think America has to really think about it, but we have to prepare for the day after, that not only have these sanctions kicked in, Senator Lindsey Graham is ready to unveil, the secondary sanctions, which means any country that trades with Russia on oil will be hit with, 100% extra tariffs. So I think given that, we'll have, these are global compulsions that we have to understand, because we cannot sacrifice our trade with Russia vis-a-vis our trade with the rest of the world. Because, if banks that are channeling the rupee rubles, if they cannot do business with the West, then I think that's going to be very complicated.
Okay, my final set of questions. General Naravar, India is working for a 2047 vision. Does the Agniveer scheme really help the forces? Could that threaten our national security? What should be our 2047 military doctrine, and what's the role Agniveer scheme plays there?
The Agnipath scheme is a new scheme unveiled by the government 4 years ago or so. But you see, HR policies the world over keep changing, not only for the militaries, but even in various businesses. And many people are not aware, I'm sure even in this audience would not be aware, that till the mid-70s, there was nothing called a pensionable service. It was introduced only after that, when the minimum qualifying service was made to 15 years, and people started getting a pension. At that point of time, there were many people who said that, oh, we will have an aged army. We need young people in the army to fight the wars. So that time there was a counter argument, just as now the argument is, how will you fight with such young boys? So things keep changing. Which policy works or doesn't work, you'll come to know only when it has had time to settle down and get implemented. So let us not rush to any conclusions for and against it, but definitely a young army is the need of the hour. And as we go ahead, we will keep preparing with these boys. And it is not as if the entire army will be less than 4 years service, which is the terms and conditions for the Agniveers. The people who are in the 4th year will go into the 5th year, into the 6th year. So you will always have people and a correct, blend of youth and experience. And I'm sure, and they have performed exceedingly well, the Agniveers, in the recently concluded Op Sindoor. So why are we, as I said, jumping to conclusions? Give it time.
Give it time.
And if there are, requirement of mid-course changes, no policy is perfect the day it is rolled out.
All right.
If mid-course changes are required, they will be done. I'm sure people at the helm are looking into that.
All right. We've completely run out of time. I believe the Maharashtra Chief Minister is entering the premises. I'd like to thank Ambassador Swaroop and General Naravne for joining us, giving us their view on defense and circles of influence for the future. Ladies and gentlemen, a big round of applause for them.
Thank you so much, General Naravne and Ambassador Swaroop. Thanks, Parikshit. Now, recently, for the first time, the Indian women's cricket team became the world champions. And the reason I'm saying this, yes, keep the applause going. And the reason I'm saying this is because we're going to be joined by Shefali Verma and Sneh Rana from the winning team soon. So stay tuned for that one.
And that's something we're all very excited for. But when a nation builds unicorns by the dozen, it's not just an entrepreneurial story, it's a statement of economic intent. India today isn't asking whether startups can scale, it's asking how fast billion-dollar ideas can become billion-dollar institutions.
Exactly. From kitchens and eyewear to home services and fintech, these aren't just companies, they're systems that have redefined how India lives, works, and consumes. They've also rewritten the playbook for resilience, surviving funding winters, global slowdowns, and still betting on India's next growth curve. To lead this powerhouse conversation, we have with us Amitabh Kant, former G20 Sherpa and the driving force behind Startup India, a policy maker who has championed India's entrepreneurial transformation. And joining him are Fanikishan Adepalli, co-founder and CGO Swiggy. We also have Piyush Bansal, co-founder and CEO Lenskart, Abhiraj Singh Bhal, CMD and CEO Urban Company, and Yashish Dhaya, chairman and co-founder PB Fintech. Ladies and gentlemen, please join me in welcoming Mr. Kant and our stellar panel with a big round of applause.
So wonderful to be in the midst of these four extraordinary young Indian entrepreneurs who've demonstrated to us the art of disruption, scaling, surviving, and really becoming billion-dollar entrepreneurs. This session's called Billion Dollar Babies. None of them are babies, actually. They've really demonstrated the art of moving from babies to becoming real giant killers in many ways. These are people who, when we started our startup movement in 2016, India had just about 150 odd startups. Today, India has over 150,000, 160,000 startups. We have over 160 unicorns in India. Many of them have been inspired by the journey of these four great young entrepreneurs. Let me first start with Piyush, who is just, I'm starting with you simply because I'm your consumer.
Thank you, sir.
This specs I wear is from Lenskart. So what makes Lenskart such an extraordinary story that you've been oversubscribed 28x? This great combination of technology, great eyewear. What's one big, huge disruption that you brought in?
So I think, firstly, thank you, sir, for being a customer, and thanks for the vote of confidence. Look forward to keep serving you in the future as well. I think, firstly, I think the whole persistence and focus on a problem and a vision that how do we get India completely visually corrected is one big difference. I think that obsession that we have almost 500 million people in India who need vision care and who are without one, and how can we really use technology to solve this problem? And I think the most disruptive, to answer your, and I think that mission has really kept it going and staying persistent day after day with a lot of failures. From a technology perspective, I think, and at the core of all of that, I think technology has been the biggest disruption. I'll give you a problem, like, as we were scaling up, one of the biggest problems we were facing is that we do not have optometrists in India, enough. We have like 35, 40 optometrists for 1 million people. And it was like a big bottleneck on how do we test eyes for 500 million people more. And then using AI and technology, we developed this ecosystem where you can sit in front of a machine and do self-eye test. And you can talk to a machine. And that became, so I think to me, disruptions which have been around democratizing eye test have been the biggest ones.
Okay. And you're also in the export market.
Yes.
So how many countries have you penetrated so far?
So we are now in about 14 countries.
Okay, wonderful. So Fani Kishan is the co-founder of Swiggy. He's given Amazon, Flipkart, everybody a run for their money. He's also started doing 10 minutes delivery. How many deliveries are you doing a day?
Well, it depends on the day, but between 3 to 4 million.
Okay, and how much more disruption will you do? What's the next big plan?
I think for us, our mission has always been around delivering convenience to people. That's how we started. That's why I think we've been successful. There are many questions 10 years back around ability of people to pay for convenience.
Yeah.
And that's probably been our biggest contribution in the last 10 years, right? Where we've shown that at scale, people will pay for convenience and we can build massive businesses around that. And our vision continues to be around how do we unlock new methods in which hopefully you can get convenience.
And how's your journey of moving from just a food delivery app to providing many more things like shoes and groceries and many other items going?
Yeah, I think when we started out, of course, our vision was very simple. We said there seems to be a problem in food delivery, so why don't we solve that? But as we've scaled, the big question that came up for us is what can we do that can change, people's lives? If Swiggy was there in your life versus not, what meaningful delta difference can we make, right? And that caused the genesis of Instamart about now 5 years ago, about 4 or 5 years back. We constantly keep thinking now we have a concierge service where we're saying, hey, ranging from, trying to get a ticket at a movie or a concert to traveling abroad, how can I make my life easier? So we focused on continuously looking at pain points in people's life, removing them, and be hopefully an integral part, an operating system, if I may, of their day-to-day life. So that's where our constant innovation is about.
So tell me, just because of you, are Indians and Indian housewives, are they all losing the art of cooking at home?
No. I don't think so. I can give my mom as a great example for this, right? There was a time when she was quite surprised about me joining or starting Swiggy because I was in a consulting firm and she was like, what exactly are you doing?
Yeah.
But over the last many years, I've seen herself transform, wherein she continues to rely a lot on, let's say, the offline markets to get what she wants. But there are these few occasions. It's early in the morning, late in the night, some guests that come over to the place where there is that need state of seeking that additional help. Right? And that's the kind of role that we're playing. So the way we see is to augment people's lives as opposed to displace it in any manner. Right? And that's what we're observing. At the end of the day, while I wish we're used a lot more frequently than we are used, 3-4 times a month on average. And that kind of shows how we're augmenting, making life a lot more easy for people than, displacing it in some way.
So let me turn to Abhiraj, who's really brought a lot of discipline to the home services market, which was really chaotic in India. You can arrange a plumber, electrician, a carpenter, even someone who can do your beauty, makeup, all right on his digital app, one click, they'll be at your house in 10 minutes. Abhiraj, how's it going? How's the journey been for you?
Thank you, Amitabh.
Amitav, we started this company 10 years back with the simple vision of providing exceptional service to Indian households. High quality, reliable, always on time, and just delightful. That has been our North Star ever since, and it's something that keeps us honest even today. We want to be a company that is truly known for customer service, customer excellence, and in equal measure also help our service professionals live dignified, respectful, middle-class lives. So that's the vision we've been on. It's not been easy. It is a complex, operationally challenging business.
So you must be doing a lot of skilling for this.
We do.
And how many people have you skilled so far?
Till date, we've skilled roughly 60,000 service professionals in our training centers. We also use a lot of technology, a lot of AI to ensure quality control at the doorstep. And I mean, in many ways, we think we're only getting started.
So where do you see the future of the market? Tier 2, Tier 3 cities abroad, markets like Dubai, Singapore, where all are you going to penetrate in the next few years?
See, we think we can be in every middle-class Indian household once a day, eventually. So
that's about 450 to 500 million Indian households.
Yeah, so I think the opportunity is very large. We have to be disciplined, we have to be calibrated. We don't have to get ahead of ourselves, but we have to keep reminding ourselves that, we're less than 1% done.
So, with the kind of numbers that you're talking, each one of you is talking, it appears to me that you're still undervalued, not overvalued, huh?
Look, we just focus on value creation.
Okay.
And leave the valuation to the markets.
Okay, so what is this connect between market value and the market share? And how do you look at expanding, growing, and enhancing market value in a much bigger way and getting a larger share of the market? Will that further enhance values? What is the code? How do you look at the correlationship in terms of values going up? Let's start with Piyush for a minute.
See, I think eventually we look at it in, I can talk about Lenskart. There is, what we have achieved so far is a very small, a very large role to play.
Okay.
So for us, I think large role to play.
Okay.
So for us, I think, and I believe for all of us right now, we are in very early stages of the journey. And I genuinely think with AI coming in the picture, if you have been using technology for a decade to deliver that extra experience, to deliver that extra reach, now is the time to take that extra superpower of AI and make it 10x.
Yeah. Okay, I'm going to come to you, but I wanted to turn to Yashish because Yashish Zaya has done a remarkable job in Policy Bazaar. He's sold about 20 million policies to Indians, health policies and term policies. It's a remarkable success story in terms of insurance. And Yashish, 20 million policies, what is the biggest challenge and how do you look at yourself in the next 5 years?
So first of all, before I say anything about Policy Bazaar, I wanted to thank you because you are the one person who for the last 10 years has been the go-to person for every startup. And we derived a lot of confidence in the fact that you were just there and willing to listen to all of us, whatever problem we had. So thank you for that. Now,
totally agree, sir, totally.
I think, see, we had a very simple, if you look at India, we used to have joint family systems. See, everybody works for about 20, 30, 40 years in their life. But before that, they are kids. And after that, they are old. And that time they don't earn, but they still have expenditures. And then there are people who fall ill or they die early. I've had some instances in my family. And then their families go through very, very strong financial problems. You know, healthcare costs are going up, etc., etc. So for me, as I think of India 20 years, 30 years from now being a developed country, one of the biggest challenges we're going to have is healthcare and social security. Because we're a developing country, going to become developed. And I somehow thought in 2008, when we looked at the insurance industry, we were not selling health insurance and term insurance. We were selling some kind of savings kind of products and some car insurance, and that was it. And for me, that was, the reason for that was the consumer was not educated. And so we spent the last 17 years trying to educate the consumer about these products, but it's not that simple alone. You know, if today I'm not well and I know I'm going to, let's say I'm terminally ill, I want to buy a term insurance plan. So there's a lot of fraud element, etc. So in those 20 million, sir, it's a very circumspect journey, and it's been built kind of day by day, because you don't want to sell to somebody who's desperate to buy insurance. You want to sell to people, you know, and that's the only way to kind of keep it feasible. So I think in terms of opportunity, it's very simple to look at countries that spend a lot on social security. You will typically find about 20 to 30% of their national budgets going towards things like healthcare, pensions, etc., etc. And in our case, it may not be the government, it may be individuals that have to be trained to do the same. And that training is a very difficult task. It's not an easy, it's not easy to get anybody to part with 10,000, 20,000 rupees. In the piece that, look, if something goes wrong, somebody will be there to help them. There'll be a claim provided. It's a pretty difficult proposition. But yeah, that's been the journey.
So, you know, I want to touch upon the other issue about growth and equity and about getting into tier 2, tier 3 cities and rural areas. Because all of you are talking about 1 billion consumers in India. One is, how do you in the next phase penetrate the next layer of tier 2, tier 3 cities? I also want to look at, because to my mind, Indian companies can be great companies if you can penetrate global markets. Export is very critical to me. You know, Indians must learn the art of getting 5x of what you earn in India by penetrating global markets. What's your strategy on penetrating tier 2, tier 3 cities and on exports? And I'll start with Swiggy.
Yeah, so I think for us, over the last many years, one thing that we've at least resolved is our commitment to focusing only on India. This is the market that we believe that we are in for the long term, and there's a fair amount of headroom for expansion here. So I think we are focused very much on India. On the aspect of tier 2 and tier 3, I can give an anecdote, right? A few months back, I was in a tier 2 town, Vijayawada, and I was meeting a few customers, and there was this homemaker who was talking about her purchase habits, and she spoke about how Instamart solves a very critical problem statement for her, where she cares for the health of her family, and there is a particular product, a 7-grain atta, that's not actually available in any of our local stores. While majority of our purchases still happen offline, there is this occasion, there is this element where we are providing access to people, and you know, a lot of our tier 2, tier 3 towns don't have that evolved retail formats as well, right? And that's the kind of opportunity which we think that we can. It's about access, it's about convenience, it's about affordability to the consumer when they need it. And while we started out not thinking that we would have a role to play in those areas, it turns out that we could solve a much more important problem in tier 2, tier 3 in comparison to tier 1.
Okay, Piyush.
See, I think it is, if I look at our lives today, we are consuming so many international brands. I mean, you look at apparel, you look at shoes that everybody is wearing. And if you think about it, consumers are going to gravitate towards what, you know, the best of the brands. And I think it is time that we start creating global brands, because my firm belief is that in the long term, if you think 10, 20 years, either you are global standard or you may cease to exist. What will it take for us to create global companies? I think the most important thing is belief. I think we have been phobic about it. When we were trying to go international, we faced a lot of resistance. More, I would say, mentally, created that Indian companies may not succeed international. How many successful examples do we have? But today, about 40% of our revenue comes from international markets. I think that belief was really important.
So, which is your biggest export market right now?
Right now, the biggest market is Southeast Asia.
Okay.
Singapore, Thailand, and then Japan.
How big are you in the Middle East?
Middle East is second in the we're not allowed to disclose market-wise numbers, and we are listing in 2 days. So I want to make sure I comply. But I would say we are one of the largest players.
Okay. Abhiraj.
So 2 parts to this question. One on the tier 2, tier 3 opportunity. I think that opportunity is immense, and it's only going to grow as India grows and middle class Indians, have more discretionary income. We are present in about 50 odd cities in India, and the number of emails I get every day from customers in cities we are not present in, saying that you should launch urban company in our city. We are worthy, and we need your service. So I can see that opportunity, and I think it's a long-term, one-way opportunity.
And what's your most popular service?
Mostly around home cleaning.
Okay.
But we also have beauty and repairs, which is popular. But to your other question of going global, and we have a global footprint in the Middle East and in Singapore as well. One of the things I've realized, Amitabh, is when you are a global company, even if you have a small global presence, you learn so much because you learn to operate at the global scale. You learn about global quality standards, how your product should be globally competitive, how your service quality should be globally competitive. That invariably those learnings will be plowed back into your business in India.
Yeah.
So I always encourage companies to have at least some presence globally because that's the real playing ground.
Yeah.
And it allows you to calibrate yourself against what's globally best in class.
Okay. And probably you get a little bit better unit value realization also?
100%.
Yeah. Okay.
100%.
Yashish.
So, sir, 8 years ago, 20% of our business would come from tier 2, tier 3 cities.
Yeah.
Today, it's about 75%. And most of the growth is coming from tier 2, tier 3. Talking about international, I did not originally believe in the international concept. Now I do. I think we certainly need to have our organizations going international because that's how you build national IP. That's how you build, see, the fact is Google, Facebook, etc. That's how America makes a lot of money. And there is no reason India should not. Some of our organizations, including ours, are super good compared to global standards.
I wanted to turn to this issue about making great companies like yours into the greatest companies in the world. One of the challenges Indian startup movement has faced is that you do well, you do an IPO, you raise a lot of good money, there's a lot of publicity, and then there are issues of governance, major issues of governance, there's financial mismanagement. How do we tackle this so that we convert 4 of these companies into the greatest companies in the world? What can we do on governance? Yeah.
Yes, she's given
it's a very important issue to
So it's a very, very critical issue.
Yeah.
I think all of us actually have a very good smell for which are the companies that have a governance problem.
You can talk about yourself, you can't talk about others.
No, I can tell you, if you ask the startup community, 100 of them, which companies have governance issues and which do not have governance issues, you will get a pretty good idea. Now, at times, historically, we have been a place which is difficult to do business in. And my request is, one should, as a government, be able to see where difficulty is creating issues, right? I think that's also important. That's equally, like I can talk about our sector. Life has been pretty hard on us, right? And I was talking to the ex-IRDA chairman a few days ago, and I mentioned that in 2011, we had an 83-page regulation on a company which had just started. And all that regulation was saying was, kill this company. Now,
No.
that's a hard position to be in.
No, on the insurance side, I accept.
That's
but,
what I'm saying.
But I think on the insurance side,
it's become a lot better. But all I'm saying is, for those who've
no,
lived through
India
that,
needs to become far more easy on
easy on doing business. Yeah,
on insurance at least.
specifically insurance. Yeah.
What about you?
Amitabh, you've known us for many years, and you know that we.
No, I'm not talking about just urban company. I'm talking about the startup movement. How do you ensure a better governance system in the startup movement of India? And that's critical to my mind. If the startup has to keep growing, if you people have to become the role model, if you have to inspire 1 billion young startup entrepreneurs, how do we ensure better governance in startups?
See, finally, I think it boils down to the founder. The heart of governance is doing the right thing always. And, that's something you can't really teach a founder. It is a function of many things, including your upbringing, the value system, why you're doing what you're doing. Of course, we can have oversight. I do believe that startups should have an independent board way before they go public. That helps. We've had an independent board for almost 3.5, 4 years now, even though we only recently went public. I do believe all the big four audits, etc., should happen from the get-go. But we have to remember that eventually, if the intent and the integrity of a founder is in question, that cannot be replaced.
Okay.
So,
so you're saying integrity and the intent of the founder is really critical.
Absolutely.
First, we should not generalize that startups are...
No, there have been a number of stories. Huh?
Yeah, I understand.
I brought this issue up because one after another I've seen startups growing, expanding, doing IPOs, then going tuck.
See, I would say governance is non-negotiable.
Yeah.
Right? I would say we will see some very great companies come out of India in the years to come. And
starting with Lenskart, huh?
Starting with Lenskart.
Yeah.
And absolutely. And I think we all are sitting here with the dream.
Yeah.
And that dream can only be fulfilled if we stay high on governance. And I think, which is why I'm saying one should not generalize. It is happening. There could be a few cases here and there.
Okay, Mani, what about you?
Yeah, I think, it comes down to what is actually recognized and rewarded and what is not, all right? And be it startups or otherwise, I think there have been a lot of discussions on valuation in the last few weeks, but it comes down to what value you're deriving or delivering to consumers, and that's a function of metrics like how many consumers' lives have you touched, right? What is the satisfaction score? The thing is, the moment people stop looking at that and look at this, red, green bar that goes up and down every day, that's when I think, people are forced or incentivized to stray down the wrong path.
All right. Okay. So let me turn and start with you again on this age of disruption through data, machine learning, AI, and how you're using the power of AI really to reach out to your consumers, do better analytics, improve your deliveries, etc. Just tell us 2 or 3 things which are making a difference to Swiggy.
Yeah, see, I think we probably analyze, 200 million data points every minute to actually predict.
So 200 million data points every minute.
Yeah, because we need to predict for every customer what the delivery time is going to be, which delivery partner should get assigned, what is the right storefront to show the consumer, and many, many things, right? So for us, it's been if you look at how our business has been performing, a lot of the last few years, operating leverage has kicked in primarily because we leverage technology at the core, right? While our staff has remained the same, we're now almost catering to twice as many customers. And that's because of a combination of technology and AI. And personally for me, the place where I see a lot more impact coming through is not productivity, but
since you're a young company, do you use that far more powerfully than legacy players like Flipkart and Amazon?
See, I think for us, that's how we've been born. Like our birth has taken place in technology, right? And therefore it's come a lot more naturally. Of course, there's new technology like AI that we need to get adapted to. So I would say probably in comparison to other legacy companies, we'll be more native. but then you need to always be on your toes. I mean, the market is completely unforgiving in that sense.
Piyush, lens card, how much of AI are you using? How much of cutting edge technology are you using? And are you using AI on the back of your spectacle? Will you be using camera on these specs?
Absolutely. I think it's time now, right? I think we missed the laptop and the mobile opportunity, and now is the opportunity as computing moves towards glasses. I'm wearing one right now.
What are you wearing?
I'm wearing the new B glasses.
So it's hooked onto a camera or a computer?
It has both.
Both. Okay.
Yeah, it has a camera, it has a computer, you can talk to it. So I think it is our time and opportunity to really own the next computing platform.
And how expensive is that specs with computer and camera?
This is going to be launched soon. I'm not allowed to disclose the price of it first on this.
You're not disclosing anything before CNBC.
All I can say it's going to be it's going to be a lot more affordable, lot better, and it is homegrown. So we are really trying that all the computing and the data comes to us this time, and we can build it for the world.
Okay.
Right?
Yeah. But you should disclose much more to the customers here. Okay. Abhiraj.
AI is, existential for all of us as companies today.
No, has it got embedded in urban
Absolutely. So the way we think already is all service touch points, we need to monitor quality against SOP through AI, the entire matchmaking engine, all our interactions with our service partners, increasingly onboarding and training of service partners. But I must also highlight that, we're in the early phases of AI adoption in general. It's a very new technology. So it's changing so fast that all of us have to be on our toes to just keep pace with, often you implement something and you realize the next version of it is already out. So it's rapidly evolving, and I think the mindset has to be that, you have to be an AI first company.
So what, are you working with enterprise AI? Or are you working with established AI companies? Or are you working with Indian startup AI companies? Or how are you integrating AI?
See, we've kind of, at our end, we've created think of it as a payment gateway equivalent gateway, which can real time switch between any enterprise AI model at the back end, whether it's Llama, whether it's, ChatGPT, OpenAI, whether it's Anthropic, etc., etc. We don't want to be wedded to any one model right now.
Yashish, what about you?
Sir, for us, the biggest win has been on the fraud detection, because obviously, in insurance that becomes a very critical area, and we've been using AI for the last 3 years. Now it's become very, very ubiquitous, where all consumers' conversations, etc., are picked up, where the person is buying from, and all of this is checked with past claims data to see where fraud can happen. And that helps customers for keeping their claims happening.
Okay. So let me turn to the last question. And all four of you have been very, very successful so far. Undeniably, you're the finest entrepreneurs of the Indian startup movement. You'll go on to create great companies. Tell me about one great failure you've had while doing this, or one of the biggest challenges that you faced while doing this. Because they say that for every startup, you have to have a failure, you have to have a challenge. What is that one big failure, one big challenge that you were confronted with? Or were you successful right throughout? You never faced a challenge.
Sir, it's become very easy. I hate to say it, but you know my answer. My answer was the regulation was very, very difficult.
So you're saying the government was your biggest challenge? Yeah?
Not the government, sir. The regulation has evolved, but it was a very
you can
challenging...
say politely, insurance regulatory authority was the biggest challenge.
Right now, it's in a very good shape.
Okay.
But I think way back, it was a very challenging environment.
All right. What about you, Abra?
Well, urban companies is our second idea. Our first one didn't work.
You failed in the first one.
Yes.
Okay.
And
what was that?
A good it was a company in the media space, but it was a good reminder that despite the degrees and the professional success, the real market only rewards you if you have a valuable product or service. It doesn't care about anything else.
So the customer focus.
Absolutely.
Customer is the king.
Customer is the king.
Okay.
That's all that matters.
Okay. Beautiful. What about you?
I think what was the biggest challenge was that, we really wanted to get into very deep in India.
Yeah.
And, as we were opening stores,
Yeah.
there was this belief that stores cannot grow as fast. You can only open that many number of stores in India. Nobody has gone beyond.
Yeah.
And there was a lot of, pre-assumed notions about
Okay.
it. And then what we did is we developed a geo-analytics tool where we open now 350, 400 stores a year.
Yeah, okay.
And a human doesn't decide where to open the store.
So it's all analytics.
Yes, it's
Okay,
all AI
wonderful.
and analytics.
Okay, Funny. What about you?
Yeah, I think for me personally, we do a lot of tinkering innovation in Swiggy. We fail more than we succeed, to be honest. I mean,
So you-
we only know Instamart.
Okay.
But
So-
there are 3 more failures behind the scenes.
Okay.
Right?
So you've had a number of failures before you succeeded on this one.
Yeah, and it's one of those really depressing things because you're throwing everything at the problem and it just doesn't work. And as Abhiraj said, it just comes down to, are you focusing on the right problem?
All right.
Are you giving it your best?
Okay. Wonderful. Such a pleasure and a delight talking to all of you. And may you all go on to create the greatest companies for India. Thank you. Thank you. Thank you. Thank you. Thank you.
Pleasure.
Thank you. Let's have a photograph here. Photo खिंचवाओ यार. Selfie कौन लेगा?
What a fantastic conversation. A big thank you to Mr. Amitabh Khan for leading that discussion. And thank you to our speakers for sharing such sharp insights and candid reflections. Ladies and gentlemen, once again, a huge round of applause. And now, before we proceed further, please join me in welcoming my colleague, Nigel D'Souza.
Well, thanks a lot, Shruti. So in between all the market buzz, the amazing conversations happening here, it kept me waiting for the evening where I can completely be a part of the summit. Soon after closing bell, wrapped it up, market's done, so here I am. Well, you guys have spent the day examining India's growth trajectory from multiple angles. Our next conversation brings us to the state that's been central to that story, Maharashtra. Well, India's largest state economy is home to our financial capital and a major destination for investment and industry. And stirring the engine is a leader with a clear vision for the future, who joins us to discuss what's driving Maharashtra's next big leap, how it's attracting capital, enabling enterprise, and setting the benchmark for what the ease of doing business in India truly means. To lead this discussion, please welcome Shreen Ban on the stage. Ladies and gentlemen, please also join me in welcoming the Chief Minister of Maharashtra, Shri Devendra Fadnavis.
Ladies and gentlemen, what an absolute honor it is to have with us the Honorable Chief Minister of Maharashtra, Mr. Devendra Fadnavis. As we were walking in, I was telling him that the unanimous opinion here of people who have been at the Global Leadership Summit this morning, especially the global leaders that we've had, they've all said that if there is one infrastructure transformation that they've been most impressed by, it is what has happened in Maharashtra, what has happened specifically in Mumbai. And I was also telling him that we were worried that, will people be on time or not? People were actually here ahead of time because the infrastructure has improved. So, Mr. Fadnavis, congratulations to you
so much.
and
Thank
your
you so
team for getting the job done. But आपसे पूछना चाहूंगी सर कि अभी तक तो जो आपने इंफ्रास्ट्रक्चर डेवलपमेंट कर लिया वो अभी उसका रिजल्ट हमको देखने को मिल रहा है. अब आप क्या प्रायोरिटाइज करेंगे? अब किस प्रकार का आप कैपेक्स डालेंगे इंफ्रास्ट्रक्चर डेवलपमेंट में? हमें क्या उम्मीद, क्या अपेक्षा आपसे रखनी चाहिए?
देखिए, मैं सबसे पहले तो आपको कहना चाहता हूं कि अभी जो आप इंफ्रास्ट्रक्चर देख रहे हैं ये केवल ट्रेलर है, असली पिक्चर अभी बाकी है. क्योंकि मुंबई और एमएमआर रीजन ये एक ऐसा रीजन है कि जो भारत की अर्थव्यवस्था को एक पावर हाउस के रूप में, एक ग्रोथ इंजन के रूप में ये डेवलप कर रहा है. और जो हमारे प्रधानमंत्री मोदी जी का सपना है इंफ्रास्ट्रक्चर लेड ग्रोथ का, उसके साथ साथ जो एक प्रकार से अर्थव्यवस्था को विस्तारित करने का जो उनका सपना है उसको पूरा करने का काम हम लोग कर रहे हैं। इसलिए अभी आपने जो देखा तो आपने कहा हम लोग यहाँ समय पर आए, तो कुछ लोगों ने मन में कहा होगा कि समय पर तो आए लेकिन बीकेसी में आने के बाद बहुत टाइम लग गया। नहीं, तो मैं इसीलिए आपको बताना चाहता हूं कि व्हाट इज द नेक्स्ट प्लान। आप जब ये वर्ली बांद्रा सी लिंक से बांद्रा में आते हैं तो अभी हम लोगों का एक प्लान चल रहा है कि हम बांद्रा से सीधा एक टनल ये बीकेसी में लाएंगे और बीकेसी से सीधा उस टनल को हम एयरपोर्ट ले जाएंगे, तो जिसमें आपको उसके बाद ये जो बीकेसी का जो कंजेशन है और वेस्टर्न एक्सप्रेसवे का जो कंजेशन है वो खत्म हो जाएगा। अभी हमारा जो बांद्रा उसका काम चल रहा है, बांद्रा वर्सोवा के कारण वापस हम लोग वेस्टर्न एक्सप्रेसवे जो मुंबई का 60% ट्रैफिक कैरी करता है उसको डीकंजेस्ट करेंगे। वर्सोवा से लेकर हम लोग दहीसर और दहीसर से लेकर भाईंदर, इसका काम हमने ऑलरेडी चालू कर दिया है, जिसमें कुछ टनल से कुछ ब्रिजेस है, वो हमारा हो जाएगा। और फिर अभी 3 दिन पहले हमने हमारे रिकॉर्ड तोड़ने का तय किया, क्योंकि जो अटल सेतु है दैट इज अ 22 किलोमीटर ब्रिज, सी ब्रिज, जो अभी देश का सबसे लंबा सी ब्रिज है। अभी हम लोगों ने भाईंदर से लेकर तो विरार तक एक 24 किलोमीटर सी ब्रिज को मान्यता दी है कि जिसका भी हम आने वाले दिनों में काम शुरू करेंगे। तो आप ये समझ लीजिए कि मुंबई को, और फिर विरार से अलीबाग तक मल्टी मॉडल कॉरिडोर का काम हमने शुरू किया है। तो एक प्रकार से एमएमआर रीजन में एक लूप तैयार कर रहे हैं हम लोग, कंप्लीट एक रिंग रोड जैसा हम लोग तैयार कर रहे हैं, जिससे आने वाले दिनों में मुंबई पूरी डीकंजेस्ट होगी। और उसके साथ साथ जो ईस्ट वेस्ट कनेक्टिविटी है, उस ईस्ट वेस्ट कनेक्टिविटी के लिए थाने से बोरीवली के टनल का काम हमने शुरू किया है। तो अभी थाने से अगर बोरीवली आना है तो आपको 2 घंटा 2.5 घंटा लगता है, आप 20 या 25 मिनट में आएंगे। उसके बाद मुलुंड से गोरेगांव तक के टनल का काम हमने शुरू किया है, जहां 1.5-2 घंटा लगता है, आप 20 मिनट में आएंगे। और ऐसा ही हम लोगों ने थाने से सीधा नई मुंबई एयरपोर्ट तक एलिवेटेड रोड का काम हम लोग शुरू कर रहे हैं। तो कुल मिलाकर अगर आप इंफ्रास्ट्रक्चर का विचार करेंगे तो मैं ऐसा मानता हूं कि आने वाले 5 वर्षों में देश में सबसे ज्यादा इंफ्रास्ट्रक्चर अगर कहीं तैयार हो रहा है तो महाराष्ट्र में और एमएमआर रीजन में हो रहा है।
सर, आपने कहा कि ये ट्रेलर है, पिक्चर अभी बाकी है, पिक्चर का रिलीज डेट बता दीजिए।
देखिए, पिक्चर का जो रिलीज डेट है, ये हमारा पिक्चर ये किश्तों में आने वाला है, तो इसलिए सीक्वेल्स में आने वाला है। इसलिए इसके अलग अलग डेट्स है, कुछ डेट 26 में, कुछ 27 में, कुछ 28 में, पर मुझे ऐसा लगता है कि 2030 तक मोस्ट ऑफ इट विल बी एबल टू कंप्लीट।
तो आपने बताया कि इंस्टॉलमेंट्स में और सीक्वल्स में हमें वेट करना पड़ेगा, तो कुल मिला के किस प्रकार का कैपेक्स का आप अनुमान कर रहे हैं कि जैसे आपने बताया कि एमएमआर का इंफ्रास्ट्रक्चर डेवलपमेंट की बात कर रहे हैं।
देखिए, आज अगर हम विचार करें तो एमएमआर रीजन में जो हमारे काम चल रहे हैं दे आर वर्थ 4 लाख करोड़, 4 लाख करोड़ के काम चल रहे हैं। और अब अगर हम इसमें जो हमारा वाडभन पोर्ट है उसको मिला दे तो वाडभन पोर्ट इटसेल्फ विल बी 1 लाख करोड़। तो ये वाडभन पोर्ट तो एक प्रकार से मैं प्रधानमंत्री जी का धन्यवाद दूंगा कि ये एक ऐसा गेम चेंजर है। हमारे यहाँ अभी सबसे बड़ा पोर्ट जो है वो जेएनपीटी है, और जेएनपीटी की अभी जो क्षमता है कंटेनर ट्रैफिक हैंडल करने की, वो अब देश में सबसे बड़ी क्षमता जेएनपीटी ने तैयार की है। वाडभन पोर्ट ये जेएनपीटी से 3 गुना बड़ा है। यहाँ नेचुरल 20 मीटर्स डीप ड्राफ्ट है, तो ये जिस दिन तैयार होगा उस दिन वाडभन पोर्ट ये दुनिया के पहले 10 पोर्ट में होगा। और अगले 30 साल 40 साल महाराष्ट्र और देश की अर्थव्यवस्था को, और जो एक प्रकार से उसकी अगुवाई ये वाडभन पोर्ट करेगा। और इसमें सबसे बड़ी बात यह है कि पोर्टलेट डेवलपमेंट की हम बात करते हैं तो हमने देखा कि जेएनपीए का पोर्टलेट डेवलपमेंट ये थोड़ा एक गोल्डन ट्रायंगल में रह गया, लेकिन अब हमने ऐसी व्यवस्था की है कि समृद्धि हाईवे और शक्तिपीठ हाईवे, ऐसे 2 जो हमारे हाईवेज है, इसके कारण पूरे महाराष्ट्र को हम पोर्टलेट डेवलपमेंट का लाभ देंगे। और महाराष्ट्र का ऑलमोस्ट एवरी डिस्ट्रिक्ट will be connected with a super expressway with the वाडवंड पोर्ट. तो मुझे ऐसा लगता है कि जो एक ग्लोबल सप्लाई चेन में हम लोग एक भूमिका निभाना चाहते हैं, उसके लिए वाडवंड पोर्ट और जो हमारे हाईवेज, ये जो इकोसिस्टम हम तैयार कर रहे हैं, ये इकोसिस्टम पूरे तरीके से इसको बदल देगी.
सर, आपने कहा कि जिस दिन बनेगा इट विल बी वन ऑफ द टॉप 10 पोर्ट्स इन द वर्ल्ड. किस दिन बनेगा सर?
इसका पहला जो चरण है वो 3 साल में बन जाएगा. वी हैव ऑलरेडी स्टार्टेड द वर्क. और मैं वापस कहता हूं कि देखिए, मोदी सरकार क्या डिफरेंस लाता है ये मैं आपको बताना चाहता हूं कि 1992 में 1992 a Supreme Court committee was set up and the Supreme Court committee said that this port comes under Dahanu natural area, so it cannot be built. और उस दिन वो समाप्त हो गया था. 2014 में मोदी जी की सरकार आई, हमारी सरकार यहाँ आई, तो हम लोगों ने देखा कि देश में वाडवंड पोर्ट से ज्यादा अच्छी जगह ही नहीं है. इतना नेचुरल डीप ड्राफ्ट कि जहां दुनिया की सबसे बड़ी वेसल आ सकती है, ऐसा कोई दूसरी जगह पूरे भारत में नहीं है. तो इसलिए हम लोगों ने महाराष्ट्र में, मैंने एक स्टडी शुरू किया कि हम लोग जो सुप्रीम कोर्ट का ऑर्डर है उसमें से कैसे बाहर निकल सकते हैं. तो ये ध्यान में आया कि इफ वी फाइंड आउट अ न्यू वे, जो राइट ऑफ वे फॉर द वाडवंड पोर्ट, तो हम इसमें से बाहर आ सकते हैं. और हमने प्रयास करके 2 सालों में एक नया राइट ऑफ वे ढूंढ कर निकाला. हम लोगों ने वो सेंट्रल गवर्नमेंट को प्रेजेंट किया, मोदी जी ने हमको उसके लिए मान्यता दी. एक जॉइंट कंपनी हमने सेंट्रल गवर्नमेंट के साथ तैयार की. वी वेंट टू द सुप्रीम कोर्ट, वी ऑब्टेन्ड ऑल द परमिशंस. सुप्रीम कोर्ट ने एक जज की कमिटी तैयार की फॉर गिविंग ऑल द परमिशंस. उसके सामने जाकर हमने सारी चीजें 1 साल तक सारे हियरिंग्स कंप्लीट किए और उसका काम भी अब हमने शुरू किया है. अब वाडवंड पोर्ट का काम एक्चुअली जगह पर शुरू हो गया है. और इसके साथ साथ मैंने एक और मांग की थी. मैंने कहा हम जब पोर्ट के लिए रिक्लेमेशन कर रहे हैं तो दुनिया में आप देखेंगे तो सारे मेजर एयरपोर्ट्स आर द रिक्लेम्ड एयरपोर्ट्स, दे आर ऑफशोर एयरपोर्ट्स. तो मैंने कहा कि भारत का पहला ऑफशोर एयरपोर्ट ये वाडवंड के साथ बनना चाहिए, क्योंकि यहाँ एयरपोर्ट है, यहाँ एयरपोर्ट बनेगा, बाजू में जो हमारी बुलेट ट्रेन है वो बुलेट ट्रेन वहां है, और हमारा जो रोड है वो भी वहां तक जा रहा है. तो एक मल्टी मॉडल कनेक्टिविटी यहाँ पर हो जाएगी. और ये मैंने मांग की, प्रधानमंत्री जी ने तुरंत कहा कि इट इज अ गुड आइडिया, और उन्होंने कहा कि यहाँ हम एयरपोर्ट भी बनाएंगे. तो हमारे मुंबई का तीसरा एयरपोर्ट, दूसरा तो हमने बना दिया, तीसरा एयरपोर्ट हम वाडवंड में बनाने जा रहे हैं, जो देश का पहला ऑफशोर एयरपोर्ट होगा. और जो एक प्रकार से, चूंकि ये मुंबई है, बाजू में नई मुंबई है, तीसरी मुंबई जो बन रही है, ये हमारा जो न्यू मुंबई का एयरपोर्ट है उसकी विसिनिटी में तीसरी मुंबई बन रही है, और चौथी मुंबई हम बनाएंगे वाडवंड.
आपने पूरा एक कॉम्प्रिहेंसिव रोड मैप
जी,
हमें दिया सर. उसमें आपने बुलेट ट्रेन का जिक्र किया था, तो उसी पे मैं आपसे पूछना चाहूंगी कि पटरी पे कब आएगी?
नहीं, पटरी पे आ गई. 2019 में एक्सीडेंटली हमारी सरकार चली गई थी और एक्सीडेंटली दूसरी सरकार आई थी, तो एक्सीडेंटल सीएम ने उसको स्टे कर दिया था और उसका सारा काम बंद हो गया था. लेकिन वापस जैसे हम आए, हमने विद इन 3 to 4 months उसको पटरी पे लाया, लैंड एक्विजिशन कंप्लीट किया, और अब जोरों से काम चल रहा है. अब कोई रुकावट नहीं है, और होपफुली 2028 या 29 तक हम लोग बुलेट ट्रेन देख पाएंगे. और मैं आपको कहना चाहता हूं, ये बुलेट ट्रेन यहीं आ रही है बीकेसी में, और बीकेसी में बुलेट ट्रेन का जो स्टेशन है, उस स्टेशन के ऊपर हम लोग देश की एक बहुत ही आइकॉनिक इस प्रकार की एक बिल्डिंग तैयार कर रहे हैं, विच विल बी लाइक अ कमर्शियल हब. एक बहुत जबरदस्त ऐसा कमर्शियल हब हम लोग तैयार कर रहे हैं. और उसी के डिस्पर्सल के लिए ये जो मैंने आपको जो टनल की बात की थी, ये टनल हम लोग तैयार कर रहे हैं.
टनल की भी बात आपने हमें बताई, और अभी आपने कमर्शियल डेवलपमेंट की भी बात करी है. तो आई वांट टू टॉक अबाउट द फिस्कल कैपेसिटी ऑफ द स्टेट्स, बिकॉज हर स्टेट गवर्नमेंट में ये एक चैलेंज है, ये एक कंसर्न है. आपने भी मेरे साथ पिछले जो कॉन्वर्सेशन, पिछला इंटरव्यू में इसकी बात की थी, इसको एक्नॉलेज किया था. तो हाउ डू यू बैलेंस द स्टेट्स फाइनेंसेस बिटवीन इंफ्रास्ट्रक्चर डेवलपमेंट एज वेल एज द वेलफेयर स्कीम्स दैट यू आर आल्सो रनिंग?
देखिए, आपकी बात तो बिल्कुल सही है कि हम लोगों ने या पूरे देश में अलग अलग राज्यों ने जिस प्रकार से वेलफेयर की स्कीम्स को हाथ में लिया है, उसका एक स्ट्रेस ये हमारे बजट पर होता है, और उसका कहीं ना कहीं हमारी इन्वेस्टमेंट की कैपेसिटी पर भी उसका एक परिणाम होता है। लेकिन मैं ऐसा मानता हूं कि आज हम जिस प्रकार की अर्थव्यवस्था में है, उस अर्थव्यवस्था में अगर आपके पास प्रोजेक्ट है, अगर आपका प्रोजेक्ट क्लीन है, अगर आपका प्रोजेक्ट बैंकेबल है, तो पैसे की कोई कमी नहीं है। और फॉर्चुनेटली मिस्टर शक्तिकांत दास जी यहाँ पर हैं, तो वो बता पाएंगे कि हमने महाराष्ट्र की अर्थव्यवस्था को हमेशा फिस्कल पैरामीटर्स पर एकदम परफेक्ट रखा है। आज भी आप देखिए हमारा डेट जीडीपी रेशियो 17% पर है। देश में अभी कई राज्य 25, 26, 28% पर पहुंचे हैं, हम लोग अभी भी 17-18% से ऊपर नहीं जा रहे। तो मुझे ऐसा लगता है आज हम लोग ये 4 लाख करोड़, 5 लाख करोड़, 10 कुल मिलाकर सेंट्रल गवर्नमेंट और स्टेट गवर्नमेंट का मिलाकर आज महाराष्ट्र में 11 लाख करोड़ के प्रोजेक्ट चल रहे हैं। तो ये जो सारा पैसा आ रहा है, इसका कारण यही है कि हमारे जो इन्वेस्टर्स हैं उनको ये विश्वास है कि महाराष्ट्र इज कैपेसिटी टू रीपे। हमारा ट्रैक रिकॉर्ड भी वैसा ही रहा है। हम लोगों ने फिस्कल डिसिप्लिन काफी बड़े पैमाने पर रखी है। तो मुझे लगता है कि वी आर ट्राइंग टू मतलब स्ट्राइक अ बैलेंस कि जहां वेलफेयर स्कीम्स और हमारी जो इंफ्रास्ट्रक्चर की नीड्स है, इसको हम लोगों ने बैलेंस करने की कोशिश की है।
आपने पिछली बारी मुझे बताया था कि वेलफेयर स्कीम्स जैसे कि लाडली बहन स्कीम है, उसका एक प्रकार से ऑडिट चल रहा है, क्लीन अप चल रहा है, तो वो काम अब समाप्त हो चुका है या उसमें और कार्य बाकी?
नहीं, अभी उसका एक पोर्शन हमने कर लिया। जो डाउटफुल अकाउंट्स हमको लग रहे थे, उनको हम लोगों ने रोककर अभी उसका फिजिकल वेरिफिकेशन हमने शुरू किया है। तो इट विल टेक अराउंड 4 to 5 months मोर।
मैं ज्यादा राजनीतिक सवाल पूछना नहीं चाहती, लेकिन पूछती हूँ आपसे बिहार के इलेक्शन के बारे में। एक रिकॉर्ड टर्नआउट हुआ है, तो आप उसका क्या मैसेज ले रहे हैं ये रिकॉर्ड टर्नआउट को लेके?
देखिए, 2 चीजें हैं। एक तो रिकॉर्ड टर्नआउट इसलिए है कि एक प्रो इनकम्बेंसी वोट ये यहाँ पर लोगों ने दिया है। और दूसरा मैं ये कहना चाहता हूँ कि देखिए, SIR के कारण जो हमारी वोटर लिस्ट का क्लीन अप हुआ है, वो क्लीन अप के कारण आज इस प्रकार का वोटिंग हुआ है। तो मुझे ऐसा लगता है कि एक ये मॉडल तैयार हुआ है SIR का, और ये पूरे देश में करने की जो घोषणा इलेक्शन कमीशन ने की है, मैं तो उसका स्वागत करता हूँ।
आप स्वागत कर रहे हैं SIR का, लेकिन ये जो उम्मीद थी कि SIR की वजह से कटौती होगी, बढ़ोतरी नहीं होगी, आप कह रहे हैं कि टर्नआउट में बढ़ोतरी हुई है SIR की वजह से?
बिल्कुल, क्योंकि ये जो सारे नाम थे, जो कुछ डुप्लीकेट होंगे, कुछ गलत होंगे, कुछ बांग्लादेशियों के होंगे, कोई और किसी के होंगे, तो कुल मिलाकर उसके कारण वोटर लिस्ट जो होती थी वो फूलती थी। उसमें एक अननेचुरल इस प्रकार का नंबर आता था, विच वॉज नॉट द एक्चुअल नंबर। SIR के कारण एक्चुअल नंबर आया। तो आप, जैसे मैं मुंबई की बात करता हूं, हमेशा मुंबई का वोटिंग आपको 50% दिखता है। क्यों दिखता है? जिस दिन SIR हो जाएगा, उस दिन इसी लिस्ट के ऊपर मुंबई का 65% वोटिंग दिखेगा। तो ये हम करीब पिछले 25 सालों में हम लोगों ने हमेशा, हम लोगों ने मतलब इलेक्शन कमीशन ने ही, क्योंकि ये तो कोई पॉलिटिकल पार्टी का काम नहीं, इलेक्शन कमीशन का काम है, लेकिन इलेक्शन कमीशन ने पिछले 25 वर्षों में हमेशा समरी रिवीजन किया। और समरी रिवीजन में प्रॉब्लम ये होता है कि आप जैसे कोई शहर, अगर मुंबई जैसा शहर है, इस शहर में कई लोग ये माइग्रेट करते हैं। कोई कांदिवली में रहता है, फिर बोरीवली चला जाता है, कोई मालाड में रहता है, मुलुंड में चला जाता है। तो ये जब माइग्रेट करते हैं तो उनका वहां पर भी नाम होता है, और यहां जाने के बाद उन्होंने फॉर्म 9 भरकर या 8 भरकर अपना नाम ट्रांसफर करना चाहिए, वो नहीं करते, वो फॉर्म 6 भर देते हैं और अपना नाम यहां भी कर देते हैं। तो इसके कारण भी प्रॉब्लम्स होते हैं। कई बार कुछ लोग माइग्रेटरी लोग होते हैं, जो लोग अपना नाम डलवा देते हैं। तो ऐसी सारी चीजों का जो क्लीन अप होना चाहिए था, ये क्लीन अप पिछले 25 सालों में नहीं हुआ है, और उसके कारण हमारी जो वोटर लिस्ट है उसमें कई लोगों की संख्या बढ़ी हुई है। स्पेशली जहां अर्बनाइजेशन है वहां पर तो ये बहुत ज्यादा हुआ है। तो मुझे लगता है कि ये जो प्रोसेस अभी समरी की जगह इंटेंसिव जो रिवीजन करने का निर्णय ये इलेक्शन कमीशन ने लिया है, ये बहुत अच्छा है। और मैं तो ऐसा मानता हूं कि आने वाले दिनों में इलेक्शन कमीशन ने ये कंप्लीट हमारी जो वोटर लिस्ट है इसको ब्लॉकचेन में कन्वर्ट करना चाहिए, ताकि कोई भी व्यक्ति किसी भी राज्य से कहीं पर भी जाए, किसी भी जगह से कहीं पर भी जाए, तब भी वो आइडेंटिफाई होना चाहिए, ताकि एक नाम बार बार ना आए, या इस प्रकार से उसको भी आसानी रहे कि आज किसी को अगर नाम इधर से उधर ले जाना है तो यहाँ से वहाँ उनको फॉर्म भरना है, वो फॉर्म यहाँ आकर कटवाना है, ये बड़ी प्रॉब्लम्स है, तो वो प्रॉब्लम भी दूर हो जाएगी।
Since we are talking about elections, sir, आपसे पूछना चाहेंगे BMC elections, कॉर्पोरेशन के elections कब तक होने की उम्मीद है?
देखिए, इलेक्शन कमीशन ने जो इंडिकेशन दिया है उसके अनुसार जनवरी में वो इलेक्शंस होंगे ऐसा दिखता है, क्योंकि अभी हमारी जो छोटी कॉर्पोरेशन है या जिसको हम नगर पालिकाएं कहते हैं, उनके इलेक्शन ऑलरेडी घोषित कर दिए हैं। 2 दिसंबर को उसके चुनाव है, उसके बाद जिला पंचायतों के चुनाव होंगे और फिर कॉर्पोरेशन के चुनाव होंगे।
2 आखिरी सवाल आपसे पूछना चाहूंगी। एक तो यूएस के साथ जो हमारी बायलैटरल ट्रेड एग्रीमेंट की बात चल रही है, नेगोशिएशंस अभी फिलहाल चल ही रहे हैं, आपके स्टेट को भी इससे काफ़ी डिफिकल्टीज है, काफ़ी चैलेंजेस हैं, क्योंकि कई सेक्टर्स हैं जो टैरिफ की वजह से इम्पैक्टेड है। उम्मीद की जा रही थी कि एक एक्सपोर्ट रिलीफ पैकेज बनाया जाएगा, फिलहाल उसका कोई खुलासा हुआ नहीं है, तो आप स्टेट के लेवल पे इसको कैसे डील कर रहे हैं?
देखिए, जिस समय ये सारा टैरिफ वाला मसला हुआ, उस समय हम लोगों ने इसका हमारे ऊपर क्या इम्पैक्ट हो सकता है, इस दृष्टि से काफ़ी स्टडी किया। हम लोगों ने एक स्टडी ग्रुप भी तैयार किया। हमारा जो नीति आयोग का हमारा जो महाराष्ट्र अवतार है मित्रा, उसमें हम लोगों ने एक पूरा इसका कॉम्प्रिहेंसिव नोट तैयार किया। और जैसे प्रधानमंत्री जी ने हम लोगों को एक संदेशा दिया कि इसको आपदा मत समझिए, इसको अवसर समझिए, और 2 संदेश उन्होंने दिए कि लुक फॉर अल्टरनेट मार्केट्स और ज़्यादा से ज़्यादा ईज ऑफ डूइंग बिजनेस करके आप जो कॉस्ट है बिजनेस की, कॉस्ट ऑफ डूइंग बिजनेस शुड बी ब्रॉट डाउन, सो दैट इसका इम्पैक्ट बिजनेसेस जो है वो उसको एक प्रकार से सहन कर पाए। तो हम लोगों ने ये प्रयास किया कि जहाँ एक और अल्टरनेट मार्केट्स क्या हो सकते हैं, इसका विचार भी हम लोगों ने किया। और साथ साथ हम लोगों ने एक मिशन हाथ में लिया कि 100 बिग रिफॉर्म्स, और 100 बिग रिफॉर्म्स के लिए हम लोगों ने एक कमेटी तैयार की और एक वॉर रूम तैयार की, और एवरी मंथ दिस वॉर रूम इज मॉनिटरिंग द रिफॉर्म प्रोसेस। सो हम लोग 100 बिग टिकट रिफॉर्म करना चाहते हैं, जिसमें से करीब 23 हम लोगों ने कर दिए हैं। और इसको जो वॉर रूम है, मैं खुद उसको संचालित करता हूँ। सो सीएम्स वॉर रूम ये इसको ट्रैक करता है कि भाई ये रिफॉर्म हुए कि नहीं, इसकी प्रोसेस हुई कि नहीं, प्रोसेस होने के बाद वो नीचे तक पहुंची कि नहीं, इसको हम कर रहे हैं। तो मुझे लगता है कि निश्चित रूप से हम लोग इसको अवसर के रूप में इसका इस्तेमाल करेंगे। बड़े पैमाने पर हम ईज ऑफ डूइंग बिजनेस करेंगे, कॉस्ट ऑफ डूइंग बिजनेस को नीचे लाने की कोशिश करेंगे, और नए मार्केट्स ये हम लोग ढूंढ रहे। और हमको तो मतलब हम ढूंढ रहे का अर्थ है कि बिजनेसेस ही हमको कहते हैं, हम लोगों को सिर्फ उसमें जो हर्डल्स है, उसमें जो उनकी अड़चने हैं, उसको हमको दूर करना पड़ता है, वो हम लोग कर रहे हैं। तो मुझे लगता है कि निश्चित रूप से हम लोग इस इम्पैक्ट को सहन करेंगे।
आपने कहा कि 100 में से 23 रिफॉर्म्स, आपके जो 100 रिफॉर्म्स का प्लान है वो हो चुके हैं, तो बाकी कब होंगे सर?
नहीं होंगे, क्योंकि देखिए ये एक लंबा प्रोसेस होता है रिफॉर्म का, और इट इज नॉट जस्ट अ रिफॉर्म ऑन अ पेपर पर रिफॉर्म करना बड़ा आसान होता है, लेकिन उसको सिंक इन करना, उसको नीचे तक पहुंचाना, उसके लिए एंड टू एंड इस प्रकार की व्यवस्थाएं खड़ी करना, ये भी करना पड़ता है। तो हमने प्रयास ये किया है कि अगले पूरा मतलब हमने 1 साल का समय दिया है 100 रिफॉर्म्स के लिए, उसके बीच हम कर लेंगे।
आप प्रयास की बात कर रहे हैं, और मैं जानती हूं कि आप बहुत ट्राई कर रहे हैं कि आप स्टार्टअप्स को भी महाराष्ट्र में एक स्टार्टअप हब बनाएं। अभी अमिताभ कांत जी स्टार्टअप से बात कर रहे थे, दिल्ली में है, बेंगलोर में है, मुंबई से कोई नहीं था सर। तो स्टार्टअप्स को बॉम्बे में और मुंबई में शिफ्ट करने का आप किस प्रकार से आगे प्रयास करेंगे?
आपने अमिताभ कांत जी का ट्वीट नहीं देखा? आप जब स्टार्टअप इंडिया का रिपोर्ट प्रकाशित हुआ तो अमिताभ कांत जी का आप ट्वीट देखिए, उन्होंने ट्वीट किया हुआ है, स्टार्टअप इंडिया के रिपोर्ट में स्टार्टअप कैपिटल इज नॉट बैंगलोर, इट इज नॉट हैदराबाद, इट इज महाराष्ट्र, इट इज मुंबई। बाय एब्सोल्यूट नंबर्स एंड बाय एब्सोल्यूट इन्वेस्टमेंट महाराष्ट्र ही नंबर 1 है स्टार्टअप में। इसलिए हाँ, लेकिन और हमको करने की जरूरत है, वी कैन नॉट बी कॉम्प्लेसेंट। लेकिन आप ये समझ लीजिए कि आज देश का स्टार्टअप हब ये महाराष्ट्र ही है।
तो आप क्या मैसेज देना चाहेंगे सर जाने से पहले, बिफोर वी स्टार्ट द फेलिसिटेशन? You've got startups, you've got industry leaders, you've got students. What is the message that you'd like to leave with them about Maharashtra?
देखिए, हमारी तो टैगलाइन है, महाराष्ट्र रुकने वाला नहीं है। We are not going to stop. और ये आप समझ लीजिए कि भारत की जो एक हमारा प्रधानमंत्री जी का मिशन है विकसित भारत 2047, उस विकसित भारत 2047 के साथ हमने विकसित महाराष्ट्र को अलाइन किया है और पूरी ताकत के साथ हम महाराष्ट्र को एक ग्लोबली कॉम्पिटिटिव इस प्रकार का स्टेट इस रूप में हम देख रहे हैं। और ये करते हुए मैं एक कहना चाहता हूं कि मैं ये नहीं कहता कि हर चीज में वी आर द बेस्ट, और भी कई राज्य हैं जिन्होंने बहुत अच्छा काम किया है। तो महाराष्ट्र में हम लोगों ने ये पद्धति रखी है कि जिस राज्य ने जो अच्छा किया है हम उससे वो लेते हैं और उससे अच्छा करने का प्रयास करते हैं। तो हमारी कुछ मामलों में कंपटीशन अलग अलग राज्यों से और कुछ मामलों में हम अलग अलग देशों से भी कॉम्पीट कर रहे हैं। तो वी वांट टू बी ग्लोबली द बेस्ट।
सबसे ज्यादा कंपटीशन विद इन द कंट्री आपकी किसके साथ है सर?
नहीं,
Who's your fiercest competitor?
मैं ऐसा नहीं मानता किसी के साथ। इट्स हम लोग तो कॉम्पिटिटिव फेडरलिज्म में हैं, तो इंडस्ट्री के मामले में अगर हम विचार करें तो गुजरात है, कर्नाटका है, तमिलनाडु है, इसके साथ हमारी कंपटीशन चलती है। अगर आप अलग अलग सेक्टर देखिए तो अलग अलग सेक्टर में अलग अलग लोगों के साथ कॉम्पिट। लेकिन एक बात आप ध्यान में रखिए कि अल्टीमेटली वन ऑफ द इंडिकेटर इज एफडीआई, और एफडीआई में महाराष्ट्र हैज कंसिस्टेंटली बीइंग नंबर 1, और इट्स नॉट जस्ट नंबर 1। अगर आप देखिए तो हमारे बाद के जो 3 राज्य है उन 3 राज्यों का मिला के जितना एफडीआई है उससे ज्यादा एफडीआई अकेले महाराष्ट्र में आ रहा है। सो वी आर द नंबर 1।
Devendra Fadnavis ji, thank you so much for joining us here. May I request you to please remain seated,
Sure.
sir?
Thank you.
We have a special moment coming up. Thank you very much. Ladies and gentlemen, the Chief Minister of Maharashtra, a big round of applause for
Thank you.
stating his vision for his state and for the country.
Thank you.
Thank you, sir, and thank you, Shireen, for that comprehensive discussion on where Maharashtra is headed. Request the both of you to kindly remain on stage for a very special felicitation. Ladies and gentlemen, tonight we pause to honor 2 individuals whose contributions have fundamentally shaped India's economic and social infrastructure. The CNBC-TV18 Global Leadership Summit recognizes them as icons of excellence of the Indian economy. Shireen, requesting you to kindly read out the citation.
Privilege and honor to read the citation for the guests that we honor this evening. Mr. Shaktikanta Das has been a steady hand guiding India's economy through some of its most turbulent years. Appointed as the 25th Governor of the Reserve Bank of India in December of 2018, Mr. Das brought to the role over 4 decades of administrative experience and a reputation for pragmatic leadership. During his tenure, the RBI navigated the NBFC crisis, the pandemic, and the global monetary tightening with remarkable stability and foresight. He strengthened financial resilience, advanced digital innovation through the digital rupee and UPI's global expansion, and deepened financial inclusion. He also championed sustainable finance through India's first sovereign green bonds and encouraged climate-conscious banking. Earlier, as the Economic Affairs Secretary, he played a pivotal role in GST implementation and bank recapitalization. Mr. Das's leadership has earned him international acclaim, honored as the Central Banker of the Year Asia Pacific 2020 by the Banker London, the Governor of the Year 2023 by the Central Banking London, and rated A+ in the Global Finance Central Banking Report Card for 2 consecutive years of 2023 and 2024. For his visionary guidance of India's monetary and financial system and for strengthening the credibility and resilience of the Reserve Bank of India, CNBC-TV18 is proud to honor Shaktikanta Das as the icon of the Indian economy. May I please request you to join us on stage, sir, and I please request the Honorable Chief Minister to do the honors. Ladies and gentlemen, a standing ovation would be fitting for one of our icons here this evening.
Congratulations, Mr. Das. Requesting Mr. Das's daughter Akanksha to please join us on stage for this very special moment. Akanksha, can we please have you on stage?
We have proud daughters joining us here today, and here's Dr. Das's daughter standing with her father. That's a wonderful surprise for you, sir. Mr. Das, congratulations, sir. What an absolute honor it is to have you with us. I'll take that, sir. Thank you very, very much. You've had a long journey, a long tenure, spanning different roles and responsibilities. As you look back at your own career, sir, how would you narrate your life story?
Thank you very much, everyone, for being here. In particular, let me first thank CNBC-TV18 network for giving me this recognition. It always feels nice to be back in this platform of CNBC. I have interacted with this channel over the years, and it's always a great pleasure to be back. And I'm equally delighted to receive this felicitation from Honorable Chief Minister Maharashtra, Shri Devendra Fadnavis ji, who over the years has taken many landmark initiatives, not only in the field of infrastructure, but also in all-round economic development of Maharashtra. And one point which I was listening to him very carefully, one point which he has identified and which he stressed is the role of Maharashtra in the context of the national economy. I think it is India first, and if every state grows, India as a country will grow. And that is the point which the Honorable Chief Minister has stressed. Now coming to you, Siren, to your point, it's my 45th year in public service, starting as a civil servant in the IAS in 1980. So over the years, I have derived a great amount of satisfaction. I have worked in multiple fields, but primarily in the areas of infrastructure, industries, and of course, finance and economy. Wherever I have gone, it has been my effort to try and put in my best effort to make a difference to the situation, to make a difference to the life of the people, and to make a difference to the stakeholders of the post which I have held. And God has been very kind, and I hope to continue with the same endeavor, with the same amount of commitment in the years to come also.
We wish you the very best of luck with that, sir. But before I let you go, a word on where you see India poised today, on course to become the third largest economy. But given the global environment as well as our own ambition and our aspiration, what would you think we need to prioritize?
3 points I think I would like to highlight. Number one, the overall, in the global context currently, when the world order is changing, when the rules of international trade are being rewritten, when multilateralism is being replaced by regional agreements and by bilateral agreements, given the current uncertainties all around, both geopolitical and economic, Indian economy continues to be sound, stable, and resilient. That's the first point which I would like to mention. I can back it up with a series of factual details, but in the interest of time, I'll leave it at that. Second, the goal of Viksit Bharat, that is making Indian economy as an advanced economy by 2047, it's very much on track, and the Honorable Prime Minister has set the roadmap. You would have seen, just think of 2025, the kind of reforms which have been taken, GST, next-gen GST reform, which were undertaken recently. The Prime Minister talked about it on 15th of August from Red Fort. And within 5 weeks, on 22nd of December, the next-gen GST reforms were implemented with the cooperation of all the states. So the second point I want to mention is that the goals of Viksit Bharat, the roadmap has been laid. Several reforms this year have been undertaken, not only in GST, but also in non-financial sector deregulation, for which a high-level committee has been appointed. So in the days and months to come, you will see a series of reform measures relating to ease of doing business, relating to making Indian economy more competitive. All these measures will follow. So as the Prime Minister has pointed out on 15th August, I'm referring to that because that was really a moment which really marked a leap to the future. On 15th August, the PM recommended, PM stressed that reforms will continue with greater vigor. And thereafter, we had GST 2.0. Many deregulation measures are in the offing, and several other measures are in the offing. That's the second point which I would like to mention. The third, in the area of technology, in the area of artificial intelligence, in the area of startups, I think the future looks very bright for India. The young generation in India, not only in Maharashtra, with due respect to the Chief Minister, not only in Maharashtra, but also in smaller places, in Tier 2, in Tier 3 towns of states which are not known to have, to have been in the area of technology. You are seeing today great amount of transformation taking place in those Tier 2 and Tier 3 cities. So that journey, that process, I think holds a great future for India. And that becomes more important because jobs are getting created in the Tier 2 and Tier 3 cities. It will slowly spread to Tier 4. And not only that, it will also facilitate urbanization in more and more places. And urbanization by itself, as you know, acts as an engine of growth. So these are the 3 points which I would like to stress in the context of the current Indian economy. We are facing many challenges because of trade and other related issues. Many countries are facing, but every challenge is an opportunity, and I'm sure the current generation and the future generations of India will treat this, and not only this, but future challenges as opportunities and capitalize on them to take India towards 2047 Viksit Bharat. Thank you.
Before I let you go, so I'm going to borrow from the Chief Minister. He said for the state of Maharashtra, we've only seen a trailer picture abhi baki hai. As far as the country is concerned, sir, in the PMO's war room, is the measures that we've just seen also the trailer picture abhi baki hai?
You will see many steps. Let me leave it at that. Thank you.
Dr. Shaktikant Dadas, thank you so much for joining us, sir. Congratulations, and what an honor it is to have you join us here. Thank you, sir.
And I'm also equally happy to receive this award when many of my friends in Mumbai, with whom I developed this excellent relationship in the last 6 years, they're here. And also, as I mentioned, the Chief Minister is here. And also, I'm very happy because my daughter, Dr. Akanksha, is also present here. Thank you.
Thank you, sir. It is indeed a very special moment for us. Once again, sir, thank you very much. Congratulations. And we will come back to you.
Well, thank you so much.
Ladies and gentlemen, it is time now for our next icon. Dr. Pratap C. Reddy is the architect of India's modern healthcare revolution, a visionary who turned a personal calling into a national mission. Guided by compassion, conviction, and the belief that quality healthcare is every citizen's right, he redefined what was possible in a nation where access and excellence once seemed worlds apart. A cardiologist by training, a reformer by spirit, he founded Apollo Hospitals in 1983 and transformed it into one of Asia's most trusted healthcare institutions. Over 4 decades, Dr. Reddy's leadership has been defined by foresight, innovation, unwavering commitment to inclusion. He's made preventive healthcare a national priority, championed rural telemedicine, and introduced the 1 rupee a day community insurance model. He established policy platforms like Nat Health, advocated for universal health coverage, and launched the Total Health Program, a holistic initiative integrating physical, mental, and social well-being. Honored with the Padma Bhushan in 1991, the Padma Vibhushan in 2010, amongst India's highest civilian awards, Dr. Reddy has received global recognition for his visionary leadership and social commitment, for his visionary stewardship, for redefining healthcare with heart and purpose, and for exemplifying service through leadership. CNBC-TV18 proudly honors Dr. Pratap C. Reddy as the icon of the Indian economy. Ladies and gentlemen, he's 92, he's still here, and he's still doing what he's passionate about and what he loves to do. Thank you so much, sir, for being here today. Thank you. Dr. Reddy, it is truly an honor to have you here with us on this stage. And as I mentioned, for every Indian, what you've done as far as the healthcare sector is concerned to make private healthcare accessible, good quality private healthcare accessible. Thank you so much on behalf of all citizens, Dr. Reddy. What keeps you going at 92 to still have the passion, to still have the perseverance, Dr. Reddy?
I think it's not perseverance, it is seeing the happiness. When I came back from US, I saw the healthcare was absolutely, not accessible for the people, only a few people, 1%. As I told then Prime Minister saying, 1% of rich people can go abroad for treatment, or the government sponsors a small number. This is what made me sad. Was, if Indians, when I was in US, I was as good as any doctor anywhere there. And I said, well, we have that brilliance in our people. Why can't we give health care for all our people? So this is not easy, but I'm happy. I started the first hospital in Chennai. Today, we have 75 hospitals. That's not only my happiness. My happiness is there's another 300 big hospitals here. And of course, after hearing the Chief Minister talking about Mumbai, I must assure him I'll have a beautiful hospital coming up here, one more beautiful hospital coming up here very shortly. We'll start. But the thing is, when you gave me this award, I must say, I accept it on behalf of the entire family. Yes, my daughter, my wife, my daughters. But it is the number of people who got the, this kind of treatment. It is their trust that makes me whatever I am today. Even today, as I said, I work maybe on Sundays. I don't go now. Previously, Sundays I used to go home for lunch, but now only Sundays I take off. But I have the brilliance of the entire lot of people. My daughters are working so hard, and there are a number of professions. More than anything else, it is the power within them. The care, compassion which they give. In clinical excellence, we are on par today with any hospital anywhere in the world. This is where I told our Prime Minister, I told him two things. I wrote two letters to him. Two things in my letter. One is that saying India today is equivalent to any our hospitals in India or world class in our outcomes. I'm a cardiologist. We've done the world's largest number of cardiology procedures in Apollo. And in healthcare, it's not numbers. Our outcomes are better than the best centers anywhere in the world. Similarly, I told him there's a huge shortage of healthcare people in the world. About 8 million this year. By 40, 30 million people, only India can give this. So he only changed. So I call it global healthcare and the global workforce, but he immediately changed the word saying, we will call it as Heal India, Heal by India. And it's not giving an interview for me and my daughter and my wife, but it is the action that he took. They told me he spent another 2.5 hours, after 1.5 hours, he spent another 2.5 hours to direct the various ministries. And look, when you saw this budget, she announced saying, there are 70,000 additional healthcare people will be traveled. They opened 40 medical colleges last year. They're opening a few more colleges this year, 100 nursing schools, and from 70 admission, 300 per institution. So this is the spirit, the dynamism of the Prime Minister and the action taken by various ministries. So it will make India proud, because as I said, already 150 countries are coming to us. I must give you an instance which is very striking recently. About 6 weeks ago, on the same day, 2 air ambulances came. One from Sweden, one from New South Wales. Both patients were unconscious. They were told that, it's very serious, nothing more can be done. I'm happy to say the first patient who had the myocardial fluid in the thing, he recovered within 4 weeks and went home. The other patient who had a burst of pancreatic burst and unconscious, the mother cried for me first time when I saw her, but about one week ago, she brought the son, and she said, she again cried. This time she cried with happiness. And the boy said, I want to come next time and meet you. I'm walking and shake hand with you. So this is what happened. I think that is what keeps you going. But what I'm saying is, as our Chief Minister was saying, he's proud of the development that Maharashtra is doing. I'm very happy that Indian healthcare is now matched with the rest of the world and will make a huge impact on the economy and the development of not only keeping people healthy, but I think it will keep, the 30 million people will serve in India, here in India, when they come here for treatment, healed by India, by these 30 million people going abroad. And more recently, my youngest daughter, she connected the hospitals from across the world to manage from Hyderabad. So healed the world from India. So I think this is the spirit that's happening. And it's not just Apollo. There are wonderful hospitals in India. So I feel so happy. It was not easy to go through in 1983, the first hospital when it came. Before that, I must have had several hurdles. But I think that first hospital, and today, we're opening almost every year. Next 3 years, we'll have another 10 hospitals. But that's what, the country needs. And as I said, I want to say, I'm proud as an Indian, and India will be proud of its healthcare.
We are certainly proud of what you've been able to achieve, Dr. Reddy, and it's wonderful to see your daughters and, of course, Mrs. Reddy here with us as we honor you. They're taking your legacy forward. So thank you very much, Shobna and Sunita and Mrs. Reddy, for also joining us here. Ladies and gentlemen, a big round of applause. Thank you very much, sir, for joining us here this evening. Many, many thanks to the Honorable Chief Minister. Thank you so much, Mr. Fadnavis, for taking time out to join us here this evening. Thank you, sir. Thank you so much.
Well, congratulations, Dr. Reddy, and thank you so much, Shri Devendra Fadnavis, for joining in and facilitating our two guests. Well, in some time, we're going to step into a conversation where artistry meets legacy. Don't miss the session as Deepika Padukone and Sabyasachi Mukherjee explore the power, vision, and global footprint of Brand India in an unforgettable discussion.
Well, moving on, from founders building billion-dollar enterprises to the capital that fuels them. That's the other side of India's growth story, because even the boldest ideas need resilient capital behind them. And right now, that resilience is being tested. Interest rate pressures remain elevated and deal activity has slowed, forcing investors to rethink the balance between risk and return in real time.
That brings us to our next conversation. To lead this discussion, I call on stage Surbhi Upadhyay from CNBC-TV18. And joining her are leaders who viewed this shift from very different vantage points. Mr. Vishal Mahadevia, the Managing Director and Head of Asia Private Equity at Warburg Pincus, Joydeep Sengupta, the Senior Partner at McKinsey & Company, and Amit Shetty, the CEO of Embassy REIT. Please join me in welcoming them with a round of applause.
Good evening, ladies and gentlemen. We'll just wait for a second, let the photo get over. We have icons amidst us this evening. All right, ladies and gentlemen, so we have a very, very interesting conversation lined up ahead. How to build resilient capital in a volatile world. And volatility is the only constant in this world. in an era where tariff headlines come at such a furious pace that sometimes it's even difficult for us in the news business to keep pace with the change of things, geopolitical changes, and then, of course, the volatility in the market itself and the tech disruption that is forcing business to reimagine and redefine the way they are operating. So in all of this, how should companies, entrepreneurs, capital and investors, how do they build resilience in their models? That's what we're going to focus on. And I have with me experts from their respective domains. Of course, Vishal Mahadevia needs no introduction. He would definitely know something about capital, a thing or two, considering he's got, I think, $10 billion at last count, which is invested in India. And then we have the McKinsey view coming in from Joydeep. And then, of course, the REIT story, which is unfolding at a rapid pace in India. We're going to discuss that with Amit. So, let me open with you, Vishal. Is life more dramatic and hectic over the last 6 or 8 months, or do you still manage to find peace and take peaceful decisions when it comes to capital allocation?
So firstly, thank you for having me join this terrific panel. I just want to just step back and say how inspiring it is to have heard the stories, to see Dr. Reddy, to hear our Chief Minister, Amitabh Kant, Shaktikant Das. How can you not be excited to invest more capital into Maharashtra and India just after hearing that? Yeah, to answer your question, look, the last 6 to 8 months...
I think that deserves a round of applause, guys. Yeah.
Look, I would say, forget the last 6 to 8 months. I feel the last 6 to 8 years has been hectic. And the hectic nature of what's happening geopolitically around the globe, that's just been happening. If you go back and look pre-COVID, post-COVID, we referenced the crisis here for NBFCs. There's always something or the other. But patient capital has always been interested in India, and I actually see that today, the amount of investors, private equity, private capital that is looking for opportunity in India, I've never seen it as much as it is today.
That's good to hear. There's also a lot of that patient private equity that's made some very sweet returns and it's exiting, and we'll talk more about that as we go forward. But, Joydeep, from your lens, when we talk about these times, and there's disruption in every sphere, right? Capital flows, markets, business decisions, tariffs. What is your definition of, resilience and maybe the first step towards building it?
So thank you for that. And the two things I would say that really struck me over the last couple of years. First is, I think if you look at what companies are dealing with, and I think the range of disruptions are immense. First is at the macro level, right? So it's enormous, just the macro changes, the geopolitical moves that are happening. Second, the technological disruptions that you alluded to and we heard from our last panel. And finally, I think just in terms of talent, right? People are, the revolution of talent, the change in that mix which is happening. So one of the things which I think we've seen successful companies now really focus on is much more around what does it take to be resilient, and adaptability as a leadership trait is becoming something which people are increasingly focusing on. How do you move nimbly? How can you be more agile in the face of this, as opposed to thinking long-term in terms of drawing a big roadmap? It's much more about building a strong ship that can navigate when the waves are rough.
Interesting. So agility is no longer a choice. It is the new normal that you have to be.
It is,
you have to
indeed.
build and be with.
Indeed.
Okay. Your thoughts, opening thoughts.
In terms of resilience, for us as a REIT product, look what the pandemic has done for us, right? We went through a black swan event, and we consistently delivered, right? We've delivered, growth plus yields, right? Which is really hard. And in a space where, globally office markets was a bad word, Indian REITs have actually delivered. And I think testament to the fact is now new capital as well as old capital is returning back. If you just see the diversity of the cap table that we have about 40% of FPIs in our book. And we have about 350 global fund houses. And there can be hedge funds versus, long funds, indexes, sovereign wealth management funds. So, you see the gamut of it. So I think, the story for us is just very strong. And I think we're just at the beginning of this event because it's a very new product in the country. It's about, 2019 was the first REIT that got listed. And, look what's happening. This space is now about 176 million square feet. The AUM is about 2,25,000 crores, market capitalization of 125,000 crores. And look where the US is, right? So I think it's a great story for us.
Since we're on the subject of REITs, let me actually, ask you a little more on that. I think, like we discussed in the previous panel as well on real estate, that the total assets under REITs in India is still a small sum by that stretch, right? Only about 20 billion. Now, as real estate, which is a capital guzzling sector, as it looks for options, how will REITs compete with the other traditional sources of capital, which are also available to at least grade A developers?
See, the REIT is actually a product that's been launched for the masses. It's an annuity product, right? So if you just take a comparison of US, what's done in the US is 98% of commercial real estate is in the REITs, right? And it's, the penetration on the market cap in the stock exchange is about 4%. In the Indian side, it's about 18% or 19% of the total commercial real estate is listed in the country, square feet mark in the country. And we're going to be the fourth largest. And I think about 35-40% of that stock is actually REITable as we speak today. But, 19% is where we are. And I think, just from that, for the next 5 years, the growth story is so imperative simply because there's an organic side of the story, which is the existing supply that's there. Plus, there's about 50 million square feet that gets added year on year. So that's the inorganic side of the growth story. And I think, this 25 billion will graduate to about 50 billion in the next 4-5 years.
Interesting perspective there on REITs. Now, Vishal, I want to come back to deals and capital, because whatever's been happening in the secondary market, it might be a flat year, etc. There has not been a day when we've not had a deal headline in the Indian market, right? And both inbound and outbound. What have you made of the absolutely hectic activity here? And what's private equity thinking when it comes to either taking a call on mature investments and, of course, taking a call on new potential investments here?
Look, I think as I started out by saying, as you look at private equity around the world, and let's pick Warburg Pincus as somebody, the question for us is, how can we do more in India? We're always pushing ourselves for how we can do more. And I think that asset class, private equity as a source of financing, has really matured in India. Entrepreneurs today are not asking the question, why should I take private equity? They're asking the question of, how can I take private equity to help grow my company, build a bigger business? And I'd say the virtuous cycle has actually closed because we're investors. We invest behind strong entrepreneurs and terrific management teams. And I'd mentioned this before. Really terrific management teams today are entrepreneurial. They want to leave their jobs and say, let us start something. Let us do something entrepreneurial with private equity backing. And without that, we can't find deals to do.
Is there, on that, because this was an offline conversation I was having with a deal maker here in India, and there was this debate about whether the animal spirits in India are dimming to an extent. I mean, I go back to reference that Mr. Uday Kotak made, a couple of quarters back, saying that now people are more interested in, selling stakes and running family offices and running businesses, because, that could be a little troublesome in terms of finding the right, deals and...
I see zero reduction in the animal spirits of entrepreneurs. If you're asking about animal spirits in the stock market, I'm not the one to comment on that. But entrepreneurs in India are as aggressive, as excited about the future. And frankly, as a private investor here in India, I couldn't be more excited right now about the next 10 years of investing in the country. So there is no dearth of entrepreneurs, no dearth of investors. So I actually quite excited.
That's again reassuring. Let me ask you about how you're thinking, just to stretch that point. in terms of the activity. Of course, you guys made huge headlines yourself with the IDFC first, right? So clearly financial services you're looking at. But there have been a couple of exits as well, again from financial services companies, and there are still apparently some in the offing. So what, where is your core focus now in the near to medium term in terms of opportunities here?
So we've always invested in a few core sectors which we're good at. Thesis based, and like I said, it starts with the entrepreneur. Financial services, I think technology. One example of a company called Merrill. It's a company
in which you invested.
Yeah, we invested in it. It's in Vapi. It's the Bilakia family. Now, before I invested, I'd never been to Vapi in my life. Okay, my fault. But I met them. This company out there didn't even know existed. It's amazing. And in the last 3 years, the way they've grown, half their business is outside of India. They're doing deep, real medical technology. I'm talking about robots for surgery, automation. It's amazing to see what's coming out of India from an entrepreneurial standpoint.
That's fantastic to hear. I'm going to come back on the point of technology in just a bit. But Joydeep, come in on this. This is really heartening to hear because, we track the public listed markets as our daily bread and butter. And there's always this question about, earnings are not picking up and, top line is not growing. It's only about margin expansion. But how are you seeing Indian corporates, whether it's mature companies or mid-sized or even startups, adapt to the new normal? Because clearly there's appetite from people who have capital. So what would your, suggestion or recipe be to get that capital and to really get going with it?
So maybe I'll answer that in two parts. I think first is, you need, any corporate needs tailwind, right? And the Indian economy has got tailwind behind it. It's got growth behind it. And I think when you look at it from a investor lens and you look at both private capital in particular, today when we just completed a survey of LPs around the world and we interviewed across markets. And so far allocation in an India fund, if you made in a regional fund to India has been about 20%. People are looking to up that to about 40%, which means there's much more confidence in India as an investable destination. I'll come back to a glass empty view a little bit later, but let me stay with the positive narrative on this, because people do see 3 or 4 things which really stand out. I think people love the positive economic story. People love the entrepreneurialism in the companies. I don't think they see the lack of animal spirit yet, right? And they do see the emergence of what people call professional entrepreneurs. It's a new term which many LPs are now beginning to use, which is to say that, look, you had entrepreneurs which were typically businesses which were grown from first generation founders. Then you had the professionals, but now you have the professional entrepreneurs who really we want to bet behind. So that's a second element which is quite interesting. And in that context, your question on companies themselves, I think the companies are transforming. I think there is no company that we talk to which doesn't have transformation on the top of its agenda, right? Transformation in terms of the shift on technology is a big factor, right? Everybody is talking about digitization. There's nobody who doesn't talk of AI, whether they understand it or not. Everybody talks about it, at least, which is the first part. But there's a massive amount under the surface of reskilling and building up the capabilities that is going on, which I feel very confident about, therefore, the future of companies in India to adapt effectively to this change.
Now let's broaden this out to technology, because it touches everyone and all of the businesses that you all either invest in or deal with, and of course the REITs. The tech story is so important for that. So Vishal, to come back, and we can break this up. There's traditional, of course, IT services here. There are a lot of the new age internet companies, and we had some of those fantastic disruptors with Mr. Kant on his panel just a while back. And then there is this whole GCC piece, right? So the argument is that you have all this, but you don't have real cutting-edge AI in India, and you don't have deep tech in India, and therefore South Korea is getting the money, or Japan's getting the money, etc. Maybe China is getting the money. So, Vishal, what do you say to that argument? And how should investors and Indian entrepreneurs look at technology to be, well, global ready? I mean, from both an investment perspective as well as a business perspective.
Look, it's the biggest challenge. I've been saying it for a while. It's the biggest challenge India faces, not just India. I would say, look, as you look at AI, countries that have a large young population, and you think about the next couple of decades, how they harness AI. And that's why some of this near-term disruption, I'm not saying it doesn't matter, tariffs, global wars, but when we look back 5 or 10 years from today at India and we say, did we succeed or not? It will be, could we harness that power of technology well? Could we actually go to a nation of innovation from just services? So those are challenges that are real, they're happening. By the way, investors completely believe it. We're investing around the world. Are we starting maybe a bit late? But it's still very early in the game. So I look at India and I look at AI, I look at deep tech, I look at innovation. I think it's all just starting out here. I'm optimistic about it, but it is a challenge. And it's top of mind of not only the entrepreneurs, but all of us as investors as well as how do we play that?
And in the meantime, of course, we have our homegrown internet/platform companies. Many have already come to the market. Many are making their way to the market. And that's the hottest debate here. Valuations, have they reached the maturity, the size and scale? Are they leaving enough on the table? You're seeing this from a global Asian vantage point. What do you say?
No, look, I think valuation is always the question, but I think if you take a 5-year view, whether you pay, on some of these technology companies, whether you pay 10% more or less, frankly, it's not going to make it a success or not. We are investing, just pick data centers in India. It's an amazing business, and there's a long runway. The question is, how do you grow it fast? How do you execute it better? And we've just opened 2 data centers in Bombay. Right now, one of our portfolio companies, Princeton Digital Group. So as you look at AI, as you look at tech, as you look at the plumbing around it, I just see lots of opportunities. Valuation is not the constraint. Opportunities, entrepreneurial spirit, that really is.
Joydeep, what do you have to say on the great India tech debate?
No, look, firstly, I agree with the point made. But I do worry about one thing. And that is if you take a 5-year view and you look at the investment trends, it looks great. But if you take a 15-year view and then you take a look at all of the geopolitical moves that are happening, under the surface in the last 3 years, dramatic changes have happened. So let me give you 3 examples. Number one, I think the US, which was essentially a net investor, is effectively now the biggest investee in the world, right? 60%, 50 to 60% of total greenfield investment is going into the US. Advanced Asian countries, which used to invest together with the US and Europe into emerging markets, are now investing in the US. So if you look at South Korea, Taiwan, Japan, they're all investing in the US, right? You look at data center, and where are they investing? It's all in the new technologies, EV, renewables, data centers, of course, the whole fab area, right? Semiconductors. So if you take a 15-year view and you say that, look, these are the industries which effectively over a period of time are going to shape GDP, shape revenues, bring the next billion-dollar companies or the trillion-dollar companies, I worry that India doesn't get its fair share, right? In fact, I think India risks not having that kind of capital coming in because that is what will really build the foundation for the ecosystem around it to happen. So that's the piece I worry about. I'm not worried about the near term or the medium term. I worry about the long term.
Okay. That's an interesting point. Amit, on the issue of technology, and we were asking some of our other panelists on this as well, in an era where you don't know how US policy shapes up and whether that kind of slows down to an extent the GCC and offshoring drive, in an era where Indian companies are being forced to reimagine, so you don't know if workforce sizes start reducing a little bit. Where does that leave the, the look ahead for REITs and the promise of 15 to 16% IRR?
So, we've been doing a lot of conversations with our occupiers, right? So what I'm hearing is that India has the largest pool of data science, right, talent, the second largest pool of AI talent in the country, and the largest English-speaking AI talent, right? Now, if I just bring that to the GCC story, at the end of 2024, we had about 1,900 GCCs employing about 1.9 million workforce. And that's expected to grow to about, 2,000 plus 2,200, 2,400 GCCs employing about 2.4 million workforce. Now, one interesting fact is about 6,000 of the global jobs, the CTO jobs, are being performed from India. And that's expected to grow to about 30,000 jobs, right? India is now not seen as, a cost arbitrage country, but it's been seen as the innovation hub, transformation hub, where deep tech is actually being done. But, what we worry about is that there's a lot of jobs and a lot of work, a lot of technology being done, but we are not harnessing it as a country. Yeah. It's the large corporations which are harnessing that. And that's what's worrying us. You see the internet bubble or the internet era or the, the ITS era, all the companies were the US-led companies or they were Japanese companies, but, we didn't benefit despite the fact that the technology was getting built in our country.
I have one quick last question. I think we're running out of time, but Amit, this one's for you, the final word, because this is the biggest debate here in India, right? We've spoken about a lot of inbound investment and private equity interest in India. There are also big exits. Temasek going out of Schneider, that was a large, I think, $6 billion transaction, Carlyle with PNB Housing, and so on and so forth. So many examples last 12 months. So that always raises the debate that does the smart money know something? Is this market at prime valuation now? Or is it just a sign of maturity? Which side of that debate are you on?
Oh, it's completely a sign of maturity. You cannot get fresh FDI into the country unless you have successful exits. And every dollar that is exited, I promise you multiples of that will come back. I will sit with you on a panel years from today and we will look back, and that's a promise.
And which also then brings me to the whole debate around FDI itself, because FY25, gross FDI is about $80 billion. Net was almost flat. So again, it raises that issue of, what's really happening with net FDI.
You invite me back to your panel 3 years from today, we will have this conversation. There will be more FDI that you will see because of the exits.
More private equity investment, more FDI, resilient is the word from what we've heard on this panel. Thank you so much, all of you, for giving your insights. Thank you very much.
Thank you.
Well, thank you, all our panelists, as well as Surbhi, for that interesting discussion. Well, from the world of business, we move to another arena where discipline and dedication create leaders and legends. Sport. Our next conversation celebrates India's own champions, the women who just scripted history on the world stage.
Well, sport is the theatre of human resilience, then India's women cricketers have rewritten its script. From chasing dreams on dusty pitches to leading world finals, they've changed what aspiration looks like for a generation.
Just days ago, the Indian women's cricket team clinched the maiden 2025 ICC Women's Cricket World Cup, defeating South Africa by 52 runs in the finals. It was a moment of transformation, not just of sport, but for what Indian women in a sport can achieve. With us tonight are two players central to that journey.
And to lead this inspiring conversation, we have Shireen Bhan with us. And joining her are two champions who've lived that journey. Shefali Verma, Indian cricketer, ICC Women's Cricket World Cup 2025 champion, and Sneh Rana, the all-rounder whose bowling and fielding were pivotal in India's World Cup triumph. Ladies and gentlemen, please welcome them not just with a round of applause, but with a standing ovation.
We can do better than that, guys.
Over to you, Shireen.
Ladies and gentlemen, what an absolutely proud moment it is for us here at CNBC TV18 at the Global Leadership Summit to honor these two fabulous sports leaders. I'm not going to call them sportswomen. I am going to call them sports leaders because this Indian cricket squad has shown that gender doesn't matter, that these women were out there showing us their grit, determination, resilience, passion, perseverance, putting it all out there on the field. Shefali, आपसे शुरू करती हूँ. You were talking to the Prime Minister also yesterday, और वो आपसे पूछ रहे थे कि आप हंस क्यों रही थी कैच लेने से पहले?
First of all, thank you for the sweet gesture. Thank you all. And to answer your question, well, वो partnership बहुत ही ज़्यादा crucial चल रही थी. And हम सबको पता था कि वो partnership break करनी है. तो जैसी बॉल हवा में गई, मैं अंदर ही अंदर बहुत खुश होगी कि चलो, क्योंकि वो दोनों ना बहुत नीचे नीचे से खेल रहे थे. तो मुझे ये था चलो कुछ हवा में मारा, तो मैंने बोला आगी मेरे पास, आगी अब पकड़नी है, क्योंकि वो बहुत क्रूशियल था एज ए टीम हमारे लिए. तो यही था, बस हाथ में कैच आ गई, वो खुशी थी मुझे.
और जब आ गया कैच
फिर खुशी मिल गई, फिर मैं नाचने लगी.
Well, I'm going to request my colleagues Mangalam and Hormuz to also come up and join the conversation. But Sneh, आपसे पूछना चाहूंगी, that moment जब finally, मतलब semi-final तो हम लोग सारे, मतलब if the whole country was excited, the whole country was celebrating. But जब final में we saw all of you running onto the pitch, what was that moment like? आपके लिए वो जो moment था वो कैसा था?
First of all, thank you so much for having us here. And the moment was surreal. We are still feeling numb, actually.
Still feeling numb?
Yeah, still not sunk in. So it was amazing feeling. We have waited for so many years to lift that cup, and we have manifested so many things. So a little story: when we went to England and we met Charles King, and so few of our members were invited there. So 20 of us. So जो हमारा support staff था, they were left behind. So we all manifested कि चलो यहाँ नहीं हुआ, we will lift the trophy and हम अपने PM सर के सामने जाके सब लोग पूरा support staff के साथ जाएंगे. तो हमने वो manifest किया था उधर, and we are really grateful and happy कि हम लोगों ने वो moment create किया और आप सब लोगों को ये खुशी दे पाए.
You know, आपने वो manifest किया और कर भी दिया. Ladies and gentlemen, in 2023, CNBC TV18 honored the Indian cricket squad, and Harmanpreet then said, "We will win the World Cup." So clearly, आप लोग manifest ही करते रहते हैं और फिर manifest करके दिखा भी देते, deliver भी कर देते. तो ये collective manifestation होता है कि individual?
कलेक्टिव भी होता है और इंडिविजुअल भी होता है, और मैनिफेस्टेशन में वाकई एक बहुत बड़ी पावर होती है. क्योंकि पर्सनली मैंने एक नोट बनाया था, एक वर्ल्ड कप और चैंपियंस ट्रॉफी उसके आगे बनाई थी, एंड मैंने उसमें लिखा था वी विल विन इट फॉर देम. और 27 सितंबर का वो नोट है, और वो मेरे पास
27 सितंबर का वो नोट है. Do you have it with you?
अभी नहीं है, बट फोन में मेरे पास पिक्चर है उसकी. और जब वो फाइनली हमने कर दिखाया तो आई वाज लाइक ओके, it has some power.
So now that you've manifested this, you've delivered this, what next? What are you manifesting now?
Now party. Now we'll enjoy for sure.
Now you'll enjoy, but आप क्या manifest कर रहे हो?
Now I think as a cricketer सबका सपना रहता है वर्ल्ड कप जीतना. अभी हमको ये हैबिट बनानी है कि हम पूरे देशवासियों के लिए हमेशा कप लाने की कोशिश करें.
Making winning a habit, and that mindset, Shefali, that's what I want to talk to you about. How do you create that winning mindset? What are the attributes that create and make a champion? What do you think?
Well, I think मैं हरियाणा से हूँ, तो absolutely वहाँ एक अलग ही जोश रहता है जीतने का. और शायद हम जब से बचपन से पैदा होते हैं एक ही चीज़ सिखाई जाती है हमें कि टॉप पे रहना है और हमेशा जीत का ही सोचना है, कभी अपना नहीं सोचना, अपनी टीम का सोचना है. तो आई थिंक वो बचपन से आप कह सकते हो, मेरे पापा की मेहनत कह सकते हो, एंड आई थिंक खेल खेल के भी समझ आ जाता है कि अगर आपकी विनिंग माइंडसेट रहेगी तो आप अलग ही दिखोगे. तो वही मेरा हमेशा रहता है, विनिंग माइंडसेट से रहना है.
You know, the families matter, and we saw Harmanpreet's father was there, and you know, it was literally like watching a child with her dad. आप लोगों की जो families है, it's not easy doing what you've done. It's not easy breaking barriers. It's not easy breaking boundaries. Uske bare mein bataiye. Tell us a little bit about how your family stood up for you and what the reaction now is to your victory.
See, back then when I started my cricket career, women's cricket लोग समझते थे exist ही नहीं करता है. और बहुत सारे हम लोगों को अपॉर्चुनिटीज़ भी नहीं थी इतनी और इतनी फैसिलिटीज़ भी नहीं थी एंड ऑल्सो बीसीसीआई के अंडर भी नहीं था विमेंस क्रिकेट सो इट केम अंडर बीसीसीआई इन 2006 एंड वहाँ से विमेंस क्रिकेट में कुछ चेंजेस आना चालू हुए मैचेस टेलीवाइज होना चालू हुए मिथाली राज झूलन गोस्वामी हरमनप्रीत कौर अंजुम चोपड़ा इतने सारे नाम हैं लेकिन उनको कोई जानता नहीं था कोई रिकग्नाइज नहीं करता था क्योंकि टेलीवाइज नहीं होते थे मैचेस बट आफ्टर ये बीसीसीआई ने जो स्टेप लिया उसके बाद सब लोगों को वो रिकग्निशन मिलना चालू हुई एंड जो ड्रास्टिक चेंज आया आई फील इट्स आफ्टर 2017 वर्ल्ड कप जो फाइनल्स में हमारी लड़कियां पहुंची थी उसके बाद जो ड्रास्टिक चेंज आया विमेंस क्रिकेट में वहाँ से जो ग्रोथ हुई है आई थिंक इट्स मैसिव.
It is massive. And, you know, what you talk about, Mithali, Julan, for me, one of the most memorable moments of that winning night will be to see Mithali, Julan and Anjum and all the other previous generation of cricketers being celebrated by these wonderful sports leaders because it is on their shoulders that they stand. Shivali, जैसे कि स्ने बता रही थी, you know, matches were not televised. There were no role models, so to speak, because people didn't really talk about them. People didn't showcase their stories. So what motivated you? Who inspired you?
आई थिंक फर्स्ट ऑफ ऑल जैसे स्नेहदी ने बोला मैं वहीं से स्टार्ट करूँगी कि जितने भी हमारे एक्स क्रिकेटर थे उस टाइम पे ना कोई टेलीविजन होता था ना कोई इतना मनी होता था हम तो गोल्डन पीरियड जी रहे हैं मेन चीज़ तो उन्होंने कमाई है और हम यहाँ खड़े हैं हम सबकी वजह से खड़े हैं एंड आई थिंक मोटिवेशन की बात करोगे सबसे पहले मेरे पापा ने लुकअप करने को सचिन सर को ही बोला था क्योंकि वो ऑब्वियसली मास्टर है क्रिकेट के तो पापा ने यही बोला था कि उनको लुकअप करोगे तो अलग ही दिखोगे फिर आई थिंक मेरे हमेशा सचिन सर रहे हैं एंड मेरी फैमिली का बहुत ज़्यादा सपोर्ट रहा है आई थिंक विदाउट इनकी भी जितने भी हम टीम मेंबर्स हैं किसी सबकी फैमिली ने बहुत सपोर्ट किया है एंड आई थिंक उन सब की वजह से हम वर्ल्ड चैंपियन बने हैं आज.
You know, Shireen, I have to ask her about something. When you're talking about the contribution from the family, at the same time you said that, you know, they did not differentiate between genders, etc. The one thing that her father did, and when she was a child, deliberately cut her hair short, make her look like a boy so that she could play with all the boys. And at the same time, then the boys wouldn't differentiate as well, and that's what made her game. She speaks about Sachin Tendulkar. The one who followed Sachin Tendulkar was Sehwag, and that's her role model as well. 87 runs in a World Cup final, 2 wickets. मतलब ऐसे टाइम पे जब आपका खेलना भी शायद पॉसिबल नहीं था वो तो डेस्टिनी ऐसी थी कि आपको चांस मिल गया और आप उस चांस में आ गए तो मैं ये भी जानना चाहता हूँ कि डेस्टिनी पे आप कितना बिलीव करते हो और वो क्या रोल आपके लाइफ में प्ले किया है.
सी डेस्टिनी आपको तभी मिलते है जब हार्ड वर्क करते हो. मैं पिछले एक टीम के साथ नहीं थी उस टाइम मैंने बहुत ज़्यादा हार्ड वर्क किया एंड आई थिंक भगवान ने उसी हार्ड वर्क का मुझे पेज ऑफ दिया और जब मैं टीम में आई मेरे दिमाग में यही था टीम इंडिया को जिताना है कैसे भी एंड जब हम वर्ल्ड कप जीते ये सिर्फ हम सबकी नहीं पूरे वुमेंस क्रिकेट की विक्ट्री है. आज के टाइम जैसे मैंने बाल कटाए किसी लड़की को नहीं कटाने पड़ेंगे और हर एक स्टेट में वुमेंस क्रिकेट की अकेडमी खुलेगी तो सबसे ज़्यादा खुशी इस चीज़ की हमें.
मुझे ये लगता है कि किसी लड़की को बाल नहीं कटाने पड़ेंगे हम लड़कों को बाल बढ़ाने पड़ेंगे आपके अचीवमेंट के कुछ आसपास भी आने के लिए. और जब टीम में नहीं होते हैं जब टीम में होते हैं तो ऑब्वियसली टीम का माहौल बहुत अच्छा होता है. जब टीम में नहीं होते हैं तो अपने आप को कैसे मोटिवेटेड रखते हो अपना डेली प्रैक्टिस कैसे करते हो ये सोच के कि कल मौका मिले या नहीं मिले वो मेंटल स्ट्रेंथ कहाँ से लाते हो?
उस टाइम पे तो मेरे दिमाग में यही था कि इतने साल बाद मुझे अपने आप पे काम करने का मौका मिला था तो मेरा यही था कि यहाँ से जब मैं जाऊँगी टीम इंडिया में तो मैं अलग प्लेयर दिखनी चाहिए एंड आई थिंक वो टाइम ने मुझे बहुत कुछ सिखाया और आई थिंक जब बैड टाइम आता है और उसके बाद सब प्लेयर आई थिंक अलग निखर के आते हैं तो आई थिंक बैड टाइम से कभी भी कतराना नहीं चाहिए. अच्छे टाइम पे आई नो सब खुश रहते हैं बट जब हमारा डाउन टाइम आता है उस टाइम पे अपने आप पे बिलीफ रखना इट्स नॉट ईजी. मतलब यहाँ खड़े होके बोलना बहुत आसान है बट जब मैं उस दौर से गुजरी मुझे ही पता है कि मैं हाउ डज आई फील कैसे मैं डेली अपने आप मोटिवेट रखती थी. बस मेरे दिमाग में यही था कि मैं कभी भी कुछ भी भगवान करा सकते हैं और जब से मेरे साथ हुआ कि मैं टीम में एंटर की हूँ उसके बाद तो मतलब कभी भी कुछ भी हो सकता है. जैसे आप सबको स्टोरी पता है कि मैं वर्ल्ड कप में भी नहीं थी ना ही 15 में थी और ना ही स्टैंड बाइज में थी एंड आई थिंक ये मेरे लिए एक मैजिक प्ले था. मेरे पूरी लाइफ में कभी भी मेरे साथ ऐसे बिलीफ नहीं हुआ और मैं सुनती थी कि मैजिक होता है लाइफ में होता है तो मेरे साथ कभी नहीं होता बट जब मेरे साथ ये हुआ मैंने ये जान लिया कि मैजिक बहुत बड़ा रोल करता है और कभी भी हार्ड वर्क से मत डरो, हमेशा अपना बिलीफ रखो.
As they say, right, it's meant to happen. It will definitely happen. So firstly, Shafali Snape, thank you for giving us the honor of calling you all world champions.
Thank you, sir.
And no, I take his point forward as well, right? आप दोनों टीम से बाहर रहे काफ़ी वक्त तक और स्नेह आपने अपनी कमबैक 5 साल बाद की एक टेस्ट मैच खेलकर और एक टेस्ट मैच वुमेन्स क्रिकेट में इतनी फ्रीक्वेंटली आज भी नहीं होती तो कितना डिफिकल्ट होता है टू स्विच ऑन एंड स्विच ऑफ फ्रॉम वन फॉर्मेट टू अनदर बिकॉज आप डोमेस्टिक्स खेल रहे थे जब आपकी कमबैक हुई आप भी डोमेस्टिक्स खेल रही थी आप T20 खेल रहे थे तो टू ट्रांजिशन फ्रॉम T20 टू ODIs एंड टू ट्रांजिशन फ्रॉम प्लेइंग ODIs टू अ टेस्ट मैच कितना डिफिकल्ट होता है एक स्विच ऑन स्विच ऑफ मोड रखना एक क्रिकेटर के लिए बिकॉज तीनों फॉर्मेट्स जो है बहुत अलग है एक दूसरे से.
सी फर्स्ट ऑफ ऑल तो जब आप कोई भी इंसान किसी स्पोर्ट्स में स्टेप इन करता है तो उसको ये एक्सेप्ट करना बहुत ज़रूरी है कि हमेशा आप हाई पे नहीं रहोगे. लो आएगा आपकी लाइफ में बट आप उसको कैसे मैनेज करते हो कैसे बैलेंस करते हो वो आपके ऊपर है. और जहाँ तक बात रही मेरे कमबैक की यस 2016 में मैं इंजरी के कारण टीम से बाहर हो गई थी. फिर उसके बाद मुझे 5 साल लग गए इंटरनेशनल क्रिकेट में वापसी करने के लिए. एंड उसी दौरान आई लॉस्ट माई फादर इन 2021. जब ये मुझे न्यूज़ मिली कि मैं वापस से इंडिया टीम में आ गई हूँ सो आई कुडंट शेयर विद हिम बट यस उनका आशीर्वाद कहीं ना कहीं मेरे ऊपर रहा होगा. और जिस टेस्ट मैच की आप बात कर रहे हैं वो मेरे लिए बहुत ही स्पेशल है क्योंकि एक मोमेंट ऐसा था कि इंडिया का थोड़ा सा ऐसे ही चल रहा था मतलब वो हार भी सकते थे वो मैच बट दैट 80 नॉट आउट नॉक और मेरे जो 4 विकेट्स थे वो मेरे लिए हमेशा स्पेशल रहेंगे क्योंकि उस टाइम पे मैं एक्चुअली बताऊं तो मैं एकदम नम थी मैं लॉस थी बिकॉज 1 महीना भी नहीं हुआ था मेरे डैड को एंड आई वॉज प्लेइंग देयर इन इंग्लैंड. सो मुझे लगता है कि शायद वो पार मेरे डैड ने मुझे दी एंड मैं आज जो भी हूँ जहाँ भी हूँ ही गिव्स मी द पाथ और मैं वो बस फॉलो करती हूँ. ही इज़ माई गाइडिंग एंजल. और जब भी मैं एक चीज़ बताना चाहूँगी कि जब भी मैं विकेट लेने के बाद ऐसे करती हूँ तो आई थैंक हिम actually.
Wow.
So that's the whole story.
And it's lovely because I saw you posting on Instagram a picture of you holding the World Cup saying, "This is for you, Papa." So, you know, for all the proud fathers out there, what a fabulous story and what a fabulous legacy these wonderful women leave behind. But एक और मैं आप लोगों ने एक मैनिफेस्ट किया था एक टीम का सॉन्ग था कि आप तभी गाओगे जब आप वर्ल्ड कप जीतोगे, राइट?
Yes.
So now that you won the World Cup, you have to do the honors for us here on the Global Leadership Summit stage.
And
नहीं
the entire audience is your team today. The country is your team today.
I think you can play it here because वो इतना special है कि हम
नहीं
live गाना
लाइव गाना और प्ले करना है
one line whichever line you choose.
It's Team India, Team India. कर दे सबकी हवा टाइट. Team India is here to fight. कोई न लेता हमको लाइट. Oh, our future is bright.
Our future is bright, ladies and gentlemen. The wonderful Sneh and the wonderful Shafali Verma. Thank you so much for joining us here at the Global Leadership Summit. What an absolute honor it is. A big round of applause to these wonderful sports leaders joining us here at the Global Leadership Summit.
Thank you so much. Thank you so much.
Thank you.
Thank you.
Thank you.
As well as hormones. Well, let's keep the sporting spirit high for our next discussion that we're going to be having.
Sports, it's where nations compete on equal terms, where merit decides outcomes and a single moment of brilliance can move an entire generation. And as India's sporting ambitions grow, from hosting global events to winning for the world stage, the voice leading the Olympic movement carries weight.
Well, Kirsty Coventry, President of the International Olympic Committee, a 7-time Olympic medalist representing Zimbabwe, one of Africa's most decorated athletes, and today, the woman leading the institution that unites the world every 4 years.
Well, she's recorded a special address for the CNBC-TV18 Global Leadership Summit 2025. Let's listen in. Well, moving on. We've discussed artificial intelligence several times today, its deployment in operations, its potential for the global south, how it's reshaping digital leadership. But now let's step back and ask the bigger question. What's actually being built? What architecture is taking shape that will define the next decade?
Well, it's not about what AI can do, it's about how we design it. The architecture being built today will decide not just the pace of innovation, but who participates in it and who gets left behind.
Well, joining this conversation are two industry leaders in conversation with each other. Please welcome someone who's helping global leaders navigate that very challenge. Jeff Walters, Managing Director and Senior Partner, Boston Consulting Group, in conversation with Michael Bhaskar, who heads strategy and communications at Microsoft AI, where the architecture for one of the world's most influential AI systems is taking shape. Ladies and gentlemen, please welcome them with a big round of applause.
Hello. Can I just firstly say, it's so good to be in India, because I honestly think India is the most exciting country in the world. And so even just coming here, I just sort of feel the buzz, I feel the energy. I think you feel alive coming to India. You see the epic scale of Mumbai. You know, in AI, we're often used to epic scale, but India always kind of has to make you refresh and think. So it's great to be here.
Yeah, absolutely. And I, would be amiss if I didn't, connect the AI theme in India as well too. And I think, picking up on that point, before we go into some other topics, we had this old narrative, which was, okay, when we had the original .com era, over 2 decades ago, that was something that kind of originated in Silicon Valley on the West Coast and then propagated over to Asia. I think with what's happening in AI today, while we do have different pockets around the world where the foundation models have leadership, in terms of, I think the AI adoption of how folks are bringing it into their daily life and how companies are bringing it into their workflows, actually on many metrics, India is a leader in this area, right? So that energy is really connecting to this AI theme as well too.
Yeah, and I think, we need to come to that, the role of India in AI. I think just the way to open it for me is that, I've listened throughout the day, and all day we hear AI, AI, AI. You open a newspaper, you read about AI. You watch the TV, you hear about AI. And, if you're so immersed in it like me, occasionally you just think, God, are we going to get bored of hearing about AI? Why is everyone talking about it? I want to just stop for a minute and say, look around you right now. Look at every single thing in this room. Everything that you see was the product of intelligence. It was designed, it was built, it was arranged, it was moved. We're talking in language, as something that is innate to our intelligence. Intelligence isn't just another thing. It is the architect of our whole world. So suddenly to be able to recreate that, to copy it, to bottle it, that is something really significant. And I think that means it's not overdone. We're not hearing about AI too much, because this really is transformational to the carpet beneath our feet, the lights above us, to the content that we're looking at. It is everything. So that's what I sort of think. In big terms, that's all true. Do you think we're seeing that on the ground?
I think we're starting to see that on the ground. And I actually think there's potentially 2 waves of what's coming, right? So I think you're exactly right in terms of, yes, AI is a technology. So there's one frame of mind that says, oh, we have another technology trend that's here, right? But we actually, I would argue, in any of our lifetimes, have not had a technology that has such a profound, you could say, mimicking of intelligence, or you could argue of such a profound impact on how knowledge work is done. And you could say, yes, we were able to connect to the internet 25 years ago. We've had various things, but actually, if you think about how humans interact with the world around them, how they create, you say, value in society, right? A lot of it boils down to knowledge work, and we are at the very early stages of how this revolution is fundamentally changing knowledge work. It is, amongst some companies and some other entities, but we're just getting started on that. And I think the second wave, which therefore comes, is, well, knowledge work is the things that live in our heads for the most part. But as we start to connect and are already starting to connect some of these types of foundation models to the robotics as well too, that is where we have, some call it embodied AI, right? That connection between all this power that we are seeing and really interacting with in our computers right now, starting to actually have a direct connection to the physical world. And that is a wave which is just beginning to start and is probably going to pick up. But I think you've been seeing this in some areas as well too.
Yeah, so, what people are missing really about AI now is that, yeah, we're talking about a cognitive change. But what that cognitive change has already done is it's unlocked robotics. So, for the past, 40 years, we've had some success with robotics, but try to get a robot arm to pick up an egg. Try to get a robot arm to pluck an apple off a tree. Try to get a robot to cook your supper. Just can't do any of these things. But large language models, the transformer architecture, the things that have become the dominant paradigm in AI, it turns out they generalize to robotics. So, this is huge. So much of the world that we live in is physical. It's not just about intelligence, it's about intelligence coupled with physicality. And that's what we're seeing now. And I think we're also seeing another AI revolution happening. We've got used to ChatGPT, we've got used to Copilot, we've got used to language. That in itself is huge. When I first started going into AI, people thought language was decades away. It was just too complex, too nuanced. Now we're entering the agentic era. So now we have agents that are interacting with the world and that can do things on people's behalf. It's not just saying, it's doing.
Yes. And I think what's starting to bubble up is there are real agents being deployed today, and we're just starting to see the beginning of it. In our research, we find that there's probably only about 5% of companies in the world who are actually fundamentally transforming the way that they operate with AI. And if you look at what, I think we think of Gen AI, we think of what's been happening as I can do language, I can make images, right? But I will give you a manufacturing example, right? If I have an agent that thinks about how do I run the predictive maintenance of my lines, right? When should I take down certain machines, right, for maintenance because that's better off in the overall. If I have another agent that's working on production scheduling and planning, and I have another agent that runs both of those agents and says, how do I actually optimize across both of them? I suddenly have an incredible power in driving a new frontier of efficiency. If you go inside, that's a manufacturing example. If you go inside banks, if you go inside some consumer products companies, they are starting to actually deploy agents to do this, I would say, complicated but moderately low stakes work today. And it does fundamentally require a real rethinking and retooling of how a company works end to end, which is what we are just discovering on how to do, and we're really at chapter 1.
Yeah, so I think, what do you make of this? This is how we often think about this. Today in a company, you've got the employees. Tomorrow in a company, you will have mixed teams of human employees and agents. And so wherever you see a person, you're likely to also have a number, potentially a very large number of agents working with them. And so these frontier firms are going to be blends of agents doing loads of things, people coordinating those agents and instructing them, those agents reporting back. Do you see that as something that's happening or coming?
It actually is already happening, and you see even a few archetypes, right? You have agents that are going off and doing tasks defined by humans and then coming back and reporting, right? So therefore you could say humans intersecting with or managing agents. We will start to see agents which are smart enough to know when I have to ask the human for help. So actually humans are just a biological form of agent, right? And so indeed there are these mixed teams that are being created. I don't think yet, let's be clear, we're at the stage where fundamentally HR is managing agents, right? That's going a little bit too far in terms of where things are today, but actually rethinking through workflows in terms of what is best for agents to do, what is best for humans to do, what is best for them to do together, what is best for them to do separate. This is the new theory of work, which is just getting written right now.
So, basically then, if you think about it, we've touched on robotics and we've touched on agents. What we're looking at is a world that in the next, let's say, 3 to 15 years, is suddenly we've got people, we've got disembodied agents living in the cloud, and then we've also got humanoids or other forms of robots. So suddenly that's a very, very different world to the one we live in today. And that's why I think AI is so powerful. Is that going to lead to a massive boom in economic growth? I mean, personally, I think probably yes. Is there another narrative, or where are you?
Yeah. And there was, I almost thought it was a joke, but there was a paper that came out by one of the Federal Reserve banks in the United States, which basically gave 2 scenarios of GDP per capita in the medium term. And in one scenario, it grew exponentially to infinity, and the other scenario is we were eliminated by AI and therefore
And the third narrative was that it just kind of bumps along a little bit faster than now.
Which is the least predictive prediction you could possibly imagine, right? It's infinity, zero, or somewhere in between, right? But, you know, I think it's a very common statement now that we overestimate how tomorrow's going to change, but we underestimate the medium term. I mean, I am very optimistic because, you know, ultimately, I actually come down, if we just take the economic view and we think about the work that most people do every day, the majority of people don't enjoy the majority of their day at work, right? Everyone has, and if you talk to, I mean, everyone here is leaders in various contexts, you always feel short of great people and great skilled people, right? And so if we think about this AI revolution as saying, hey, why don't I take off the plate the work that people hate to do, and the work that is really not fully utilizing their skills as humans, right? That's a positive thing, right? And so I think what the human ingenuity will allow us to do and will allow everyone to do is actually take that kind of new equation of what work looks like, and then we reconfigure what economic productivity looks like. Now, are there going to be some difficult collisions, difficult transitions in that process? For sure, right? There is no question about that. But, you know, overall, we've found a way to deal with, I'd say, persevere and thrive to a new level in many of these revolutions. And I think AI is yet another one of those.
Yeah, it's that's how I think of it. Really, is it is of a magnitude. It's of an industrial revolution. One sort of critical thing in this that I think people are very aware of is who are the nations that are building it. And, you know, the truth in AI right now is there are 2 leading nations, the United States and China. And these are the countries that have the companies, and largely AI is being built and driven by private companies. They have the companies that are operating at the frontier and pushing at the frontier. But I honestly think that there is room, and there has to be room for a kind of third pole in this equation. And there are only 2 realistic players in the world who could do that. One would be Europe, and 2 is India. And of those 2, I would personally be betting on India. India has vast reserves of data, and data is the key to making AI work really, really well. India has engineering and scientific talent second to none in the world. India has the potential for scaling up startups in a way that's true nowhere else. Meanwhile, you know, Europe just simply isn't deploying anywhere near the amounts of capital needed to create AI. AI is expensive. Data centers are expensive. You need to be ambitious. You need to think in the future. And again, I think India is doing that. So India is incredibly well positioned, but nothing is written. Like, where are you on it?
Yeah, I mean, it's a great observation in terms of you have US, China, and then how do we think about where the other, I'd say, poles are going to be? And I think it's useful to break it down into a couple layers, right? We have oversimplifying, but we can think about there's a hardware layer, we have a foundation model layer, we have an application layer, right? And let's think in those regards. Obviously, things are quite concentrated at the hardware layer right now, right? They'll probably get less concentrated over time. And, you know, we face constraints at the hardware layer, but there's tons of capital going in, so I expect that becomes less of a constraint over time. You know, model layer really sitting with 2 poles, right? I mean, many of the frontier models, you know, we originated in the US, and then we have many highly cost-effective, highly practical models coming out of China, right? And then there's the application layer, which is how do I think about using all of this stuff, right? And when it comes to the model layer, I suspect we'll start to see innovation out of India for sure. And then the place where I think, there is infinite possibilities, the application layer, right? Because we're at this cusp here, right, of where the economy is, right, the growth of the economy, the very skilled and highly skilled workforce, the number of innovative companies in India, so much innovation is going to happen. And I think, it's in an interesting place to be able to both look westward and look eastward and see, we're not going to copy one or the other, right? But actually take the parts that make sense for here from both. And that's a very unique position that India has.
Yeah, and I think bring something distinctively Indian into the equation as well. I think it's far healthier for the world if we have sort of different forms of AI that somehow emerge from different cultures. And that's a really good thing. I guess, two other things that I think it's worth touching on. So, we were talking a minute ago about, how we will live in this kind of mixed ecosystem of agents, of robots, people. One way of understanding that, and this is a metaphor, so I don't want anyone to take it literally, but one way of understanding it is it's kind of like we're creating or building a new sort of species that will live amongst us. And so for me, just talking about this in terms of work or productivity, economics, that doesn't really capture the full sense of change that is going on. These are kind of things that people are already spending hours a day talking to. And, whether that's a good or a bad thing, that needs to be thought about. It's already changing how we create images or films, how we write, how we communicate, our media, our sense of who we are. And, I think that's just this really deep change. And, so there's the economic piece, but then there's just a wider sense of what's happening to us, to humanity.
Yeah, and I think we're already starting to see the interesting impacts on how we even interact as humans, right? To give the simplest example, and I'm sure many in the room would relate to this as well too, I've had multiple people tell me over the past couple of weeks, like, sometimes I get really angry because this person is not doing something I want, or in a personal, professional context. And one of the great things I use ChatGPT or Copilot for is, how do I take some of the emotion out of that or add some emotion into it, right? And think about how do I almost coach myself in my interactions. And so I think we're at the very early days, but you're right, it is not just about work, right? It's not just, of course, many folks are going to bring a productivity and ROI lens, thinking about impacts on economies, thinking about impacts on employment. Those things are all real, but they are real because we are fundamentally changing the way humans interact with each other and with the world. And that must have a broader and much more profound set of impacts.
So one thing that we talk about a lot at Microsoft AI on this front is a concept that we call seemingly conscious AI. And that is the point at which the models are so convincing that they're a person that people start to believe that they're conscious. So, the models have memory. They remember all of your interactions. They are communicating fluidly, naturally, with personality. They have goals. They seem to have goals that they are then pursuing in multi-step programs. All of these things are the kind of markers of consciousness that we look out for. And look, it's almost impossible that these models are conscious, but we worry that people will start to believe that they are. And so actually, designing AI, we have to design it very carefully so that it isn't pretending to be a person. It isn't pretending to be illusory. And I think, perhaps in the workplace as well, as companies do it, they need to find ways that these are complements to humanity.
Yeah. And that really connects, to one of the things that we talk about a lot at BCG, which is this principle, what we call the 10-20-70 principle. Because, I think we're both technologists. We get very excited about, exactly what's happening on the technology front. But when we look at how profound change happens powered by AI, and you think about, well, where, as a leader or a company or in a non-company context, where do I have to put my energy to make that change happen? 10% is actually, okay, what's the cool algorithm? What's the foundation model? It's important, right? But it's only 10% of the equation. 20%, which is a bit like the plumbing, is like, well, I've got to have the tech stack that means that I can scale this, means it can go to everybody. And really the big one is the 70. The 70% is how am I thinking about change management? How am I thinking about ways of working? How am I thinking about the human side of things? Because ultimately, and if I even go back to the narrow company context for a second, if I am trying to drive impact, if I'm trying to drive productivity, efficiency, or effectiveness, if I'm not changing the way that people work, I'm not doing anything. And so therefore, actually thinking through all of that, how humans and agents are working together, how I prevent some of an automation bias, a selection bias, all the biases that could emerge from the human side when that happens, that is a new science and a new art, right? Which I think we're all going to have to become accustomed to, because that's the new reality for us.
Yeah, I mean, we're barely scratching the surface here, but I think maybe there's a couple more things that it would be good to touch on. One, I think we share an opinion on this. AI, the biggest capex story of our time, hundreds of billions, maybe even trillions of dollars being spent. Is it a bubble?
Well, we are going to see certain bubbles in certain areas, but what's not going to be a bubble is the fundamental change to how we interact with AI, to how we work, to how knowledge work is done. So you can argue that there is some blips or steps back that markets will take over the coming years, but I think we share a view, whereas if we were to go stand 10 years in the future, 15 years in the future, we will look back and see those as course corrections on a fundamental change that continues.
Yeah, that's what I think. We had the dot-com boom, that was a bubble, but today the biggest companies in the world are the tech companies that grew out of that. What we haven't talked about here is superintelligence, the most advanced forms of AI. At Microsoft AI, we just launched a superintelligence team yesterday, building something that we call humanist superintelligence. If we can build that, and I think we can, and I think a lot of people are beginning to understand that AI that can build better AI is the route to doing it, then it's, as you say, there's ups and downs, but the course, the trajectory of the technology of where our societies and civilizations are going is pretty incredible.
Yeah, and maybe we could close and leave the group with one thought. Michael, if you had one piece of advice on how everyone can, I'd say, thrive and evolve in this journey with AI, personally, what would you recommend?
I think one, I would advise everyone, and probably everyone in this room and watching is already doing it, to engage with and use AI and find out how it can make you more productive, how it can enrich your life. That's one. And two, don't take your eye off it. It does need watching, it does need regulating, and it does need engaged citizens around the world who are going to push for the most responsible, the safest, and the best forms of AI that are about humanity. So please don't lose sight of that and keep pushing.
And I couldn't agree more, right? And I think maybe to close, right, probably, those who thrive over the next 5, 10, or decades are going to be regardless of where you stand today, regardless of how old you are today, wherever you are in your career and life, it's the rate of learning that matters. And the engagement with, the great thing today is anyone can learn anything about this with, all the tools that are out there. And even if you haven't written a line of code in your life, you could actually go make something with AI to help you. So it's an amazingly democratized type of technology. And then, we just encourage everyone to get their hands a little bit dirty with it and increase the rate of learning.
Thank you very much. Brilliant to be here.
Thank you.
Well, thank you, Jeff and Michael, for the perspective on where AI is actually headed versus where the hype is. Thanks a lot.
Moving on, as India's sporting ambitions grow from hosting global events to winning on the world stage, the voice leading the Olympic movement carries weight.
Well, Kirsty Coventry, the president of International Olympic Committee, a 7-time Olympic medalist representing Zimbabwe, one of Africa's most decorated athletes, and today, the woman leading the institution that unites the world every 4 years.
Well, she's recorded a special address for the CNBC-TV18 Global Leadership Summit 2025. Let's listen in.
Hello, namaste, and greetings from Lausanne. Dear Olympic friends, unfortunately, I could not join you in person at the CNBC-TV18 Global Leadership Summit. But at least we can speak remotely, and it is such a pleasure to be with you all today. It feels especially meaningful to connect with you in the Geo World Center, a place that holds great memories for us in the Olympic movement, as it hosted the IOC session just 2 years ago. This summit is about the future of business in India, and you have every reason to look to the future with great confidence. The same can be said for the Olympic movement. After the unforgettable games in Paris, the Olympic brand has never been stronger. 9 out of 10 people around the world recognize the Olympic rings, and around 5 billion followed the athletes' inspiring performances last summer. Those athletes are at the heart of everything we do. Their stories of courage, resilience, and respect remind us what humanity is capable of, especially in our divided world. They show us what it means to get back up after defeat, to compete with integrity, and to celebrate shared success. The Olympic Games showcase the best of humanity, highlighting the values that unite us as one human family. The IOC has always been a values-based organization. For us, success is measured not only by profit, but by purpose, by the impact we can create for others. Yes, maximizing value is important, but only because we reinvest more than 90% of all of our revenues directly into sport at all levels, supporting athletes and communities worldwide. This values-based approach model sustains the Olympic movement and strengthens sport as a force for good hope. India already plays a growing role in this story. We have seen record athlete participation, millions of passionate fans following the games, and tremendous excitement across the country. With cricket returning to the Olympic program at Los Angeles 2028, the connection will only grow stronger, bringing the magic of the games even closer to the hearts of Indian fans. Our aim is to build on this momentum through partnerships that create shared value. Partnerships grounded in integrity, innovation, and social impact. Through the Olympic Partner Program and our broadcasting partnerships, our global partners bring expertise, innovation, and resources that support athletes and the organization of the Games, while helping share the Olympic values around the world. Here in India, we are currently conducting an open tender process for media rights. Our goal is to find the right partner to bring the magic of the Olympic Games to every corner of this extraordinary country. We look forward to building new connections with those who share our belief that sport and business together can open opportunities, foster inclusion, and inspire the next generation to dream bigger. As we look to the future, inclusion and gender equality must be at the heart of that vision, in sport and in business. This is a topic very close to my heart. As the first woman to serve as the IOC president, I know from experience that no organization or country can afford to leave behind the skills and talents of half of its population. When everyone has a fair chance to contribute, all rise higher together. In this Olympic spirit, I wish you every success with your summit. I look forward to learning about the outcomes of your discussions and to exploring how India's business community can help advance our shared mission of making the world a better place through sport and its values. See you soon, and hopefully next time in person. Goodbye, everyone.
Well, thank you, Kirsty, for that inspiring message. As we near the end of a day defined by ideas, markets, and technology, it's time to talk about something just as powerful: identity. Because brand India today isn't only built in boardrooms or labs, it's being shaped on red carpets, runways, and the global stage.
Well, it's the story of how culture becomes commerce, how heritage meets innovation, and how India's creative voices are defining luxury, wellness, and the purpose for the world.
And to lead this much-awaited conversation, we have Shireen Bhan with us. And joining her are two icons who've already taken India's artistry and authenticity to the world. Please welcome Deepika Padukone, an internationally acclaimed actor, producer, entrepreneur, and mental health advocate whose influence spans cinema, business, and global culture. From Pathan to the Oscar stage, she continues to define what it means to be a true global icon. And Sabyasachi Mukherjee, founder and creative director of Sabyasachi, whose design language has become synonymous with Indian luxury across the globe. Ladies and gentlemen, please welcome them all with a thunderous round of applause.
Yeah, don't hold back. I know this is the moment that all of you have been waiting for. That's the one question that we've been asked all day today. When is Deepika coming? When is Sabyasachi coming? So here they are, ladies and gentlemen. A big round of applause for Deepika Padukone and Sabyasachi Mukherjee. Thank you very much for joining us for the closing session of the second Global Leadership Summit. Without further ado, I don't know how many of the people in this room know, she's been your muse in many ways, Sabya, and I know we spoke about that previously as well. When we last spoke, you said that there's only one person from the world of Bollywood that's ever graced your runway, and that was Deepika Padukone. What is it about Deepika that's so magical?
Well, I think Deepika truly is India's biggest cultural mascot. Everybody from all over the world know who she is. She's bringing the world to India, and if you look like that, it really helps too, because, Deepika started with fashion. And I've always said that, if I wanted to put somebody on the runway, it has to be somebody who has a fashion background as well. But more than that, I think there is no stronger cultural ambassador of the country like Deepika. And it was an honor to have her walk the show. Thank you, Deepika.
Well, from one ambassador of Indian art and culture to another, Deepika, do you remember the first time that you met Sabya?
Yes, I remember the first time I walked for Sabya. And this was one of the many fashion weeks that were happening. I think it was in Delhi. At that time, we didn't have so many, then there was one in Bombay, one in Delhi, whatever. Anyway, this was in Delhi. And this was a very different Sabyasachi. And
how different?
Evolved. He's evolved today, right?
He's evolved now.
He's evolved now. And I mean, he's evolved. I wouldn't say he's different. Even today, if I think back on that work and that show, I still see Sabyasachi in it. But I'll never forget, it was basically this slick, pulled back, like choti, like a bun, like a braid going at the back. And all of us models had to take a black sketch pen or like a marker and draw a mark in our teeth to make it look like we were buck teeth. And big, like reading glasses. If you Google it, you'll find it.
Yeah.
That was the very first time I walked for him. And even back then, I just remember that this designer was very, very special. So yeah, that was my first interaction. I then bought a sari from that collection, which I still own, by the way.
You did?
Yes.
Well, I think that tells us things about both of you. And Sabya, I'll start with you. This idea of wanting to stand out and not fit in, this idea of wanting to disrupt. And I think that's something that the two of you have in common as well. Both of you like to challenge the status quo. And Sabya, I want to start by talking to you about that. I mean, who would have thought that a designer would actually get models to ink their teeth with a sketch pen before they go out there? I mean, what were you thinking?
Do you remember that?
I do. It was called the Nair Sisters. And, when I was growing up, I was an awkward child. And, when you're awkward and when you're unseen and you're unheard, there's a majority of us who feel like that. And I always think that beautiful things and most important things in the world are built with relatability. And I think the underdog is always relatable. And that's not something that's ever glorified in fashion. because it was my life, my story, and I wanted to bring that out. And like I said, that I think you build beautiful things by including people and not excluding them. I know I have many conversations on that when people say I can't afford your clothes, but I've always built the brand on public ethos. So that was probably the beginning.
That was, and that's interesting that you talk about it. And Deepika, I want to ask you this in your own context of what you've been able to achieve as an actor, now as an entrepreneur, and more importantly now as an activist in the field of mental health. And of course, you're now the brand ambassador for the government's program on mental health. And we were together shooting in Chhindwara just a few weeks ago. And, there's a lot of good work for the last 10 years that Deepika and her foundation have done in that space. But this idea of inclusion, this idea of relatability, I mean, those are not ideas that one associates necessarily with the world of celebrity, with the world of Bollywood, where everything is larger than life. How do you make yourself relatable to an audience like this? How do you make yourself relatable off-screen and on-screen?
How do you make yourself relatable? I mean, I don't know how to make myself not relatable. By just being. And I think even the craft expects that of me. I think when the camera's rolling, I'm not performing. I think there's a moment between action and cut where you find the truth. And I think when you find that truth and you hit that note, it's the most beautiful feeling. And I think I try and achieve that truth in everything that I do. Any kind of inauthenticity really bothers me. I cannot sleep. It's something that'll keep playing on my mind. So I think that deep need, like we've spoken earlier, that deep need to be truthful and honest and authentic, I think is where relatability comes in. And I feel like with every character that you play, there is a little bit of you. There is a little bit of me, at least, in every character that I've played. So you take what is written by the writer, the vision of the director, but that's how an actor comes in and makes it special. There's no role that no actor can do. Everyone can do everything. If I'm not in a movie today, somebody else does it, it will be as special. But also, what I can do, that other person will not be able to do, because I'm bringing myself into that. And I think that's what makes it relatable and authentic.
Which character so far in the movies that you've played is the closest to Deepika?
Oh, closest? There are a few. I think Piku. Not necessarily the journey of Piku yet, but I think just in terms of performance, a little bit of Ye Jawani Hai Deewani. So I think it's difficult to pick one. I mean, if I had to really pick one, I think it would be Piku.
It would be Piku.
Yeah.
But the other thing that ties the two of you together, Sabya, is the fact that you've both been very patient about building your brand, about building your craft. I want to start by talking to you about that, because it's taken, 25 years for you to very studiously put together what you've been able to create. I mean, that was a strategic choice, right?
It was, but that was the only choice. Because I think when you want to build something beautiful, or you want to build something that lasts beyond your lifetime, I mean, whether it's somebody in performing arts, somebody in fashion, somebody in architecture, you really have to build it with the right vision. I remember I was in Barcelona and I was watching, I'd gone to see Gaudi's Sagrada Familia, and Gaudi is long gone, it's still being built. And I saw the monumental scale of the church, and I sat down and I started crying. And somebody just passed by, and he looked at me and said, "It happens to everyone." And then I realized that, when you build something with a lot of love, even if you're not there anymore, there'll be forces from around the world who'll support your vision and take it to completion. And it's very, very important for all of us to realize that there is only one way to build something. It could be, sometimes the road is very long, very narrow, and very lonely. I mean, you can ask Deepika, she's been on the top of her industry for a very long time, and I'm sure it's a very painful and a very lonely existence, because when you're at the top, nobody really understands you because you're the only one up there. But having said that, I would rather take that lonely road than do something that's fast and quick, because then you're building nothing.
Has it been a lonely road to the top, Deepika?
Of course, and it requires incredible amount of patience, because it takes that long to, I think when you're authentic and being truthful to who you are, sometimes I think that journey takes longer. And I think there are always ways to get to wherever you want to, or create whatever you want to, or build whatever you want to. It's always, there are ways, I think, to do it faster. But I think it requires patience if you want to do it in the most authentic manner. Yeah.
You know, there's lots of similarities here. Both of you believe very strongly and very firmly in bringing the world to India and taking India to the world. I mean, you know, you're the brand ambassador for a whole host of global brands. You're now the voice of Meta AI, and we'll talk about AI in just a second. But this idea of taking India to the world, how much of that is a passion and a deliberate choice for you?
It's very, very, I mean, I would say it's very deliberate in the sense that, and I think that's again where patience comes in, because I think I was very clear about taking India to the world, but the India that I know. For example, I think moving to Hollywood and trying to get into that industry like that, or do it in a way that that has been expected of us, or do it in a way that suits a global audience, was something I was very clear I didn't want to do, even if it meant it took longer. Sorry, the question was?
Yeah, so, you know, this idea of taking India to the world and bringing the world to India through your craft.
Yeah, so I think what bothered me was every time I went to the West, this sort of idea of India that is, you know, so different from the India that I know. And all of those cliches, I've experienced it firsthand. Whether it's when it comes to casting, whether it's our accent, whether it's the color of my skin, I've experienced all of it firsthand. And I was very, very clear that I wanted to do it my way and on my terms. And so did it take longer? Yes, it did. So, you know, I was doing an interview recently where they brought up the Louis Vuitton campaign that I did. And those hoardings were all across Sunset Boulevard, I remember. And I happened to be in LA at that time. And it felt weird, but I felt incredibly proud at the same time to see a brown face on a hoarding for a global luxury brand, because I had never seen that before. And that moment for me didn't feel like a personal victory. It felt like a victory for every Indian woman that needs to be seen in the way that she should be seen. So, yes, has that journey taken longer? Yes, it has.
Sabya?
You know, we were ruled so many times. People from the West came and took everything away from us. But the thing that they actually took and they created this damage was our confidence and our pride in who we were. And then when you step back for a second and you start thinking about yourself as an Indian, it does fill you with a sense of arrogance. You know, I go all over the world. In every global summit that I go, I tell only one thing. I said, India is not a third world country. India is a first world civilization. Our civilization is older than many of yours. You've taken things away from us. You've called them yours. You've appropriated it. But I always think that, you know, like history repeats itself, time will always bring glory back and take you back home. And I think that's happening. You know, the power of resilience and the power of confidence shakes the most powerful people and the most powerful economies and the most powerful of politics all over the world. And when you learn to stand your ground and when you learn to speak with assertion, the way the world looks at you changes. And that's probably what's happened to Deepika as well, because, she stood in India, she became very, very powerful in this country. And like I said that, I tell everybody, nobody puts India in a corner anymore because we are one of the most powerful nations in the world. And the world will take notice of you at your own terms.
Well, yes, no, we're certainly not in a corner. We are clearly the bright spot at this point in time in a world which is mired with uncertainty and volatility. But AI and the voice of Meta AI, how did that happen, Deepika? And what's that been like for you?
How did that happen? I mean, it happened, but interesting also, no, that I'm someone whose voice was like sort of mocked when I came into the industry, and now suddenly I'm the voice of Meta AI. Strange.
Well done.
But and my accent, but I continue to own it, and I think that's probably how and why it happened. But I mean, what do I think about it?
Yeah.
AI or how?
AI. I mean, there's all kinds of disruptions on account of it, including what is likely to happen to the film and entertainment world. People are now talking about dishing out AI movies in a matter of days, forget weeks or months. So as somebody from the industry, do you see that as an exciting opportunity? Do you see that as a threat?
No, I'm so excited about the possibilities. The only thing I'm not sure about, I'm not saying. Actually, I'm going to say that with a lot of confidence because I truly believe it. The only thing I believe it cannot replace is human emotion. I think that's the only place AI will not be allowed or will not be able to match up. Can it do a similar job? Yes, maybe. Maybe it's not there yet. I don't know. So barring human emotion and how an actor would emote, because you can't infuse soul into AI. You can't infuse, yeah.
Not yet anyway. Not yet anyway.
But I believe that. In that department, I'm a little bit of an old soul, right? So I'm someone who's all for like embracing everything that is new and forward and all of that. But just when it comes to the human soul and emotion, I have a feeling that is irreplaceable. But outside of that, I'm very excited for what the possibilities are.
Sabya, are you equally excited, or do you also look at it with some trepidation and nervousness? Because, you can churn out designs quite literally in a matter of seconds. There's existential questions being asked of the film world, of the entertainment world, of us in the media world, of ad agencies and so on and so forth. So how do you look at what's happening in AI and what it means for human creativity?
See, two things. Firstly, the human mind will constantly evolve. Secondly, AI is necessary for many things to drive efficiency in fields where efficiency is required. But in art and craft and in the business of emotions, like we say, whether it's fashion, architecture, food, films, I think AI will never be able to replace human beings because, you see, what's happening to the world right now, if we look at, I was born in 1974, so I've seen it all. So I've seen the invasion of the internet. So it was the age of information. Then it became the age of influence. The age of influence has now become the age of intelligence. But we are finally going to the final frontier, which is going to be called the age of wisdom. Because human beings will understand the importance of being human again. I did a show for which Deepika walked, and a lot of people didn't understand. I had put slogans on T-shirts which said "Table for one," all dressed up, nowhere to go. Where has love gone? Anybody home? This is what the internet has done to us. For all the smartness of human evolution, we have learned to do everything, but we have forgotten to be human. We can't build relationships anymore. Our relationships are built on the internet. We pass on the internet, we fail in the real world because we are living in isolation. And I think AI will quickly tell you how terrifying that is. And, I say that evolution takes care of everything because the human mind and the human body will learn to cope and will learn to fight and will learn to survive. And we can only survive if we are human beings. So AI, the threat of AI, at least in the creative industry, is very short term because people will realize the importance of being human and will start rejoicing human emotions again.
Well, we hope that that certainly happens to be the case. But I want to ask you, because you talked about evolution, Deepika, at the start, and you said Sabyasachi has evolved and is a very different person today from the time that you first met him. How have you evolved? How do you now look at success? How do you look at ambition? Have those words taken on a new meaning as you sit here today, after the journey that you've covered so far?
Yeah, of course, and I think it should for everybody. But I think as a young girl, when you're growing up, success is, what is success? Success is the fancy car that somebody's driving, or the home that someone lives in, or the lifestyle that they have. You know, I think that as a young girl, what is your friend bringing to school in her
tiffin box
versus what are you bringing, and things like that. So if someone brought some chocolates from abroad, it was like, oh wow, she's really wealthy. But as you get older, you start realizing that success and wealth are, for me today, success truly is if I can wake up in the morning alive, without feeling a bout of like anxiety or depression, for me personally, because I've been through that journey. So I think my mind and body working at 100%, that for me is success. And I think the second most important thing for me is time. I think it's our most valuable resource, but also scarce in that sense, limited. So today for me, success is, how do I manage my time? How do I spend my time? And who I spend my time with. Today for me, that is success.
You know, you talked about just wanting to wake up, knowing that you can operate at 100%. And I know it hasn't been easy for you to come out there publicly to talk about what you've had to go through as far as dealing with anxiety and depression is concerned. But today, as you've become the brand ambassador for a government program, it validates the effort that you've put in over the last 10 years, does it not, Deepika? I mean, how do you feel at the end of this?
I mean, it kind of is a full circle almost, from people questioning my intent. And I remember we had spoken about this very briefly, from people questioning my intent to thinking I was being paid by pharmaceutical companies to promote an illness, to people thinking that this was a publicity stunt for a movie of mine that was releasing, my foundation and its work being questioned because of the way we appeared, and we didn't look poor enough to be an NGO. So we've been through all of that. And I remember thinking to myself and saying to the team, all we have to do is, we know we're honest in what we're doing. All we have to do is put our head down and continue to do the work. And I think that's what we've done over the last decade. And that's why we were here. That's why we were there in Chhindwara. You were there to see it firsthand. And I think that our commitment and honesty and consistency is what has led today the government to recognize that as well. And I'm happy that I have the ability today to spread even more awareness and help the government's cause, I remember walking into one of the homes in Chhindwara and they were surprised. They didn't know that my foundation...
Yes, I know for a fact that they didn't know that you were behind the foundation.
They didn't know that we were behind that work. And then when I made it even more personal and told them that I'm still on medication today, and, and the gentleman sitting next to me was my psychiatrist, it just, their eyes lit up to know that even someone like me is experiencing something exactly that they're experiencing. So I think with the government's help, I think to be able to go into every home is obviously going to amplify my purpose, if I may say.
Success, ambition, what do they now mean for you, Sabya?
There is a time when you're hungry for success, and so much of success is public. It's about living the big life, having the recognition, but then slowly and slowly success becomes internal. And that's when you move away from success to excellence, because excellence is something that you do for yourself. You compete with yourself. You don't do it for the world anymore. I think in 25 years, I've done what I needed to do. I'm going to spend the next 25 years excelling, because I think that's a more private journey. And also in making sure that I create transition so that, when I'm not there anymore, the brand still lives. Because a lot of us hold on to what we have very selfishly and don't transition at the right time. When I sold my company to Mr. Birla, I told him one thing: Kumar, the company does not belong to you. It does not belong to me. It belongs to the country, because it gives courage to a lot of middle-class people that if you work hard, this is where you go. It drives ambition and hope. And I said that, we have to make sure that it lasts beyond our lifetime. So that is success for us. That's what we'll probably do.
Well, we hope that it is success that is timeless, not just for you, but also for us as a people. But, I want to get the last few minutes here, because we've had a lot of people sending us questions about what they wanted to hear from the two of you. So, Deepika, when we last spoke, you said that you see yourself as a disruptor. What is the most unconventional thing that you've done so far? Okay. Do you want to take a minute? I'll ask Sabya to think about that. Sabya, what's the most unconventional thing that you've done so far?
Well, my life was unconventional. For a middle-class Bengali boy who comes from a family of educationists and doctors, I decided to be a fashion designer. It can't get more disruptive than that.
It can't get more disruptive than that. It's pretty similar to you as well, Deepika, in many ways.
Yes, and I think that I often get into trouble also for being fearless and brave, but so be it. But I think a lot of my choices and decisions at every stage in my life, I think as a 16, 18-year-old to move with bag and baggage, to leave my family behind, to move to a city like Bombay, to enter the Indian film industry, I think that in itself, I don't think I realized what a big decision that was at that age. Today, when I think back, I was like, okay, that was brave. And more importantly, how lovely of my parents to let me go. And have that faith that, okay, she can take care of herself and to let me go, which when I think back is quite scary, if you ask me. Maybe certain film choices, maybe certain actions in that Deepika, the person, has made. And yeah, I think I'm always thinking about how can I, if everyone's moving in one direction, you'll always find me on the other side.
Always find you on the other side, is it?
No, but I have to tell you something about
Yes.
Deepika. I'm going to share something. I have seen Deepika at a time when she was not a movie star, she was a model. And I remember telling an assistant of mine, this girl is going to go places, because at that point of time, there was a lot of conversation that this girl is going to become very big. And she used to come, put her head down. She was everybody else used to chat. She used to sit at one corner, very quiet, very resolute. And, and I could see that she had an enormous sense of faith in herself. And, it's as outsiders, when you see somebody who's going to break into stardom, and you see that, and there's that special sense of serenity in those people, that they know where they're destined to go, and they're waiting for their time very patiently. And I saw that in Deepika, and look at where she is today.
Yeah, absolutely. Look at where she is today, at the top of your game, Deepika. So you've been patient. You've done the things that you wanted to do, but more importantly now, as you look ahead, the choices that you want to make, the creative expression that you would like to see yourself sort of take forward, what excites you today as an artist, as an entrepreneur? What could be the next big thing for Deepika?
I think, there's always more movies and bigger movies and all of that. I think I'm at a place today where I think I'm ready now to empower other talent. So in the form of actors, writers, directors, I think I'm ready to empower the next generation. I think that's
Which means what? Produce?
Yes, but I also want to do it in a way that has not been done before. And as we speak, I'm working with my team to figure how we do that. But really, I think to empower a whole new bunch of artists.
So it could be the creative hot spot that you're creating, the creative shop that you're putting together? And when do you think that you're going to be ready to reveal what this is going to be?
I mean, it's no revelation. I've already revealed it. But I think it's about doing it nicely, doing it well, and doing it in a way that is sustainable, not something that's like a one-off. So I want to do it nicely. I want to do it well. Hopefully, I can roll it out in the coming year.
Okay.
But emotionally, I feel that's where I'm at, because I'll continue to do what I do. I'll continue to act in movies. And movies are becoming today bigger and bigger and bigger. And, so there's all of that. And then there's the creative piece where it's really about storytelling. And so there's all of that. But I think for me, the most exciting thing right now would be how can I empower other people and give them the same platform that I have today.
Well, that's how, we wish you the very best luck with that endeavor.
Shireen, I have an ambition for Deepika too.
What is your ambition for Deepika?
I was texting her today. Fact is that, she is probably the most bankable and the most famous person from India. And, when we see her at the Olympics, when we see her at the Oscars, I don't think there's a greater brand ambassador or culture ambassador for the country. And I think Deepika should officially represent a whole lot of us in some of the biggest stages all over the world, because I think that kind of representation matters. And I hope, Deepika, you will continue to do that more and more and more.
Are you ready to take on this job that Sabya has carved out for you?
Represent you now.
No, don't represent me, represent all of us.
Yes, that 100%. And, I thought I was doing that already, but...
More.
Okay, more.
He wants you to do more. But Sabya,
Yes.
what's next for you?
Well, I want to see Deepika represent us. That's what I want to see.
So that's her job. What about yours?
Well, I think in so many ways, the other day I read about an Indian restaurant in America for the first time being regarded as the best restaurant in America. It doesn't happen to Indian restaurants. You look at an Indian actress, going and presenting the inauguration of the World Cup, going on stage in Hollywood with the greatest stars. You see movies from here, you see television shows from here winning Emmys, movies winning Oscars. I think when a nation decides to change, there are multiple forces, multiple brand ambassadors. The Indian women's team winning the World Cup in cricket.
Yes.
I mean, how cool is that? I think when a nation decides to change, one or two people start, and it's like popcorn bubbling or tea simmering. I think there are many more forces that come out, and collectively, in your own way, you become a force that represents brand India. And I think all of us will continue to do that, because I think the way the world looks at India needs to absolutely firmly change, because we are not a country of cattle and cow and elephants and peacocks. This is a country that has medicine, that has IT, that has airports. This is not a country of fuchsia pink and purple, but this is a country that exists in shades of black, white, and gray. And people need to understand something, that this cannot be a country of your fantasy. This is a country of our reality.
This is a country of our reality, and a country with all of its complexities, all of its nuances,
Absolutely.
all of its colors. Deepika Padukone, Sabyasachi Mukherjee, an absolute pleasure. Thank you very, very much for joining us here. And we hope to see more of you on the global stage, because that's the job that Sabyasachi has put out for you, laid out for you. And Sabya, we hope to see both of you take brand India to the world and bring the world to India as well. Ladies and gentlemen, a big round of applause for Deepika Padukone and Sabyasachi Mukherjee. Thank you so much.
Well, thank you, Deepika and Sabyasachi, as well as Shireen, for that conversation. Deepika, requesting you to please wait by.
We would also like to call Sneh Rana on stage, please, for a quick photo op. Ladies and gentlemen, once again, a round of applause for Sneh Rana.
Deepika, we request you, please.
Request you to kindly stay back. Sneh wants to have a quick photo op with you. Ladies and gentlemen, a huge round of applause once again for Sneh Rana. Thank you so much, Deepika. Ladies and gentlemen, once again, a huge round of applause for Deepika Padukone. Shireen, over to you for our next session.
Well, ladies and gentlemen, just stay on with us for literally a few more minutes. We do have a very special guest joining us all the way from San Francisco, the global CEO of a company that's one of the world's top companies by market capitalization, moving money across 200 countries. The global CEO of Visa is here with us to understand how India finds its place in Visa's global strategy and what Visa is looking at as far as the movement of money is concerned. Ryan McKinney, the CEO of Visa, many thanks for joining us here. Ryan, it's great to have you. I know it's early in the morning for you, but thank you very much for joining us here on CNBC-TV18. Do we have Ryan?
I'm very excited. It's great to be back at the Global Leadership Summit.
Well, thanks so much, Ryan, for joining us. And I want to understand from you, Ryan, we were talking about India and how you see India. We've had a big change as far as the UPI is concerned. We've seen a record number of transactions being done. What excites you about India?
Yeah, well, first, let me just build on what you said, which is India absolutely is one of the most dynamic and one of the most innovative markets on the planet right now when it comes to payments and commerce and shopping and everything involved. And UPI has done an amazing job. I think the work they have done to digitize the economy in India is just incredible. The work they have done to bring hundreds of millions of Indians into the
We seem to have lost that line.
The financial system is incredible, and we're a proud partner of UPI. We've collaborated with them closely, both our two companies together, but also with our financial institution partners to roll out different types of products and services. And we continue to be optimistic about our ability to bring value to the whole ecosystem in India, partnering with UPI and the entire ecosystem.
You know, you're talking about that UPI partnership. So frenemies or friends, Ryan?
Yeah, it is. It excites us enormously. And by the way, I think it's fantastic. It's fantastic for India. It's fantastic for the world, what's happening. You know, when we look at what's happened over the last several years, there's been a dramatic shift to digital payments, in many ways enabled by mobile. You know, I think the fact that we all have these devices, that you've got 1.4 billion people in India that have these devices, that's enabled better buying experiences, better selling experience. That's helped merchants and sellers grow their businesses by adopting digital payments. And, you know, we're just happy to be part of that wave. We're happy to bring more of our innovations from around the world to India. And we're excited to continue to help drive the adoption of digital and mobile payments across India for many years to come.
You know, you talked about Indian innovations, Ryan, and you're using India as an incubator to make some of these innovations and take them to the world. Take us through that and also walk us through what you intend to do to scale up your operations here in India.
Yeah, we have. And I remember that discussion that we had last year. The work on QR in India has had a deep impact on our strategy, and it's actually resulted in a number of products that we've rolled out with partners across Southeast Asia and other parts of the world, where we continue to embrace the traditional card products, but we also have invested in adopting and embracing new technologies like QR, like mobile money solutions around the world, like different types of blockchain and crypto-enabled payments around the world. So the way we see it is any opportunity that there is to participate in different ways that people are paying for things digitally, we think there's a role that we can play. We think that our brand can have an important role in those technologies. And really, we wanted to open up our stack to be form factor agnostic. So whether it's a card, it's a phone, it's a QR code, or it's any other way that people want to pay and be paid, we think there's a role for Visa, and we're excited to play that role.
Well, speaking of the role that you're excited about for Visa, Ryan, you've also been talking about using your stack to become a hyperscaler. What does that mean in the context of a company like Visa?
Well, first, we want to do everything we can to bring more innovations to India. So we're excited to bring, as you said, new B2B solutions. We're excited to work with our partners on different types of Forex solutions and working across different countries and different corridors with new FX solutions. We're bringing new products that we've built other places like the Visa Flex credential, which is a card that can be used as a debit card or a credit card. You can pay with rewards, you can pay with BNPL, all with one credential as an example. But I also want to say we're excited to export innovation from India. We have more than 4,000 engineers and product teams that are dreaming and building the future of payments in our innovation hub in Bengaluru, where they're exporting those great ideas all around the world. So what can India do for Visa? One is embrace the innovations that we're bringing from around the world, but also continue to work in teams and build the great solutions that our teams are building that we then can take to more than 200 countries and territories around the world.
Exporting innovations from India, that's great to hear from you, Ryan. But I want to go back to the hyperscaler point that you were talking about there. How do you define a hyperscaler in the context of the work that Visa is doing? What differentiates you then?
Well, I think your audience is very familiar with hyperscalers in the context of the cloud companies and the platform companies that have enabled businesses to quickly expand around the world by leveraging their capabilities. That's what we're doing in payments and money movement. We've opened up our Visa as a service stack, starting with our foundational layer that has our network connectivity and our services layer on top of that, and our solutions layer on top of that, all the way to our network access layer. And what we do is we enable the entire commerce ecosystem to access those services and solutions and connectivity in a simple, easy to integrate way. So that whether you're a big tech player or a big financial institution, or you're a fintech in India, or you're a person in a garage with an idea that you want to be able to build and spread around the world, the Visa stack is your way to do that. And so in that sense, we've become a hyperscaler. We are enabling big companies and small companies to access 200 countries and territories around the world, access the reliability, the scale, the trust, the brand, the connectivity that we deliver in that stack. And in that sense, we're helping drive digital payments around the world by giving them access to that stack.
Ryan, you were talking about that Visa stack, and I'm just looking at some of the numbers there and what you've been able to do, the deployment of next-gen Visa Net stablecoin, token growth, AI assistance development. Which layer, Ryan, do you believe will generate the biggest value for you over the next 2 to 3 years?
I think they're all important. And they all play different roles in different economies in different parts of the world, which is why rather than make any one bet on one specific capability, we've made that stack available to everyone. So, you mentioned the next gen VisaNet that we rolled out. I announced that on our earnings call last week. This is an entirely new platform that we've built. We've essentially redesigned our entire processing platform that we've deployed globally. We wrote more than half of that code with AI. We've launched that in a couple places around the world. And what that does is allows our clients and our partners, whether they be big tech, fintech, FIs, to work more agilely and get product into market more quickly, but do it with the same level of reliability, trust, and service that they've come to know from VisaNet for many years.
Ryan, if merchants and consumers are moving away from the classic card to stable coins, etc., how do you respond? How does Visa respond? And what choices are you making today to maintain that kind of optionality?
Yeah, well, we respond by embracing it. We respond to any of the potential disruptions that are out there by embracing those, making them available on our stack and distributing them broadly around the world. So absolutely, you mentioned tokenization. While we have 5 billion Visa credentials now around the world, we have 16 billion tokenized credentials. So our tokenized ecosystem is already 3 times the size of our traditional credential ecosystem, as an example. You mentioned stablecoins. In countries where the regulators have embraced stablecoins, we're working with our partners to embrace stablecoins. And we've done that to modernize our own settlement infrastructure. We've also enabled our partners to issue cards on top of stablecoins in many countries around the world. So whatever the potential disruption is, our strategy is embrace it, enable it, power it with our stack, and in the right way with the right countries around the world, enable that to help drive digitization of payments.
Ryan, even though we've seen a fairly uncertain world, payments, and for you specifically, spending has been resilient. It's held up. What are the trends that you're picking up on from consumers at this point in time? What's the data telling you?
Well, first, I would say we've seen great stability generally around the world in terms of payments growth. And I think that's good for the economies around the world. I think that's great for, as I said, the countries in which we do business, because the more we're driving digital payments, I think the stronger the growth for the small businesses in those countries. We're seeing, stable growth, I would say, in places like the US and Europe. We're seeing even stronger growth across areas like Latin America, Southeast Asia, and places like that. We're seeing extraordinarily strong growth in other parts of Asia and the Middle East and some other places. So, while the overall tone across the world is stability and relatively strong growth, and you mentioned the numbers, and thank you for doing that, in other places we're seeing really strong growth around the world. I think if you look for kind of what's the one attribute that drives the markets in which we're seeing the strongest growth, it's actually the cash that's still out there. There's still an enormous amount of cash and legacy payment systems out there where buyers and sellers are looking for a simpler, easier, safer way to transact. And that's where Visa can play an important role.
Ryan, in a world where AI agents will shop, transact, and manage payments on behalf of consumers, what's the most immediate experiment of minimum viable product for you at Visa?
Yeah, well, I actually think we're on the brink of the third major change in how we all shop and pay for things, at least in my lifetime. The first one of those was e-commerce. The second one of those was mobile commerce, and that kind of wave that we've lived in the last many years. And the third major change is going to be agentic commerce. We are all going to have agents that are going to go out, they're going to shop, and ultimately they're going to buy on our behalf. And I'll tell you, as a consumer, I think it's going to have a significant positive impact on my life, hopefully your life, and in the lives of billions of people around the world. It's going to make the world's inventory available to our agents. And then we're all going to have an agent that's going to be able to go out and optimize on whatever I'm looking for and how I want to decide which product I want, whether it's price, value, availability, speed of getting to my house. So you asked about, what are the products that's going to enable that? I'll give you two. One is Visa has put out into market AI-ready cards, AI-ready credentials. We call it the Visa Intelligent Commerce Program. And essentially what we've done is we've created a safe and secure way for you to give your Visa credential to your agent. And if you want, you can actually make your Visa shopping history available to your agent, so your agent's even smarter about the past things that you've purchased and the things that you like. And then your agent's going to be able to go out and use your Visa credential on your behalf, and you'll set parameters. Where you want them to go, how much you want them to spend, not less than this, not more than that, things like that. That's one. Second thing is we've put out what we call a trusted agent protocol. And that's critical because what that enables sellers and merchants to do is to be able to tell the difference between your agent that's going out with your Visa credential and a fraudulent agent. That's one of the challenges that merchants are wrestling with around the world. And so those are two of the product suites that we've put out into market. And I think over the next 6, 12, and 18 months, you'll see quite a bit of adoption around the world. And as I said, I'm very excited for this third wave of agentic commerce.
Well, excited about agentic commerce, Ryan, but if you had to pick one opportunity that Visa will bet on over the next decade or so that completely changes the business model, what will it be? And what is the one thing that you're most worried about, most concerned about, that you're prepping actively for?
Well, on the second part of your question, we worry a lot about fraud. We worry a lot about cyber. We worry a lot about the criminals that are out there. But we are investing enormous resources to keep the ecosystem safe, to keep our partners and their consumers and businesses safe. We've been investing billions of dollars in AI-driven fraud protection platforms that continue to keep the ecosystem safe, but that's an area that I continue to worry about. If I were to pick an area that I'm most excited about, there's so many, but I think I would pick what we call our commercial and money movement solutions business. And what that is that's bringing Visa products and services to market to digitize all of the payment flows beyond the one we've been talking about, which is largely consumer to business. So whether that's person to person or business to business, government to consumer, business to consumer, all of those flows, $200 trillion of flows that are out there all around the world every year, we think that's just an enormous opportunity. And that's an area where Visa is making a lot of progress, and we're going to help digitize those flows and make them better for all those participants around the world.
Well, Ryan, it's been an absolute pleasure. Thank you very much for joining us so early in the morning from San Francisco. Thank you very much for sharing why Visa continues to be excited about India and why you're inspired by India and how India is driving innovation at Visa. Thank you very much. Ladies and gentlemen, a big round of applause for the Global CEO of Visa joining us here at the Global Leadership Summit. Shruti and Nigel, over to you.
Thank you, Shireen, and thank you, Ryan McNerney, for that sharp, data-driven look at how global consumers are shaping the next wave of commerce. Ladies and gentlemen, as we move towards closing the second edition of CNBC-TV18 Global Leadership Summit, we have something special planned for you ahead.
Well, before we jump to that, we'd like to thank our speakers, moderators, and guests. Thank you for your great insights and for all the discussions. And to everyone here in Mumbai and watching across the world, thank you for your time, your attention, and your trust.
A special thanks to our partners, HSBC India, our presenting partner, Embassy co-presenting partner, powered by partner Google, and associate partners, ITC, Embassy REIT, WeWork India, and Reliance Industries Limited for making the summit possible.
And now, before we close today's summit, we have a performance that bridges tradition and innovation, devotion and rhythm.
Well, the artist behind the viral track that's captivated over 60 million listeners is pioneering a new sound, Electro Qawwali, blending the timeless spirit of legends like Nusrat Fateh Ali Khan and Asha Bhosle with deep electronic textures and cinematic soundscapes. His music feels both ancient and futuristic, intimate yet monumental. Ladies and gentlemen, please welcome Kazi Nama.
And there was a time, when we had very heavy flows, despite so-called capital gains.
Ladies and gentlemen, what an absolute honor it is to have with us the Honorable Chief Minister of Maharashtra, Mr. Devendra Fadnavis. As we were walking in, I was telling him that the unanimous opinion here of people who have been at the Global Leadership Summit this morning, especially the global leaders that we've had, they've all said that if there is one infrastructure transformation that they've been most impressed by, it is what has happened in Maharashtra, what has happened specifically in Mumbai. And I was also telling him that we were worried that, will people be on time or not? People were actually here ahead of time because the infrastructure has improved. So, Mr. Fadnavis, congratulations to you
so much.
and your team for getting the job done. But आपसे पूछना चाहूँगी सर कि अभी तक तो जो आपने इंफ्रास्ट्रक्चर डेवलपमेंट कर लिया वो अभी उसका रिजल्ट हमको देखने को मिल रहा है. अब आप क्या प्रायोरिटाइज करेंगे? अब किस प्रकार का आप कैपेक्स डालेंगे इंफ्रास्ट्रक्चर डेवलपमेंट में? हमें क्या उम्मीद, क्या अपेक्षा आपसे रखनी चाहिए?
देखिए, मैं